earnings going on and no update in terms of whether the second round of talks are happening or not.
Well, to talk or not to talk is the buzzword right now. But morning, Vinny, and it's a very important day for the markets. It's been a while since we had a day like this because there are multiple moving parts that we need to track. Now, for now, the GIFT Nifty has trimmed its gains. Started off with a 90-point odd uptick. We are now at 60, but we will take a 60. But the problem right now is that even though we are moving higher, there is this congestion between this 24,400 and 24,500 range. There is no conviction at that level. Even yesterday, when we moved towards, we made a higher high on the charts, but we could not sustain at those levels. The other point that the bulls will not be happy is the fact that even as the market went up, even when we were at the day's high, the VIX was up 10%. The VIX is moving higher, and that is not something that the bulls would be very pleased with. What led to the recovery and what led to the sell-off? Same factors. HDFC Bank and Reliance Industries. When HDFC Bank and Reliance recovered from the day's low yesterday, the market moved higher. When that recovery got sold into, both of those stocks were under pressure and the market too cooled off from the highs of the day. So that remains a key monitorable as well. Now, even after we made a higher high and a higher low on the charts yesterday, we closed below Friday's high as well. So let alone last week's high of 24,400, we closed below Friday's high also, which was 24,371. That is the important level to watch. Of course, 24,500 on the upside, but on the downside, 24,250, 24,150 is emerging as a bit of a support cluster for the index. So keep that on your radar. For the Nifty Bank, the same range, 57,000 on the upside, 56,000 on the downside. That is one level that the bulls would want to protect in case there is any volatility today on the expiry day. So there are other important factors to watch as well. Of course, as you mentioned, the talks between US and Iran remain the monitorable, but some follow-up buying in PSU banks yesterday. SBI saw good buying yesterday. Bank of Maharashtra did see some good buying as well. The reaction in stocks like Vedanta and PNB Housing, and of course, a big earnings day today, the first important day in terms of earnings, multiple ones at that, HCL Tech, Nestle, Persistent, Tata Elxsi, a lot of earnings lined up today. So multiple moving parts to track in the market. Today's expiry, the GIFT Nifty is indicating a positive start for now, but the 24,500 level on the upside remains the key to watch.
Absolutely. We'll watch out for that level, Hurmas. Thank you so much for that. But let's also talk about some of the important stocks you should be keeping on your radar. And we have Ria joining us for that. Good morning, Ria.
Well, good morning. Let's start off with PNB Housing Finance first, coming out with its Q4 numbers. Strong retail-led growth seen with improving asset quality as well as profitability momentum, with the NII going up by 11% and net profit increasing by 19% on a year-on-year basis. For SML Mahindra, the net profit has increased by just about 2% on a year-on-year basis. Moving on, Hindustan Copper will also be in focus after laying out its vision for 2030, eyeing a net profit rise of 2.7 times by 2030 and also a total capex of 7,189 crores over 2026 to 2030 cumulatively. Vedanta also in focus after the board has cleared its demerger and setting May 1st as the record date, and Vedanta shareholders will be receiving shares in the ratio of 1:1 across businesses post the demerger. For Oberoi Realty, they've come out with their Q4 bookings update, with the bookings value going up by almost 2 times compared to the previous year. For Muthoot Microfinance, also a strong business update here, with the AUM going up by 13% and disbursements climbing by 6% for FY26 on a year-on-year basis. Balrampur Chini will be in focus as the board will be holding a meeting on April 23rd to consider a preferential issue, and Equus will be in focus as Hasbro has said that they intend to stop purchasing from an arm of the company. Carousel is also in focus as they will be expanding their quartz kitchen sink capacity from 1 million to 1.25 million versus the earlier target of 1.1 million on the back of increasing expected demand. And lastly, TVS Motors will also be in focus today as they have signed a JDA with Hyundai Motors to develop and commercialize electric three-wheeler vehicles in India.
Okay, thank you so much for that, Ria. But let's also get the update of what we are keeping an eye on in the world of F&O, given that it's expiry. We have Sudarshan to take us through all of that. Good morning, Sudarshan.
Good morning, Vinny. So West Asia war talks or no talks, amid that we have been seeing that markets across the world have been volatile, and similar trend we saw in Indian market yesterday. But one positive part is that banks, that whatever earnings have come so far, they have been strong or stable. Strong, if you talk about ICICI Bank has reported a strong set of earnings. It was a stable set of earnings from HDFC Bank, also Yes Bank, and we are expecting similar kind of earnings even from SBI or say ICICI, Bank of Baroda and PNB. For Nifty, important level would be 24,450. That's become very important because it's 50 DMA. And for today, GIFT Nifty so far is indicating that we might start in the green, up around 60 points. Now, yesterday we saw put-call ratio remains above 1.1. That indicates you that still we are seeing kind of like underwriting or like writing in for the put options more than the call options. So on the put side, 24,300, 24,200 and 24,100, these strike rates were very active, where we saw a fall in the premium, while on the call side, 24,450 and 24,600 were the most active ones. So support for Nifty, I look around 24,100. As far as resistance is concerned, first resistance would be 24,450 because it's 50 DMA. As far as FII flows are concerned, in the index futures, they have done minor buying of 160 crore. In the stock futures, they have done selling of almost 700 crore. They have reduced long positions by almost 900 contracts, but at the same time, they have reduced short positions by 2,100 contracts. Now, longs exposure is around 21%. In the band, sale, out of band, Saman Capital, some of the stocks that will be in the focus side of Phoenix, Nestle, HCL Tech, and Persistent System. Some of the stocks that have seen short covering, Trent and SBI, these were the stocks from Nifty Pack. They have seen short covering in yesterday's session.
Okay, thank you so much for that, Sudarshan. So that's the update in the world of FNOs. But talking about the US market, Wall Street ended lower on Monday after tensions between US and Iran escalated over the weekend, denting investor sentiment. The S&P 500 shed about 0.25%, while the Nasdaq also fell in the trading session by almost 0.2%, snapping its 13-day winning streak. The Dow Jones ended marginally lower. We have CNBC's Julia Borstein, who's here to give us a wrap on what happened on Wall Street.
U.S. markets were down marginally across the major indexes in Monday trading as a resolution to the war with Iran remains uncertain after a weekend of escalating tensions. The Dow fell 5 points, the S&P 500 was down 17, and the tech-heavy Nasdaq dropped 64 points. FBI Director Kash Patel today filed a lawsuit against The Atlantic seeking $250 million for what he claims is a defamatory article detailing his alleged abuse of alcohol. In the article, the magazine cited more than 24 anonymous sources. In response, The Atlantic said that it stands by its reporting and will vigorously defend against what it calls a meritless lawsuit. The Justice Department's Antitrust Division is reportedly investigating whether meat packers engaged in illegal anti-competitive conduct. The Wall Street Journal reports the probe was launched after President Trump called for a probe into the companies last year, claiming beef companies manipulate prices for cattle and drive up prices for U.S. consumers. The probe is just one of many efforts aimed at bringing down soaring beef prices. The DOJ is separately investigating food supply chain issues in the EGG, fertilizer, and crop seed markets. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that, Julia. But here is Mohammad El Arian of Alliance on the market reaction and the economic outlook amid the ongoing West Asia tensions.
You could go on to say, typically we get the bad news on Mondays and Tuesdays, and typically we get the good news later in the week. And that has conditioned markets. What worries me, Dom, is the economic side hasn't gotten much relief. You heard the reporter say that we're looking now at higher inflation for longer. We're also looking at lower growth for longer. So while the markets have had relief, the economic side has not. And that is what worries me, is that you're seeing a widening gap between fundamentals and technicals in the marketplace. The fundamentals are still flashing yellow, but the technicals seem to be flashing green, and that's why we end up not only going up again, but we end up marking new record highs.
Okay, on that note, we're going to step into a very short break. After the break, we'll get you all the important updates from the world of AI. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18, and we have key earnings to watch out for today, and that's going to be HCL Tech. What is the expectation this time? Reema is joining us to take us through that. Good morning, Reema.
Hi, good morning. So again, a soft quarter expected like we've seen with the rest of the IT pack. Top line is likely to decline for HCL Tech, 1% lower in constant currency terms on a quarter-on-quarter basis because the company has services and software, and the software business generally is muted in Q4. On the company's margins, when you see the reported margins, you will see a big jump. It comes at 17.6% versus 15.7%, but the prior quarter had some adjustments. So if you do the adjusted margins, they're likely to decline because this quarter, the company had a 1-month impact of the wage hike. The bottom line, again, will show you a big jump, and that's also because of the, remember in the prior quarter, there was that one-time impact of the labor cost. Now for FY26, remember the company had guided for 4 to 4.5% top-line growth, margins of 17 to 18%. But HCL Tech is a company which at least last year had started with a very conservative guidance. So 1 year back, when they gave their FY26 guidance, they had started with 2 to 5% growth and they subsequently upped it. So therefore, as they start FY27, and the key focus is going to be on their guidance for next year, will the company be conservative? Expectations are for a broad range of 3 to 6%. Goldman and Nomura are slightly more conservative. They're saying maybe the guidance could be 2 to 5%. But the key is going to be on the margin front. 17 to 18% is the current guidance. But when we spoke to the management last time, they sort of indicated that maybe there is scope for a margin lift. So will they look to change the margin guidance, up it, especially in light of the rupee depreciation? I think that's going to be watched. So in a nutshell, Q4 week, focus on the guidance. Will the company be conservative in their top line guidance like they were last year? And is there scope for a margin lift for FY27? That's going to be on everyone's mind.
Okay, thank you so much for that, Reema. But now let's move on and get you the latest update in the world of tech and AI in our special segment, AI Pulse. Rachna is here to take us through all of that. Rachna, good morning.
After 15 years steering Apple to unimaginable heights, Tim Cook is handing over the wheel. Apple confirmed today that the 65-year-old will step down as chief executive on September 1 and become executive chairman. His successor, longtime hardware engineering chief John Ternus. The board unanimously approved the move as part of a long-planned succession. Now, Cook, who succeeded Steve Jobs in 2011, will now focus on global policy engagement. On X, reactions poured in quickly. OpenAI Sam Altman posted Tim Cook is a legend. Anduril founder Palmer Luckey also weighed in positively on this leadership shift. So who is John Ternus is the question. The 51-year-old has spent more than half his life at Apple, joining straight out of college in 2001. He became the youngest member of the executive team when promoted to senior vice president of hardware engineering in 2021. Ternus has quietly driven major wins for the company, the shift from Intel to Apple Silicon and the launches of AirPods and the Apple Watch. He's largely stayed out of the spotlight. Now, as new CEO, his biggest test will be closing Apple's gap in AI, where the company has trailed many Silicon Valley rivals. Turning to the AI race itself now, Amazon just made a huge bet. It will invest up to $25 billion more in Anthropic. This is on top of the $8 billion it had already committed. In return, Anthropic will pour more than $100 billion into Amazon Web Services over the next decade, locking in 5 gigawatts of computing power for its Claude models. That's the equivalent of 5 large nuclear plants worth of compute. Anthropic says its annualized revenue has now topped $30 billion. And finally, Adobe is pushing back hard. At its summit in Las Vegas, the company unveiled CX Enterprise, which will be a new AI suite designed to help big corporate clients automate digital marketing and customer experiences to make the platform work across ecosystem. Adobe is also partnering with Amazon, Microsoft, Anthropic, OpenAI, and NVIDIA, teaming up with some of the very competitors it's fighting against in this AI race.
Okay, Rachna, thank you so much for that. But let's talk about the update that's coming from US as well. US has begun issuing refunds on reciprocal tariffs starting 20th of April 2026. The administration will return more than $166 billion collected from tariffs, and of the total refunds, nearly $12 billion is tied to imports from India. The move follows a February 20th ruling by the US Supreme Court, which declared President Donald Trump's tariffs illegal, and the refund is being done through the online system called CAPE, managed by the US Customs and Border protection. So that's the latest update coming in on the tariff front as well. Now, India and US are also holding trade talk negotiations in Washington, D.C. Chief Negotiator Darpan Jain is leading the India delegation to discuss the larger bilateral trade agreement that will come in. Commerce Minister says that they are looking to finalize the legal agreement, and the issue of us initiating trade negotiations as well as investigation needs to be resolved bilaterally. Also, the two sides will work together to finalize timelines and the next steps that will come in on that front as well. Now, as we wrap up this edition of, Power Breakfast, diplomatic efforts to end the war remain uncertain, and amid mixed messages from the US president, we have the US president speak exclusively to CNBC later this evening at 6 p.m. Stay tuned. Okay, and with that, we're going to wind down this edition of Power Breakfast. Thank you so much for tuning in.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Tuesday morning, lost a track, maybe a little less than what we tracked yesterday morning because the weekend price action, news flow action was tremendous, quieter than that. But nevertheless, there's a fair bit to look ahead to in terms of US-Iran and which way that really goes. I'm Prashant, with me, my colleagues Nigel and Reema. Guys, hi, morning.
Hi, good morning. And the clock is ticking for the ceasefire to come to an end. And now the big question is, will there be a deal before that? I think that's on everyone's mind. And yesterday's price action, at least in the global market, seemed to be a bit of wait and watch.
Well, that's right. Interesting times for the equity markets. And from the IPL action, I was pleased to see that the Mumbai Indians came back in style yesterday. All our boys, got it together. It was heartening to see. I mean, went to sleep yesterday on a high that the Mumbai Indians, they fought back and they fought back in style.
Like thumping victory, right?
That's what I like
99
about it.
or 100 run
100
victory?
runs,
100 run victory.
All out. And first ball wicket for Bumrah.
He was wicketless, right, till now.
And first ball, great stuff. But we got the equity markets to track, Prashant, so let's get straight to that.
Global stuff and oil and whatnot, right? So let's just take it from the top. So you've got the Wall Street Journal, which is reporting that Iran is going to send its negotiating team to Pakistan. So remember, the market spent all of yesterday basically going back and forth without real certainty in terms of what's going to happen. Is Iran sending a team, not sending a team? And I think mid-afternoon at about 12:30, there was a press conference in which, it kind of sort of came through that maybe they're not going to send one. Market sold off yesterday in the second half. So this is Wall Street Journal, not directly. They're saying that Iran has told regional allies that it is going to be sending a team. Anyway, oil prices are trading just under $95 a barrel. So they are well behaved in that sense. Equities pull back. So every day they've been making new highs. Last night, 0.25% down in the S&P. NASDAQ down about 0.26. So not very much by way of a big change. I looked at the treasury markets, not very much by way of change. Now, peace talks, negotiations, in Pakistan to be held. And the 2-week ceasefire is between US and Iran is ending on Wednesday, but Washington time, which is essentially early Thursday morning for us. There's a 9-10 hour time difference between, Washington and Mumbai. So, in that sense, it'll be, if it's 6 p.m. Washington, in the evening, it'll be, early in the wee hours of the morning on Thursday for us. And there's another report where, it's quoted as saying that President Trump isn't inclined. And I think there was an interview to Bloomberg in which President Trump said he is not inclined to extend the deadline past Wednesday evening at this point in time. So we'll see how this really goes on. But this is the big one, right? The big decider. Just think about it. Oil, if anything, with the US, with the double blockade, which is US Navy blocking Iranian oil to leave from leaving the Strait of Hormuz, more oil is out of the market than it was before with the single blockade of Iran, which is the closure of the Strait of Hormuz. If it was 14 million barrels out of the market, now it is another 1.5, 2 million barrels, whatever Iran was exporting out of the Strait. So, if anything, the situation is worse off, at least as far as on the ground is concerned. And then you, on the other side, look at physical oil prices. Physical oil prices have fallen from $140, $145 a barrel to where we are now, which is about $120. So something does not square. Perhaps at the margin, the difference why this is happening is because actually countries are reducing consumption of oil. There is demand destruction which is taking place. That is one way to explain it away. The other way, of course, is perhaps to say that markets are expectant and hopeful that this is going to come to an end pretty soon. So we'll see. But this is important, and this is the reason why this is very, very crucial in terms of which way this goes. Now, just a couple of other news flow in that sense, right, from the US. And this is Apple, which, of course, is which is appointed a successor to Tim Cook. Tim Cook takes a non-executive role, and the hardware chief at Apple, John Ternus, is the next leader for the organization. So that came in yesterday. Amazon, in other news, is said is going to invest $5 billion in Anthropic. Anthropic is going to spend $100 billion in turn on Amazon Web Services over the next 10-year period. So while we are, of course, obsessed and very much focused on what's happening with Iran and US and oil, etc., the AI train is moving ahead and there's no news flow. It's not being reported as much as it was earlier when it was the center point, but I think the news flow is very much there, and at some point it'll take its center stage back again. Eli Lilly is also agreed to acquire a cancer drug maker in a $7 billion deal, so that was another one which kind of came through. Yesterday, post-market hours at about 3:30, 3:45, the Reserve Bank of India came out with a circular, in a way nullifying the 1st of April 1st circular. Remember, there were two circulars, and one was late March, and then that Monday when the rupee started very strong and then ended at a new all-time low, in the evening RBI came out with one more circular, which basically then kind of tightened the screws all across. So that circular has been, a fair bit of stuff has been rolled back, which is good news for actual, genuine people, corporates, etc., which have been taking position. So it's not loosening, any amount of loosening for speculators. That is still, the door is firmly shut. But this is a good move by the Reserve Bank of India. I guess there's been a fair bit of feedback which has gone to them, and they've done it yesterday. We'll talk more about this with our guests a little later. I'll just tie in the levels here. Supports 23,900 and 23,500 on the downside. And targets, of course, remain 24,800. The only question is whether we get a retest of some of these levels on the downside and then we go back up. But generally, I mean, the market's been, more on the side of the fact that it wants to go up and not sell off too much, even with everything which has been going on for the last 2 or 3 days now. GIFT Nifty will give you a quick sense of how we likely to start. We'll pick it up from there. 70 points higher on the GIFT Nifty. Nigel has walked across F&O positioning and the stats. Nigel, take it away.
Well, that's right. The US markets have been strong, but one statistic that stood out is the volume in the US markets are actually 10% lower in comparison with the 6-month averages. So just keep that in mind in terms of the strength that we're seeing in the US market. Coming back home, the India VIX, well, that spiked up as the hope that the war was entering its final stretch. That appears to have pushed back a little bit, and that's why we did see actually the VIX ended at the high point of the day yesterday. Still at tolerable levels, but you don't want it to get up and going. Recently, we saw a high of around 29 on. You want it to be contained sub this 20-odd mark. The key cues today that we'll be tracking will be the geopolitical issues and the progress ahead of the ceasefire deadline, the weekly expiry for the rupee, for the Nifty, and the Indian rupee particularly. Since the RBI last evening, they rolled back part of those rupee curves. And in yesterday's trading session, if you pull up the intraday chart on the Indian rupee, you'll see intraday, it slipped a little bit, particularly towards the final hour of trade. The Indian rupee did slip. It ended virtually at the low of yesterday's trading session. And the FIs as well, they turned sellers as well. So the Indian rupee, that's going to be an important, parameter to track for today's session. Additionally, there were some signs of unwinding, both on the Nifty as well as the Nifty Bank, because the open interest, in fact, did come down. But if you're looking at the cash market flows, well, as I said, the FIs, they did turn sellers in trade yesterday. The unwinding of positions as well should come up for you on the screen. And this perfectly ties in, right? Because there was lightning on the short side from the FIs itself on index futures. The Nifty PCR intraday yesterday it spiked to around 1.2, but it cooled off towards the end. It ended at around 1.13 or thereabouts. But put writing is evident. 24,100, 24,300 put. Both of them saw aggressive writing in yesterday's trading session, but there were call writers as well. And, even when the Nifty was higher, the call premiums actually were lower, telling you there is writing at higher levels. So there's going to be strong resistance at higher levels. So if you want to look at the levels, yesterday's high on the Nifty, that becomes a crucial resistance mark. And going by the options data, well, the support comes in at around the 24,150 odd mark. That's the broad range you're looking at. 24,480 yesterday was the high point of the day. The Nifty Bank, that's facing stiff resistance at around the 57,000 odd mark, because that coincides with yesterday's high, as well as the 50, as well as the 200 DMA. So this, 57,000 odd mark is going to be extremely important because it coincides that 50 DMA, yesterday's high as well, was around that 57,000 odd mark. And as you can see, the 200 DMA has come up for you on the screen. So the GIFT Nifty is suggesting a bit of an uptake. It's going to be interesting towards the end of trade because the ceasefire is coming to an end and we'll have weekly expiry that will play out as well.
Thank you very much for that. And markets will also react to the core sector data, which Lata will detail out. But for the month of March, it's declined by 0.4%, the first decline in the last 5 months. But let's get to the equity calls then. It's Lawrence Belanco of CLSA who says, regionally, India is the only market so far to generate a new breadth thrust signal. Amongst the Nifty 50 stocks, the percentage of the constituents setting new 4-week highs hit 60% on 15th of April. For the broader BSE 500 index, they also triggered a breadth thrust later that week. CLSA focuses on this historical signal performance, which basically shows average forward returns of 6.9% over a 30-day period, 7.3% over the next 60 days, 8.8% over the last 90 days, and 11.7% over the next 180 days, and 28% over the next 1 year, with corresponding hit rates ranging between 70 to 85%. Lawrence Belanco highlights 5 mid-cap buy ideas from the CLSA list. It's BSC, MCX, Apollo Tubes, Dixon Technologies, and Aurobindo Pharma. All right, let's get back to the big story, and that is whether a deal is going to be struck, whether the delegations from US and Iran will meet in Pakistan. Listen in to what Kevin Hassett, Director, National Economic Council, had to say on the Iran talks and the way forward.
What's been happening more than anything else is that President Trump has been communicating with the American people on what the current state of things is, and he's been talking about how negotiations are moving forward well. He truthed over the weekend that their talks are resuming. Now there are a lot of people chattering in Iran that aren't necessarily in power who are trying to perhaps undermine their own colleagues, but the fact is that the President Trump's truths, you go back, look one after another, have given a very clear guide to the journalists in the country and American people about the progress that we're making. At the beginning, the president said in 4 to 6 weeks we expect this could be resolved, and I think we're getting pretty close to that being accurate.
Let's get in Matt Orton, Chief Market Strategist at Raymond James Investment, on the show now. Matt, thank you very much for joining in as always. The indices have taken the elevator higher. We've seen a ferocious rebound across U.S. markets and even Asia. Kospi, for instance, is back to record highs. It's rebounded 25% in the month of April. For the Taiwanese markets, it's up 20%. In a way, markets are signaling that all is fine and the war is now behind us, at least the worst of it. But considering now that the ceasefire comes to an end tomorrow, there's still a lot of uncertainty swirling. Should investors perhaps lighten up? What's your own expectation about the way forward?
Hey, good morning, Rima. And I think we are making progress. So there's still a lot of uncertainty with respect to how these negotiations are going to play out and what the ultimate geopolitical outcomes might be. But I do think it's clear that we're taking more of the worst left tail scenarios off the table. So that is constructive for markets. And I really think the biggest reason why we have seen markets able to rally so significantly over the past week and a half, 2-3 weeks, has really been because of earnings. Earnings results not only in the US, but around the rest of the world, and particularly those related to artificial intelligence and the AI CapEx, that's been incredibly strong and resilient. And we also had really good results coming out of US financials. So banks, capital market companies posting much better than expected results. That's given the market a little bit of a boost. It's made investors start to put more money back to work. I've been in the same camp over the past 2 weeks or so, gradually putting some of my cash stockpile back to work in some of my favorite long-term names, and maybe looking for some new opportunities in areas that have been beaten down, but where fundamentals remain positive.
Matt, look at it another way, right? Indices like Kospi are hitting all-time highs because of specific themes, right? So if the market is reverting back to the situation, I mean, the themes which worked before the Iran war started, I mean, it's not going to find them in India. And that was a problem even before the war started. So yeah, we've got a snapback here in India as well. But arguably, we are kind of worse off with oil where it is, etc. I mean, we're not better off, we're worse off from late February. So how does it work out?
Yeah, Prashant, that's a really good point. And so when you look at markets like Taiwan, I believe the Taiwanese market has just eclipsed the market capitalization of the United Kingdom. So it speaks to how powerful those moves in artificial intelligence are and are probably going to continue to be. When you look at India, I think the biggest question mark that's still out there is how are higher energy prices going to read through to the consumer? Because part of the benefit of India, I would argue, is diversification from artificial intelligence and the fact that it is a very consumer-driven economy where expectations for economic growth have been so strong. And so we got results from some of the banks over the weekend. So ICICI, HDFC, Yes Bank, numbers were good. You saw expansion of credit growth. That is a good signal for where the economy is overall. So I think this quarter, if you can get good results or at least positive guidance from some of the more consumer-oriented companies, that there's a path forward, there's a light at the end of the tunnel with respect to the impact of inflation on their consumers, I think that sets up nicely for India because valuations have compressed significantly. It's underperformed relative to the rest of the EM complex. And there's definitely opportunities across the board for investors to diversify some of those AI plays.
Hi, Matt. Good to see you, Win. I was reading a note, and you're arguing that commodities deserve a bigger space in your portfolio. If you could just elaborate a little bit, because you're talking both about precious metals as well as industrial metals, and you believe some of the stuff that's happening on the industrial side could be actually structural in nature. So what would the allocation of commodities be in an investor portfolio? And out of that, how much of that could be gold? And when you talk about industrial metals, what are you talking about? Copper?
So great question, Nigel. And I think we're at the start of a commodity super cycle. And when you look at the geopolitical fracturing that has been taking place, not just since Iran, but well before then, there is an importance being placed on getting materials, getting strategic minerals that are needed not only for the build of AI, but for the build of infrastructure, more broadly speaking. And you're seeing even countries like the US start to create strategic infrastructure reserves for those metals. That's only going to continue going into the future. And so when I look at these metals, it's not just precious. I still like platinum. I still like gold. I think gold should have probably a 5% or so allocation in investor portfolios. I've used the downside more recently to top up a little bit on that in my own portfolios. But I also think it comes down to copper. It comes down to aluminum. You look at rare earth minerals. Uranium has been something I've been accumulating as well. And you can do that through the commodities themselves. But if you need to add beta into a portfolio, you can do so through some of the miners. You look even in India, like a Vedanta. That's a great example of a name where you had a little bit of a drawdown that's bounced back very nicely, but they play in some of those strategic mineral reserves. Same thing in the US and in Europe. Those are areas where perhaps you can diversify, hold some of the actual commodities themselves through ETFs or futures, and also hold the equities of the miners as well to get more of a beta play in your portfolio.
All right, Matt, we'll leave it there. Good conversation as always. Thank you very much for joining us. Appreciate it here on CNBC TV 18. Let me just quickly run you through interactions which are lined up here on the program today. Coming up at 8:35, we have Prabal Sen of ICICI Securities discuss focus on the oil and gas space. At 9 o'clock, we'll have Nitin Agarwal of monitorables Financial Services. We talk about bank earnings. 9:20, Manishi Chaudhary of Emma Capital will be talking markets with us. 9:35, we'll bring you a special discussion around CERC's notification of market coupling norms. And we've got Vivek Singla, Power Exchange India, and Sumit Kishore of Axis Capital joining in for that. Following that, the management of Grow will be speaking with us at 9:50 on earnings. And Latha speaks with us. Latha speaks with the management of Bank of Maharashtra on the back of their fourth quarter earnings at 10:15.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. We're looking at PNB Housing Finance, Vedanta, Bank of Maharashtra, Muthoot, Microfin, Oberoi Realty, Carousel, and Balrampur Chini. They'll all be reacting to positive news flow, while you have Hindustan Copper and Equus that will be reacting to negative news flow. SML Mahindra is likely to see a mixed reaction. Stay tuned. We'll get you more details on all of this.
Welcome back. It's time now to talk about stocks. Our entire research team is standing by. Ananya first joins in to tell us how PNB Housing Finance's numbers looked. Ananya, hi. Good morning.
So PNB Housing Finance has delivered a healthy quarter with growth, profitability and asset quality all trending well. So the loan book grew 15% year-on-year and 6% quarter-on-quarter, with retail assets growing 16% year-on-year. Now disbursement momentum remained robust, with retail disbursements growing 32% year-on-year and 45% sequentially. Now on the earnings front, NII grew 11% year-on-year and 5% quarter-on-quarter, while PAT saw strong traction with 19% year-on-year and 26% sequential growth, supported by operating leverage and lower credit costs. Now, margins were slightly mixed, with yield and spread moderating on both a year-on-year and sequential basis. Now, although cost of borrowings declined and NIM improved to 3.69% sequentially. Now, asset quality continues to be a standout, with GNPA improving to 0.93% and NNPA to 0.57%, along with negative credit costs supported by better recoveries. Now, return ratios also improved, with ROA at 2.89% and ROE at 13.94%. reflecting better profitability. So overall, the results were really good, and with best-in-class asset quality. The only key area to watch will be the margins.
All right, thanks a lot for that, Ananya. Well, I'm looking at Hindustan Copper, and they have charted out a roadmap, actually, which is quite interesting. For the next 5 years or so, they have put out the numbers with capex, the production, as well as profitability. First, on the capex, the chart should come up for you. In the next few years, they're indicating that they'll spend close to around 7,200 crores in terms of capex, over the last, over the next few years. And as you can see, they've structured it as well. 2029 is when they'll spend the most, more than 2,000 crores. That's because the production and mine expansion as well is going to be taking shape. And in terms of the ore production in million tons, they're talking about going from around 4.2 million tons to around 5.9 million tons in 2029. And then 2030 will be a big surge where they go to around 12.2 million tons. Massive, massive growth is what they're talking about in terms of volume movement as well. Now, the PAT number as well should come up for you. They're saying from around 600 crores approximately, they're going to go all the way to around 1,600 crores, 1,570 crores. And as you can see, most of the dividend payout will be in the vicinity of around 30% of what they earn. However, I'm going with red this time around because despite this ambitious chart, it appears at around 1,500 crores, it's still lower than, one of the few brokerage notes that we have is from Anand Rathi. And in FY28, they are talking about the PAT number going to around 3,000 crores. So this 1,600 crores actually appears much lower than what Anand Rathi is estimating, and much slower as well because they are talking about hitting that number in 2030. So that's why going with some red on Hindustan Copper. I think the management is being extremely, cautious, but we'll try to get them to clarify why they're going with such mellowed expectations in terms of growth as well as in profitability. So a tinge of red on that one. Going across to Sonal, she's here to tell us about the update that we got from Oberoi Realty. Sonal?
Good morning, Nigel. It was a good update coming in after a long time for Oberoi Realty. Their units booked were up 2 times at 229 units. Their volumes were up 169% on a YY basis. Even sales were up 96% on a YY basis for the quarter gone by. It is led by new launches and some of their super premium projects as well. For FY26, however, the units booked are down 25%. Volumes are also down 8%. But overall sales value is up 3%. A lot of it led by higher realizations as well. But going with the quarterly number looks like a good set, going with green for Oberoi Realty.
Okay, all right. Got that, Sonal. Thanks a lot for that. I'm going to keep an eye on Vedanta. And after a few years, finally, that demerger is going to see the light of day. They have announced that the demerger update, and they said that the board has approved that May 1st, 2026 will be the record date for this particular demerger. Remember, the last date to buy the share will be April 29th because May 1st is a holiday. So you'll have to have the shares in your account on May 1st. So that's why to be eligible for this demerger, the last date to buy will be 29th of April. What is the shareholding pattern? Well, if you have one share of Vedanta Limited, you'll be getting one share of the aluminium business, of the power business, of the oil and gas business, and the iron and steel business. So that's the way that they have structured it. The reason for the demerger, well, they were talking about simplifying the structure as well as rebranding exercise as well. So you'll be asking, when do you see 5 listed companies from the Vedanta stable? In all probability, between 4 to around 8 weeks, depending on the approvals. And the target prices should come up for you on the screen. So the stock has seen a big run. But Nuvama, they have a target price of around 899 rupees odd. They are factoring in 52 rupees of dividend. The aluminium business is bulk of that because it accounts for around 449 rupees since bulk of the profitability, the multiple as well out there. And that includes Balco as well as Vedanta Aluminium. And the other part is Vedanta Limited, which will house Hindustan Zinc, 296 rupees. Even Kotak, they have a target price of around 915 rupees. The aluminium business, they as well value at around 493 rupees and Vedanta Limited at around 282 rupees. So the time this demerger was first announced, I think the stock is up close to around 3 times and there's been big dividend payout as well. But the stock should open up in the green in the run up to that record date.
All right, let's move on and talk about Bank of Maharashtra and Muthoot Microfinance. Both will react to numbers. Ananya's back with us.
So Bank of Maharashtra reported their Q4 numbers yesterday, and we can see that the profitability has improved, the business has grown, and it shows a strong asset quality for the bank. Now, coming to the total business, it grew 17.5%, advances up 21.7%, deposits up 14.1%, and net profit rising 27% year on year. Now, asset quality remained exceptional with GNPA at 1.45% and NNPA at just 0.13%. Now, management commentary was especially reassuring. They said that they are focusing more on sustainable growth rather than more aggressive growth for FY27. Now, for FY27, management has guided for 16 to 17% business growth, 18% advances growth, 14 to 15% deposit growth, around 15% NII growth, NIM of 3.75% and ROA of 1.8%. Now, the key areas to watch will be deposit mobilization fee, income growth and branch expansion going forward, which is also highlighted by the management. Now, coming to Muthoot Microfinance, they came out with their business update yesterday. Now, assets under management grew 13% YOY. While disbursement increased 6% YOY, the company also made strong progress in diversification with the JLG to non-JLG mix improving from 97:3 to 83:17 and the small and micro enterprise individual loan portfolio scaling up meaningfully. Now, on the asset quality front, GNPA improved by 95 basis points YOY, while credit costs declined by 590 basis points YOY. Collection efficiency for Q4 FY26 improved by 336 basis points YOY. Now, funding also strengthened with funds raised increasing 29% YOY, while borrowing costs declined by 75 basis points YOY. Now, we can see that they delivered a strong FY26 business performance.
Okay, all right, Anand, thanks very much for that. SML Mahindra is the next one we want to focus on. Sudarshan has got details. So, good morning.
Good morning, Prashant. So, largely stable set of earnings from SML Mahindra. What has worked for the companies, it continues to see a strong demand. That has led to a company reporting double-digit revenue growth. Revenue has increased by almost 17% year on year. But what has not worked for the company is the higher material costs. Material costs have increased both on a sequential basis. On a sequential basis, it's up 26%. On YOY basis, it's up 16%. That has led to a sharp reduction in both EBITDA margin as well as gross margin. EBITDA margin has fallen to 10% versus 11.7%, and gross margin has come in below 22%. It has come at 21.6% versus 24.5%. But outlook is looking strong. Company is looking at the market share of 10 to 12% in the medium term. Even launches on the launch front, company is looking to enter into AC buses and ambulances, looking to enter into ICV segment, and also to launch electric bus going forward. Nomura believes that growth remains on track and price hikes that company is looking to take will support margin FY27. So I'm going with mild green for SML Mahindra.
Thank you very much for that. For more stocks and news, Ria joins in.
Well, yes, the first one that we're keeping an eye out on today is Aquis. One of the key clients of the company, Hasbro, has said that they intend to stop purchasing from an arm of the company, which is Aquis Engineered Plastics. Now, as per the DRHP filed by the company in 2025, Hasbro is one of the 10 largest customers of the company, and around 6.61% of the revenue in FY25 was contributed by this client. But important to note that this has come down from around 18% in FY23, but nonetheless, this remains a key client for them. Now, they have said, the company has said that they are actively in discussion with Hasbro to reach a resolution on this matter. But they've also highlighted that there has been no termination of the master supply agreement, which was signed back in 2016. But this is only to intend to cease to place purchase orders, and they are also assessing the financial impact of the company of this development. But nonetheless, this remains a negative for the stock and expected to open in the red today on the back of this. But moving on to another stock, which is Carousel, they have decided to expand their capacity of quartz kitchen sinks from around 1 million per annum to 1.25 million per annum versus their earlier target of 1.1 million on the back of increased expected demand. Now, the company has said that they have been in advanced discussions with the largest home improvement retail chains in the United States, and as a result of which the company will be required to develop exclusive models and cater to their retail network. And the company will be undertaking a capex of around 50 crores for this, which is expected to be completed by FY27. So this stock expected to open in the green on the back of this. And apart from this, Balrampur Chini will also be in focus, as on the 23rd of April, the board will be undertaking a meeting to consider a preferential issue.
All right, thanks very much for that, Ria. A quick recap of stocks that we've put out. Stocks with positive news flow are PNB Housing, Vedanta, Bank of Maharashtra, Muthoot Microfinance, Oberoi Realty, Carousel and Balrampur Chini. Stocks with negative news flow are Hindustan Copper and Acus. SML Mahindra is the only stock likely to perhaps open undecided in that sense. The first macro data post the West Asia war indicates the deep hit to growth. India's 8 core sectors, including sectors like power, crude oil, steel and cement, collectively contracted by 0.4% over a year ago. Lata is here with the sectoral details. Lata, morning.
Well, first FYI, the 8 core sectors are coal, crude oil, gas, refineries, fertilizer, steel, cement and electricity. And together, they have contracted by 0.4% in March. This is the first contraction since last October, but October was only 0.1. Now we have contracted by 0.4. So this is perhaps the worst since COVID. Now, 4 out of the 8 sectors contracted sharply, and there are no prizes for guessing which is the first. Fertilizer. That is down by 25% almost, 24.6% contraction of the sector. That's obviously because of the lack of availability of gas. Some of them have even declared force majeure. Crude oil again was the next one for obvious reasons, minus 5.7%. Then comes electricity, minus 0.5%, and coal, minus 4%. Again, contractions, which is probably because demand for power was less. So again, that indicates probably a broad-based hit to the economy. The ones that grew well are important. Steel, plus 2.2%, cement, plus 4%. Again, it's plus, but it's the slowest tally for both these sectors if you compare the last 12 months as well. Only natural gas, which is very, a small weighted sector in these 8, that's the only one which has done very well at 6%. Now, because it's March, you have the April-March data. You have the full FY26 data. That, again, is not very encouraging. 2.6% growth works to be the slowest since FY21. Here, again, all the 6 sectors that I mentioned are the slowest since 21, except the 2 that stood out, steel and cement. They were better even than last year. And those are the more listed stocks. So something, a silver lining there.
Lata, thanks very much for that. Manisha is here with a roundup of everything which is making headlines as far as commodities go. Manisha, good morning.
Morning, Prashant. Thank you for that. And I'll start with the crude oil prices, where we have seen markets trim gains from the prior session, following reports that Iran will indeed send a delegation to Islamabad for a second round of negotiations with the U.S. before the current 2-week ceasefire expires. Now, this move is marked a shift from Iran's earlier stance that it would not engage in additional peace discussions. You also have U.S. saying that they are unlikely to extend the existing truce if no agreement is reached by this weekend. 22nd April, by the way, which is tomorrow, is when that ceasefire ends. So today, tomorrow, next 48 hours, are expected to be full of statements and, of course, price moves as well. So while the crude oil prices have seen a bit of a decline in the Asian markets right now, what continues to do well is the metal prices. After gaining in sense of aluminum and then copper, the zinc is the latest one that has seen very strong performance overnight. It's trading at August 2022 highs. There are concerns over tight supplies, inventories at Shanghai have declined, mine closure reports, operational disruptions, all of that seems to be supporting. So 2026, still time, metals have done quite well.
All right, metals have done well. Thank you very much, Manisha, for that. We'll take a break. Prabal Sen of ICICI Securities, and if you focus on the oil and gas space on the other side. Stay tuned.
Welcome back. You're tuned in to Bazaar Morning Call and hope you're having a good morning. Well, let's welcome Prabal Sen, oil and gas analyst at ICICI Securities, who joins us on the show. Hi, Prabal. Good to have you early morning, 8:30 a.m. You're on the show. Tell us, what is the crude price that you're factoring in your estimates?
I think what we are looking at is that the base itself probably gets shifted to somewhere around $80 to $85.
Okay.
We certainly don't believe that even if the strait is reopened tomorrow, crude is going to settle back to the pre-war levels, because there's a few structural factors that have to be kept in mind. More than 80 facilities, have been actually struck or damaged as a result of this conflict, which are going to take their own time to actually come back fully. There is obviously a supply shortage that will probably continue to build or continue to sort of take its time to dissipate, even if the strait actually gets resolved and flows actually start to normalize. So keeping all that in mind, our sense is that, there will supply tightness will remain to a certain extent, and there will be a natural risk premium that will continue to be built into the futures prices, at least over the next 6 to 12 months. So for FY27, 80, 85, even $90 is something that could be realistic.
So let's focus on the direct players then, ONGC as well as Oil India. At current prices, what are they factoring in? The stock prices, it appears they are factoring in far lower crude oil prices. Could you give us a quick analysis on that, maybe a matrix? And also if you could tell us, what is your view on both these two stocks? Because that's the direct play, right?
So I think there the key monitorable remains that, there are two ways to look at it. One is that the dispute continues to persist and therefore crude prices continue to rise upwards, in which case the risk of some sort of tax, some sort of duty being put on the realizations actually increases. So ironically, the best case situation for ONGC and oil is if the dispute sort of starts to normalize or starts to at least loosen in terms of intensity, and therefore the probability of any tax being put on realizations reduces. In that case, you're absolutely right that the current prices still, I think, build in somewhere around $70 of net realizations if you do a reverse DCF, and if prices were to persist at around $80-85, which is what we believe, that is a straight 17 to 18% earnings upgrade on the standalone EPS for both companies. And that is what we believe should actually drive these stocks to be outperformers in the current environment.
In Q3, ONGC's realization was about $61, $62 per barrel. In Q4, what could that number stand at? And Q1 subsequently?
Q4, the average crude price is actually still around, I think, $81 or $82. So, a typical Brent discount is about $1 or so. So that should be the realization for the fourth quarter. It is more about, what FY27 looks like. That will actually drive the story.
And in April so far, what would be the realization? Or because in Q4 itself, we're going to get to 80, 81. Assuming oil prices settle, through the remainder of Q1, are we going to see a big jump even in Q1?
Yes, absolutely. They should, because as of now, we have not seen any measures that have limited realizations for upstream companies. Obviously, I mean, anything can happen between now and the end of June. So it's obviously speculation at this point. But one would imagine that given where physical crude prices are and even paper Brent prices are, if this sustains for another month or so, net realization should definitely be higher for the first quarter.
Okay, Q4 and Q1. What is the consensus EPS estimate for ONGC and Oil India? And what could it rise to?
I have not looked at consensus EPS. I can only tell you that most of the EPS, I think, continues to build in anywhere between $65 to $75 of realizations. And as I said, if you have a $10 increment on this level, you have around a 13 to 14% increment in standalone EPS. So that is what can actually get baked into the estimates as we go along.
Do you think a price hike on petrol and diesel, Probal, is coming post-election? So far, the government has absorbed the impact. But as per your own estimates, right, crude prices stay elevated?
I have no comment on that. It's something that we have speculated on and we have been wrong in the past. Frankly, it's very difficult to understand what the OMC's thinking is in terms of how long they can absorb the losses and how long they want to wait and watch before pulling the gun on in terms of price increases. Well, I can only tell you that given the level of marketing margin losses, even at this point, despite the 10 rupee excise reduction, at some point of time, a price increase is warranted. Whether the OMCs will do it or not, I think, frankly, I wouldn't want to speculate.
Okay, all right. What about the OMCs? But, those stocks have obviously got hit since the start of this war because suddenly crude oil prices from being comfortable at $65, $70 per barrel mark, they shot up to more than $100 per barrel mark. And now we'll have that risk premium, the war premium that will be baked in as well. So what is your view on the OMCs? If you look at it on a particular, ratio, maybe price to book, what is it trading at and how does it compare it with the averages?
So I think with the OMCs, what we've been looking at over the past few months is what did the previous crisis really drag the stocks down to? If you look at the last three major crises that have happened, starting with 2008's financial crisis, I think at the bottom, the OMCs basically crashed to somewhere in the range of around 0.7 to 0.8 times book. So on that metric, very clearly, I think probably another 10-15% downside is merited before the stocks start to really ramp up. Having said that, when the recovery actually begins, the stocks have generally rallied between 35 to 45% from the bottom. So in that sense, there is a substantial amount of upside that can happen. However, and please forgive me for this, the ifs and buts kind of an answer, but then that is what the OMCs seem to be reflecting now. One key thing that is differentiating the OMCs today versus what was the case in the last few crises is that the balance sheet is actually much stronger. The last 2 to 3 years, operating cash flows have improved and net debt to equity ratio is less than 1 for all the three companies, which is something that, I think puts them in a better position to be more resilient and absorb losses for a slightly longer period of time. Having said that, obviously, if the dispute continues and crude prices remain at this level, then there would be substantial losses in FY27. The market, as of now, is very clearly baking in a fact that there's a resolution around the corner. And, prices will start to normalize very quickly back to about $75 level. We are a bit more cautious. As I said, we believe that $80-85 would be the new normal, at least for the next 12 months or so, particularly in the physical market. And therefore, while GRMs would remain strong, I think marketing margins in the absence of a price increase will take its own sweet time to actually get back to positive levels. That is what we sort of are looking at.
Yeah. Prabal, you don't have a view on how this is going to play through for fertilizer companies, is it? I mean, will
I think
yeah.
I don't really track the fertilizer names as of now. So, but very clearly with the reallocation and the reduction in the gas supplies and with the restriction in imports, rather, with the disruption in the imports of key raw materials like DAP and methanol, ammonia, and so on. Obviously, it would create raw material pressures for fertilizer companies. I think the data that was shared by Lata just before my segment, I think clearly shows the sort of contraction in activity across the fertilizer space. So I think that is something that can persist for till the Gulf is reopened.
And public oil companies, of course, is one thing, but names like it's a small company, but HOEC, right? Oil producer. Any thoughts at all? Have you looked at it ever?
No, we don't cover it, so I wouldn't be able to comment on it. I'm sorry.
Okay, all right, Prabal, we'll leave it there. Thank you very much for joining us. Good speaking with you, and that's perspective on the oil and gas space. Mayuresh Joshi is with us at Mark Smith, India. Mayuresh, good to have you with us here. Thanks very much for joining us. Good speaking with you. So let's just start with some of this news-related stuff. I don't know if you've looked at this stock called Aegis, which is into aerospace component manufacturing. Recently listed, I think not even 6 months old. Have you looked at this one?
Morning, Prashant. No, sorry, not enough coverage.
Okay, there's some negative news. A very sharp run-up. I mean, Aegis, if you can pull this up, AEQUS. So, 9th of April was $120, almost 200 rupees on the share price right now. Will we be able to pull it up? Just want to make a quick mention of it. 10 days, please. Last 10 days. Yeah, there you go. Last 7 days, 30% on Aegis. And now there is news that one of its largest customers, I think it's one of the top 10 customers, is basically, they've not cancelled the contract, but they're perhaps pausing to purchase from Aegis. So we'll try and have the company on to talk to us about this. But it's in the right space, huge amount of tailwind, etc. And very, very recently listed in that sense. That's the news with regards to Aegis at this point. Mayuresh, we were talking about the oil and gas space, and we had a quick word coming in on upstream player like ONGC. Some amount of fund interest recently in ONGC. Any thoughts here?
Prashant, I think I was hearing Prabal as well, and very logical arguments put in by Prabal. And it's very, very fluid and transitory as we speak. So one really does not know where oil prices will actually settle down 1 or 2 quarters down the line. Yes, with the infrastructure damage that you've probably seen, the forced demagogues that have been announced by Kuwait specifically over the past few days do indicate that oil supplies will still remain a little tight over the next few quarters, which means oil prices as a consensus should be around the $85 mark, which should aid ONGC's realization on an annualized basis if it remains in that range. Yeah. And therefore, I think if oil prices stay in that range, I think ONGC, oil, HOEC that you were mentioning, Prashant, all probably remain in focus. But so do exploration and drilling companies. So I think look at those moves on companies like the Ceylon Exploration as an example, CBank as a corollary or a proxy to the entire play. I think if oil prices remain elevated, I think these two sectors, both upstream as well as onshore and drilling and exploration, these sectors might probably.
Let's talk about a smaller play on oil, Vedanta. What's your view out there, Mayuresh? I think you were bullish at lower levels. The stock has seen a very, very big run. I recall the interview that Mr. Anil Agarwal gave us here on CNBC TV 18 in September 2023. That was an exclusive interview where people were talking about the company going bust and they're not being able to honor their payments. And from there, the cycle turned itself. The promoter, deleveraged themselves big time at Vedanta Resources. The parent was the problem. The core business was not so much of a problem. And things have really turned around. Now we've got the record date, May 1st. Effectively, if you want to be part of these 5 Vedanta entities, then you have to buy it up till April 29th. What's your view on the stock? It's already run a good deal. Do you think it has more steam?
Morning, Nigel. It has run a very good deal, in fact. And therefore, I think with all the elements in play, I think each business segment might contribute reasonably well over the next few quarters. And again, I think the demerger is obviously had a positive impact in terms of how prices have moved over the last few months. The record date probably coming very, very close. My own sense is that once it receives approval, and subject to that, I think as the businesses probably start operating on its own merits, there is merit for each business actually. And therefore, anybody holding Vedanta, in our opinion, looking at the ratings and rankings as we see them in India, looks like a good bet to probably hold on.
Mayuresh, we'll take a break. Stay with us. More questions coming your way in just a bit. We'll also, of course, focus on some volume buzzers. So Hormuz gets us that. Mitesh and Sudarshan for some technical trading ideas after that. Stay tuned. Okay, welcome back. As promised, the big movers from yesterday with volume price action. Hormuz is here with that list. Hormuz, take it away.
Morning, Prashant. There is a very interesting list this time around because the Z Entertainment, an almost forgotten stock in the recent past. That stock was up almost 8% in yesterday's session. That's gained in 3 out of the last 4 days. And Monday's volumes were the highest since June of last year. It was over 7 crore shares were traded yesterday. The 20-day average is close to around 2 crore shares. And a quarter of those shares were marked for delivery as well. So even the delivery volumes were the highest since June of last year. Close to 2 crore shares marked for delivery. 20-day average is around 75 lakh shares. In the month of April itself, the stock has seen gains of around 20%, but still from its 52-week high, the recent one at least, at 150 rupees, the stock is still down close to 45% from those levels. SBI was an outperformer in yesterday's trading session as the top gainer among the PSU banks, a third best performer on the Nifty as well. Has gained in 8 out of the 12 trading sessions in April. Monday's volumes were the highest in 2 months, over 3 crore shares traded. The 20-day average is around 2 crore shares. The second highest delivery percentage that the stock has had in the last 1 month. 60% of those shares were marked for delivery, and close to 2 crore shares for delivery. The 20-day average of around 91 lakh shares, and from its March 30 lows when the stock had slipped to sub 1000 levels, it's recovered almost 15% from there. And lastly, a CESC in continuation of the power stocks doing well all through the month. The 8th straight day of gains for the stock, and in the month of April, the 12 trading sessions that we have had, the stock has declined only in one of them. And Monday's volumes were the highest in the last 23 sessions, close to 85 lakh shares traded. The 20-day average is around 20 lakh shares. 35% of those marked for delivery, which means around 30 lakh shares were for delivery. The 20-day average here is 8 lakh shares. And in the month of April itself, the stock has gone up by 20% and is also nearing its 52-week high of 185 rupees.
Absolutely. Thanks very much for that. Z, right? I mean, big move yesterday. And all the stats behind the move, of course, as Hormuz puts out. CSC is the other one, State Bank of India. So interesting there. Mayuresh, of course, is still with us with his thoughts. Power has been a big theme, Mayuresh. Any ideas here. I mean, everything has run up quite a bit though, right? In a short order.
No, absolutely, Annie. I think the dynamics still probably remain with the sector as a whole, Prashant. I think both in terms of thermal additions as well as expectations in terms of the 500 gigawatt target as far as renewables is concerned. And let's not forget the peak summer power demand that will probably go through the roof as we speak. Having said that, as a sector, I think it is something that we continue liking at Markets with India. I think one of the recent additions that we've probably done over the last few weeks has been NLC India. I heard the management in an interview a few days back on your channel, and I think the management was sounding optimistic in terms of the vision that they probably laid out. Numbers so far have been very, very encouraging for NLC India, both in terms of the mine capacity and expectations in terms of the lignite production expected to go significantly higher as we speak. The thermal as well as renewable additions are expected to increase multifold. With the corresponding increase in margins, we've already seen margins improve over the last few quarters. For a 45-46% EBITDA margin, 27-28 exit, and looking at a 50% EBITDA margin, along with entry into the rare earth the mineral and metal segment, with the capex largely being funded by internal approvals. I think our own sense is that it's still not very, very expensive. I think it's reasonably valued even as we speak. And I think a lot of drivers act as tailwinds for NLC India as a company and the sector.
Okay, all right. Mayuresh, I want to ask you about Hindustan Copper. You know, the stock that's moved on steroids over the last few years. But it's a stock that it's the only way you can play the copper price move. Now, they've come out with their vision for 2030. However, the vision may fall short of what the market's vision is. The reason I say that is because they are factoring in around 1,550 crores of PAT in 2030. You know, we'll try to get the analysts at Anand Rathi because they are one of the few names that cover the stock. They were factoring in 3,000 crores in 2028. So my guesstimate is they're being very, very conservative, both in terms of volumes and in terms of pricing. Even back of the envelope calculation doesn't give you that number of around 1,500 crores that they're talking about in 2030, going by current prices. So we'll have to find out what they're factoring in. What is your view on the stock? 550 bucks. It saw a big run in the last few days. But it appears this guidance is a little bit disappointing.
Yes, a tad bit below expectations, because I think the street murmurs were that it was expected to be significantly higher. And again, I think the capacity expansions that in copper is probably looking at, both in terms of ore and its mining at 12.2 MTPA by 2030, around 7,000 crores of capex and 1,550 crores in terms of PAT. I think looking at the mining expansions that are probably happening in copper, that figure on the bottom line probably looks a little bit below par. Having said that, on the global macro development, as you tracked yourself, Nigel, I think the mining operations which have got shut globally, the Indonesian mine as an example, the mines in Panama and Chile, the Zambian smelters probably going off in FY25. As the gradual supply starts coming in FY26, I think how much of a supply-demand dynamics does it have on the global copper market? Obviously, it's in a supply as we speak at this juncture. Because of that, copper prices are at an all-time high. There are also environmental concerns to probably deal with globally as we speak. And therefore, I think copper output, both in terms of mining as well as expectations in terms of demand expected to continue strongly in terms of end-user applications, might actually keep Hindustan Copper probably in the limelight. However, I think the numbers are a tad bit below par. Might be sentimentally negative for Hindustan Copper, but let's see what the management has to say.
Okay, all right. Thanks, Mayuresh, for that. Appreciate it. We'll take a quick commercial break here. There's a minute to go, less than that, for the pre-open session. Nitin Agarwal of Motilal Financial Services talks about the key bank earnings. Stay tuned, coming up. Okay, welcome back. The rupee is open 93.31, slightly weaker as compared to the close yesterday, 93.13. The Reserve Bank of India coming out with some rules which are not walkbacks, but basically, I guess, after a lot of feedback from industry participants, easing some actual, genuine corporate hedging. I mean, I think one of the important things, what has happened yesterday, one of the relaxations in that sense is, because of the first two circulars, especially the first April 1st circular, which is where the tweaks have been made, corporates, I mean, say a company ABC outside of India has, INR ECB exposure, and they want to hedge that rupee exposure, rupee loan exposure. The RBI had basically barred outside entities to hedge without being onboarded here in India. I mean, with Indian sort of based banks. So, I mean, they could not say work with a Citigroup in the US, and then Citi works with its unit in India to hedge that exposure. So they had to actually come to India, get onboarded with one of the banks operating, which is get onboarded with Citi India, and then sort of hedge the exposure, which actually, of course, was cumbersome, long-winded, painful, etc. So one of the important things is for genuine corporate exposure, hedging exposure, which is loans, etc., foreign loans and foreign exchange and ECBs, etc. This has now been allowed. Back-to-back kind of hedging has been allowed. Which I think is as a result of representation made by people who have been affected by this. I guess banks have taken this to the RBI. Some pressure, though, creeping in as well. I'm not sure how much of this is related to some of course, what has been done yesterday. But 93.3 or so is where dollar rupee is opening up right now. Well, let's bring in Mitesh and Sudarshan, who are with us with what they'd want you to do with regards to specific trades. Thanks very much, both of you. Appreciate it. Mitesh, you go first. What's the trade? And it's mostly direction from here, but is it first down then up, or is it up and then down, or is it up and up? What's your sense?
So, Prashant, good morning. If I could predict that, I think that would be fantastic. But I'll be very honest. I think that's very difficult to say. We can only make some good probability guesses, and that's what I'll try to do over here. See, all the indicators and the technical evidence which is there on the 1 hour, 2 hour, 3 hour charts is all pointing that we should possibly head higher, because as of now there's no breakdown either in price or momentum on these charts. The medium term charts are still damaged, but this can still be classified as a bigger pullback because we had a very big decline. Having said that, I think on the upside, getting past a 24 500 thereabouts, which is yesterday's high, roughly about 24,480. I think that should suggest that this up move should extend to possibly about levels of 25,000, 25,150. In case the immediate up move does not happen, then I think wait for a decline, and the buying zone will be around 24, 150, 100. So I think these are the levels which I'm monitoring, and we'll maintain broadly a long bias, but slightly nimble, because we've had a pullback which has already been extending, and while there are no signs of a breakdown, I think as I said, this is still against the bigger chart on the screen.
Mitesh, you're being humble. That's what we do every day here with up and down, down and up and up. That is what I guess trading is all about. I mean, if you're doing fundamental analysis, you just buy at a good price and wait, right? So anyway, Sudarshan, you come in. What's your sense, and is there a trade here?
Good morning. See, the markets went up, and then for the last 2 days have been consolidating. Now, in a very normal environment, I would have said this consolidation will eventually lead to a breakout on the upside. So we get positioned, taking a long position, and we wait patiently. But these are not normal circumstances. We have some very big geopolitical news events tomorrow morning, tomorrow afternoon, God knows how many times. This is not a good time to trade. Then the trade becomes, from a trading perspective, it's no longer a basis for trading. It becomes a lottery or even a casino. We don't do that. So my view is, in spite of the fact that the chart suggests a rally, I will completely avoid this market till we have stability on the political front And sometimes not trading is a very good trade.
Oh, yeah. It's a choice. You don't have to trade. Fair enough. So all kinds of views to make the market. That is what makes it interesting. I think things are opening, settling down now, right? I think, but it's wide. Sensex is down a little bit. The Nifty is up a little bit. So we'll see which way it settles. But should be kind of flattish, undecided, holding pattern kind of day. So we'll find out. So, Sudarshan, what are your individual stock-specific trades, if you have any?
Yes, stock specific, there are trades that are, on the long side. Cummins is a buy with a stop under 5,095. Jindal Steel is a buying opportunity with a stop under 1250. Power is a buy, and you're talking about power earlier. Most stocks there are good, have good charts, for bullish charts. Tata Power is a buy with a stop under 425. My only short is Wipro. Wipro is a short to stop above 205. But otherwise, you will find a lot of opportunities in mid caps.
All right, today HCL Tech will be reporting numbers, and in the mid-cap pack, it's Persistent and Tata Elxsi. And HCL Tech has been such an outperformer in the last 5 years. HCL Tech is up 50%, while TCS is down 15%. Mitesh, what would your stock calls be?
So on the stock side, I have 3 buys to a sell. On the buying side is Bajaj Finance, and after the reversal, Bajaj Finance, if you look at the chart, it's been basically sideways since the 8th of April, doing a range of about 925 to roughly about 890, 885, and now it's showing signs of a breakout. So would keep a close watch on this one. Currently, I would recommend buying this with a stop at 904 for a first target of 945 to about 950. Fortis is a buy with a stop at 874 for targets of 920. Grasim, a similar pattern to Bajaj Finance, I think has been doing a 8-10-day consolidation, could break on the upside. So buy with a stop at 27.30 for a target of 28.20, 28.25. And IEX, I think I had a sell call also on the STBT segment yesterday. So now is a sell with a stop at 127.75 for targets of 120.
Okay, all right. Thanks very much. We'll speak again in a bit, Sudarshan and Mitesh. Thank you for those trading ideas. Nitin Agarwal is Senior Group Vice President, Head of BFSI Institutional Equities at Monitorables Financial Services. Nitin, good to have you back on the program. So just give us a sense of, we'll get to individual stocks in just a bit, but since the last time we spoke, any additional feedback you're picking up from your conversation with banks on the side, post earnings, etc. Just trying to assess the impact which we're seeing as banks are seeing it because of these very high energy prices. Is anything showing up, Nitin?
Yeah. No, Prashant. So as we spoke last time, the banking sector numbers have come pretty strong, pretty much on the stable lines on our asset quality. In fact, both ICICI and HDFC Bank have reported provisioning numbers which were well below our estimates. And there are no seemingly red flags, while yes, things remain under watch, and one has to watch out of any impact around asset quality, especially on segments like SMEs, MSMEs. But up till now, I think banks are still presenting a pretty steady outlook on asset quality, and we are not really looking at any untoward developments on asset quality. And besides that, loan growth, I think that's a high point for the system. We have seen a very strong business growth in the last fortnight. And the numbers, while from HDFC Bank were already known in form of a business update that came in earlier, but ICICI Bank did report pretty strong growth on advances as well as deposits for the quarter. And we are expecting this trend to be sustained with the other banks also, which will come up for the reportings.
Just getting to individual numbers in a bit, but just, HDFC Bank, right? If you can talk about it for a second. We reported yesterday, Nitin, that, the legal opinion has been sought, legal opinion has been given, and the current CEO, Mr. Jagdishan, will be seeking a reappointment, as was, I think, widely expected, right? So that is one. The second is, of course, the point about the chairmanship at the bank, right? Again, I mean, if you want to go down, it's of course speculation and I guess wishes from people who track it, own the stock, etc., about who should be the man for the job or the lady for the job. And then how is this one poised with everything which is going on? HDFC Bank.
I think outlook after a lot of recent developments, things are showing some stability. We have seen a good quarter in Q4 wherein the business data, both on, especially on deposits, turned out to be quite positive versus what we were expecting. And even the margins, with that kind of deposit raising, there were some concerns as to how the margins can move now. Can this show slight decline? But the bank reported a 3 basis point expansion in margins. And while they did not really talk about if they want to grow higher than the system, because system growth is also being driven by some very finely priced competitive lending. And HDFC Bank as a whole has been looking to maintain margins while pursuing growth. But overall, the bank did talk about the momentum, which is sustaining well and getting better. So wherein even in our numbers, we are forecasting 13.5 kind of loan growth over the next year versus broadly around 12 number that they did for FY26. And this is a sharp pickup from what they did in FY25. I think the immediate data point, yes, will be the board sending the name to the RBI, wherein we also believe that as the management continuity persists and Sashi's name gets approved, I think that will lend further stability to the bank. And that aligned with the improvement in the operating performance with improved loan growth should help the bank re-rate in the coming year.
Axis Bank numbers are on this Saturday. What would be your key expectations from Axis Bank and even Kotak Mahindra Bank?
Yeah, hi, Rima. So Axis Bank, yes, I think the bank has reported a pretty strong pickup in loan growth. That is one of their key guidance also, that they will want to deliver a 3% higher growth than the system over the 3-year period. And we have seen a good start to that guidance in FY26. But we will be watching out as to how the margin number moves, because over the last year or so, we have seen some NIM pressures for the bank, and the bank has indicated that 1Q27 will be the bottom. And our numbers, we are looking at a 6-odd basis point decline in margins this quarter, and 1Q will be more or less a minor calibration, and wherein therefore this quarter will be likely the bottoming of the margins for the bank. But that's something that we are keeping an eye on. And second is I think the asset quality outlook, because this entire year the bank has bore the brunt from the technical slippages, and which is where the credit cost has also been elevated. So how well can that number improve and how much the credit cost decline, therefore, over the next year is something that we will want to watch out, because in our numbers already, Axis is the name coming from a low base, wherein the earning growth will be somewhere in mid-20s for FY27. So I think comfort around that growth outlook in terms of both the loan growth and the earnings is something that is critical and will be monitored closely.
Okay. The key is whether the margins bottom out. Quick word on HDFC Bank's valuations. Cheap, but the FIs have been selling. The FI shareholding in HDFC Bank has fallen by 4 percentage points in the last 1 year itself. So when you make that argument about valuation to foreign investors, are they buying it or not?
I think while, yes, some bit of selling has happened across the sector, and mainly the private banks, because the sector as a whole has expanded considerably. So the choices are just too many. We ourselves at Motilal are covering like 77 BFSI stocks now. And I think incrementally, another thing that investors are keeping a view on is how the earning growth is looking like. Because the entire FY26, we have seen the earning growth coming down to almost a standstill at less than 5% earning growth for the banks, private banks as a whole. And now at our numbers, we are looking this number to improve towards mid-teens over FY27, which looks exciting from FY26 comparison perspective, but still looks a little lacking if you are expecting 18-20% earning growth to show up anytime in the near term. And which is where I think as this earning growth gains strength.
Right. Nitin, sorry, apologies. Markets opening. I mean, it's not a big open or anything, but open is open. So we'll thank you there. Appreciate you joining us with, that opinion. We got the bulk of it, at least. Nifty is 24,400, so about 0.2% higher. The Sensex is up 200 points. The Nifty Bank is starting about 0.5% higher. The mid-cap index is starting about 1/3% up. So this is, actually all told, pretty decent start. Holding pattern more than anything else. 870 up, 530 lower, and waiting and watching with regards to what comes next with regards to US-Iran, and of course the price of oil in that sense, which is largely unchanged over the last 24 hours. Or so maybe $1 lower, that's it. Nifty heat map. How are stocks opening? Right to the word go. That should come up on your screen. And I'm assuming more up than down. Yeah, some 15 down and 35 up. Shriram Finance is the biggest gainer. Adani Ports, ICICI Bank, Bajaj Finance, Axis Bank. So lots of banks which are doing well. SBI Life on the one end of the spectrum. There's Infosys, Ultratech, which are starting lower. I think I saw PNB Housing with a big 6% pop and Bank of Maharashtra. So lots of stocks which we put out as part of the earnings list reacting favorably, at least at this point in time. So let's get down to it. Look at individual names. The open on the headline indices is about 1/3% higher. Nifty Bank, the outperformer this morning.
Well, modestly higher for the benchmark indices, up 0.3% on the Nifty and the Sensex. The Nifty at 24,450. The advanced decline ratio is positive to begin trade with 1,500 stocks on the BSE advancing for about 700 stocks declining, so 2:1, and that's good. Mid-cap index too opening with a gain of nearly 0.5%. The big winners today, Shriram Finance, that's the top gainer. ICICI Bank continues to see buying. Along with that, you've got Axis Bank and HDFC Bank inching up more than 0.5% to start trade with. Adani Ports is up over 1%. That's 1.25% gain on that. NBFC seeing buying. Bajaj Finance higher. Nestle sees buying ahead of the numbers later today. Interglobe Aviation also up in trade. Yesterday, Interglobe Aviation was a tad bit subdued on the back of that increase in crude prices, but today it's managed to open up in the green. HCL Tech, keep your eye on that. HCL Tech also reports numbers later today, and while the rest of the IT pack, like Infosys, TCS, have opened in the red, HCL Tech has managed to open up in the green, so continues with its outperformance. On the way down, SBI Life is the big loser today. That's breached its 50 and 200-day moving average with more than a 2% fall. IT is on the back foot. Infosys now inching towards a 1% loss. Ultratech Cement is subdued in trade, and Cipla too. Cipla has opened up on the flatter side. All in all, it's a modest start. Asia-Pacific markets are also higher in trade, so we're moving with them.
Vedanta has announced that record date. So if you want to be eligible for 5 different types of Vedanta shares, well, then you'll have to buy it before April 29th. And that explains why the stock is up close to around 2.5%, because some believe that still could be value unlocking from here. Let's see how that goes. So that's the stock that's up and about in today's trading session. You have a couple of these cement names as well. JSW Cement, post-listing, the stock saw a sharp correction, I think from around 140, 150, all the way to around sub 110. That's popped up close to around 5% in trade. It's a good move out there. Hindustan Copper, well, the stock has actually opened up close to around 1%. So maybe short of Anand Rathi's estimates, but the street says, okay, they're going to be moving from around 500-600 crores of profitability to around 1,600 crores of profitability. So for the time being, the street has accepted that. Let's see, whether or not it holds on. And also, we'll have to get the management's rationale why they're guiding for this sort of a number. So that's another one in focus. Z Entertainment, the stock that saw a big move in the last few sessions, that's cooled off a little bit. That's down. Ola as well, another stock that saw a big move in the last few trading sessions, that's cooled off. Bajaj Consumer, the stock is up more than 30% in this month. The numbers look quite good. The management sound quite optimistic when they spoke to us here on CNBC TV 18. That, in fact, has cooled off a little bit. But that's one of the stocks that have done very, very well. Carousel, that stock, in fact, had open gap up. So just keep an eye out on that name. They've announced that they're going to be going ahead with some capacity addition. So the street would read it that, they're getting confidence back. Explains why that stock is up. And Nelco, that one is bursting away. Up more than 10% as we speak. Big up move on that particular name. Net, the bulls are raising their bat. They've already scored a century in the first few minutes itself. And the Nifty Bank, again, at around 57,000 odd mark, which is the crucial resistance level. Yesterday, U-turn from here. You have 200 DMA at around the 57,200 odd mark. Prashant.
Okay, 5:1 in terms of advances to declines, but this is still early. I mean, right out of the gates in that sense. So give it some more time before, we see. I mean, in any case, things can, as we've seen over the last couple of days, flip around a little bit. We saw some of that yesterday, starting at about 1 o'clock or so in the afternoon. I think we mentioned lots of 1, 2, 2.5% kind of movers with volumes on the upside. Apart from SBI Life, maybe on the downside, SML Mahindra, which we've highlighted, there's not very much. Policy Bazaar maybe is down about 1.5%, but nothing beyond that. These 3 or 4 names that I mentioned with volumes. MCure is down about 2% or so at about 1,600, and it's got some volumes on it. So it's quiet on the downside and lots of activity action on the upside. Manishi Chaudhary is with us, Chief Executive Officer, Emmer Capital Partners. Manishi, good to have you with us here. Thanks for joining in. So just a quick word, Manishi, on the theme which has been doing well. I guess markets latched on to this entire, energy security / power, and what can we buy here, which thematically works and is in the general right direction of it. So, transmission, distribution, IPPs, even, the renewable companies, etc., have seen a bit of a snapback. Have you looked at that space, Manishi? What are your views?
Right. Thank you very much, Prashant, for that question, and thanks for having me. A very warm welcome. Good morning to your viewers here. Coming back to the theme that you pointed out, as a consequence of what we are seeing, the Middle Eastern crisis, which is translating into a potential energy shortage with the transit choke points, it is quite obvious that pretty much the entire world would be having their focus not only on energy security going forward, but also on alternative energy. So we would think that green energy, which was, I wouldn't say that enthusiasm had subsided earlier, but with the new regime in the United States, that focus had, was possibly falling by the wayside. But it's almost certain that that's going to revive. And I think there are interesting ideas in India when it comes to renewable energy. India has been kind of a reasonable success story as far as this energy transition is concerned. But of course, the big giants in this area are still sitting in China. China has not only close to about 80% of the intellectual property pertaining to renewable energy, solar cells, photovoltaic cells, etc. They also have incomparable manufacturing capacity in this area. So yes, we are very closely looking at this area where it forms an integral part of the recommendations that we have in our model portfolio. Not too many from India at this point of time, more from North Asia for understandable reasons.
But any from India? Hi, morning, this is Rima here.
Thank you.
Any stocks from India in your model portfolio related to this theme?
Not quite related to this theme. We do have, let's say, Larsen & Toubro, which is an important player in both nuclear energy and also, new energy infrastructure construction, particularly in the Middle East. We must not forget that after all this is over, after the dust settles, there will be a strong move towards rebuilding Middle East. And not only that, even building new energy transportation infrastructures. There may be new pipelines may be necessary, across the east to west transition in Saudi Arabia, for example. And these countries have already been talking about. So there are quite a few companies in Asia, including L&T in India, including Hyundai Energy, Hyundai Industrials in Korea, which have long experience in that region. So yes, I think some of the Indian companies would be well suited to putting up new capacities and also creating new energy transportation infrastructures in that region.
So in this rebound that took place in the month of April, where Indian indices surged about 10%, individual stocks up 20%, what were you all buying?
Two things, in fact, three. I have always been thumping the table on the banks, the private sector banks. They remain clearly on the focus on my radar. I would also talk about the metals and mining, the base metals companies. If you look at the earnings estimate upgrades in India and all across Asia, in India, possibly there are just 2 or 3 sectors which have had earnings estimate upgrades, and these base metal companies like Tata Steel, Hindustan Zinc, etc. They fit squarely into that silo. They're also relatively cheap, reasonably valued, so palatable for both foreign institutions and domestics. I would also talk about the consumer discretionaries. And here we have quite a broad spectrum to look at, primarily automobiles, the passenger vehicles in particular, but also, let's say the diagnostic chains, the healthcare and diagnostic chains, even some of the the supply chains, like the consumer discretionary or the distribution chains, rather, which are essentially in the Indian context, the e-commerce companies, the leading e-commerce companies, which are the market leaders.
Hi, Manishi. Good to see you in. Manishi, but what are you making of the Indian markets? We saw a correction, a decent-sized correction, particularly the broader markets, and then we have pulled back in style. The problem is we need to get used to higher crude oil prices. And, if you compare Indian market valuation today in comparison to the historical averages, well, we're more or less in line or maybe a bit of a discount as well to the recent past. But in comparison to other markets, we're still not very cheap. Your view on the Indian markets, are we being a little bit too casual about the risks ahead of us as well? Because we need to get used to crude oil prices at probably $80 to $90 a barrel at least.
That point of complacency that you brought out, and thank you very much for, hitting on that point. I would say that not just about India, but about global equity markets. If you look at what we have seen over the past month or so, it's been a V-shaped recovery. March was a disaster in the wake of the Middle East conflict. Now, Asian markets and the US markets have actually gone back all the way to the pre-war levels. In fact, the US markets are a bit higher, which seems to be telling us that the markets believe that this is over. We are back to the pre-war situation of a very clear, the Strait of Hormuz will open up, and we will also have, energy prices gradually coming back to the pre-war levels of, let's say, 70 to 75. As of now, there's no sign of that happening. The Strait of Hormuz is still blocked. There are still discussions going on, and one doesn't know, going by the tweets and counter tweets, the reactions from both sides. There is no certainty on where that negotiation, the upcoming negotiation, would lead to. So I would actually be a bit cautious, and especially in the context of India, which is a huge oil importer. And if the average, the Indian basket remains at about 90 to 100 or even higher, the government and the central bank would have to face a very interesting and, almost a, kind of a rock and hard place kind of situation. Because do we let the fiscal deficit expand by providing subsidies, cutting duties on oil to reduce the pump gate prices? Or do we let the pump gate prices increase, control the fiscal deficit, but at the same time, drive higher inflation and therefore a degree of demand destruction? This is possibly the most important decision that the government would have to deal with going forward. Even if the war is over, the kind of damage that the energy infrastructure of that region has faced would not let the entire energy supply come back into full stream immediately. So we will possibly have to deal with maybe 60, 70, 75% of energy production and transportation coming back on stream. So, these things would gradually become apparent to the markets globally, not just India, over the next few months.
No, you're absolutely right. And markets, of course, try to discount very, very fast. The underlying dynamics play out more slowly. I just want to highlight PNB Housing for a quick bit because, that is doing very, very well. It's reacting. And I think there's been a call in the morning today with regards to the the quarter which has gone by. And this is the first quarter under the new CEO, and markets like what they've heard, 10% higher. We'll put out some details with regards to what was said, etc., from the new CEO at PNB Housing Finance, and I think that's the reason why. I mean, the stock opened high of about 6% or so when we started at 915, and has moved up from there. So, limit up 10% now, but I think it's an F&O stock. So I guess it's a temporary freeze before it opens up once again. Housing finance has been, I mean, generally it's taken a backseat over the last 1.5 years or so. So many companies, both private and otherwise, private equity backed, which have not really done all that well, even though, I mean, stocks have and growth rates have been in the 15 to 20% region for a while. Manishi, any thoughts here? PNB Housing or anything from the housing finance space?
Well, I mean, I would comment generally on the consumer finance and, sort of drill down to housing finance more specifically. See, I think it's all got to do with the consumption sentiment in general, because, and it's again, not just India, we're seeing this in China also. The householders are unwilling to leverage their balance sheets. There is possibly a trend of deleveraging, even though in India we have seen that even for things like taking a vacation or buying an expensive smartphone, people are willing to take loans. And that's, it's kind of a dangerous situation at this point of time, if that. In general, if you look at total household debt as proportion of GDP, India and certain other pockets of Southeast Asia are actually quite low. It is hardly in the range of 40 to 50%, much lower than the global or regional average. So I would say that there is a lot of room there to grow. But until and unless the householders, the general population, is certain about job creation and the ability to hold on to their jobs going forward, there's a certain trend of precautionary saving or lack of willingness to leverage their balance sheets would possibly continue.
Manish, we'll leave it there. Thank you very much for joining us. Good speaking with you, and it's always a pleasure having you here on the program. Thank you. So that is the picture as far as markets are concerned. 24,461 is where we're at. We're up about 100 points or so. I just want to make a quick note of what's happening in the broader space. So you've got PNB Housing, of course, which is by far the biggest volume-led gainer. There is Vedanta, which is at the number 2 spot, but with just 1.5% in gains. Mazgaon Dock is up about 1.75%. Garden Reach is up about 2.25%, and there's Zydus Wellness, which is up about 3.6% as well. Rima.
All right, let's move on now and move on to the next discussion now. It's on the power sector. Sumit Kishore, Executive Director at Axis Capital, is now joining in on the show. Thank you very much for joining in. Let me begin with your views on IEX. Now, yesterday, the stock took a bit of a knock, and I think from July 24, which was the first time when the market coupling news came to the fore, the stock has fallen close to about 30-odd%. Give us your sense of the way this draft paper that has come out. We still have time. Feedback is going to be open, I think, till the 16th of May. How do you see this play out?
So I think the CERC draft power market regulations came out recently, and they signal that market coupling framework finalization by the regulator is now in, and there is potential implementation of market coupling by the end of FY27. What that does is that you'll have uniform price discovery post-market coupling, and that shall remove the arbitrage that concentrated liquidity at IEX. So market coupling shall cover not just the day-ahead market, but the real-time market also, which together accounts for over 75% of the total transaction volume on IEX. There'll be different commencement dates for each of the segments, but we'll start most likely with the day-ahead market. So I think, as you mentioned, the public comments are due by the 16th of May. and subsequently, after the final notification comes, there would be a 6-month time frame for the implementation guidelines to be rolled out. So my sense is earliest by end of FY27 is when market coupling goes live, unless there are other events to push it back further.
I got that. And Vivek Sangla is also with us, MD and CEO at Power Exchange India. So just to for our viewers, right, I mean, who are focused on the stock, for example, Sumit, morning Prashant here, this is happening, right? There's not a question of whether it'll happen, but as you say, it's just, I mean, the timelines, it's about timelines now.
It's about timelines.
Yeah.
That's right.
Right. And in this framework, what will be the role of IEX? So IEX, I mean, so Grid Controller of India is essentially going to which is a government not-for-profit company, which is where price discovery will happen. And IEX is where the bids will be aggregated. So Grid Controller is like the exchange and IEX is like the broker?
So all the three exchanges, IEX, PXI, and SPX, will essentially become bid aggregators. And Grid India, which is a market coupling operator, now would discover a uniform price for all the three exchanges for a given time slot of trading. And this would be applicable to the collective market transactions, starting with the day-ahead market and maybe in future apply to the real-time market.
Just one more quick question before we get Vivek in. What were the valuations of IEX before this began? In a sense, the peak valuations. And now that it's no longer setting the prices, it's only going to be aggregating, what is the appropriate valuation multiple one should ascribe to IEX?
I think before we get into valuations, what is more important is to see the impact on the denominator, which is the earnings. So I think IEX has had a long entrenched leadership in the sector, a technological edge, and its customers have benefited from its data analytics and services over the years. So market coupling basically presents a risk to the market share in day-ahead market and real-time market for IEX, where practically have 99% plus market share. And if price competition on fee or commission kicks in, there is potential for higher downside to revenue that might pan out over the next, as market coupling gets into force. But I think it's very important to note that exchange is the most efficient mechanism to bring the buyer and seller together. And in the power markets, India's long roadmap of power demand growth, rising renewables, storage solutions are all tailwinds for rise in the share of electricity that gets traded on the exchanges as part of the total electricity transacted in India. So I think beyond markets factoring in the uncertainty around the extent of earnings cut or the impact for IEX, we are structurally positive on the growth roadmap for electricity exchanges on a long-term basis.
Okay, got that. Let me bring in Mrs. Singla as well. Mrs. Singla, so let me ask you this, right? As Sumit was talking about, one is, of course, the roadmap for electricity exchanges. You're one of them. But in the shape and form that we were discussing earlier, this is is implemented, what is it going to do to your earnings, sir? Or for that matter, earnings of an electricity exchange like you?
So good morning, everyone. I think market coupling is an inevitable requirement of the power sector, which has already been delayed a lot, and now we can see the light at the other end of the tunnel. And as far as power exchange is concerned, we already have the leadership position in other products like TAM and REC. And once this level playing field is available for all the exchanges, definitely PXL is going to increase its market share in the TAM and RTM segment also, and which will eventually benefit our top line as well as bottom line significantly. Ultimately, what I see is we have been in touch with all the buyers and sellers and customers in the market. They have been supporting us in other products, and I don't see any reason why they are not supporting us in the TAM and RTM segments once the market coupling is in place. And definitely we hope to be the market leader in power exchanges once the market coupling is in place.
Okay. Mr. Singla, the CRC is also considering cutting the fee cap from 2 paise to 1.5 paise. And here the argument seems to be that now that you're no longer discovering the price, you're only sort of processing the order, enabling the transaction between the buyer and the seller, you can lower the rents. What is your own view on this, and what kind of feedback are you going to lobby for before 16th of May?
Let's see going forward, because the expenses of the exchanges are going to remain same what it has been in the past also. With the market coupling, I don't think there is going to be any reduction in the expenses that exchanges are making. And we'll discuss with CERC the logic behind, the rationale behind keeping the prices same or increase it or decrease it over a period of time.
Sumit, what are your earnings? What will they do in earnings per share, IEX, now? Once this comes into place, I think they did 5 rupees in earnings per share last year. What's the estimate?
I think the estimates are as published basically for FY28. We are still hovering around 5.5 rupees. But the bigger question here is 75% plus of the volumes are in the collective market transactions, which could get impacted because of the market coupling order. So one needs to see that the long leadership position that IEX has had would allow it to retain what percentage of the market share, which is 99% plus in the 2 market segments of traded market and real-time market. So the extent of where this market share settles and whether the pricing remains at 2 paise per buy or sell leg or 1.5 or wherever it goes to, because competition would become a tool, would see pricing as a tool to get market share. That's something that needs to be watched out. So I think earnings per share is right now a volatile number. It depends on where the market share really settles down.
Got that. Mr. Singla, thank you very much for joining us. Sumit, appreciate your time here on CNBC TV 18. We'll track the story with both of you in the times to come as well. 100 points higher, 24,464 is where the index is trading at right now. Nigel.
All right. Well, time to slip into a short break. But up next, we'll be getting Anita Ranjan of RBL Bank as well as Aditi Nair of ICRA to join to talk about India's core sector activity. Stay with us.
Welcome back. Core sector output has contracted 0.4% in the month of March. It's the first contraction in 5 months. Anita Ranjan is the Chief Economist at RBL Bank. Aditi Nair is Chief Economist at ICRA, and both are with us to talk about this. Thanks very much, ladies, for being here on the program. Anita, if I can start by asking you, is this, in a way, an indication of what is to come? Because, I mean, the real entrenched impact of high energy prices is only going to start to show up in the months to come. The conflict started late February. March, of course, people were still kind of sort of figuring out when, how long this is going to go on, and a lot of curtailment, adjustment, etc. has happened since. So what is your sense? How do you read these numbers?
So obviously, first of all, thank you for having me on the show. And obviously, these numbers kind of indicate the war impact in March. So if we break it down into various components, if you perhaps start with fertilizer, a 24% decline is obviously after, a steady growth for maybe 2 years, is clear indication that obviously input natural gas was not available, which is why the curtailment in availability has hit them. Secondly, if you look at sectors like natural gas, for instance, which has grown after almost 2 years of decline, about 6%, there again it's like push because of the absence of import availability. Petroleum products are clearly flat, and they were already before this war impact as well. Now, if you look at electricity prices, it's also a combination of slowdown in manufacturing activity plus rainfall in some of the areas. Then if you look at steel and cement, which was going very gung-ho for the last, almost 6 months, we saw even double-digit growth in some of the months, has slowed to a 2 to 4% kind of a growth, which is possibly also the impact of the fact that construction activity must have slowed down because Morbi segment, the ceramic segment, obviously did not get gas, and overall slowdown in activity has hit this sector as well. But now coming to what we are looking at prospectively, compared to March, now fertilizer, from what we hear from the government and what government has put out, 90% of gas is now available for fertilizers. Almost 70 to 80% is available for industries compared to what it happened in March when we started with 40, 50%. It started getting.
Anita, sorry to interrupt you. That seems a little. I don't know how it's good news that it is improved. Availability is better. But how is it better? And will it stay better?
Yeah, because government is obviously diversifying its imports from various countries. So the question is about the cost. Obviously, it's going to come at a higher cost. But from what we understand, bulk of the cost, especially for fertilizers, will be absorbed by government, and rest will be a pass-through. So they are contracting from the spot market. They are going and diversifying with various countries. So that's where they are able to kind of navigate through the overall phase. And mind you, they're not even cutting it for consumers. So things will not be as bad as March. Say fertilizer won't decline by 24%. We may still see a moderation, but I would think that things will start to normalize. Cost impacts will definitely, that's a separate picture. Cost impact will definitely start to hit in some way or the other.
All right, let me get in Aditi for a quick word in as well. Aditi, go on. What's your assessment about what is to come?
So, just in terms of if we just wrap up the March quarter itself, firstly, we're looking at a 1 to 2% growth in the IIP, so much lower than the 5% growth that we got in the previous month. And on the GDP side, we're looking at a print of just around 7% because too much of the margin impact may not be there in the March quarter. I think it'll be felt a bit more in the April quarter unless things resolve very quickly. So we're looking at a 7% GDP growth for Q4, and that would bring the full year GDP growth to 7.5%. So that's just wrapping up what that quarter would look like. Now, if I delve into the data, core sector gives us the production side data, and we have a whole host of other high frequencies that give us more of the consumption side of the economy. So here, there is a dichotomy which has come in the March numbers. Clearly, it is the production side that got hit, whereas a lot of consumption side indicators still held up. So steel production growth slowed down quite a lot, but the demand growth on the consumption side was still very high. Similarly, petrol and diesel consumption growth was still very high because, there really wasn't that pass-through to higher prices. So that signal in terms of prices was not there, and availability was not really constrained on the petrol and diesel side the way that it was at least for some time on the gas side. So it's a mixed bag. I think overall, we are going to see a sort of K-shaped impact on different sectors, definitely where prices have gone up a lot and availability is a concern. That is where you will see the higher impact. Then there will be sectors where prices are high in terms of imports, but availability is not so much of a concern. So the impact would be more muted. We're looking at 3 scenarios to model GDP growth for FY27. So the first we're calling crude at 85, and then we're looking at crude at $105 and $125 per barrel for what we are actually buying in India, not the mechanical Indian basket, but the actual cost of imports. So at $85 per barrel average for the full year, we are looking at GDP growth coming in at 6.5%, 5.8% for 105, and 5% if it averages as high as $125 per barrel for the entire year.
We would have loved to go on, but completely out of time. Thank you very much for joining us, ladies, for that assessment of on the economy. Well, Grow reported numbers and it's been a very strong set. Ishant Bansal, co-founder and CFO of Grow, is with us. Ishant, good morning. Good to have you with us here. Thanks for joining in. It's been great across the board. We'll get into some of the numbers, but straight out of the bat, let me ask you, Ishant, this coming year, this financial year, the STT hike has come into place. Of course, we'll have to wait and watch whether that really takes a bite out of the F&O volumes or not. Can you start by giving us a sense of, have you seen anything at all on the futures or the option side?
First of all, thank you so much for having me here. So on the STT side, if I look at it in the last 2 weeks when this regulation got implemented, we saw there is no change or a significant change on the option volume. But on future side, there was a slight dip. Obviously, we have to wait for this whole quarter at least for the whole process, a whole kind of time to kind of go and see if this is because of volatility change or it is specific to STT. But our estimation is that options might not take too much of a hit, but futures might take a slight bit of hit.
How much, Ishan? Any? If you were to leave us with a number, I know it's an assessment.
So futures again, futures will see, I think 5 to 10% kind of a hit is what I'm as of now seeing, but largely coming in the stocks futures. But again, the expiry of stock future is by end of this year, this month.
Okay.
I think closer to that, we will have a better idea.
If I were to take a full year kind of an assessment, you're saying 5 to 10% on futures volume perhaps is a reasonable assumption to make.
So as of now, it looks like that, but expiry, closer to expiry, you get a better idea. And the expiry will come by end of this month.
All right. Hi, Ishan. Good morning and good to see you win. Ishan, let's focus on the revenue guidance. Last year, you ended closer to around 20%. I think 19% revenue growth is what you all did. The street still seems optimistic that you all will do the mid-20s, maybe 25 to around 30% in terms of revenue growth. What makes you that confident? If we should be working with that sort of a range, point number one. Point number two, the first quarter will be hit because of IPL costs, right? Could you quantify that number?
Sure. So if you look at from a revenue growth perspective, if you look at instead of year on year on a quarterly basis, we've been growing somewhere between 10 to 20% quarter on quarter. So from that growth rate, we are actually been actually much higher than what we were also expecting. But if you look at last year was a kind of a huge dip in Q4 FY25 because of the F&O regulations and true-to-label regulations. So this year, our expectation is we will be able to do better than last year for sure, because the base from which we are starting is again slightly on the lower side because of the regulation impact in the early part of the last year. And on the second part of the question on the IPL side, which already is going on, and we have participated from the marketing perspective, there is typically, you can say 50 to 60 crore kind of extra spend that happens.
Okay.
But it generally, if you look at overall cost to go for us, which is where our marketing cost is, it is between 450 to 500 crores. We don't expect that to significantly increase in this year as well on a full year basis.
Got that. Ishan, Fistem lost about 10 crore, Grow MF lost about 21 crore in Q4 alone, and you've guided for these two to turn profitable only in FY28, which means potentially 8 more quarters of losses. What are you anticipating, worst case, in terms of the kind of losses these two entities will have, or do the losses continue to narrow as they hit profitability? And what gives you that confidence about FY28, that these two entities will turn around? What are the revenue assumptions you've made?
So let me take on Fisdom first, because Fisdom is where our expectation is that in 28 it will turn profitable. So there are a mix of two elements that are happening. One is obviously the revenue is growing, and as we integrate this platform on Grow side, there will be more growth that is coming because of Grow customers as well. So we expect that Fisdom's revenue will keep on growing. So roughly, I think our expectation is 2x of platform growth that will come on the wealth side versus platform growth of, let's say, 20 to 30%. Beyond that, the cost also we think will actually come off a little bit in the initial period, because of a lot of the cost that we are currently seeing is coming from the integration piece. If you look at the broking piece that was there in the Fisdom side, we have actually kind of consolidated with Grow. So similarly, some of these costs will also kind of come off in the initial period. And in the later half, you will see the revenue kind of increasing and hence the profitability probably hitting earlier than the FY28 as well. But on a full year basis, I think our expectation is 28 probably will be actually profitable compared to FY27. Whereas on AMC side, our expectation is not even at FY28, probably will take longer because the revenue growth is very fast, but the base is very small. So I think last full year, if you look at it, I think we would have done somewhere around 10 to 12 crore of revenue. So that business has to probably go at least 5 to 6x for it to become profitable. I think it'll take more than 1 to 2 years. It'll be probably 3 to 4 years when that business will become.
Ishan, just a quick word on the MTF side of things, right? Which is, of course, highly profitable, not just for you, but for all brokers. Could you, by the way, is there we've been hearing, of course, this is talk, but let me put this to you, that maybe there is something coming on the MTF side from the regulator. Not necessarily from the regulator. Automatically, people assume it is negative. I don't mean in a negative way. But is there anything pending there in terms of regulation, etc.?
So there is obviously some discussions which are happening with the regulator on MTF side, but it's largely to again looking at ease of doing business and simplifying things. Because today MTF regulation has some restrictions which are not there on, for example, derivatives as well. So, for example, mutual fund, you can't pledge to do MTF trading today. And some of these things are actually creating a little bit of complication for the customer as well. So some of those things probably change. And from a risk perspective also, MTF has been scaling in the very near future. Last 3 to 4 years have significantly scaled. And regulator want to probably look at it in a different way and see how it can be created in a way that it is safe also for the customer in longer run. And it can still scale as a business without getting worried that it will impact the industry at a whole as well.
Yeah. What Ishan basically is saying is that so far, if you want to use the MTF as a consumer, you need to bring in cash or you need to bring in stocks. But mutual funds, your mutual fund investments are not allowed to be pledged to avail of the MTF facility to take positions against whatever interest rate that you get charged. But maybe there is a relook which is happening. So it's actually positive if it happens, especially from an intermediary, from a broker perspective. Just one quick question, and maybe this is slightly, in that sense, out of syllabus, if I can put it that way, Ishan. All these new financial products out there in the West, right? You've seen how prediction markets now are a big thing. You think directionally we are going to go kind of go that way, headed that way with more and more, things which will appear here as well, which we're seeing in the US right now?
So I think prediction market is more comparable to somewhere a gaming or real money gaming kind of a framework. So it doesn't look like that India is today looking at something like that. But definitely India from a capital market perspective where there are there was a lot of talks about future and options being really negative for the customers. Some of those new regulations have actually helped in creating a more safer market. I think we will focus more on cash going forward as well. Still, India is significantly lower on a EDTO basis. I think developing those markets will actually make more sense first before entering into something which is still considered like very risky even in US.
All right, Ishan, give us a couple of numbers. The MTF book, how big do you think it can grow? As you've been telling us in the past, as a percentage, it's still relatively low and you see huge scope. So what is the share you want to garner out there? Point number one. Point number two, you said revenue growth in FY27 will be better than 26. Fair to assume that 25 to 30% at least is what you could grow in terms of revenue?
So I think 25 to 30% in terms of revenue is a safer assumption.
Okay.
And on the MTF side, today we have around 2.7% market share on the MTF piece. And if you look at on the cash ADTO, we are today at around 15%. So we see both of them converging in a longer run, but it will obviously take some like a bull run in between for it to reach to closer to those numbers. So if it happens in next 3 to 4 years, we'll probably be expanding that number probably almost 2x in every year in some ways for us to reach to like in 3 to 4 years. But else if it takes probably like 5 to 6 years to reach there, probably we'll do like a 50 to 60% growth on a year-on-year every year basis.
Got it. Ishan, on your cash market share itself, 15%, I think you mentioned. What's the strategy with regard to, garnering more market share, client acquisition as well? If you could help us out with that. A couple of brokerages, they're very optimistic about your growth, and they're saying that operating leverage will play out. Do you have a rough estimate out there in terms of margin guidance?
Yeah, so let me take the first one. So if you look at the growth rate for us is largely coming on two pieces. One is we are acquiring largest number of the customers, and those customers are retaining with us for a really long period of time. And in a bad market also, we see that our kind of market share improves, even though in absolute the number might not increase, because our customers actually don't churn from the platform. And as they become older, they actually transact with larger amounts, with larger wallets. And that helps us increase the market share on the cash side. So this 15% number used to be like more closer to 10% a year back. And we have significantly improved it in this year. And from a margin perspective, if you look at large part of our cost structures, even the cost to grow, cost to serve, and cost to operate, all three are relatively in a fixed nature. And they obviously increase like 10 to 15% year on year. But we see that the revenue growing faster than that. And hence, our operating leverage plays out where our margin keeps on expanding year on year, at least in the coming years that we are.
Because that's the thesis, Ishan. But is there some steady state margins you could help us with?
It's very difficult to say steady state margins because, again, I think there will be a time at which revenue growth will probably become equal to the cost growth. That is the time. But if it happens earlier, then probably the margin will stabilize much earlier. But till now, on an incremental basis, we see somewhere around 90% of margins. So we see that continuing for some time for sure.
All right. Ishan, we'll leave it there. Thank you very much for joining us. Good speaking with you, and good luck as you continue to execute. Stocks, of course, done very well. Recent low was 150. Stocks back up at about 200 rupees this morning. So 205, it's moved up a little bit more as we speak. So it's a 5% pop. I think we started the conversation with a 2.5% increase in Grow. And the market, I guess, likes what it is hearing from Grow in that sense. We'll bring in Chandan Taparia with a quick sense of the markets and what he wants you to do in terms of trades. Chandan, good morning. Good to have you here. Your trades.
Yeah, good morning, Prashant. Thanks for having me. So Nifty is holding well above its 50-day exponential moving average. And we have seen decent run-up in last couple of weeks as market from the bottom near 22,180. And the important part is holding well above a key level of 24,444. If I look at the data setup, India VIX is holding and hovering near 18, 19 marks. FI long short ratio has recovered. Even the Nifty put call ratio is sustaining at higher zone. So I believe that till Nifty holds above 24,444, use the support of 24,300, and index can head towards next retracement hurdle at 24,750 to 25,000 marks. And if I look at the Bank Nifty index, we have seen more than 3/4 of recovery, and the index is holding well above key moving averages. As of now, till it holds above 56,750, we believe the ongoing momentum could extend towards 57,750 marks. And talking about stock, first trading idea is buy on Ceasefire. We have seen that entire power and energy sector is doing well, and Ceasefire is one of the strongest counter, which has been making higher tops, higher bottom. We have seen a structure of the clear uptrend with rising support trend line. In fact, the data setup on the derivative side is positive for the long build-up. So we are recommending to buy with support of 790, and the ongoing move can extend towards 835 to 842. Second trading idea, that is buy on Cummins. The Nifty capital goods sector is doing well, and Cummins and ABB are two preferred names which entered into the lifetime high territory. Cummins was resilient at the time of market decline. When market recovered, It moved fast. We have seen better rollover. Longs are intact. So one can buy with support of 51.50 and Cummins can head towards 54.60 level. One more trading idea that is from defense and shipping name, that is buy on Mazdok. Stock has bottomed out after the weakness of last many months, a turn from key retracement support zone. So recommending to buy with support of 26.30 and Mazdok can head towards 2900 levels.
Got it. All right. Thanks a lot for that, Chandan. Well, focusing on a couple of stocks that are moving around then, Vedanta, the demerger date has come out. The board has approved May 1st as the record date. The last day to buy the share effectively then is 29th of April because, you have a holiday on May 1st. And on May 1st, the share should be in your account. So the last day is 29th of April. Keep that in mind. If you're a Vedanta shareholder, you'll receive one share of each of the businesses, the aluminium business, of the power business, of the oil and gas business, as well as of the iron and steel business. So basically, you'll have 5 listed shares of Vedanta you'll be holding if you buy this share, current share, before 29th of April. The reason for the demerger, well, the structure getting simplified and the management as well can focus on various verticals and the rebranding exercise as well gets completed. The 5 companies will be listed on the exchanges between 4 to around 8 weeks, depending on the approval process. So that's going to be important. The target prices, well, a couple of brokerages have been very, very bullish for the last many, many months. In fact, some of them have gone ahead and realigned their target prices. So Nuvama, they have a target price of 899 rupees. That includes 52 rupees of dividend that they're factoring in. And bulk of this target price comes in from the aluminum business. Closer to half of this target price for that 51% stake they have in Balco, as well as Vedanta Aluminium. And for Vedanta Limited, which will be holding on to Hindustan Zinc stake of around 60%, out there they're valuing it around 296 rupees. Kotak, they have a target price of 915 rupees, which have recently upped. The aluminium contribution to this target price will be around 493 rupees. And Vedanta Limited, which again will house Hindustan Zinc, will be closer around 280 rupees. So good news coming in the run-up. You'll expect some kind of action out there. But keep in mind, the stock in the last 1 month itself is up more than 15%. So Vedanta is a stock that will continue to remain on your radar. For the time being, we slip into a short break. But on the other side, Manisha Gupta is waiting for you. She'll tell you what's going on in the commodity space. Stay tuned.
Welcome back. The Nifty is consolidating now above 24,500. Nestle is moving up ahead of the numbers, expected to have a strong top-line growth of 13.5%. But the problem is the valuations, which trade at 60 times forward multiple. But what about commodities? Manisha is now joining in, as always.
Well, thank you for that. I'm looking at metals as a sector, which continues to be choppy, by the way, as the street looks at the US and Iran peace talks and that ceasefire deadline, which is April 22nd. That's tomorrow. But for the year and for the month as well, it has been good going for many of these metal prices. Copper clearly trading not too far away from its all-time highs, by the way, is holding $13,500 a ton on the LME markets, has seen 6% of gain come in there. Take a look at the aluminum prices, and we're looking at outperformance from this one in the last 2 months or so since the West Asia conflict, because nearly 8 to 10% of aluminum globally in sense of supplies comes in from there. And then you have zinc, which seems to be gaining quite strong. This in the last 2 days has been an outperformer, 10% of gains already for 2026. Nickel is up 9%. Tin is the outperformer with 25% of gains. And there you have the ferrous metals, 1 to 1.5% up is what we've seen doing that in 2026. The last week and last 1 month clearly has been quite strong for the ferrous metals. But on a YTD basis, we've seen that continue to lag behind the base metal prices. I'll start with copper first, and that one is trading at around 2-month highs. We've seen prices gain up on the back of prolonged West Asia conflict that seems to be threatening the economic growth. But in this case as well, the output is constrained because of the mining disruptions and then underinvestments that we continue to talk about in sense of copper. It also is about the long lead time for newer mines. All of that supporting the copper prices. And then, of course, it's the EV, AI, renewables demand that copper prices seem to be taking support from. Aluminum has continued to trade around that 4-year highs. There's a hit on production capacity, logistics and growth concerns as well. All of that quite supportive. Emirates Global Aluminum yesterday came out with a statement suggesting that it will take at least an year for them to restore production from where they stand at this point in time. And then iron ore has continued to gain up, trading at a 1-year highs. It has been about the resilient China demand supporting prices. China port inventories have declined for a second straight week, and it also is about Middle East accounting for nearly 9% of global supplies therein, and Middle East also is 16% export destination from China. All of those factors kind of supportive. And finally, it is about zinc prices. The last 2 days have been very, very positive. This is the prices are trading at August 2022 highs. There are concerns over near-term supplies. Inventories in Shanghai and CME have continued to decline. And then mine closures and operational disruptions have been a supportive factor for this one as well. The one thing that the markets will look out, though, is the restart of the Boliden Tara mine. And it also is about the ramping up of production at Ivano mines at Kipushi projects. That is what seems to be keeping the prices in check. But the markets do believe that 2026 perhaps could belong to metals. The first quarter was positive and second quarter is started on a stronger note as well.
All right, Manisha, thank you very much for that. We'll take a quick commercial break here. Up next, Lata in conversation with the manager of Bank of Maharashtra on the fourth quarter earnings and outlook going forward. Stay tuned, coming up.
Welcome back. We stick with corporate radar because it's a results season. Bank of Maharashtra has yet again posted a picture-perfect result for Q4 and for FY26. For FY26, deposits growth 14%, loan growth 21.8%. Even margins have improved from Q3 to Q4 by about 5 basis points, 3.91 the last number. Loan defaults are almost non-existent, with net NPAs down to 0.13%. And then profit for the full year up an impressive 27.1% to over 7,000 crore rupees. Joining me to discuss the results and the guidance is the Managing Director and CEO, Mr. Nidhu Saxena. Good morning, Mr. Saxena. A little difficult to ask tough questions when the results are what they are. But, 27% growth in profit. No other bank that has reported so far has given such an impressive record. Can you repeat this feat? Because then you would be 8,500 crore profit.
So, Lata, yes, you rightly noted YOY growth on a large base does requires our continued efforts. And I think bank in no way is going to let our investors down, let ourselves down. So we have already, with this concluding of the last year results, we have decided the next course path. The guidance are there well in our mind. And we are strategizing properly to see that none of the parameters, not only profit, none of the parameters should be seeing any scope where there is a scope for improvement. We should not improve. So profit also definitely, any top line growth that is happening, we are having a complete sensitivity on how the impact, considerable impact is there on the bottom lines. So I think with that, we should not see the challenge. We added around 1,500 crores profit previous year, this year also 1,500. And I think we should not find challenge in maintaining this kind of a trend. And what number that you gave, we can definitely aspire and achieve that.
I also just added that 1,500 crore. Even I noticed the same increase, and that's why I came to 8,500 crore. Okay, now, see, the one possible tough question I can ask you is, what is the impact of the war? You would have given loans to probably companies which are using gas-based power. You may have given to those who are using petrochemical intermediates, plastic bag makers and stuff like that. It will not show up now because this will be the first month of, the loan. But your SMA1 has increased slightly from, I think, about 150 crore to 240 crore. So should you expect some stress in Q1?
So essentially, this segment, what you are indicating, the shortage of gas and the crude oil price going up, and which sectors are those that can get impacted, are essentially in the MSME segments. Yes, what you're saying, when we see Brent crude $115 per barrel or anything above $100, it should be a cause of worry and concern for us. That is one. Second, we are monitoring this portfolio very closely. And in the MSMEs, as of now, we have not seen any uptick in the SMA or in the NPAs. On the contrary, if I compare March 25 to March 2026, my SMAs have actually improved in the MSME segment as well. Plus, secondly, what I sense is that we have exposures in the MSME in various sectors. So within MSME, the vulnerable segments, we are closely monitoring. And yes, this, as you rightly said, we may see the impact in subsequent quarters. So we are mindful of that part and monitoring it closely. But as of now, we have not seen any uptick in SMA. Rather, there's an improvement overall in SMA and NPA in MSME segment.
So your MSME is up. It has gone up from 1.48% to 1.57% in the fourth quarter, third to fourth quarter. Your MSME NPAs, there is a graph you have in your investors presentation that has gone up slightly. I mean, it may not be much, but that NPA segment has gone up slightly.
I understand. There's a reason to that. There is one single account, which is a government account. I will not name it, but 90 crores that has moved to SMA. So that's a one single limit of 90 crores, which has gone to the SMA. But being a government entity, we are not worried about. We are in discussions with the state and trying to recover our overdues. Minus that, you will see that what I have said is correct.
Okay, fair enough. What about agriculture? See, you very correctly and proudly put in that RAM versus corporate, we are 60-40 breakup. But RAM, retail, agriculture, MSME, each of them has some small problems. Not retail so much, but agri again, the Met is calling for an 8% deficit in the rainfall for FY27. I mean, it's only the first forecast, but still the Met is giving us this 8% deficit. Also, fertilizer is going to be a little more expensive or tougher to get than in the previous quarters. Hence, have you all made any rain check, literally, whether the retail and MSME, agri-MSME will be in order?
So yes, what the monsoon forecast of 8% deficit, it does impact. India is a country which is, agri is still dependent in a significant way on the rain we will get. So wherever rain deficit areas or which are rain-fed activities which are happening monsoon based, they are going to see some stress. But within the production credit, we have a risk mitigant, which is the Pradhan Mantri Fasal Bima Yojana.
Yes.
So we are monitoring that portfolio. We have that risk mitigant. And impact, if there is a deficit of rainfall, is bound to be there. But then again, we are diversifying. We have also very consciously grown our agri book through investment credit in the last 12 to 15 months. And a lot of big ticket agri-based processing units have been financed. Cold storage, warehouses, and all those other activities are also now part of our agri book. And we are continuing with this trend of taking investment credit as a diversification in the agri book also.
No, I agree with you. In fact, I was reading that slide of yours very carefully. It's lesser rural loans to individual farmers and more to rural infrastructure, as you point out, which perhaps will actually come in good help in a deficit month. Now, actually, I'm trying very hard to find tough questions. I'm once again saying that the results don't give you a chance to ask any tough question. What about non-interest income? You have done superbly well in interest income, but non-interest income has not been one of your strong points. For instance, commissions, other commissions has actually fallen. Then likewise from foreign exchange, it's not a big deal. Quarter on quarter, it is a fall. Is there anything in terms of fee income or non-interest income that you will do to improve the numbers?
So I think you are bang on, ma'am. This is one segment every year beyond the normal core critical parameters. We are identifying at least minimum 2 parameters where we will be focusing all out in that particular year. So in this year, the fee-based, the non-interest income is the parameter which we have already decided to discuss in our strategy board, which we are having on 25th. And we are going to drive this element in this FY. We see there is a lot of scope for improvement. Currently, what figure that you have seen in the slides, it's a one-time event which has impacted, which is with the Government of India's initiative of one state, one RRB. So our Maharashtra Gramin Bank, we got to acquire the Vidarbha Konkan Gramin Bank from Bank of India. So that transaction, because it was VKGB was a loss-making entity, and we had to provide as a MTM loss 290 crores one-time hit, which we took without any dispensation from the RBI. We provided entirely in that, and that has also impacted my fee-based, which is coming at a YOY now 2.51. But exclude that one-time 290 crores, my fee-based has grown at 11% YOY around. which again, I feel there's a huge scope to improve. And this year, very consciously, strategically, we are going to work on the non-interest.
Got that, sir. And the other question I had was on provisions. You'll have very generously set aside provisions. Even this year, this quarter, you have taken some 200 crore provisions for geopolitical uncertainties. What is the total amount of provisions you have set aside as probably floating provisions? And that will perhaps be a buffer for you for all of FY27? Can we believe that even in FY27, your net NPAs will remain in this 0.13, 0.15 levels?
So coming to the net NPA, let me answer that first. Our guidance is to maintain net NPA below 0.25. I have come down to 0.13 and I'll be remaining below 0.25. So practically, if we encounter any slippages against the IRAC norms to provide 15%, say for example, I am prudently providing 100% to maintain this net NPAs. So that is one part. We are having that profitability and elbow room to keep doing that. One. Second, coming to the provisions, yes, what we thought, looking at the Middle East crisis, taking cues from the guidance which is coming from time to time from the regulator, that this is the benign phase, a good time for all of us. So we should keep creating buffers and cushions in these good times. So earlier we had this COVID provision. To answer you, we have kind of 1,500 crores as the number, which is floating still with us. So what we thought proactively, while there is no nudge from regulator or anyone, but geopolitical uncertainties is one head that we have started to build provision. In this quarter, I have built 200 crores. As I said, no requirement as such on the bank to do that. But we will keep seeing subsequent quarters. If there is a scope to top it up, we will keep doing that. But that's how we want to look at.
Got it, sir. So, I'm completely out of time. I'm taking a liberty. Every time last quarter, I told you that you will do more than 3.75% margins. And you kept saying, no, my guidance is 3.75. You're again saying 3.75. Will you again deliver 3.9?
So, yes, we have been... in fact, not only NIM guidance, all other guidances, we prefer to remain conservative and we continue quarter on quarter to deliver more than the guidance number. This Q1 of this FY, we were 3.95. Despite the rate cuts, we saw a dip of 10 bips in the Q2 and the improvement started from Q3 and onwards. While we closed the full year, our NIM was 3.91. And the Q4 NIM was 3.95.
Got it.
Back to what we started the FY with. But we continue to maintain a guidance of 3.75.
All right.
And that's
Got
how
it. I have a sense you're going to do better than that. But thanks a lot, sir. Unfortunately, out of time. Thank you for joining us. We have to wrap up on Bazaar. Chartbusters after the break.
An upbeat start to trade for Indian equities as the street pins hope on a second round of talks between the US and Iran. The deadline for the 20-day ceasefire nears. Nifty trades above 24,500. Banks, real estate stocks lead from the front. A strong retail-led growth coupled with stable asset quality aids PNB Housing Finance fourth quarter show. Management guides for an 18 to 20% growth in the loan book, sees the book gliding past the 1 lakh crore mark in FY27. The stock up 8.5%. Oberoi Realty builds on early gains following a robust quarterly business update. Sales value jumps 96%. Units book skyrocket near 200%. Input cost-led margin drag dents SML Mahindra's Q4 performance. Gross margin narrows to 21.5% from near 25%. Stock sees heavy selling pressure. Hopes of a strong quarterly performance fuels Nestle ahead of their numbers. Domestic sales volume seen growing anywhere between 9 to 11%, with a 13% growth in their top line.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as we speak, Mangalam, the market's looking pretty good.
Market's looking pretty good. Two things that stand out. One, the India VIX is down by 5%. The advance decline firmly in favor of advances. That would make bulls feel a lot better. The Nifty fairly and squarely above the 50-day moving average. Even the Nifty Bank very close to the 200-day moving average.
All right, Mangalam, let's get straight to the first management, though, that we have on the show. Hindustan Copper, they have unveiled their Vision 2030 strategy. They are aiming growing their profit 2.5 times by 2030. Mr. Sanjeev Kumar Singh, the chairman and managing director of Hindustan Copper, is joining us on the show. Hi, Mr. Singh. Good morning. Good to see you in. Well, we'll be discussing various stock points, the planned capacity, whether or not you're looking into the rare earth part as well as the magnet PLI. And is there an upside risk to the 2030 guidance? Let's get straight to the point then. You know, for this year first, you have guided for close to around 600 crores of profitability. Now, if I just extrapolate the 9-month numbers of PAT, you have done close to around 475 crores, which means in the last quarter, you will be doing just 110, 115 crores of profitability. So are you being very, very conservative, sir, in this guidance?
Nigel, very good morning to you and all your investors. First of all, I'd like to see in any mining company, it's not only Hindustan Copper, the last quarter that is January, February and March, the mining operations are at its peak because the development part is complete and the production is at its best, I should say. So the last quarter is always the best of all the 4 quarters.
That's why, sir, I'm asking you, because if I extrapolate the number, it's going to be, quarter 4, mathematically, if I deduct 589 crores or thereabouts of that guidance that you've given from the 9-month numbers, it appears like it'll be a little bit lower. But, let's get a couple of parameters out, sir. First, in terms of your guidance, from around 500 crores, you're guiding to go to around 1,600 crores by 2030. So are you being a little bit conservative, if you could help us out with that? And what is the copper price assumption that you're working with? Please go ahead, sir.
See, the annual plan which we have prepared, which you have just seen, which we have unveiled on 17th and 18th, is definitely on the conservative side. Okay. Because as a planner, we cannot be optimistic. We have to plan on a conservative side. And it has taken the estimates on the lower side with respect to the prevailing prices, whether it is a dollar, whether it is LME, anything. It is on the lower side with the prevailing prices because it's very dynamic, you know very well. They are not in our hands. So we have to be on the lower side.
But give us an assumption, sir. What LME price you all are assuming of copper? What kind of rupee number are you all assuming? Just broad matrix on both these two.
It is always, I said it is on the lower side. Lower side, see, prevailing price is $13,000, isn't it? Plus. Yes. So we are quite below that. And as far as rupee is concerned, 93 plus, you have seen it very well now. It's daily, it is moving high and low. So it's very difficult to say the figures. But definitely we are on the lower side.
Over the next 5 years, what is the average copper price that you have assumed? Currently at 13,000, you said you're much lower. So have you thought of it as, say, 10? Have you thought of it at 8, 9? If you could give us that range?
It is around 9 to 10,000.
Got it, 9 to 10,000. And how do you fund this near 7,000 crore capex that you've earmarked over the next 5 years?
See, first year 25, 26 internal accruals, there's no doubt about it. And we are nearly debt-free company. You can see we have got a loan of just 129 crores, which will be finishing out in this year itself. So next year, that is 26, 27 and onwards, there will be a mix of internal and debt.
Okay. So what would the peak debts look like?
It all depends because the phasing has been done in such a way that majority of the equipments which we are going to get it will be from our internal accruals.
Okay. Mr. Singh, we appreciate some clarity that you're giving us. You have assumed less than $10,000 per ton of copper, and that's why, that profit number appears fairly conservative. We have an Anand Rathi report, that came out, and we'll try to get the analyst, post to you. They are estimating that in FY28 itself, you will do close to 3,000 crores of profitability because they are assuming much higher copper prices. So if copper prices stay in this vicinity, do you think that number of around 3,000 crores can actually be got in 2028, 2029? Would that be fair? Assuming copper prices hover in this vicinity, $12,000 to $13,000 per ton.
It's very difficult to assess on that report of Anand Rathi's. I can't comment on that. But as you have seen it, we are on the lower side. And if the prices remain this also, I mean to say the current prices also, if they are there, so definitely we'll be doing slightly better. But the main focus has to be on my expansion plan. See, in this annual plan meet, what we have done it, we have laid the action, all the timelines have been fixed, the funding mechanism has been fixed, all things have come up from the site itself. So we want to have a action-driven plan, basically. That was the basic objective of this action plan, which...
Got it. Just a two-part question here. One is on your capacity, what specific projects would lead your volumes to the levels that you've been projecting, double of what they are right now? And secondly, how much of that is already de-risked? How much of that is price dependent? How much of that is structural?
See, basically the expansion plan deals with a production from 4 to 12 million tons, isn't it? And the majority of that will come from the Malanjkhand copper mine. And for Malanjkhand, what we have done it, all the tenders which are required to make the mine, rather enablers I should say, to make the mine to produce 5 million tons are on ground now. So that is one aspect. The other aspect is the restart, as I have already mentioned many times here also on your channel, that our mines in Jharkhand have already started. They are going to give the best results in 26, 27, 27, 28. So those mines will be very close to their peak productions in 27, 28. K3 itself is doing well. It's moving off. And there also we have got some massive expansion plans as far as the capacity is concerned. So if you add in totality, if you consider the Hindustan Copper in totality, Malanjkhand Copper project number 1, the mines which are in Ghatshila region number 2, and K3 Copper Complex as number 3. So this all will lead to our expansion plans as we have tabled here in the action plan, annual plan meet.
All right. So you had an MDO contract with JSW, right? Is this part of the volume plan?
Yeah, 12.2 considers that 3 million tons, yeah.
And considers that 3 million tons. Got that. I'm just looking at the numbers, PAT margins should be in the vicinity of around 25%. Would that be fair? That's what you have been doing, 23 to 25% over the last few quarters.
We have been doing, and if you remember, I had promised you that we'll try to maintain those profit margins.
All right. So PAT assumption of close to around 25%. I ask you this because if I do just a rough math, sir, assuming, suppose you do close to around 9 million tons approximately in 2028. If I look at a yield of little less than 1%, 0.8%, and then I extrapolate the 25% PAT, then you're already at 2,200 crores in 2028 itself. So at current copper prices, but you're factoring in 30% lower copper prices. So my mathematics should be okay, right? I mean, 2,200 crores could be gettable in 2028 if copper prices hold at around $12,500 to $13,000 per ton. Fair?
That is very true, but it's not in 28. 9 million tons will come in 30-31. You just see my capex, this 12.2 is in 2030.
Yes. Yes. Okay. So your ramp up is a little bit slower. I'm looking, yes. Ramp up is a little bit slower.
All these projects which we have planned, which you are seeing, which are being executed, will be completed in 3 years of time. So from here, if you say 26, so 28, 29, they will be completed. And then immediately the next year, you will see the rise in the production.
Let me do the similar mathematics, sir. Let me do the similar mathematics. 12.2, I assume a yield of around 0.8, 0.9% approximately. And I assume the current copper price. Still, your PAT number will be close to 3,000 crores with an assumption that copper price is $12,500 to $13,000 per ton. That's correct, right? Mathematically.
That is a pure mathematics which you are doing, but I think you should not ask more on that because it's a very dynamic mechanism.
Okay, all right, sir. Let's get to another focal point, critical minerals and rare earth. What role do you have to play, sir? The PLI magnet as well, the magnet PLI was announced as well. Besides the core copper business, what is the focus on non-copper? If you could help us out, if there are any plans, what is the capex, what kind of revenue, what kind of profitability you can get from there?
In magnets, we are not there. But as far as critical minerals are concerned, we have got two big tailings at Rajasthan, Khetri Copper Complex and Malanchkan Copper Mine. What we have done, we have brought an EOI and we have invited bidders, vendors who have technology to act on that tailings on a revenue sharing method. We have got 2-3 parties who are interested in that, but they are still not sure about the technology part. So they are just discussing with us. So we are trying, because in Khetri mine, it's a huge tailing dam is there. And at Malanchkan also, we have got huge tailings, which has got some minerals. And we have tested already them. We have got some, but whether it can be commercially extractable or not, that is $1 million questions. So we are in discussion we have already brought an EOI. We are already ahead in that. We are already discussing with many of the parties. 1 or 2 Australian companies have also approached us. We are in discussion, but nothing concrete is there as of now.
Which is why I suppose it is not a part of your Vision 2030 as well in the calculations. If that were to happen, it would have been an additional bonus, right? That's how we should look at it.
Yeah, that is outside my copper business. We are trying hard to get the critical minerals for the country, and we have got that tailings also with us.
We understand.
In fact, just to inform you, the Rajasthan tailings which we have, it's a loose material, but we have drilled there with the help of MCL that has done for the first time to analyze the properties of those.
No, we appreciate that. We entirely appreciate that, sir, and your honesty out here as well. Just a final question from my end before we wrap. The government owns 66% stake in the company. Copper cycle is fairly strong right now. Prices are at 13,000. Your own assumption is 9 to 10,000 going forward. If this sustains, do you think it would be a good time for the government to offload some stake, maybe cash in on some chips right now?
No, I can't comment on that. Copper is a very strategic mineral, you're seeing itself. So on that part, I can't comment.
Yeah, but 66% or 61%, the strategic ownership remains with the government. They're just taking some money off the table.
See, still, this is a priority of the government. Government has to. I can't. Government is helping us. I should say all respective state governments, central government, everybody, all the stakeholders, statutory bodies, they have made this happen. What we are doing as of now.
Right, we let them take that decision. Mr. Singh, we appreciate you joining in. The short point is you have been fairly conservative in your estimates, but you're sounding very, very optimistic on the business prospects from here on. Volume ramp up happens all the way till 2030. Most of the capex will be funded via internal accruals. There'll be some debt as well, but that rare earth opportunity as well in terms of minerals will be over and above this. Appreciate you joining in, sir. Wishing you and the team all the very best. Copper prices have been strong and you are best placed in terms of one of the listed companies in India. Have a good day ahead.
Thank you. Same to you.
All right, time to slip into a short break. On the other side, we'll deep dive into Hindustan Copper as well as Vedanta. We have Anand Rathi's Parthiv who's waiting to join us on the other side. Stay tuned. Welcome back. You're tuned in to Chartbusters. You're on CNBC TV 18. Well, let's welcome Parthiv Jonsa, the Vice President, Anand Rathi Institutional Equities, who joins us on the show. Hi, Parthiv. We were just discussing your report with Mr. Singh of Hindustan Copper. You have been one of the lone voices, actually, that have been covering Hindustan Copper. And you've got it bang on, because copper prices have gone into a bit of a frenzy. But what do you make of the conservative guidance that they're taking? They're talking about $9,000 to $10,000 per ton of copper, which is 30% lower than the current prices. And the PAT number they're assuming is less than 1,600 crores for 2030. What are your assumptions?
Hi, good morning. Thanks for having me. Definitely, I feel the numbers are a bit on a conservative side. They have given a ramp up, say in 2028, they'll be doing about 5.5, 5.9 million ton and eventually going to 12.2 million ton. That includes the Raka 3 million ton, right, at the end of the day.
Yes.
The original assumption what we had taken was around 8 million tons. So even if you consider that gap, it's about 30% gap. And my profitability numbers were around 3,000 crores, right? So you just reduce that, it still works out about good 2,000, 2,000 odd crores at the current LME. Now, what Sir said in the interview that they have assumed LME of about $9,000, right, which is much lower than the current ongoing LME, even after considering the slight dip which we saw in the start of March and all. It has covered up, right? It is back to that 13,200 kind of a level. What we have assumed in our coverage is about 12,500 kind of a LME for 27 and similar number for 28, and eventually then going down as the global mine starts ramping up, right? Eventually it will go down, but not at least over next 1 to 2 years.
Okay, all right. So for y'all, what would y'all be assuming in 2030 then? They are assuming 1,600 crores. You will be much higher than that, right?
Relatively higher, definitely. We have published the numbers up to, say, 2028, which was the number what was flashed around 3,000 odd crores. But that assumption was on an 8 million ton of overproduction and considering a yield of almost about 0.82 to 0.84, right, percentage of a yield. Now, considering that similar yield and just extrapolating the numbers what the Sir or the Vision 2030 document has given out, it still works out to good 1,900, 2,000 crores kind of a profitability. But however, we do the numbers on a DCF methodology. So our target price at a back of the envelope calculation does not change even a bit. Even if the ore volumes are up and down in the next couple of years, it does not really materially impact the target price of Hindustan Copper for our side.
Okay. You want to give us what is the updated target price?
So the one, even after, working out the new numbers, the updated target price works out with similar around 650 rupees, basically.
650 rupees. Got that. All right. So
almost about good 18-20% of an upside for me.
So you continue to remain optimistic then on Hindustan Copper. Let's talk about the other one,
Absolutely.
Vedanta. I don't know whether you have official coverage on that name, but they have announced the demerger. If I just trace back closer on 3 years, September 2023, October 2023, when they first announced that, the street was very worried actually about the company because they said that the Vedanta Resources, as a promoter itself is on jittery ground. But things have turned around for them. The net debt number has come down from around $8 billion to close to around $5 billion, a little lower than that. And also the core business has done very, very well with aluminium smashing it out of the park. What's your view on the stock at around 770 rupees? It's already had a good run. Do you think it's good for more, or do you think bulk of the good news is in the price?
Let me just answer you, though we do not have official coverage, but we are very positive on the aluminum business. Aluminum fundamentals are very strong, right? Just like copper, what has been driven by, say, traditional method, new age and power, even aluminum has its own driving methodology, right? And I think aluminum, considering, the current disruption in the Middle East, the aluminum prices will remain elevated. It's always said that, right? The Rome wasn't built in a day, but, destructions happen in seconds, right? And similar things has happened in Middle East, right? It will take a lot of time for the facilities which are already out, good about 8-9% of the global aluminum production, which is already out, to come back. It will take almost about good 12 months, 15 months kind of a time frame just to come back on stream and then eventually ramp up. I think aluminum prices will remain elevated. If you see the premiums across the globe, right, whether it be American market or Asian market, the premiums have been soaring at a record levels. If you add premiums, LME, freight, it has already surpassed that $4,000 kind of a mark for aluminum. That will keep the fundamentals positive, at least over next maybe 1 to 2 quarters.
Okay.
At a time, especially when a company like Vedanta is actually coming down on the cost of production at the end of the day.
Got it. All right. And a quick word with regard to the aluminum price assumption that you're taking?
We will renew the assumption when we release the quarterly update notes. But what we have taken during the preview and all, it is almost about 3,300 kind of a level for the last quarter.
Appreciate you joining in, Parthiv. And if I got the number correct, for the past quarter, I think it was $3,300. But the first 9 months, aluminum prices average around $2,700 to $2,800 per ton, which is telling you why people have got so excited with regard to the aluminum story. Thanks for stopping by, mate. And we enjoyed the dialogue as well about Rome being built in a day. Appreciate you joining in, Parthiv. Have a good day ahead. Well, for the time being, the markets are booming, at the high point of the day, the Nifty Bank as well. Now above the 200 DMA. Let's pull up the Nifty Bank actually with the 200 DMA. I think we need to get that up because it just breached the 200 DMA, which is a bit of a resistance mark. You'll want it to hold above these levels as well. Well, we'll slip into a short break. Come back. We'll continue to focus on markets. Stay with us.
Welcome back. It's a good move that we're seeing on the frontline indices. 24,547 continues for the Nifty. The Nifty Bank above 57,300. The mid caps having a day of their own. So on that note, what we'll do is wrap up on this edition of Chartbusters, but you don't go anywhere. After this short break, on the other side, the team of Trading Hour takes all the market action forward. Morning, you're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. It's looking good for the market. I'm Manglam Malu. With me, Hormaz Patakia, and Ritu Singh joins us after a holiday. What she brings with her is a good move on the markets. 180 points higher on the Nifty. We have the Nifty Bank up 700 points. Nifty crossing important levels. The Nifty Bank having crossed important levels, near a very important level for that one as well, close to the 200-day moving average. 57,250 is where we are. On the Nifty Bank, 57,275 is where the 200-day moving average is. Ritu, looking very good for the market.
Yes, looking very good. It's a strong positive momentum to start the Tuesday. Looking good on the screen all around. Markets near the day's high. You have the rate sensitives that are actually leading. So the realty pack, even the financial pack doing very well, especially the housing finance names, which we will focus on in just a bit. The top performers, of course, are these. Other than that, you also had the FMCG, trading a little higher. The laggards, so to speak, a little more contained gains are seeing in IT and pharma. Those are up less than 1% or so, but the market breadth very much in favor of advances. More than 3 stocks, almost 4 stocks are advancing for every 1 stock that is declining on the National Stock Exchange. So good day of trade. It looks like the market is positive ahead of that 22nd April deadline, and we'll have to see what happens with the proposed peace talks between the US and Iran later. Hormaz is standing by with the top movers in the market, and he puts a spotlight on that. Hormaz, good morning.
Morning, Ritu. And the market for now is putting all of that behind and is focusing on A, earnings, and B, the recovery that we are seeing from the lows. And the index is continuing from where it left off, at least in the first half of yesterday's trading session. The second half was a bit of a forgettable one. But for now, at the highest point of the day, 24,550 is where we are. At an important level to cross at 24,500. We are comfortably above that. It's the weekly expiry of the Nifty. We'll keep that in mind as well. The focus continues, as we mentioned, on earnings. The earnings reactions have been very, very strong for those that have reported good numbers. Nelco's return to profitability has taken the stock 10% higher. At one point was up 13. PNB Housing, after a very strong show, is up 8%, holding on to gains. Grow is now at surge to the highest point of the day as well. 8% higher now on the stock after the management commentary. The stock is now nearing its post-listing high, which is 214. And Bank of Maharashtra as well, 7% higher, a new high for the stock at 80 rupees. Barring these names, the defense stocks are another names as another segment that is doing well. Zen Technologies, we heard from the management yesterday on our channel. The stock at one point was up 11%, still holding on to gains of 7. Data Patterns is up 6. Astra Micro, MTAR, the shipbuilders, all of them doing very well in today's trading session. The US has begun refunding tariffs, and the most hit tariff related names are continuing to do well. Avanti Feeds, Apex Frozen have been up all through the last 2 to 4 sessions now, and Gokaldas Exports today has now surged as much as 6%. And stocks that are not doing well in today's session, while there's a very strong advanced decline ratio, there are some that are bucking the trend. Life insurance companies in particular, Canada HSBC is one. Its lock-in ended last week. SBI Life 2 is now still at the lows of the day, 4% lower. Radico Khaitan seeing some profit booking, and Emcure Pharma 2 is down around 2.5% in today's session.
All right, we take that point. So those are a bunch of buzzing stocks. Hormas, thanks a lot for that. Trent is higher at the high point of trade ahead of numbers tomorrow as well. The street already knows 20% revenue growth is what the company is reporting, along with the board considering a bonus. So there is some traction behind Trent. Let's pull up that intraday chart before we move further. So that's about Trent, but let's get to our big story of the day. PNB Housing Finance, that's delivered a strong set of fourth quarter numbers. And the ripples are being felt across all major housing finance names on the street as well, be it LIC Housing Finance to other housing finance. Even Aavas and Aptus are doing well. Aavas actually saw a leadership change. So this was PNB Housing Finance's first quarter under the new CEO. The numbers ticked all the boxes: record disbursements, asset quality, that's sub 1%, and a strong guidance of 18 to 20%. Is this just a one-quarter story, or does it still have more legs? Ananya Singh joins in to decode the first quarter under the new CEO for PNB Housing Finance and what the future looks like. Ananya.
PNB Housing Finance has delivered strong set of numbers, and more importantly, the management guidance have been very reassuring, which is why the stock is reacting very positively today. Now, the company is experiencing a great growth momentum with a record retail disbursement and better asset quality, with GNPA now below 1%. Now, but the real trigger is the forward guidance. Management is guiding for 18 to 20% loan book growth in FY27, with the loan book expected to cross around 1 lakh crore while maintaining stable margins. Now, importantly, they have indicated that yields have bottomed out and will continue to improve from Q1 onwards, driven by shift towards higher yielding segments. Now, in fact, the strategy is very clear. Affordable housing is expected to grow the fastest, with management targeting nearly 50% growth in this segment, followed by emerging and then prime. Now, over the next 2-3 years, they aim to move the mix of affordable plus emerging to 50% of the book, from around 40% currently, which is a key positive for margin. Now, at the same time, credit costs are expected to remain negative for the quarter, supported by better recoveries. Now, overall, we can see it was a very strong quarter for the company, and very positive guidance by the management, and that's why the stock is reacting so positively today.
8.5% higher on PNB Housing, a very strong show in the fourth quarter. Ananya, stay on, because these numbers from PNB Housing, they've lifted the fortunes of the other housing finance companies as well in today's session. How do the valuations stock up for them?
So the housing finance space is becoming very interesting with growth mainly driven by affordable and emerging segments. Now, if you look at LIC Housing Finance, it is the cheapest in the pack, trading at just around 0.78 times book and about 5.6 times earning, with ROE near 16% and ROA at around 1.8%. So LIC Housing is clearly the value play, but growth and profitability are relatively moderate. Now, on the affordable housing side, valuations are much richer. Aavas trades at around 2.35 times book and 17.6 times PE, with ROE of 14.1% and ROA of 3.27%. Aadhar Housing Finance is even more expensive at about 3.14 times book and 20.8 times PE, with ROE of 16.9% and ROA of 4.31%. Now, Aptus also trades at a premium, around 2.72 times book and 14.4 times PE, but it has best profitability in this group, with ROE close to 18.6% and ROA above 7.4%. Now, the sector itself has strong structural tailwinds, with mortgage to GDP in India still only around 16.6%, leaving a long runway for growth. Now, while affordable housing finance AUM is expected to reach around 14.1 trillion by FY27. And of course, that positive sentiment has been strengthening further because PNB Housing Finance also came up with a very strong quarter, and that's why you can see a lot of housing finance segment stocks are reacting positively today.
All right, let's keep an eye out on a couple of these stocks. Bharti Airtel too has moved higher. It's at the high point of trade, and alongside that, we have a bunch of these broader market names which are spiking right now. We spoke about Trent. Look at Vishal Megamart. That also has moved to the high point of trade. Godrej Consumer, ahead of Nestle's numbers. The entire consumer pack has some, wings beneath their wings. And we have Manappuram Finance along with Coforge, Uno Minda, all of them seeing decent traction too. Jubilant Foodworks is the other one which is doing well too. What we'll do is we'll, continue with spotting some of these names. Fortis Healthcare has done well. Just trying to figure out if there are names which have seen a big gash in the last few minutes. Balrampur Chini is one of them, which has moved lower. And alongside that, we've seen some traction on the downside for names like Stovecraft, etc., the ones which had seen a big rally ahead of, ahead of the LPG sort of crisis that came by. But real estate stocks, they're bouncing back today. Remember, the index has been under pressure of late, slipping over 20% from its 52-week high. But good updates coming in from there as well. Sonal joins in with the same.
Well, yes, one of the top gainers, if we talk about sectoral gainers today, up 3% in trade today. But do remember the index is still down around 23% from its 52-week high. At a point in time, it was down more than 35%. So there has been a substantial recovery from the lows when the industry experts are talking about the fact that maybe the sector is peaking out in terms of demand. But some good updates coming in, some interesting notes coming in as well on some of these stocks. But today, the likes of Sobha, Purvankara, Lodha Developers, Brigade, Prestige, most of the real estate stocks are surging in trade. And there are some updates for individual names. Let's talk about Godrej Properties first, because HSBC has put out an interesting note. They had met the management. They have a buy call on the stock with a target price of 2,800 rupees a share. The FY27 sales that Godrej Properties is targeting is around 20% growth, which will be backed by strong pipeline. Do remember they reported the highest ever sales for the company and the highest in the listed peers as well, of more than 32,000 crore rupees. They are looking at turning free cash flow positive as well. So there's a possibility of giving out dividends from FY27. They are also targeting around 20% return on equity by FY26. But of course, the risk is expensive land buys, there's competition, slower launches as well, considering the situation that we are in where West Asia war has impacted raw material availability. For Oberoi Realty, it was a decent update as far as Q4 is concerned. After a long time, we did see an increase in units booked up 193%, volumes up 169%, sales value of also up by 96%. But FY26 did see a decline. If we talk about the units and volumes, they were lower on a YY basis, but sales were up around 3%. Lower sales growth in FY26, but Q4 was fine, and that's why that stock is on our radar today.
All right, Sonal, thanks very much for bringing us that. That's the realty space, the top sectoral gainer on the index today. Let's slip into a short break. Up next, we're going to focus on the bond markets with Manisha Gupta after this short break. Welcome back. You're watching Trading Hour, and as promised, let's shift focus to the bond markets, and Manisha Gupta is standing by to fill us in. Manisha.
Well, thank you for that. If you look at the corporate bond yields, well, they have been trading steady in the secondary market there. And if you look at the bonds maturing from up to 5 years, that is what seems to be getting traded the most. Secondary markets data deals from NSE, BSE, that is, has seen a bit of a decline. Friday was 176 billion, which on Monday, which is yesterday, was about 77 billion. So we have seen a fewer trades and a far less participation happen in the markets yesterday. But the primary market bond issuances definitely have seen a bit of a surge coming in. Friday was 11 billion, while Monday, that is yesterday, was 28 billion. So some perk up coming in into that one. And interestingly, there are some private issuances slated for today as well. You have Valencia and Michel Ventures, which is looking to raise nearly 500 million rupees. Then you have HDP Financial Services, which is looking to raise up to nearly 3 billion in the markets today. And Kirtana FinServ is looking to raise also around 2.5 billion. Interestingly, the volumes and the number of trades have kind of strengthened in FY26. And this is after years of a very flattening line that we have seen. The markets clearly seem to have doubled in sense of trade volumes and amount in FY26. Just to put that number through across to you. So when you look at FY25, the number of trades were at around 11 lakh 90,000 therein, which we've seen kind of increase therein. And for FY26 as well, whether it has been about number of trades or amount in crores, all of that has seen a jump up coming in. It's the same scenario for the volumes as well, where we are looking at markets continue to increase. Your numbers should come in on your screen from FY24 to 25 to almost 22 lakhs in sense of 2026 has been almost doubling up of what we've seen in the last 1 year.
Manisha, thank you for summarizing that for us. Take a short break. And with that, on the other side, we get you a quick chart check with Ashish Kayal of Wave Strategy Advisors and also discuss his top trading ideas. Stay tuned. Continuing to do well for itself is the index, so good going for that. And a lot of these new listings today are having a bit of a mixed day in today's session. So while we mentioned Grow, that's up 8%. Vikran Engineering is up 7%. Meesho has now moved to the high point of the day as well, 6% higher on that stock as well. And a lot of these others, Fractal is up 3.5%, doing well for itself as well. Good time to get in a quick chart check from Ashish Kyal of Wave Strategy Advisors, who's joining in. Ashish, good morning. Thank you for joining in. Well, the earlier talk was 24,300. The Nifty has crossed that. Now it was 24,500. The Nifty has crossed that too. Where do we go from here now? 24,700 looks realistic, or maybe even does 25,000 look realistic on the charts? And your stock recommendations as well for the morning.
Hi, afternoon to you and morning to you and all the viewers. If you look at the overall market trend, it has been bullish. Whether you look at the event, despite of the Strait of Hormuz being closed, Nifty has managed to sustain on the higher side, and there is positive news for the trade deal that is going to happen in this week. Having said that, the technical structure remains bullish. We can clearly see the advanced decline ratios have been increasing, improving over the past few days, and this time it has been Bank Nifty that has been leading on the upside even today, and that's a very positive sign. The PSU banking space was lagging earlier, but now you can check the Canara Bank, SBI, and all of those banks have started catching up on the upside. So overall, I think Nifty is headed towards 24,728, which is a GAN level, followed by 24,800. So that's the target, and that's going to be a minor hurdle, because at 24,800 we can clearly see the prior price action resistance areas lying with volumes. So 24,800 is the target that one can keep an eye on, and any dip from here towards 24,470 can be an opportunity to buy, as long as 24,240 is intact. And having said that, the first topic on the buy side is going to be delivery. We can clearly see that the mid cap has been the flavor of the week, and clearly the mid cap index is almost nearing to its 52-week high, when Nifty is yet to catch up. And delivery, on the other hand, has consolidated, is giving a very strong breakout in today's session. We can expect a target of around 500 on the upside, and stop loss can be maintained at 462. And the other stock on the buy side is going to be LIC Housing Finance, a very strong bullish candlestick formation in today's session. I think the continuation should happen from here. We can expect the stock to move towards the level of around 600. And on the downside, one can maintain a stop loss for the stock at around 550 levels.
All right, LIC Housing now up more than 5% as we speak. Ashish, thanks very much for joining in with those calls. On that note, we'll slip into a short break, but don't go anywhere. More on the markets when we return.
175 points for the Nifty and counting. And today's market move looks a lot more, stronger than what it was in yesterday's trading session, which is why we saw a decline from the highs yesterday as well. So a good time to get into the F&O internals of the market ahead of the weekly options expiry. The Nifty Bank, the mid-cap index is at the day's high. All three of them are at the higher point of today's trading range so far. And the reason why I say today's move looks a lot stronger is because it's backed by one, falling volatility. So you have the India VIX, which is lower. Secondly, it's backed by higher advance decline ratio. Both things were absent in yesterday's trading session. When the markets recovered, we had the VIX, which was higher as well, and the advance line, which was below the decline line. And today, it's been the other way around. And that explains why, important technical levels have been crossed through, with a lot of ease. If you look at the 50-day moving average on the Nifty, we're a good 150 points above that. If you look at the Nifty Bank as well, 57.95 was the 50-day moving average, 57.272 was the 200-day moving average. Both those levels fairly achievable by the Nifty Bank right now and above that as well. But now that the up move is done, the question is where do we go here, especially when we move towards the expiry. 24,500 put writers, fairly active, premium of 30 rupees, telling you around 24,450, 24,470 would be some support that would come by. But at the same time, call writers are active at 24,600 as well. 24,600 call writers, perhaps pocketing a premium for almost 30 rupees in the morning, and now that's come down to about 20 rupees. So between 24,640 and 24,650, there could be some sort of resistance that may come by. The put-call ratio, because of the kind of moves that we've seen and the put writing that we've seen, has moved to 1.48. So that's something that we need to monitor as we move along, whether this up move will replicate itself in the second half of trade or not, or whether we are in this range of 24,450 to 24,650 itself for the remainder of this trading session. But individual stocks, a lot of them are seeing a lot of action. Varun Beverages, a lot of long positions being added. But some shorts added on the insurance space, the life insurance space in particular, SBI Life and ICICI Pru.
Doing very well for themselves now are a lot of these names, but the life insurance names, of course, we highlighted at the start of the show as well. They are the ones that are bucking the trend in today's trading session. But some flashes at the bottom of your screen. There is a sharp spike in one source. The stock was lower earlier in the morning, and now there has been a block deal that has taken place. 26 lakh shares have changed hands, almost 2.5% of equity, and that's worth 408 crore. And the average price is at 1534. And there you can see the reaction in the stock. Now 1.5% higher, recovering from the lows of the day. But the big story, so the big talking point, other than the housing finance companies, has been Vedanta. And that's after the board approved the company's merger into 5 different entities. Nigel is here with all the details. And what does this mean for all of these shareholders?
Well, Vedanta has been in a sweet spot in the backdrop of the global commodity melt-up. And last evening, the board approved May 1st, 2026 as the record date for the demerger, which means effectively the last day to buy the stock to be eligible for all the demerged entities is April 29th. So if you have one share of Vedanta Limited on the record date, you will receive one share of each of their businesses, namely aluminium, power, oil and gas, as well as the steel businesses. So you'll have in total close to around 5 entities. The rationale for the demerger is it simplifies Vedanta's corporate structure, and investors can invest in the vertical of their choice. From a management perspective, it gives them flexibility to unlock value for investors and also liquidate any kind of asset or bring in a strategic investor as well if the need arises. Additionally, the management has mentioned that the demerger is more tax efficient in nature. Now, 5 companies will be listed on the exchanges, in the next 4 to around 8 weeks, depending on the approval process as well. Remember, globally, aluminium has been in a super spot, and Vedanta is placed perfectly to benefit from the strong LME prices, the capacity expansion, as well as backward integration. Let me explain this to you. Vedanta has the largest aluminium capacity in India of more than 2.5 million tons, and it's headed to around 3 million tons. So they gain on the volumes front, but what helps them even more is that they've been focusing on backward integration. As their alumina capacity has moved to around 5 million tons, the captive coal as well is expected to ramp up drastically. Their aluminum cost of production, remember, has declined by more than 37% in 14 quarters. It's expected to further come down to around $1,550 to around $1,600 on a per ton basis. And with this, their aluminum vertical itself could scale to more than $4 billion of EBITDA in the next couple of years, from ballpark around $2 billion of EBITDA in the past year. Nuvama, well, they have been very bullish on the stock. Their target price is around 899 rupees per share. And bulk of this value stems from the aluminium business, which is followed by Vedanta Limited, which derives bulk of its value from the 60% stake that it has in Hindustan Zinc. Well, finally, a concern over the last few years has been the health of the promoter entity. And Vedanta Resources was in a bit of a sticky spot. In fact, at one point of time, the total debt in the books was around $9.5 billion, which included the intercompany loans. But over the past few years, those fears have receded, as that debt has come down by close to around half. Remember, the stock has run up considerably in the last few months, but will remain in focus in the run-up to that record date. Vedanta, the green signal finally.
All right, Nigel, thanks very much for running us through that. Vedanta is a stock to keep on our radar. Let's move on. Manish Jain from Central PMS joins us now to discuss market fundamentals and his sectoral picks. Manish, thanks very much for your time here. I was reading your note. You say you don't really want to call the market bottom yet, but you believe this has created the foundation for the next set of returns. What are the pockets where you're seeing that opportunity? And, secondly, you're overweight on the private banking space, but any thoughts on the housing finance companies, given how the quarter started off well with very strong numbers from PNB?
Yeah, so we are basically bullish on the entire BFSI space, so to speak of, right? Private banks, largely because of the valuations. If you look at the top 4, maybe 5 banks, and the way the stock prices have been decimated in the last month and a half, most of these are trading at the lowest end of their valuation range historically, if you look at it. So that's the bullish case over there. And a large part of issues that they face in terms of, the LDR ratios, in terms of the asset quality or the NIM compression, I think most of them are out of the way. And then if you look at the entire NBFC space, and not just the housing finance companies, but the entirety of the NBFC space as well, I think looks very, very good. So that's essentially the area where we've been focusing a lot on. Other than industrials, other than something like a textiles and autos, these are the pockets where we do feel that the market correction has been intense, but these have corrected far more. There is a pocket of value that exists. Now, the market might remain volatile from the next maybe 1-2 months perspective, depending on how the geopolitical situation globally kind of plays out. But if you have a 1 to 2 year horizon, then this is a great time to actually pick these baskets out.
Manish, you're also talking about, you're also talking about improving risk reward in small caps. Any particular sectors you'd want to call out there where you see opportunities given what's happening, whether that is the tariff refund, what's happening geopolitically on the earnings front as well?
So when you look at the entirety of the small cap space, for example, in the last 1.5 odd years or thereabouts, there has been a massive amount of underperformance, particularly in the small cap as compared to the large caps. And this is probably historically, if you look at the numbers, this has been the largest pocket of underperformance that we've seen, in terms of the time frame by the small caps as compared to the large caps. And all this while the fundamentals have continued to remain strong, the earnings growth have actually kind of remained strong, at least stronger than the large cap. So that's where the opportunity lies. Some of these very, very strong, companies in various sectors in the small cap space are today very attractively priced. For example, when you look at the India, UK and the India, Europe FTA that has been signed and is going to come into force very, very soon, some of these textile companies can actually be great buys at this level. When you look at auto ancillary, again, looks like a great space to be in, leveraging on the auto space over there as well. Some of these companies, for example, in the hospitality sector, particularly hotels, again, look very, very attractive. So there are various pockets of value that exist in the small cap space today in particular. And what is noticeable is that if you look at the last 15-20 days when the market has kind of bounced back, after a very long time, the small cap index has actually outperformed the large cap index by a wide margin. That just shows the fundamental strength that these have. So when the market continues to rally here on, whenever the bullish phase comes in, it's going to be led first by the small caps, and then the large caps is going to step in the second phase.
Manish, you just heard Nigel on Vedanta, the big trigger, the big demerger trigger that is emerging now for the stock. Of course, the stock has been in the news specifically for this. But now with this out of the way, do you think that the buy the news and then sell it once the news eventually plays out, thesis will come into play for Vedanta, or the commodity cycle is so powerful right now that all of this does not really matter, and that the earnings growth will continue to power the stock higher?
So rather than commenting on the specifics of it, I do agree that the cyclicals, the entire basket, when you look at infra space, for example, when you look at the defense space, for example, when you look at the metal space, for example, across the commodities basket, for example, I think across the board, it is a good time to get into it. Not from an event perspective. Let's keep that aside a little bit. Yes, there is a case for that. But fundamentally also, it looks like the rally is going to continue for some time to come. It's not going to be a very staple-led rally. It's not going to be an FMCG-led rally in the certain sense when we are going to move forward in the next 6 to 8 months. It is going to be a more cyclical-led rally in the way I see it.
Right. What about some of the defensives now? The consumer staple plays, they're coming back into flavor. The last 3 or 4 days, these stocks have found some momentum. Maybe the street believes that the fourth quarter would do extremely well for them on the top line front, and thereafter, the year after as well, near-term uncertainties notwithstanding. Would you be in that camp, or would you still bet the discretionary?
I would be in the discretionary camp. See, staples is a space that I really find very hard to reconcile with, to be very, very honest. Companies that are going to deliver very low single-digit kind of volume growth fundamentally for a long time to come, where massive scale disruptions are happening, particularly on the quick commerce side, where fundamental questions need to be answered in terms of the relevance of brand equity, relevance of distribution network. These kind of questions come into play. If I have a portfolio that is short-term oriented, yes, you can take advantage of the momentum. Q4 is going to be good for them. There's no doubt in my mind about that. But fundamentally, if you're looking at a 2-3 year call to be taken, I wouldn't want to bet my money on the FMCG sector at any given point of time. I don't want to pay 40, 45, 50 times multiple for single-digit profit growth CAGR over a long-term period. The risk reward just doesn't add up for me. The ROE is notwithstanding.
Manish, there has been this constant conversations that have been going around the private versus the PSU banks. You mentioned that you are completely positive on the entire BFSI space, but with the kind of results that these PSU banks have delivered, you just saw Bank of Maharashtra's results, very strong results, equally strong management commentary, if not more, and something similar expected from SBI as well in the future. What do you believe that PSU banks currently have a better return potential / risk reward compared to a lot of these private banks, even though they have been the ones that have been smashed? But do PSU banks still offer a better upside potential here?
So, if you look at it over the last many years, the line between PSU and private sector banks have actually blurred out to a very large extent. Simply because when you look at the way asset qualities have evolved, when you look at the way ROAs have evolved, when you look at the way ROEs have evolved, these are not PSU banks that used to be there in the past. But having said that, the case to buy PSU bank is very different for me as compared to the case to buy a private sector bank. Private sector banks are more of a value call over here, where the valuations have kind of corrected massively. So I'm looking at it from that perspective and that lens. PSU banks are more of a growth play over here, where valuations are not corrected massively as much as they have in the top 4, maybe top 5 banks in the private space that we've seen. But definitely when you look at it in terms of credit growth, when you look at it in terms of the results that are coming out, in terms of the ROEs that these guys are reporting in the asset quality, I think from a growth orientation perspective, it's a great place to be in. So it's not about this or that. It depends on the orientation of the investor and whether they want to be growth or value. I'd probably buy both.
All right. You probably buy both. The final question before we let you go. Where do you stand on the new age companies? There is Meesho, which is doing well. There is Lenskart, which is seeing some traction. This morning, Eternal has been on the top of the pops as well when it comes to the gainers on the Nifty. These stocks have corrected about 30, 35, 40%, in some cases more. Would you look at them as attractive levels right now?
Yes, in pockets, yes. But the way I look at, for example, an evolved sector like banking, I look at it more from a top-down perspective and then take a bottom-up call. For the new age companies, it is always going to be a bottom-up perspective. But having said that, I do believe that these are very attractive buys at this moment. Yes.
I mean, there's Grow, which reported its numbers yesterday. It's up 9% today. There's Meesho, which is up around 5%. Urban Company, ever since it fell below its IPO price, has consistently found buyers up 14-15% this month. And then there is Swiggy, which is trading at a steep discount to Zomato. It's down 40% from its highs.
The case is very simple, right? I mean, you look at it, these companies, not from a 1 or 2 year perspective, but you look at it from a long-term perspective. And some of these businesses have actually been able to build out great niches, right? Some of these businesses are duopoly businesses, which are going to be very, very hard to replicate, but still are very deeply underpenetrated. So there's a large amount of growth that has to be played out in this. And this is not just in new age companies, but for example, if you look at some of these exchanges as well. So there are certain sectors that are definitely very, very attractive. And what I would do with these kind of stocks is to just buy and hold them from a long-term perspective and forget that I have them. And these are going to be in my basket of very, very long-term holdings, where definitely as the country evolves, as the economy evolves, as these sectors evolve, these niche companies which have a great amount of moat and have duopoly or oligopoly business models, which is going to be very difficult for competitors to replicate, I definitely buy them.
Manish, finally, thoughts on the IT sector? TCS was a decent set of numbers, a sharp correction that we've seen in 2026 so far. Now you see some potential upside, decent potential upside from here?
I am still kind of avoiding IT at this moment. See, the problem is I am not able to figure out whether it's a value play or a value trap. But from an absolute near-term perspective, next to 6 months, I don't see IT moving up. The first leg of rally is not going to be driven by IT, and that much I'm absolutely sure. So at this moment, I wouldn't be buying IT. That much I'm very, very clear about. So I'd much rather be more focused on in the larger sectors, autos and BFSI.
Today, interesting conversation as always. Looking forward to having you more often on the platform. Time to take a short break, but just before we do that, here's some good news for our viewers. India's largest business news leader is now just a click away. Get instant access to breaking news, in-depth articles and financial world updates on your fingertips. You can download the CNBC TV 18 app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen. Take a short break, back on the other side.
Welcome back. Markets still holding on to their gains. It's up about 167 points on the frontline index. The Bank Nifty also up about 640 points. There's a slight correction from when we started the show, but it's still looking good on the screen. But let's focus on some of the macros because the Reserve Bank of India has relaxed some of the constraints that it had imposed on banks and companies on the 1st of April with regards to forex trades. Hereafter, companies can book their cancelled forex derivative contracts. Lata is here with more details. Lata, to be clear, the 28th March circular capping the net open position at $100 million stays, but there are some relaxations that have been given.
Yeah. You know, there was a 28 March circular curbing some things and an April 1 circular. So let's look at what has been withdrawn. The entire April 1 circular is withdrawn. What does it mean? What did that circular disallow? It told banks you cannot offer an NDF quote, that is an offshore market quote, to your corporate clients. You can only allow them to hedge on deliverable forwards in the onshore market. The offshore market is non-deliverable. It's just a cash. Whereas in the onshore market, you can hedge. That was allowed. The second thing that they disallowed on April 1st is that companies cannot rebook a forward derivative contract once they cancel it. So if you have an underlying, you can book it once and then you have to take the delivery. You cannot cancel and rebook and go on doing that. Now, let us go back to the timeline. What happened on March 28? On March 28, Reserve Bank told all the banks, you have to bring down your net open positions in the onshore market to $100 million. Why did the RBI do that? The RBI had a feeling that all through the last few months, especially in March, they were intervening and providing dollars. They suspected banks were just buying their dollars, keeping that long position onshore, taking an offshore short position in the NDF market, where there was a perennial negative view on the rupee, first because of tariffs and then because of the surge in crude oil prices. Banks were profiting from that. So they told the banks, I mean, since their intervention was not working, they told the banks, you have to bring it down to 100 million. Now, on 28th March, they said that 29 and 30 were holidays, Saturday, Sunday. The suspicion was that banks were going to their corporate clients on whom there was no restriction. The 100 million was the restriction only on banks. They were going and transferring their contracts to corporate clients. This was the fear or the suspicion of the Reserve Bank. So on April 1st, they came with another circular saying that corporates also cannot, rebook their cancelled contracts and banks can't sell NDF quotes to their corporate clients. The banks had a responsibility to bring down all their contracts to 100 million by April 10th. By April 10th, all that was brought down. Thereafter, there was no need to tell the corporates don't rebook because the transferring of contracts by the banks would no longer hold. Banks had brought down their positions. My sense is that is why the April 1 restrictions have been removed. But the $100 million cap continues because I would assume the Reserve Bank is still worried that the surging oil prices continue to have a negative impact on the currency. The sentimental impact is negative for rupee because we are big oil importers and therefore that limit needs to stay. But remember, the Reserve Bank governor did say in the monetary policy statement that all these actually be removed. So, I mean, I guess we have to wait for some so-called normalcy to return.
Take that point, Lata. Thanks a lot for that. In fact, on that itself, let's hear out what HSBC India CEO Hitendra Dave had to say on the RBI's measures on the rupee.
Currencies can be, you can just get into your own self-created spiral a little bit, and therefore, if the market regulator feels that that spiral needs to be broken, I think they've broken it. But I think they had clarified that it is to address an unusual circumstance, and today's withdrawal of the April 1 circular would seem to suggest that hopefully this is the first of the overall withdrawal that they will do, so that the market liquidity, the access of corporates, access of banks and access of all stakeholders in India and outside India to a deeper and more liquid market goes back.
But do you believe that today's relaxations are on account of the fact that the rupee has stabilized somewhat and that's given the RBI the comfort to take this decision, or do you believe that it is because of feedback coming in from stakeholders? And we've seen that many have been saying that this was perhaps a little too harsh, maybe almost sledgehammer-like. Which of the two do you believe could have been the reason behind today's move?
I think it will be a mix of both. Yes, there was feedback. I think the central bank immediately after the circular and in the days that have followed has been in constant touch with the market. And I think even while wanting to achieve the regulatory objective of putting a curb on speculative positions or very large positions, in the process, when you come out with a circular like that, even bona fide transactions could also get curtailed. There were also a situation where a lot of us had deals out with our own counterparties.
So it was impacting you?
No, I think it was just making it more cumbersome to unwind those transactions, and which is what they have. So they have taken away some of those things which remove the cumberness, which remove the friction without adding to the demand for dollars just through this process, is my sense.
All right. Now, in key earnings, HCL Tech is going to be reporting its fourth quarter numbers today. Reema Tendulkar joins in with the key expectations on that front. Reema, good, bad, stable? What should we expect from HCL Tech?
Well, expect a muted quarter for Q4, but the focus as always will be on the FY27 guidance. So first on the top line, the company's dollar revenue growth is seen down 0.7%. In constant currency terms, it will be a decline of 1%. The reason is, while the company has a services business, they also has a software business, which is seasonally muted in the current quarter. EBIT margins on a reported basis will be up, but on an adjusted basis, it will be down on the back of the 1-month impact of the wage hike. Reported profits will be up 15% on a quarter-on-quarter basis. But as I said, the key will be the guidance for FY27. Broad expectations are for 3 to 6%. So that's one. And secondly, the street will watch whether there is a possibility of a margin guidance upgrade. The current margin guidance stands at 17 to 18%, but on the back of cost optimization, rupee depreciation, is there a case for a margin upgrade? I think that is going to be critical. Back to you.
Right, Reema, thanks a lot for that. So those are expectations from HCL Tech. With that, what we'll do is, wrap up on this edition of Trading Hour. But as we do that, let's tell you, we're proud to bring you CNBC TV 18 and HSBC presents Future Female Forward Season 4, co-presented by Cognizant. With a powerful cultural launch gala in New Delhi, top industry leaders come together for a dynamic town hall on equity and leadership in New India. We have, along with curated entertainment performances, the launch will also see the announcement of a special advisory committee to guide female micro-entrepreneurs through the year to drive more meaningful impact. Tune in April 23rd, 5 p.m. onwards, only on CNBC TV 18.
Welcome back. Let's get you all the macro signals for the day. For the markets, of course, it's in the green. It's up about 170 odd points on the frontline index. You also have the bank Nifty that's gained more than 1% in trade today, keeping up, but it's off the day's high. Also keep your eye on the rupee today. As we were telling you, it's trading weaker after RBI partially withdrew some of the curbs on the offshore non-deliverable forwards. These restrictions, you remember, were originally implemented to curb speculative trading and arbitrage, and the removal is, of course, being closely seen by traders for the impact on liquidity. Apart from that, of course, the ongoing tensions between the US and Iran, including reports of disrupted supply flows in the Strait of Hormuz, they've increased the demand for the US dollar as a safe haven. That's adding some pressure on the currency, and the elevated crude prices continue to weigh on as well, now trading at about 93.41 to a dollar. Oil prices, meanwhile, they're experiencing a slight pullback today after the massive surge we saw yesterday. Prices currently trading near the $95 a barrel mark for the benchmark Brent. Why the slight cooling today? And that's because the markets are anticipating potential peace talks between the US and Iran and Pakistan, and they're hoping the negotiations might extend the current 2-week ceasefire. The 10-year benchmark yield, that meanwhile is hovering around 6.88%. The recent downward pressure is supported by the retreat in oil prices, which eases inflation concerns for an import-dependent country like India, and therefore you're seeing the reaction on the bond markets as well. So that's all about the macro signal. And on that note, we're also going to wrap up this edition of Trading Hour. From Hormaz, Manglam and me, it's a goodbye, but stay tuned. Halftime report will be up next.
Stocks perk up with mid-caps leading the charge even as uncertainty over the US-Iran talks looms. Realty, healthcare and financials are prominent gainers while IT and energy lag.
PNB Housing Finance posts a strong Q4 and calls the end of stress in the affordable segment with strong recoveries. It also guides for 18 to 20% growth in assets in FY27. Its stellar show lifts stocks of home financiers.
Grows sees no STT impact on options volumes and is confident of strong growth ahead, even as talks on allowing mutual funds as collateral for margin trading can provide a kicker. The discount broker adds that its IPL partnership won't up its annual marketing spend.
Vedanta's demerger into separate aluminium, power, oil and gas and steel businesses will be effective 1st of May, offering shareholders equal stake in all entities. The stock perks up on hopes of value unlocking.
Hindustan Copper plans to expand capacity threefold by 2030, estimating a profit growth of 2.7 times at a conservative selling price of $9,000 to $10,000 per ton. A higher realization and the rare earth opportunity offers upsides.
Hello and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra. With me Sonal Bhutra as well as Vinny Motiwala. Well, it is turning out to be a session where we are seeing buying, and in fact we have the Nifty, which is trading above the 20 as well as its 50-day moving average, and the next stop will be at around the 100-day moving average, which is above 25,000. So currently we have the broader markets which are also showing a good amount of steady gains today, so up around 1% currently for the mid-cap index. Good going for all three of the indices, the mid-caps, the Bank Nifty, as well as the Nifty and the Sensex at this point in time. Let's see whether we manage to capture those levels of above 25,000 on the 100-day moving average. Hi, girls.
Hey girls, good afternoon. We are seeing some greens, but of course the big question remains whether we sustain onto this recovery and the gains that we are seeing as well or not. Bank Nifty, that's outperforming for sure, and in the Nifty pack we do have the likes of ICICI Bank, HDFC Bank, Axis Bank, all of them, a few of the big gainers on the Nifty as well. The top gainer, of course, Trent, that continues to be in focus. The bonus issue numbers, all of that, something that the street will be watching out for closely. Bajaj Finance is the other ones. Financials continues to be the theme that we are tracking very closely. And of course, from the broader markets, realty is one thing that has made a comeback. And that is something we'll discuss, what's happening with affordable housing and the comments that are coming in from PNB Housing. But generally, after a big fall, it has made a comeback.
Absolutely made a comeback, and that's why the advance decline ratio today is more in the favor of advances versus decline as well, given that the mid and small cap also is doing well. But on that note, let's take you through what's on the show for you all today. And we'll start off with our movers and shakers segment. We will put the center stage on Vedanta, Hind Copper as well as Grow. A little later on, in our What's Trending segment, we will focus on financials and affordable housing segment. With Gurmeet Chadha, we'll converse and have a conversation on where this is headed. Moving on towards the end of the show, we'll also speak with Kunal Damesh of Macquarie Capital to discuss Sun Pharma's potential acquisition. So stay tuned in for that. But first up, let's move on. Time for a movers and shakers segment. There we are tracking a whole host of stocks that are moving around and buzzing in trade. First up, we'll go to Nigel on Vedanta as the board has approved the demerger into 5 entities. Nigel is here to give us more details on that one.
Well, Vedanta has been in a sweet spot in the backdrop of the global commodity melt-up. And last evening, the board approved May 1st, 2026 as the record date for the demerger, which means the last day to buy the stock to be eligible for the demerged entities is 29th of April. So if you have one share of Vedanta Limited on the record date, you will receive one share each of the aluminium business, power business, oil and gas, as well as the iron and steel business. The rationale for the demerger is it simplifies Vedanta's corporate structure, and investors can also invest in the preferred vertical. It also gives the management flexibility to unlock value for investors, and they can liquidate any particular asset in case they also want to bring a strategic investor. That as well option is on the table. Additionally, the management has mentioned that the demerger is more tax efficient in nature. Now, 5 companies will be listed on exchanges between 4 to around 8 weeks, depending on how the approvals do come in. Remember, globally, aluminium has been in a beautiful sweet spot. Vedanta as well is well placed because they benefit from the strong LME prices, the capacity expansion, as well as backward integration. Let me explain all of this to you. Vedanta has the largest aluminium capacity in India, which is approximately 2.5 million tons, and it's headed to around 3 million tons. So they gain on the volumes front. But what helps them even more is they have been focusing on backward integration. The aluminium capacity has spiked up to close to around 5 million tons, while their captive coal is also expected to drastically ramp up in the next few years. And remember, their cost of production for the aluminium business, that's declined by close to 37% in the last 14 quarters. And it's expected to decline even more to around $1,550 to around $1,600 per ton. The management believes that this will help the aluminium vertical EBITDA to scale close to $4 billion from around $2 billion in the past fiscal, that's FY25. Nuvama, they have been very, very bullish on the stock. Their target price is around 899 rupees per share, and bulk of the share value comes in from their aluminium business, which is followed by Vedanta Limited, and that derives most of its value from the 60% stake that they have in Hindustan Zinc. Finally, a concern over the last few years has been the financial health of the business, who at one point of time had a debt pile of close to $9.5 billion. That includes the intercompany loans. But over the last few years, they've done a splendid deal, in reducing the debt by close to around half. The stock, remember, has already run up considerably in the last few months, but it will remain on investors' radar in the run-up to the record date.
Absolutely, Nigel. Thanks very much for bringing us that comprehensive analysis on Vedanta, which is currently trading just about flat, 771.6 odd rupees. But let's talk about a couple of other stocks. Hindustan Copper has in fact unveiled its Vision 2030 strategy, aiming to grow profit by over 2.5 times by 2030. Earlier today, we did catch up with the management of Hindustan Copper, Sanjeev Kumar Singh, who's the chairman and MD of the company, who says their Vision 2030 plan is conservative at this point in time. Listen in.
The annual plan which we have prepared, which you have just seen, which we have unveiled on 17th and 18th, is definitely on the conservative side. Because as a planner, we cannot be optimistic. We have to plan on a conservative side. And it has taken the estimates on the lower side with respect to the prevailing prices, whether it is a dollar, whether it is LME, anything. It is on the lower side with the prevailing prices. Because it's very dynamic, you know very well. They are not in our hands. So we have to be on the lower side. It is around 9 to 10,000. See, first year 25-26 internal accruals, there's no doubt about it. And we are nearly debt-free company. You can see we have got a loan of just 129 crores, which will be finishing out in this year itself. So next year, that is 26-27 and onwards, there will be a mix of internal and debt. As you have seen it, we are on the lower side. And if the prices remain this also, I mean to say the current prices also, if they are there, so definitely we'll be doing slightly better.
Okay, that's an exclusive conversation with Hindustan Copper, but the other stock on our radar is Grow. Reported numbers during market hours yesterday, but has been buzzing on the upside since then. Devyani is joining us now with the management takeaways and the analysis as well. Devyani.
Well, yes, Grow has ended the year with a strong set of results. Revenue and profit both were up 25% sequentially, driven by strong trading activity. On the full year front, though, revenue came in at 4,645 crores, up 19% year on year, while PAT grew 14%. Now, that means that the management has missed its guidance of 25 to 30% top line growth every single year. But while in discussion with CNBC TV 18 this morning, the management did reiterate the 25 to 30% revenue growth guidance for FY27. Now, on the SAT hike front, the management said that the options volumes are holding up so far, but futures volumes have taken a 5 to 10% hit. Futures form a small part of the derivatives mix, so the revenue impact there is expected to be limited. Now, Fisdom, the wealth tech subsidiary that the company recently acquired, remains loss-making, but the management is confident that it will become profitable by FY28. Now, the one big takeaway, though, from that particular discussion is that industry is in active discussions with the regulator to allow mutual funds to be pledged as collateral collateral for the availing MTF facility. Now today, only stocks and cash are allowed as collateral for MTF. So if mutual funds are permitted, it unlocks a significantly larger pool as collateral for retail investors, potentially driving up a step up in the MTF adoption in the industry overall. Now, so there's positive commentary coming in from the management, as well as if the MTF reform does go through, it could be a meaningful positive for not just Groww, but the stockbroking industry as a whole.
On the STT side, if I look at it in the last 2 weeks when this regulation got implemented, we saw there is no change or a significant change on the option volume. But on future side, there was a slight dip. We have participated from the marketing perspective. There is typically, you can say 50 to 60 crore kind of extra spend that happens. But it generally, if you look at overall cost to go for us, which is where our marketing cost is, it is between 450 to 500 crores. We don't expect that to significantly increase in this year as well on a full year basis.
Okay, on that note, we're actually going to slip into a very short break, but we are proud to bring back HSBC presents CNBC TV 18 Future Female Forward Season 4, co-presented by Cognizant, with a powerful cultural launch gala in New Delhi. Top industry leaders come together for a dynamic town hall on equity and leadership in New India, along with curated entertainment performances. The launch will also see an announcement of a special advisory committee to guide female micro-entrepreneurs through the year to drive more meaningful impact. Tune in on April 23rd, 5 p.m. onwards, only on CNBC TV 18.
Welcome back. You're still tuned into Halftime Report, and this is our What's Trending segment. We are tracking a couple of financial names reacting sharply to earnings. PNB Housing has surged after a strong Q4 performance, while Bank of Maharashtra has hit a fresh 52-week high post its numbers. We'll spotlight both these stocks, the housing finance sector in general, and decode whether the momentum has more room to run. Gurmeet Chadda will also join us shortly for that conversation. But first up, let's get stock specific. Ananya, over to you on PNB Housing's stellar performance.
Delivered strong set of numbers, and more importantly, the management guidance have been very reassuring, which is why the stock is reacting very positively today. Now, the company is experiencing a great growth momentum with a record retail disbursement and better asset quality, with GNPA now below 1%. Now, but the real trigger is the forward guidance. Management is guiding for 18 to 20% loan book growth in FY27, with the loan book expected to cross around 1 lakh crore while maintaining stable margins. Now, importantly, they have indicated that yields have bottomed out and will continue to improve from Q1 onwards, driven by shift towards higher yielding segments. Now, in fact, the strategy is very clear. Affordable housing is expected to grow the fastest, with management targeting nearly 50% growth in this segment, followed by emerging and then prime. Now, over the next 2-3 years, they aim to move the mix of affordable plus emerging to 50% of the book from around 40% currently, which is a key positive for margin. Now, at the same time, credit costs are expected to remain negative for the quarter, supported by better recoveries. Now, overall, we can see it was a very strong quarter for the company, and very positive guidance by the management, and that's why the stock is reacting so positively today.
Absolutely reacting positively as of now, with gains of almost 8%. But Ananya, because of PNB Housing's numbers, we've seen other housing finance companies also up in trade today. Aptus Value, Home First Finance, Aadhar Housing Finance, LIC Housing Finance, all these names are buzzing. Could you take us through the valuations? How are they stacking up here?
So the housing finance space is becoming very interesting, with growth mainly driven by affordable and emerging segments. Now, if you look at LIC Housing Finance, it is the cheapest in the pack, trading at just around 0.78 times book and about 5.6 times earning, with ROE near 16% and ROA at around 1.8%. So LIC Housing is clearly the value play, but growth and profitability are relatively moderate. Now, on the affordable housing side, valuations are much richer. Aavas trades at around 2.35 times book and 17.6 times PE, with ROE of 14.1% and ROA of 3.27%. Aadhar Housing Finance is even more expensive at about 3.14 times book and 20.8 times PE, with ROE of 16.9% and ROA of 4.31%. Now, Aptus also trades at a premium, around 2.72 times book and 14.4 times PE, but it has best profitability in this group, with ROE close to 18.6% and ROA above 7.4%. Now, the sector itself has strong structural tailwinds, with mortgage to GDP in India still only around 16.6%, leaving a long runway for growth. Now, while affordable housing finance AUM is expected to reach around 14.1 trillion by FY27. And of course, that positive sentiment has been strengthening further, because PNB Housing Finance also came up with a very strong quarter, and that's why you can see a lot of housing finance segment stocks are reacting positively today.
Okay, absolutely, Ananya. Thanks very much for that and bringing us all of that perspective. But besides housing finance stocks, we're also tracking one of the banks that came out with its numbers today, which is Bank of Maharashtra. It's in fact hit a 52-week high today, post its Q4 numbers, which were released, and is up 28% on a year-to-date basis, outperforming the Nifty PSU banking index, which it is also a part of, which is up around 5.6% on a year-to-date basis. Now, if you look at it on a year-to-date as well as on a past 1 year basis, Bank of Maharashtra has in fact outperformed all of the smaller banks which it is possibly compared to, within the 30,000 crore to over 65,000 crore market cap range. So, for example, Bank of Maharashtra is up 28% year to date, up 56% in the past 1 year, outperforming Bank of India, IOB, UCO Bank. Similar case for a lot of the larger banks as well. Say, for example, State Bank of India, Union Bank, Bank of Baroda, PNB. This one has in fact outperformed both on a year-to-date as well as on a past one-year basis. Now, why is that? Because of the consistent performance that Bank of Maharashtra has been reporting. FY24 profit up 56%, net interest margins at 3.7%. FY25 net profit up 36%, net margins at 4.01%. FY26 profit up 27%, net interest margins at close to 4%. Guidance is conservative, so 3.75% is what they are targeting in terms of net interest margins. But remember, they've already outperformed on that front, and the guidance is to maintain the net NPAs below 0.25%. They reported around 0.13%. Valuation-wise, it is expensive because it is an outperformer and because it has been consistent in terms of numbers. So Bank of Maharashtra at 1.8 times FY26 price to book value, as compared to a couple of the other banks which are listed, Bank of India, PNB, Bank of Baroda, all of them sub 1 times, Union Bank and around 1.1 times. So an outperformer which continues post its Q4 numbers.
Okay, all right. Thank you, Ekta, for that comprehensive summary. So that's about Bank of Maharashtra and the other PSUs and banks as well. There has been an outperformance for sure. So to take this conversation forward, we are now joined by Gurmeet Chadha, Managing Partner and CIO at Complete Circle. Gurmeet, good afternoon. Thank you so much for joining in. You heard Ekta, you heard Ananya. Let me start with the housing finance bit first, because PNB Housing commentary that affordable housing is will be doing really well. They are looking at being the fastest growing segment, and they look at more than 50% of their loan book coming in from here. Affordable housing wasn't doing so much in last few years. It was the premium housing that was doing really well. Do you think it is just the start of an outperformance coming in, and this is something which could continue across the space?
Yeah, I mean, looks like. So if you see, they were doing very well for FY22 to 25, targeting that 30% growth. We were lucky in terms of getting early in home first. We've recently added Bajaj Housing Finance as well. And then we saw last 9 months, the growth moderating to about 20%, 22% from high 28, 30%, and also some credit costs going up because of stress. So in some states, there were delay in e-khatas. Then you had the tariff issue of US affecting textile and other sectors. And there was a bit of an over-leveraging with the borrowers in the MSME segment. And that's why, players like, for example, Aptes, which is more exposed to MSME, got impacted. But I think there are 2-3 companies which are digitally building a great model, both in terms of risk underwriting in the informal segment, in terms of yield, and using technology. For example, Home First, if you see 90% loans, the turnaround time of approval is 48 hours. 80% loans are done through e-agreements and e-NATS mandate. And they have a very good mix, both in terms of urban focus, salaried, non-salaried, home loan and LAP. So the yield continues to be 11.5%, 12%. The other one which we like is Bajaj Housing Finance. It went up to almost 190 post-listing. It's the largest. Home First is roughly about 15,000 crores. Bajaj Housing Finance is the largest. I mean, that's one entity which can grow 25, 30%. It's almost half of where it went up to, post-IPO. Even some of the other names you took, I think in general, maybe for the short run, maybe PSUs because of valuation may slightly underperform. But this is, HFC is one of the great structural story in terms of playing the entire financial sector.
Okay, surely a great structural story there. You named a few names as well, Gurmeet. But overall now, from here on, do you think, you mentioned about the MSME issues which have now come down, right? For overall affordable housing, is that the case even for banking, and even smaller banks maybe could start seeing a better performance given if these issues have gone off?
It looks like, even if you heard the commentary from some of the small finance, microfinance lenders, there's no elevated stress now. Seems to have bottomed. Also, there was a bit of a dip check done in affected sectors like Tirupur, Coimbatore, bit of Karnataka. Even there, I think things are looking, a touch better. What happened also was that while the home loan segment will still continue to grow, the high yielding segment, which is LAP and other non-home loan segments, they moderated from 30-35% to about 20-22%, and that affected both the yield as well as the NIMs, along with obviously credit costs going up. So it's a bit of even LAP now is showing some signs of, and between housing finance and commercial bank, there is not much competition. right? So, for example, if you look at Home First Finance, again, example, their connector model gives them 75, 76%. And the builder ecosystem is about 12, 13%, and rest is others, right? Look at banks, for example, the sourcing model on home loan, and that's largely prime borrower is very different. So there's, this is a very different business. And once you develop a bit of a base and a critical AUM, then the entry barrier becomes very high. So I think HFC is over bank in terms of growth, but valuation-wise, maybe, some of the private sector banks are slightly cheaper.
Okay, all right. Some of the private sector banks are cheaper in terms of valuations as compared to the housing finance companies. But Gurmeet, what really caught everyone's eye is what's taking place with Bank of Maharashtra. Completely consistent outperformer, very good Q4 numbers. It's an outperformer on a year-to-date as well as past one-year basis. Do you think it's too expensive to buy at these levels?
No, it's really done well, Ekta. And I think still, if you see, it's 1.5 times, 1.8 maybe trailing times. On a PE basis, maybe 9, 10 times. And I think it's showing metrics which at some point of time, marquee private sector banks used to, growing quarter on quarter, credit by 5, 6, 7%, NIMs being closer to 4%, asset quality being favorable. Now, I know it's not a small bank now, it's about 61,000 crores. So not comparable to some of the larger ones, but it's not too small either. So I think it may continue in the short term if it can demonstrate that. And banks now, even look at SBI, for example. I mean, in 10, 15 years in terms of tracking financials, I've not seen SBI, HDFC trade at almost identical values. Right? So the market is rewarding growth, market is rewarding superior asset quality and operating metrics. Doesn't matter whether you're SBI, Bank of Maharashtra or private bank.
That's true. So, Gurmeet, in that case, what do you prefer? What would your topics be? The bigger banks or the smaller ones, where the growth rates will, of course, be higher considering the size?
So, we are positioned both equally. So, because as I said, the valuations are so cheap, 12, 14 times you're getting HDFC Bank. We have HDFC, ICICI and SBI amongst large. We are overweight financials. We have some of the gold-based financing NBFCs like Muthoot. Because that was one segment which was doing very well. And HFC we have between Home First and Bajaj Housing Finance, depending upon different portfolios. And we added Federal and RBL. So we are more positioned and both has played out well. In fact, you will see, in my view, more deals happening in smaller banks. There is a lot of interest, even in unlisted space in NCR. I've been speaking to some PE funds. There's a lot of interest in HFC. So you will see more deals coming, in housing finance is what my sense is, unlisted and listed space.
Okay, we will watch out for those deals as well. But Gurmeet, thank you so much for joining us this afternoon, helping us understand the HFC space, the banking space as well, and what you like. Thanks so much for joining in. But on that note, we're going to step into a very short break. Now, diplomatic efforts to end the war remain uncertain amid mixed messages from the US president. Catch the US president speak exclusively to CNBC later this evening at 6 p.m. Welcome back to Halftime Report on CNBC TV 18. Nifty is still managing to hold on to the 24,500. Above that mark is what the Nifty continues to trade at, almost near the day's highest point. But a lot of stocks that are moving around in the trading session. Which are those stocks? The list over there. We have Vivek joining us to take us through all of that. Good afternoon, Vivek.
Well, good afternoon. Another session where significant trend seen, especially as far as the broader markets are concerned. Advanced decline ratio 2. Very strong. In terms of the individual names, individual sectors, well, extremely strong results coming in from PNB Housing Finance. That's given a significant thrust to most NBFCs and other housing finance companies in particular. Look at names like LIC Housing, Aptus Value. Most of these names doing very well in the session. The other stock on the radar, of course, is Grow or Billion Brains. That particular name, good set of numbers coming in yesterday. Very strong commentary from the management today, up 9% on very good volumes. Lemon Tree, some news flow, but when you're looking at this particular stock, good volume traction today. Along with that particular stock is the top NSE 500 gainer in the session today. After a bit of profit booking, mid-cap IT, most of the names have rebounded quite sharply today. Have a look at names like Birlasoft, LTTS, Wipro, Mphasis. Most of these names are managing to trade with a certain amount of gains in the session today. And Bank of Maharashtra, it's actually been an outperformer going to the results and again follow-on buying seen after a very strong Q4. On the other hand, a few negatives, not too many. Most of the stocks actually recovering quite smartly. Eris Life Sciences, that particular name, some compliance worries at its Gujarat plant from a Croatian, after a Croatian inspection, that particular stock down near the day's lowest point. Life insurance companies today, most of the names are under a bit of pressure. SBI Life, HDFC Life, ICICI Pru Life, most of the names under a bit of pressure today. And Radico Khaitan, after many sessions of significant outperformance today, seeing a bit of profit booking, now down almost 5%.
Okay, lots of buzzing stocks, Vivek. Thanks very much for that. For the mid-cap index, it's up around 0.7%. Remember that yesterday, despite the resilience that we did see for most of the trading session, the mid-cap index did end in the red. So let's see whether we manage to sustain these gains. The Bank Nifty up around 1.2% at this point. Advanced decline ratio holding on the positive side. Time for a short break. On the other side, Manisha Gupta joins in. She has with her Somnath Chatterjee of the ITC Foods division. Stay tuned.
Welcome back. Joining us on the show now is Somnath Chatterjee, Executive VP and Chief Procurement Officer at ITC Foods Division. Mr. Chatterjee, hi, thank you so much for joining in. And I want to discuss wheat with you because the government advance estimates suggest that the wheat crop is at 120. The industry has been talking about 115. But with the way the unseasonal rains and the damage to the yield and quality has been, is there a new number that the trade is coming to right now?
Hello, Manisha ji, and thank you for having me on your show. So I not only represent ITC, but more the Wheat Products Promotion Society of India. And we had been traveling, trying to get an assessment of what's really happening to the wheat crop. So while the area under planting had been slightly higher this year, and we were actually expecting a great crop, it was a reasonably good.
Well, sowing numbers as compared to the last year were much higher this time, and is the reason the government was anticipating a bumper record crop as well, and 120 lakh ton is what the street was anticipating at. But there have been some unseasonal rains, and that perhaps have impacted the crop. But the other thing that the street clearly seems to be looking at is the fact that India is also looking to export more wheat this time around after a ban of nearly 4 years. But Mr. Chatterjee, we have you back with us, and you were making a point about higher sowing numbers, but not as much greater crop.
Yeah, because at the end of the, just before the harvest, the Indian farmer was hit by double trouble. So initially we had this extraordinary heat wave, which was there between 20th of February and 10th of March, and that kind of just before Holi, and that kind of impacted the crop pretty bad and shriveled the wheat, which leads to yield loss. As if that was not enough, just before harvesting, we were hit by a series of hailstorms, which again caused a lot of damage and a lot of lodging. So as a result, today, most of the North Indian wheat growing states, the farmers are facing issues with luster loss, shriveled wheat, broken grains, and the yield is way lower than earlier expected.
Are you lowering the crop estimates then?
Well, it's too early to call right now, but we were in fact looking forward to a 5 to 7 million ton crop with better crop than last year. At the moment, it looks doubtful. We would be lucky if it is even Stevens over last year. It may even drop a little short over last year.
And amidst all of this, India.
In fact, the government has been.
Yeah. Yeah, Mr. Chatterjee, I was asking.
The government is also taking cognizance.
Yes, please go ahead.
In fact, we see that the government is also taking cognizance of this, and the Food Corporation of India has been lowering their standards for procurement. They've been giving relaxation, so that will be good for the farmer. At least, their whatever they have produced will get absorbed by the government. And I think we could well, as a country, we could well do with this crop in FCI coffers, because what is also worrying us is the likelihood of a super El Nino, the shortage of fertilizers, and as you know, wheat is a irrigated crop. So if the reservoir levels are lower at the beginning of the Rabi, we could have a problem next year.
So, Ms. Chatterjee, two-part question really. One part is then, is India looking at a higher wheat prices in the coming season? And the second is that Indian government seems to have opened and increasing export numbers when it comes to wheat and wheat products. How are you looking at both of these scenarios?
I'm sorry, Manisha ji, I lost you there. Can you kindly repeat your question?
I was asking if the wheat prices are on a hike.
Sorry, yes, from a scenario where wheat were
All right, seems like a bad connection there. An important story, but a bad connection.
Yes, but you did let us know what's really happening on ground, and Mr. Chatterjee was helpful too. Of course, we'll have this conversation properly when the technology is better and is helping us. But thank you, Mr. Chatterjee, for your thoughts, and thank you, Manisha, for taking us through that important story. We'll slip into a short break now. When we come back, we'll speak with Kunal Dhamesha of Macquarie Capital to discuss Sun Pharma's potential acquisition and the concerns around that.
Welcome back. Well, holding steady for the markets, the Nifty at around 25,553. So good time then to talk about specific sectors and stocks. And we're putting the spotlight on the pharmaceutical space, specifically on Sun Pharma and the potential Organon deal, which the market has been abuzz about. Kunal Dhamesha, who is the pharma and healthcare research analyst at Macquarie Capital, now joins in. He's written a note on it where he has mentioned that they've seen limited investor pushback on the financial rationale of this potential acquisition, and it possibly reflects confidence in the deal's strong economics. So, Kunal, I'm going to start by discussing exactly that. What gives you the confidence, or what is giving the investors confidence about this, that you've not received that much of investor pushback on the financial rationale of this deal, considering that they will be taking on around $8 billion of debt on their books?
Sure. Thanks for having me. On the financial rationale, it's, on the back of the envelope calculation, also, it seems a very good deal because you are essentially getting roughly $1.6 billion of EBITDA if you acquire Organon. Versus that, you are paying around 6% interest, weighted average interest on the total debt of around $8.6 billion, right? So that comes out to be around $500 million interest expense. And then because Sun Pharma would be using their existing cash on their balance sheet, which is roughly around $3.2 billion, you lose out the other income on that $3 billion plus, which is roughly around $350 million in the best case scenario. So you are spending around $800 million, $850 million out of your P&L to acquire $1.6 billion of EBITDA, right? And hence, the acquisition would be accretive from the year one itself on a reported earnings basis. And cash earnings basis, it would be even more accretive. So our estimate is that on reported earnings basis, this acquisition at a $12 billion EV, which is what was reported in the media report, could be around low teens kind of earnings accretion in year one post close on reported basis, and cash basis would be even higher if you ignore the depreciation and amortization.
Okay, but what does this acquisition bring to Sun Pharma? What will Sun Pharma become as an entity, and what will it be recognized as if in case this acquisition does go through?
Sure. So this is what my report tries to answer as to why it makes strategic sense to basically go for this acquisition. And precisely this, in my view, this will make Sun Pharma a global innovation focused company, right? And when I say so, what we all know that Sun Pharma derives 20% of the revenue from innovation medicines, but the point is they are still lacking a lot of front-end commercial infrastructure in a lot of the major markets, right? For example, let's say their largest product, Illumia, it is being currently marketed by a partner in European Union under the brand name called Illumetri, right? Had Sun Pharma the required commercial infrastructure in European Union, they would have been able to capture the full economics of that product. So we have looked at this potential deal from an ends of matrix perspective, to analyze how this fits into the strategic priorities. And what we see in all the four buckets of ends of matrix, this deal brings good value accretion. So let's say it will double the size of Sun Pharma's presence in most of the major geographies like US, Europe, emerging market, right? So that's market penetration for you. Then in terms of product development, you are able to sell some of the organance product in your core markets, such as India. So in India, if you look at Sun Pharma, doesn't have a lot of presence in gynec and respiratory segment. They are there, but they are distant second or distant third player. Right now, can they leverage the strong therapy focus of organance, those products into Sun Pharma's strong market? The answer is yes. The third aspect.
Yeah, please go ahead. Please go ahead.
The third aspect is the market development, which is the most underappreciated, part of this potential deal, is basically enabling access into new market, right? So as I mentioned earlier, that Illumia currently being marketed by a partner in Europe, marketed by a partner in China. Now Organon brings $800 million China revenue. It brings know-how. They have commercial people on the ground, right? Can Sun Pharma leverage that to launch? The answer is yes. And last but not the least is the diversification benefit. With this potential acquisition, there is a 600 million plus revenue biosimilar business also comes along, which is a very sizable biosimilar business where Sun Pharma currently has no presence. So because their unbranded generic business is kind of stagnant for quite some time, I think biosimilar can kind of, fill that gap in terms of growth in that unbranded generic segment.
So Kunal, there are a lot of positives. You said it is a strategic fit, but again, debt continues to be a big part of this transaction, right? Do you think even if it is within permissible limits, the company will take some time to get back to its net cash position? What kind of internal accruals do they have? What is the cash generation which would lead to that position again?
Sure. So let's say a $12 billion EV, the net debt to EBITDA for the combined entity would be roughly around 2.5 times. Now, when I look at the historical operating cash flow generation, Sun Pharma has been around $1.5 billion annually, and Organon has been around $1 billion annually, right? So together they are anywhere between $2 to $2.5 billion annually. Versus that, you will have a debt balance of roughly around $8.5 to $9 billion, right? So typically, it would take, to get to the net cash, it would take around 3 to 4 years. Right, assuming some growth in both the businesses, etc., they would be back to the net cash position in 3 to 4 years.
Kunal, the street probably is uncomfortable with something, and that's reflecting in the stock performance. If you look at it, on a 6-month basis, the stock is down around 1.2%. It's not done anything in the past 1 month or not done much in the past 1 year. But is there a particular pain point that the street does not maybe like about the acquisition?
So I think the size of the acquisition itself, right? It's a really large size acquisition. In Indian pharma history, this would be the biggest acquisition. And then, how management would be able to allocate bandwidth and integrate this large an acquisition is one of the key focal points of a lot of the discussions that I am having.
Sure. Kunal, also apart from that, Eris Life Sciences, there was an announcement that came in, right? This was apparent, there's some Unit 1 and 2, where there was some inspection that's going on by the Croatia agency. For Eris Life Science, EU versus US FDA, which is more important, and how important is this investigation? And if anything doesn't go well, what will it mean for the company?
So for Eris Life Sciences, first of all, let me clarify that US FDA is not important, but they don't have any US presence. The Europe as well as the ROW presence also they have got because of the Swiss parental acquisition that they did a couple of years back. Now this European Union, European Union inspection at the plant seems to have gotten some observation, and that would probably lead to the suspension of their EU GMP for now. The company is in the process of submitting their CAPAs and undertake the remediation action. But till the time, the reinspection happens and they are in the clear, there would be some impact. So if I have to quantify the impact, the company was focusing on doing some CDMO business in Europe, for which they have around 1,000 crore order book as of now. Of that order book, the guidance was around 125 to 160 crore rupees of revenue to be generated in FY27. Now that expectation, would be kind of delayed. In my view, because of these adverse observations. And then some of the other geographies which basically accept EU GMP certificate, for them, for those countries to kind of import the product. There also there could be a trouble given that EU GMP certificate might not be there for some time before the remediation takes place. So all in all, there is, I would say, some bit of growth delay that we'll see.
All right, Kunal, thank you so much for joining us with your thoughts on Sun Pharma. Very important what might happen as per media reports, and Eris Life Sciences as well. With that, we'll slip into a short break. As we do that, we are proud to bring back HSBC presents CNBC TV 18 Future Female Forward Season 4, co-presented by Cognizant, with a powerful cultural launch gala in New Delhi. Top industry leaders come together for a dynamic town hall on equity and leadership in New India, along with curated entertainment performances. The launch will also see the announcement of a special advisory committee to guide female micro entrepreneurs through the year to drive more meaningful impact. Tune in on April 23rd, 5 p.m. onwards, only on CNBC TV 18. Welcome back. You're still tuned into Halftime Report. Continues to be a good day. Nifty above 24,545. The realty pack is doing well. Banks are really buzzing and leading to the higher levels that we're seeing on the Nifty currently. A lot of earnings that we'll be tracking very closely. But with that, it's a wrap on this edition of Halftime Report. Stay tuned. Business Lunch will take all the action ahead.
Stocks perk up with mid-caps leading the charge even as uncertainty over the US-Iran talks loom. Realty, healthcare and financials are prominent gainers while IT and energy lag.
PNB Housing posts a strong fourth quarter and calls the end of the stress in the affordable segment with strong recoveries. It also guides for 18 to 20% growth in its assets in FY27. Its stellar show lifts the stock of all home financiers.
Grow sees no STT impact on options volumes and is confident of strong growth ahead, even as stocks on allowing mutual funds as collateral for margin trading can provide a kicker. The discount broker adds that its IPL partnership won't up its annual marketing spend.
Vedanta's demerger into separate aluminum, power, oil and gas and steel businesses will be effective from the 1st of May, offering shareholders equal stakes in all entities. The stock perks up on hopes of value unlocking.
Hindustan Copper plans to expand capacity threefold by 2030, estimating a profit growth of 2.7 times of $9,000 to $10,000 per ton. A higher realization and the rare earth opportunity offer upsides. Hello and welcome to Business Lunch, live from the CNBC TV 18 Motilal Oswal studio. I'm Arundhati Ramanan, and with me as always is Harmas Patakia. Harmas, good afternoon, and it's a good afternoon for the markets as well. Everything up, led higher by banks.
Indeed, and it's a good day today. And unlike yesterday, there are a couple of factors that are ensuring that the market stays in the green. First of all, the VIX is down. Unlike yesterday, when we were at the highs of the day at this time, the VIX was up 10%. Today, the VIX is down. That's a positive, 5.5% lower. The other stock that was leading the Nifty fall yesterday was HDFC Bank. When the recovery that the stock saw got sold into, and that had an impact on the Nifty, that stock is also doing well for itself. At the highest point of the day now is HDFC Bank, 1.75% higher. Yes, Reliance Industries is not doing well today. The stock is at the lows of the day now. It's sold off from the highs. But besides that, there are enough and more constituents that are ensuring that the fall in Reliance is compensated for. HDFC Bank is one, ICICI Bank is the other. All of the banking names. That is the Nifty Bank that is leading the index higher today. The Nifty Bank had a very important level to talk at 57,000. It is comfortably above those levels now. 57,300 is the next level that it has to sustain above. So 700 points higher on the Nifty Bank. The broader markets are doing well. The index has crossed an important level on the upside today. The interesting thing today, the weekly expiry, the second half is going to be an interesting one.
Absolutely. So it'll be key to watch out what happens then. But, for now, all sectoral indices in the green. So it's looking good for the markets. The realty pack is making a comeback after seeing a lot of selling, over the last couple of weeks. And that index is the top gaining index. And if you take a look, Phoenix Mills up 3%, Godrej Properties up 3%, and Soba nearly 5% in the green. And as Hermas pointed out, there are also those banks that are doing really well, which are lifting, the markets higher. We've got all the private banks, ICICI Bank, Axis Bank, all of them doing well. And if you take a look, even those housing finance names, right? PNB Housing Finance doing really well after a strong quarter, and LIC Housing Finance also doing really well in trade. Defense names also doing well. Data Patterns up nearly 5%, and Zen Technologies soaring nearly 8%. But the top focus today is that PNB Housing stock, right? That has surged after a strong fourth quarter performance, with retail disbursements up 31% from last quarter and 45% from last year. Ananya is here to get us all of those details. Ananya?
PNB Housing Finance has delivered strong set of numbers, and more importantly, the management guidance have been very reassuring, which is why the stock is reacting very positively today. Now, the company is experiencing a great growth momentum with a record retail disbursement and better asset quality. But the real trigger is the forward guidance. Management is guiding for 18 to 20% loan book growth in FY27, with the loan book expected to cross around 1 lakh crore while maintaining stable margins. Now, importantly, they have indicated that yields have bottomed out and will continue to improve from Q1 onwards, driven by shift towards higher yielding segments. Now, in fact, the strategy is very clear. Affordable housing is expected to grow the fastest, with management targeting nearly 50% growth in this segment, followed by emerging and then prime. Now, over the next 2-3 years, they aim to move the mix of affordable plus emerging to 50% of the book from around 40% currently, which is a key positive for margin. Now, at the same time, credit costs are expected to remain negative for the quarter, supported by better recoveries. Now, overall, we can see it was a very strong quarter for the company, and very positive guidance by the management, and that's why the stock is reacting so positively today.
Ananya, thank you for that update there. 8% higher on PNB Housing, and a lot of the other housing finance companies are also doing well in light of the results there from PNB Housing, be it LIC Housing or a lot of the others as well. Now, the other stock that has soared today is Grow. And that stock is now up 9%. At one point was up 11 as well. So it's a new post-listing high that the stock has made today of 216. The results were strong, and we spoke to the management earlier in the day and listening to what they had to say on the quarterly performance and the road ahead as well.
On the STT side, if I look at it in the last 2 weeks when this regulation got implemented, we saw there is no change or a significant change on the option volume, but on future side, there was a slight dip. We have participated from the marketing perspective. There is typically, you can say 50 to 60 crore kind of extra spend that happens. But it generally, if you look at overall cost to go for us, which is where our marketing cost is, it is between 450 to 500 crores. We don't expect that to significantly increase in this year as well on a full year basis.
And Vedanta is on our radar as the board has approved demerger into 5 entities. Nigel D'Souza is here with all of those details. Nigel?
Well, Vedanta has been in a sweet spot in the backdrop of the global commodity meltdown. And last evening, the board approved May 1st, 2026 as the record date for the demerger, which means the last day to buy the stock to be eligible for the demerged entities is 29th of April. So if you have 1 share of Vedanta Limited on the record date, you will receive 1 share each of the aluminium business, power business, oil and gas, as well as the iron. For the demerger is, it simplifies Vedanta's corporate structure, and investors can also invest in the preferred vertical. It also gives the management flexibility to unlock value for investors, and they can liquidate any particular asset in case they also want to bring a strategic investor. That as well option is on the table. Additionally, the management has mentioned that the demerger is more tax efficient in nature. Now, 5 companies will be listed on exchanges between 4 to around 8 weeks, depending on how the approvals do come in. Remember, globally, aluminium has been in a beautiful sweet spot. Vedanta as well is well placed because they benefit from the strong LME prices, the capacity expansion, as well as backward integration. Let me explain all of this to you. Vedanta has the largest aluminium capacity in India, which is approximately 2.5 million tons, and it's headed to around 3 million tons. So they gain on the volumes front. But what helps them even more is they have been focusing on backward integration. The aluminium capacity has spiked up to close to around 5 million tons, while their captive coal is also expected to drastically ramp up in the next few years. And remember, their cost of production for the aluminium business, that's declined by close to 37% in the last 14 quarters. And it's expected to decline even more to around $1,550 to around $1,600 per ton. The management believes that this will help the aluminium vertical EBITDA to scale close to $4 billion from around $2 billion in the past fiscal, that's FY25. Nuvama, they have been very, very bullish on the stock. Their target price is around 899 rupees per share, and bulk of the share value comes in from their aluminium business, which is followed by Vedanta Limited, and that derives most of its value from the 60% stake that they have in Hindustan Zinc. Finally, a concern over the last few years has been the financial health of the promoter entity, Vedanta Resources, who at one point of time had a debt pile of close to $9.5 billion. That includes the intercompany loans. But over the last few years, they've done a splendid deal, in reducing the debt by close to around half. The stock, remember, has already run up considerably in the last few months, but it will remain on investors' radar in the run-up to the record date.
It will definitely remain on the investors' radar. Nigel, thank you for that update. 20% higher so far this year is Vedanta. The market cap now above 3 lakh crore rupees. Now, Hindustan Copper has unveiled its Vision 2030 strategy, aiming to grow its profits by over 2.5 times by that period. Earlier today, we caught up with the management of the company, Sanjeev Kumar Singh, the chairman and managing director, who said that their Vision 2030 plan is a conservative one. Listen in.
The annual plan which we have prepared, which you have just seen, which we have unveiled on 17th and 18th, is definitely on the conservative side. Because as a planner, we cannot be optimistic. We have to plan on a conservative side. And it has taken the estimates on the lower side with respect to the prevailing prices, whether it is a dollar, whether it is LME, anything. It is on the lower side with the prevailing prices. Because it's very dynamic, you know very well. They are not in our hands. So we have to be on the lower side. It is around 9 to 10,000. See, first year 25-26 internal accruals, there's no doubt about it. And we are nearly debt-free company. You can see we have got a loan of just 129 crores, which will be finishing out in this year itself. So next year, that is 26-27 and onwards, there will be a mix of internal and debt. As you have seen it, we are on the lower side. And if the prices remain this also, I mean to say the current prices also, if they are there, so definitely we'll be doing slightly better.
On that note, it is time for us to head into a short break, but more news and updates on the other side. Stay tuned.
Welcome back. Now, with 1 day left for the ceasefire in West Asia to expire, doubts about a second round of talks between the US and Iran still remain. Now, the US says that its delegation will travel to Islamabad for talks only if Iran confirms attendance. Now, on the other hand, Iran's Parliament Speaker Mohammad Bagher Ghalibaf says that Tehran will not accept negotiations under the shadow of threats and is prepared to reveal new cards on the battlefield. He said that in a post on X. Now, US President Donald Trump, however, insists that a deal with Iran will happen relatively quickly and says that the naval blockade of the Iranian ports will continue until an agreement is reached. CNBC's Dan Murphy is now joining in with the latest updates. Dan.
As all of this takes place, the clock is certainly winding down towards Wednesday's deadline as this 2-week ceasefire nears its end. Peace talks are reportedly back on, though, but of course the diplomatic path here remains very unclear. The Vice President J.D. Vance, Steve Witkoff and Jared Kushner are confirmed to travel to Islamabad today, even as Tehran's top negotiator, this is Mohammad Ghalibaf, warns that Iran will not negotiate under what he called the shadow of threats. And while Iran has signaled that mediators will actually show up, we still don't know exactly who, and state media is already framing Washington's so-called excessive demands as a deal breaker. President Trump is doubling down, though. He said on Truth Social overnight that he is under no pressure to rush a deal and is unwilling to extend that ceasefire window. The president also warned that a failure to reach a deal will trigger strikes on Iran's power plants and bridges, so the pressure is indeed on. He also said this agreement that is in the works will be far better than the 2015 JCPOA under President Obama. Of course, important to point out, nobody knows exactly what it looks like yet. And against the backdrop of this as well, we're also seeing oil prices react here, spiking nearly 7% on Monday after we saw US forces seizing an Iranian flag container tanker ship in the Gulf of Oman. That's the first time we've seen a use of force in the current Hormuz blockade. We are seeing prices cool off today, perhaps on the diplomatic headlines here. But of course, the Strait of Hormuz remains functionally closed. And at the same time as well, the concern is also growing in the backdrop here as we reach what could be a critical 24 to 48 hours on the potential diplomatic off-ramp. Reuters also reporting today that there is really some growing anxiety among the Gulf leaders about the trajectory of these talks. The leaders here in the Gulf fear that the tight deadline, that is the Wednesday deadline, is perhaps forcing a pivot away from drones and proxies, which are the issues that they've put on the agenda as being critical in the negotiations, towards issues like uranium enrichment, for example, which would effectively reward Tehran's leverage rather than dismantle it. So, look, still a lot of uncertainty coming into these peace talks, but the positive is that the US team is now confirmed to be heading to Islamabad. Who shows up on the other side on behalf of the Iranians remains to be seen, and exactly what this agreement that the president seems to be talking about on social media, what that looks like, of course, is a big question mark as well.
So Dan, there with the latest on what's happening in West Asia. But as the uncertainty looms over the second round of talks, with Iran yet to confirm its participation amid ongoing threats and a naval blockade, a Reuters report says that Trump could attend in person or virtually if a deal were to be signed. Here's what the president had to say a few weeks ago on the probability of him going to Pakistan.
I would go to Pakistan, yeah. Pakistan has been great. They've been so good. Islamabad, I might go. Yeah, I might go. If the deal is signed in Islamabad, I might go. The field marshal has been great. The prime minister has been really great in Pakistan. So I might go. They want me. All of them are
When will the next in-person
probably
meeting take
maybe
place?
over the weekend. The blockade has been incredible. It's held. They're not doing any business. They're unable to do any business because of the blockade. And so the combination of having no Navy, having no Air Force, having no anti-aircraft equipment, they have nothing. I would say the fighting, if there's no deal, fighting resume.
Now, diplomatic efforts to end the war remain uncertain amidst these mixed messages from the US president. Now, you can catch the US president speak exclusively to CNBC later this evening at 6 p.m.
On that note, it is time for us to head into another short break, but more news and updates follow on the other side, so stay tuned. Welcome back. You're still with us on Business Lunch. Apple has announced a major leadership transition, with Tim Cook set to step down as chief executive in September after more than a decade at the helm. He will be replaced by John Ternus, who currently serves as the senior vice president of hardware engineering. Ternus has worked at Apple for nearly half of his life. He joined Apple's product design team in 2001 as only his second job out of college, and by 2013 he was vice president of hardware engineering and was promoted to the senior VP role in 2021. Most recently, Ternus was involved in the production of the MacBook Neo, Apple's new, more affordable laptop model. Rachna Dhanrajani is here to tell us how the iPhone maker fared under Tim Cook. Rachna, it is the end of an era, right, at the company?
Tim Cook is stepping down as Apple's CEO, and hardware boss John Ternus will take over from September 1. For Cook, it marks the end of a 15-year run in which he turned a $350 billion company into a $4 trillion one. He took over in August 2011, 6 weeks before Steve Jobs died. The question then was whether Apple could survive without its founder, and the answer was yes, and then some. Under Cook, revenue went from $108 billion to over $400 billion. He built a services business, Apple Pay, Apple Music, the App Store, that now earns over $100 billion a year at margins nearly double what hardware delivers. He killed Intel dependency inside the Mac and replaced it with Apple's own silicon. And then there is India. Cook first came here in 2016, met Prime Minister Narendra Modi, announced a development center in Hyderabad. Apple's manufacturing presence in India at that point was zero. It wasn't small, it was zero. What followed was one of the most deliberate supply chain pivots in modern corporate history. In stages, everyone a bet that India could deliver at Apple's standard. 2017, iPhone SE assembly begins in Bengaluru. The tap is now open. Then came 2021, when India launched the PLI scheme for electronics. Foxconn and Tata signed up. For the first time, the iPhone 13 is assembled in India in the same year as it launches globally. That had never happened before. Then 2022, Foxconn's Zhengzhou plant goes into COVID lockdown. iPhone 14 production was hit globally. So Cook accelerated the India timeline. Tata acquired Wistron's Karnataka plant, the first Indian company to get in Apple's supply chain. Then 2023, Cook returned to India personally to open Apple's first retail stores, one in BKC, Mumbai, and then Saket, Delhi. India iPhone sales hit an all-time high. Then Apple overtook Samsung as India's largest smartphone exporter by value. By 2025, that was last year, India was assembling 55 million iPhones, 1 in 4 made globally. Exports hit $23 billion, up 85% in just a single year. Foxconn and Tata employ over 185,000 people across Tamil Nadu and Karnataka. And all of this is when Trump publicly told Cook to stop making iPhones in India. But Apple did not flinch. In March this year alone, it airlifted nearly $2 billion worth of iPhones out of Indian factories to beat a US tariff deadline. So India was not a backup in all this. It was the answer to all of Apple's troubles. Cook had his misses as well. The Apple car consumed a decade and produced nothing. The Vision Pro launched at $3,499 with no killer app. On AI also, they arrived very late, and the gap is still showing between ChatGPT AI and all the other AI models. But the scorecard from where we are standing here is hard to argue with. A country that assembled 0 iPhones when Cook first visited is now the world's second largest iPhone manufacturing base. And the 2027 target is $40 billion in production. Ternus takes over September 1st, an engineer stepping in exactly at the moment when Apple needs to figure out artificial intelligence. Cook leaves him a formidable machine, and in India, an infrastructure that took 9 years to build and cannot be replicated quickly anywhere else. That was the Cook era at Apple.
What an era, indeed. 15 years, 20x jump in market cap, in share price. It is a phenomenal journey indeed for Apple under Tim Cook, currently the second most valuable company in the world, only next to Nvidia. With that, we take your leave on this edition of Business Lunch from Arundhati and me. Thank you for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Vivek Iyer. Good day for the markets. We're above the 24,550 mark for now. The Bank Nifty is supporting the Nifty a lot. We do have a lot of earnings which are trickling in. Mid-caps are underperforming, but of course, they are in the green. Overall, it is a green-looking screen, and all the sectoral indices are in the green, barring Nifty CPSE.
That's right. Good afternoon, and absolutely nothing to complain about. We've seen markets recover quite sharply from any intraday dips, and most of the dips are being bought into. Bank Nifty today holding quite steady after the brief dip that we saw yesterday. But a lot lined up on the show. Some important corporate earnings that we will be addressing towards the second half of the show as well. But for now, let's start off with the top headlines. Hopes of a second round of talks between USA and Iran lift sentiment. Small cap index outpaces mid caps with gains of over 1%.
A strong retail-led growth coupled with stable asset quality aids PNB Housing Finance's Q4 show. Management guides for an 18 to 20% growth in the loan book and sees the book gliding past the 1 lakh crore mark in FY27. Company's stellar show lifts stocks of other home financiers.
Growth sees no STT impact on options volumes and is confident of strong growth ahead, even as talks of allowing mutual funds as collateral for margin trading can provide a kicker. The discount broker adds that its IPL partnership won't up its annual marketing spend.
Vedanta's demerger into separate aluminium, power, oil and gas and steel businesses will be effective May 1st, offering shareholders equal stakes in all entities. The stock perks up in hopes of value unlocking.
Tata Group-led Nelco sees its best single-day gain in 16 months. The company turns profit-making in the March quarter versus a loss of 4 odd crores, same time last year.
Okay, all right. Those are the top headlines that we are tracking for you. Markets, of course, in a good mood as far as the bull side is concerned. Mid caps up around 0.7%, and a lot of moving parts in the broader markets. Their earnings, the news pieces, companies still getting orders, companies still getting US FDA observations. So there's a lot which is happening overall.
There's a new one that's joined the bandwagon as far as the pharma pack is concerned. This time around, it's a Croatian agency that's come and visited Eris Life Sciences. But of course, US FDA overhang on quite a few major pharma companies as well, like you rightly mentioned. But these names and a whole host of other stocks is what Riya has on her radar. She's standing by the big wall to take us through the mid-cap movers in the session today.
Well, lots of stocks on our radar today. Starting off with the gainers first. Grow has been one of the top gainers in today's trading session, hitting its 52-week high as well as an all-time high today after reiterating its revenue growth guidance of 25 to 30% for FY27, despite missing its revenue targets for FY26, and has been gaining strongly in today's trading session. PNB Housing Finance also performing well after strong retail-led growth with improving asset quality as well as profitability momentum in Q4. And apart from this, Five-Star Business Finance, Elcon Engineering as well as Lemon Tree Hotels all seeing strong gains of around 8% in today's trading session. Moving on then to the top sectoral gainer for today, which is the Realty Index, up nearly 3%. Sobha Realty, Phoenix Industries, Godrej Properties, Lodha as well as Anantraj all seeing gains of nearly 3 to 4% in today's trading session. On the flip side, looking at the losers, then we have Ola Electric, Radico Khaitan, Thermax, Shah Metallics as well as E-Clerks all on the losing side in today's trading session, down anywhere between 3 to 5% today.
Okay, all right. Thank you so much, Riya, for joining us. So those are some moving parts in the broader markets. It's a good time to get a technical check on the markets. And let's welcome Shrikant Chauhan, EVP and Head of Equity Research from Kotak Securities. Shrikant, do you think we will be at these levels by the end of the trading session as well? There could be some volatility. It's been very volatile generally. What do you make of the moves today?
Good afternoon, Sonal. Good afternoon, Vivek and everyone. I think the way the market is going up and there is like support from BFSI. At the same time, IT stocks have also shown some signs of recovery from lower levels, and in fact, they are stabilizing. So while looking at the overall breadth of the market, one thing is very clear that we are heading higher. And comfortably, the market is sustaining above the mark of 24,500. Even if we go through with the daily or technical pattern of the Nifty, then we can see that it's a V-shaped recovery that we are witnessing. And based on such type of formation, what we can make out is that market is heading for the levels of 25,000, where it has left a gap. So it's I'm going to say when the market was falling from the highs, the market has left a bearish gap on 2nd of March between this 24,950 and 25,000 levels. So around those levels, we can expect market to move. And any correction, I think, will be an opportunity for creating long positions.
Well, Srikanth, every dip is a buy as per what you're saying. You're waiting for a correction to go ahead and make use of that particular correction. But what are the individual stocks that you're looking at in today's trading session?
So for the day, in fact, say like number of stocks have broken their important resistance level, and couple of stocks have crossed their immediate resistance level in today's date. So in that specifically, if we go through with a stock like NetWeb Technologies, which is currently trading around some 1950 sort of levels. There also, if we consider the currently it is around 3985 sort of levels, and if we consider its overall technical pattern, then based on that, the stock can move towards the levels of 4,000, 4,500. So here we are bullish and we are expecting further more upside in the near term, at least up to 4,400. We can keep stop loss around 3,800 for creating positional trade on it. The other stock on which we are bullish is Bharat Forge. And there also the overall momentum is clearly suggesting us that the stock is heading for 2,200 or maybe 2,250 sort of levels in next few months. So it will take some time, but it's a positional trade to buy for. Currently it is around 1,900. We can keep stop loss around 1,800 for creating positional trade, and gradually the stock can move towards the levels of 2,200 or 2,250. That's the overall view.
All right, take that point. Thank you so much, Srikanth, for joining us as always. So those are some stocks which are his technical picks and bullish calls coming in from the technical angle. We'll slip into a short break. When we come back, we'll get you more on the stocks and markets and a lot of news flow that's happening as well. Stay tuned for that. Welcome back. Well, while the mid caps are underperforming the benchmark a little bit. There are a couple of stocks which are buzzing on the upside. Rolex Rings, for instance, is up around 15.5%. We do have Muthoot Micro as well, which is buzzing in trade. It is up 10%. There's a lot of buzz in the housing finance space, in the financial space. We do have Lemon Tree Hotels as well, which is up around 8%. Five-Star Business Finance is the other one, sitting with gains of 8%. Zen Technologies, we'll discuss Nelco in greater detail as well. And Misho is the other one, which is up around 5%. So a lot of stocks in the broader markets which are buzzing on the upside. Realty is the other one, which is in focus. They're bouncing back today. The index is one of the top gainers. But do remember, the index is still down 23% off its 52-week high. But it's up 23% this month, which is the biggest gain in a month that we have seen in the last 5 years. A couple of updates which have come by. We do have the stocks like Lodha, Prestige, we have Puravankara, Sobha. All of them are buzzing in trade on the upside. And this is coming after a big and sharp fall that these stocks have seen. Let's begin with what's happening here. Godrej Properties, there's an interesting note which has come in from HSBC. They have a buy rating with a target price of 2,800 rupees a share. They met the management. They say that FY27 pre-sales growth target is 20%, which is backed by strong pipeline. This is over and above the 32,000 crore rupee pre-sales that the company did in FY26, and this is one of the highest that they've seen and highest in the listed industry peers as well. They're turning free cash flow positive. And hence, there's a possibility of dividend by or from FY27. They're targeting around 20% return on equity by FY28. Of course, there are risks, lower launches, expensive land buys, and competition as well. For Oberoi Realty, it was a good set in Q4. They gave out their operational update. Units booked up 193%, volumes up 169%, sales value is up 96% as well. However, on an FY26 basis, it's a decline across the board, barring sales value, which is up just 3%. That would be because of pricing change and also because of the change in their product mix as well. But the street is rewarding their Q4 numbers, which have looked decent. So bounce back from Realty. And this is, coming at a time when most of the experts are talking about the fact that maybe demand has peaked out.
That's right. What a recovery in the Realty Index, like you rightly pointed out. But the other set of stocks that are doing quite well, in fact, are names from the BFSI pack. Shares of Bank of Maharashtra have scaled a fresh high on the back of robust Q4 results. Here's Ananya, our colleague, with the fine print of those numbers.
Bank of Maharashtra is in focus today, and clearly for all the right reasons. Now, the bank has delivered impressive set of Q4 numbers. So let me walk you through the same. Now, total business growing 17.5%, advances rising 21.7%, and deposits growing 14.1%. Now, profitability was equally impressive, with net profit up 27% YOY, while return on assets improved to 1.86% for the full year and touched 1.97% in Q4. Now, asset quality remains a standout, with GNPA at 1.45% and NPA at exceptionally low 0.13%. Now, management commentary was clear and reassuring that they are now focusing on sustainable growth rather than more aggressive growth. So for FY27, now for FY27, the bank has guided for 16 to 17% business growth, 18% advances growth, 14 to 15% deposit growth, and 15% NII growth, while maintaining healthy profitability, with NIM at around 3.75%, ROA at 1.8%, and ROE above 20%. Now, the management also mentioned that the key strategic focus for FY27 will be deposit and fee income, while MSME moderation being a conscious quality-led decision. Branch expansion continues to remain a long-term growth driver. Now, coming to the valuations front, now on valuations, the stock now trades at around 1.9 times book and 8.7 times PE, so it is not very cheap anymore, but supported by a good growth and better asset quality. You can see that the stock is rallying today.
It is and has been in focus, but the other stock which is doing well and has taken the sector along with it is PNB Housing Finance. Tell us more about that. What's the street reacting to?
PNB Housing Finance has delivered strong set of numbers, and more importantly, the management guidance have been very reassuring, which is why the stock is reacting very positively today. Now, the company is experiencing a great growth momentum with a record retail disbursement and better asset quality, with GNPA now below 1%. Now, but the real trigger is the forward guidance. Management is guiding for 18 to 20% loan book growth in FY27, with the loan book expected to cross around 1 lakh lakh crore while maintaining stable margins. Now, importantly, they have indicated that yields have bottomed out and will continue to improve from Q1 onwards, driven by shift towards higher yielding segments. Now, in fact, the strategy is very clear. Affordable housing is expected to grow the fastest, with management targeting nearly 50% growth in this segment, followed by emerging and then prime. Now, over the next 2-3 years, they aim to move the mix of affordable plus emerging to 50% of the book from around 40% currently, which is a key positive for margin. Now, at the same time, credit costs are expected to remain negative for the quarter, supported by better recoveries. Now, overall, we can see it was a very strong quarter for the company and very positive guidance by the management, and that's why the stock is reacting so positively today.
Well, that's right, Ananya. You said stock is reacting positively, and this particular lifting tide has lifted all of the housing finance companies' boards. How do valuations stack up, especially with PNB Housing Finance versus the other home finance companies?
So the housing finance space is becoming very interesting, with growth mainly driven by affordable and emerging segments. Now, if you look at LIC Housing Finance, it is the cheapest in the pack, trading at just around 0.78 times book and about 5.6 times earning, with ROE near 16% and ROA at around 1.8%. So LIC Housing is clearly the value play, but growth and profitability are relatively moderate. Now, on the affordable housing side, valuations are much richer. Aavas trades at around 2.35 times book and 17.6 times PE, with ROE of 14.1% and ROA of 3.27%. Aadhar Housing Finance is even more expensive at about 3.14 times book and 20.8 times PE, with ROE of 16.9% and ROA of 4.31%. Now, Aptus also trades at a premium, around 2.72 times book and 14.4 times PE, but it has best profitability in this group, with ROE close to 18.6% and ROA above 7.4%. Now, the sector itself has strong structural tailwinds, with mortgage to GDP in India still only around 16.6%, leaving a long runway for growth. Now, while affordable housing finance AUM is expected to reach around 14.1 trillion by FY27. And of course, that positive sentiment has been strengthening further because PNB Housing Finance also came up with a very strong quarter, and that's why you can see a lot of housing finance segment stocks are reacting positively today.
Thank you so much for joining us with all those details, Ananya. Definitely the sector and the stock of the day. But this is our special mid-cap spotlight segment. Nelco is one of the stocks which is buzzing on the upside. Vinny is here to tell us how did the numbers look.
Hi, afternoon. So Nelco today, yes, obviously holding on to very strong gains in the trading session. It's the biggest intraday gain that we've seen coming in since November 2024, more than 9% gains there. Now, obviously, do not forget the company is actually a subsidiary of Tata Power, provides domestic satellite communication services. Good numbers, 17% revenue growth, 79 crores approximately is what the revenue came in at for the Q4 number. EBITDA, that was down by around 11%, 7.46 crores versus 9.3 crores last year, while margins obviously a bit subdued versus last year, 9.4% versus 13.7%. The company actually swinged into a profit this time versus a loss last year. So they reported a profit of almost 1 crore, while there was a loss last year of 1.19 crores. Now, what has aided the profit this time? There was a deferred tax credit that came in that supported the bottom line growth, and that was mainly those write-backs which supported the profit of the company. Apart from that, the growth rate, the revenue growth rate of the company has been interesting, right? 17.2% if you look at it versus the past trends. The company has actually seen a decline in the last couple of quarters, and in Q1 FY26 also it was a very muted quarter. Marginal growth is what they saw coming in. In the last couple of years, after those last couple of years, this is actually one of the best growth rate that the company has seen. So very interesting in terms of numbers on the top line front as well. And this time, obviously, those write-backs for deferred tax is something that has supported the bottom line of the company.
Well, thank you so much, Vinny, for joining in and giving us all of the details as far as the results of Nelco are concerned. Well, we'll now slip into a short break. We'll get him on the markets and put the focus on Persistent Systems, which will report its Q4 FY26 later today. Welcome back to Midcap Radar. Well, midcap IT company Persistent Systems is all set to report its Q4 FY26 later today. Let's go across to Rima to understand what the street is penciling in.
Thanks so much for that. So Persistent and Coforge have been two of the fastest growing midcap IT companies, and even this quarter, we are working with 3.5% to 4% constant currency revenue growth. Remember, to put it in context, a company like TCS had a growth of just 1.2%, or Mastech had a flattish top-line growth. And with this 3.5%, 4%, it's likely to be industry leading in Q4 and even for next year, FY27. When you look at the consensus expectations, organic revenue growth for Persistent could be 15-16% at the top end. Margins are likely to be up on a reported basis quarter on quarter, but adjusted basis should be on the flatter side. What the street will track very closely is the progress towards the $5 billion revenue aspiration by FY31. CLSA says Persistent and Coforge are the only two IT companies in their coverage that have seen consistent earnings upgrades throughout calendar year 2025, and Persistent remains their top pick in the IT pack, and it's on their high conviction list. So I think Persistent, for the company to deliver on the narrative that the street has built on it, needs to keep delivering on industry-leading growth. And this quarter, the number we are working with is about 3.84%. Back to you.
Thank you so much, Rima, for joining us. All eyes on Persistent when it reports its results later today. But an interesting story from our colleague Rachna. Diet Coke has gone missing amid an aluminium crunch. Rachna joins in with the details on where it has disappeared. Rachna, over to you.
Well, if you've been to a supermarket or are trying to add Diet Coke to your quick commerce cart this week and wondered where Diet Coke has gone, here's your answer. India is in the middle of an aluminium can crisis, and it is more complicated and more serious than it looks like from a supermarket shelf being empty. Because CNBC TV 18 has exclusively learned that at least one production line is currently shut at each of India's two major can manufacturers. Sources tell us that would lead to a 50 to 60% of India's can production capacity being affected at the moment, though things remain fluid. Well, the immediate reason is an acute shortage of LPG. That's the fuel that powers the furnaces that these factories run on, and that gas shortage traces directly to West Asia conflict. Another factor that goes back to the West Asia conflict is because on March 28th, Iran launched missile and drone strikes on two of the world's largest aluminium smelters, Emirates Global Aluminium in Abu Dhabi and Aluminium Bahrain. Both sustained significant damage, both declared force majeure. EGA's Abu Dhabi plant alone was producing 1.6 million tons of metal every year. Their very own statement says it will take a minimum of 12 months for them to restart. Wood Mackenzie estimates the conflict has removed 3 to 3.5 million tons of global aluminium capacity this year globally. But aluminium prices have surged 15% since the strikes, touching a 4-year high of over $3,500 a ton. Just last week, now here's the India-specific problem. India was already importing roughly 20% of its 330 ml soft drink cans. The format of Diet Coke and Coke Zero, that's what they come in. Directly, they come from UAE-based manufacturers. That source is now damaged or blocked, and there is no easy alternative to it. The import pipeline that India has relied on to bridge its domestic capacity now runs straight through the conflict zone. So this is what summer 2026 looks like for India's canned beverage industry. Domestic production down 50 to 60% along with import sources damaged by the West Asia war, and all of it leading to raw material at 4-year price high, and peak summer demand is already here. We reached out to companies that are involved in the process of this. That's Coca-Cola, HCCB, Varun Beverages and PepsiCo and the can manufacturers, but haven't received a response yet. So the Diet Coke that you couldn't find this week, well, there's no quick fix in sight for it.
Well, thank you so much, Rachna, and we hope it's fixed by the weekend. Well, with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.
Hello and welcome to MF Corner. I'm Sonal Bhutra. With me as always, Vinny Motiwala. Today on the show, we put spotlight on target maturity funds. How can investors make the most of this category in a volatile market? Most of the funds, they of course give a return of which is fixed, 7% returns in a 3-year period. We have a lot to discuss on this. Is it the right time to look at these funds? These are passive debt funds. And what kind of investors can look at it? When can you get those returns? There was the time these funds were really popular, Vinny, but now we don't hear so much about them.
Don't hear so much about it, and that's what we want to discuss about, right? Is it the time to look at it, like you mentioned? To talk to us about all of this, we have our guest joining us right now. We have Kushal Baghi, owner of PCC Investing, as well as Vineet Nanda, Managing Director, joining us from, Swift as well, Swift Capital as well. Thanks so much, gentlemen, for joining us on the show. Kushal, let me start with you. What are these target maturity funds? Who are the best suited for this as well?
Great. Good afternoon to you and to your viewers as well. So, let me start by explaining how a traditional debt mutual fund would work. And then we'll place this in context so that we can understand TMF or target maturity funds a little better. In a traditional debt mutual fund, like a corporate bond fund or a dynamic bond fund, right, your fund managers are essentially managing two types of risks actively. The first is interest rate risks. Interest rate risk, as we all know, is that if interest rate rises, the existing bond prices will fall, and vice versa. So what is the role of a fund manager in this? If they expect the rates to fall, then the fund managers could possibly increase the duration, which means buy longer maturity paper to benefit from the price rise, and again, vice versa. So based on the interest rate outlook, they can actively position their portfolio. When it comes to the second type of risk that they need to manage, it's called credit risk. What is credit risk? It's the risk that a bond issuer might delay or default the payments. And here do the fund managers play an active role. If they want safety, they want to prioritize safety, then they can select high quality issuers. If they want to do higher yield, then they can selectively take lower rated exposures. And, their teams study and monitor all of these things on a very, very thorough basis. You can exit if the credit quality deteriorates. And if you think that an issuer is going in line for an upgrade, then they can increase exposure to them as well. So this is a classic case of active management, and it creates the possibility of two things: outperformance, but also if the fund manager doesn't get it right, there may be some mistakes that are made. Now, in this context, what are target maturity funds, right? There are three things to know about how they're structured. The first is that a target maturity fund invests in bonds that mature around a specific date. So if it's a 2030 target maturity fund, it will contain bonds also maturing in 2030. So the portfolio is actually designed at the start. And it's important to understand that these bonds are largely held to maturity. So think of it as a buy and hold strategy, right? And lastly, I'll just end with, when it comes to managing these same risk, interest rate and credit, how does a target maturity fund actually manage it? Because the risks don't disappear, right? Even in an interest rate risk, in a TMF, the NAVs are going to change if the bond prices move. But if you are going to hold the bonds to maturity, which is the purpose of a target maturity fund, the prices will converge towards its face value. So that's how it negates interest rate risk and even credit risk, because you're tracking a predefined portfolio. So the portfolio is largely determined upfront. Your credit risk is going to be you're either investing in GSECs or SDLs or AAA bonds. So it's not actively managed in that sense, but it's pre-selected. So to end this point, I'd say a traditional fund actively manages or adjusts your duration and credit exposure. In a target maturity fund, it's locked in at the start, and then they follow a buy and hold or hold to maturity kind of approach.
Take that point, Kushal. And as you said, the duration here really matters. So coming on this, Vineet, of course, it is a debt fund which will give you definite return. The risk is lesser here versus an equity fund. But what kind of time horizon should an investor have before entering these funds? And if you want to take out your money before the duration that fund is for, what kind of changes can you expect to that return?
Sure. So I think what's important is that the way the fund nomenclature is target maturity fund, it's important that when you're investing itself, your financial goal should actually be aligned to the maturity of the fund. And the reason why that's important is because these funds essentially can work like a passive fund, eliminating the interest rate risk while the bond and the portfolio matures if you hold till maturity. But if you were to do a premature withdrawal, then it's possible that you may not get the desired YTM or the yield that you may have invested at because of any change in the bond prices interim. And I think we are speaking about that at a very appropriate period, because in the last 1 month, because of the entire geopolitics, for example, the yields have gone up and bond prices are inversely correlated with yields. So therefore, if an investor had invested into a target maturity fund maturing in, let's say, 2027, 28, but if he wants to take out the money at this juncture, then probably he will end up earning a lower yield than he would have actually invested with the expectations, a year or 2 years back. So therefore, it's important that, conservative, moderate investors who are investing in these products should be able to align their financial goals with maturities, and interim withdrawals have to be done being cognizant of the interest rate risk, which comes basis any interest rate movements midterm.
Okay, sure. Point taken there. In terms of Kushal, for you, time horizon an investor should be looking at, if you could talk on that front as well, and how do you identify target maturity funds? That's also important, right? So what one do you select? How do you go about it?
Right. So I think, as Vineet said, the ideal time horizon is actually one that matches the fund maturity, right? So if you need to use the funds in 2032, for example, then you invest in a fund that matures in 2032, exactly for the reason mentioned, that if interest rate rises and your bond prices fall, you'll still get the initial YTM indicated to you when you bought the bond, provided you hold the bond till maturity, right? Otherwise, you might be taking a loss on your NAV. In terms of how do you identify a target maturity fund, I actually think that's a great question, because, if there are investors searching for a list of target maturity funds to invest in, they're not going to find one, because there isn't a separate category identified by SEBI called target maturity funds. You need to think of target maturity fund like a strategy instead of a fund, a strategy used within existing mutual fund categories. What does it mean by that, and how do you identify then what a target maturity fund is? They say the name's of virtue, and that's pretty much the case over here, right? Where are you going to find these funds? Because these funds are tracking an index or an ETF, it comes under an index or an ETF category, all right? Within an index and ETF, what are they investing in? So, they could either be tracking GSEX or they can be tracking PSU bonds. And you will find these words in the name of the scheme. And the name of the scheme will also usually include the year in which the fund is maturing. So, for example, if you look at HDFC Nifty SDL April 2028 index fund, what does that mean? It means that it's an index fund that's investing in SDL paper or state development loans, which mature in April 2028. And this is how you identify a fund, which is very easily distinguishable from your active funds, right? Which is your typical corporate bond fund or a dynamic bond fund. So these are the things that you need to look out for. And this is how you'll be able to identify which fund is running a target maturity strategy.
Take that point, Kushal. Vineet, coming to you, because, versus equity funds, debt funds are slightly complex because the yield interest rate correlation is inverse. It's not direct, because people would think if rates go higher, yields would go higher. But that's not the case with debt funds. So it slightly gets tricky considering the rate cycles that we are in. So just following up on trying to make it easier for the viewers, duration is something that would happen across debt categories, be it short duration, ultra short duration. How does one then say that target maturity funds are different? It has a maturity, or it's talking about the duration. Is passive versus active the only differential versus the other debt funds in that case?
So essentially, see, what happens is that also there is a bit of credit quality also which comes into play, because typically, because these are more passive, so typically you will see that most of the target maturity funds are typically driven around either state government bonds, central government bonds, PSU bonds and high-rated bonds, because the idea is to buy and hold, right? There are other funds which typically take credit calls, etc., where they may buy, AA, single A kind of paper. But typically, most target maturity funds will essentially avoid taking a credit call and therefore actually follow a passive investment process as far as the client is concerned. Second is that typically, because these are better suited for long-term goals, essentially, therefore, their maturities can be, 3 years, 5 years, even 10 years ahead per se. Whereas on the other kind of debt categories, they can serve basically a lot of emergency corpus purpose. They can serve a purpose of having money for unpredictable tenures, where, let's say, you may need money for a short-term goal like a house purchase. You may need money for holidays. You may need money for insurance payments, and therefore these are short-term goals where you may not be able to specify a specific fixed time horizon to your investments per se.
Okay, point taken there, Vineet. But on that note, we're going to slip into a very short break. We'll come back and continue this conversation after the break as well. Stay tuned. Welcome back to MF Corner on CNBC TV 18. Let's keep it going and talk about target mutual funds. We still have with us our guests for today, Kushal as well as Vineet. Let's talk about investors in terms for what they should be preferring in the types of target maturity funds that they have, right? Vineet, let me start with you. You have the sovereign heavy funds, you have PSU bond funds, you have a lot of types that come in here as well. How should one select on the basis of this option? And in terms of return also, would that make a difference here?
Sure. So I think it's a question of what is the priority for the customer, because greater is the safety of the underlying bonds, the lower is the yield or the return that the client will get. So if you want maximum safety, then you should opt for a target maturity fund which only has sovereign bonds in their portfolio. If you want better yield per se, then you can go for a target maturity fund which has got PSU bonds, because PSU bonds also are sovereign backed, and it's a very rare instance that there will be any credit issue as far as the PSU bond is concerned. And therefore, those are quasi-sovereign in that sense. You also have the option that there are target maturity funds which also, come with a mix of PSU bonds and, let's say, government bonds in a 50-50% kind of ratio. Or, when you're selecting a target maturity fund, you will be aware what the underlying portfolio is. So I think broadly, because these are funds which give you predictable return and have a predictable maturity, so therefore the selection of the underlying portfolio is purely a function of what gives you peace of mind between safety and slightly better yield by having a slight bit of credit risk.
Take that point, Vineet. Kushal, coming on this, do you agree with Vineet's analysis of this? Because, of course, again, at the back of it, as he said, PSUs do have sovereign backing as well there. And what percentage of a portfolio should go into target maturity funds? Are they better suited for core fixed income allocation, or should they be a part of your satellite exposure?
Yeah, so when you talk about asset allocation, that varies from person to person, right? And I think the question to ask is, what percentage of your fixed income might go into target maturity funds? To answer that, maybe a simple guideline: have two buckets, one which is goal-based and the other which is a little unpredictable. For the goal-based part of it, use target maturity funds because you know when you are going to need access to that money. As far as core and satellite portfolio goes, I think a satellite portfolio would be more opportunistic, right, in terms of trying to take advantage of, let's say, rate cycles, etc. But because target maturity funds, the nature is that it isn't a very flexible product, that would form part of your core portfolio where the returns are a little bit more predictable.
Okay, Vineet, what about in terms of returns post the tax as well? Could you help us in the terms of taxation? Any difference does it make in selecting these funds as well?
So as per the new tax regulations, all of these pure debt funds are taxable at your marginal rate of taxation. So therefore, across the debt category, you don't have any tax arbitrage available in that sense. And hence, tax considerations will not be important when selecting a target maturity fund, because irrespective of your holding period, you will be taxed at your marginal rate of taxation.
Taxation since the time the indexation benefit has gone away. Kushal, comment on this. What do you think is a data point which is very important, but most of the investors ignore most of the times while evaluating target maturity funds?
I would think there are two things that you need to look at, and the first one is cost, right? As Vineet said, target maturity funds used to be very, very popular when the indexation benefit was available to them, but now the indexation benefit is not available to them. And therefore, there is still a little bit of tax advantage that you get compared to an FD. And I'm saying compared to an FD because target maturity fund gives an FD-like experience in terms of outcome, right? There may be some interim volatility, but if you hold a target maturity fund till the very end, then that works. In a fixed deposit, what happens is at the end of 1 year, the interest that is applicable, the entire interest does not get reinvested because there is TDS that is deducted, and you have to probably pay 20% if you're in the 30% tax bracket, as advanced tax or while filing your returns. Whereas in a target maturity funds, if it's a 5-year fund and giving you 7%, the entire 7% gets compounded. But what people miss is that, if the YTM indicated to you is, let's say, 7%, that's a gross YTM. You need to factor in costs, which is you need to factor in expense ratios to that, which actually gets it on par with FDs. Maybe there is a little bit of advantage for longer duration target maturity funds still, but it is little negligible now compared to what it used to be. And expense ratios would be maybe 10 to 20 bips in the direct plans and slightly higher as far as the regular plans are concerned. So I think cost is one thing that you need to just figure out that part. And the second part is look at the credit quality. I think we've touched upon this during the show that If the credit quality is largely G-Secs, then the yield will be slightly lower because you are taking slightly less risk. So is it G-Secs? Is it PSU bonds? Is it a combination of the both? I think these are the two things that you need to look at when you're evaluating target maturity funds.
Kushal, I just want to know one more thing, that at what point of time does it become better maybe to look at a short-term, short duration debt fund versus a target maturity fund? Is there a time that one should actually pick one over the other?
Quite honestly, it's a trade-off again at the investor's end between flexibility and predictability, right? If you are unsure about when you need the money and you prefer liquidity, then you go with a shorter duration fund. But if you have a fixed goal and you have a fixed timeline, then you could consider a target maturity fund just because it gives you a more predictable outcome.
Vineet, do you think fixed income funds, debt funds, target maturity funds, the different categories are still a very small part of retail investors? This is a category which is still not as deep as maybe the regulators are trying it to be?
See, the taking away of the indexation benefit at a retail level obviously has dealt a big blow to the popularity of these funds because, purely, the tax difference does not create enough attractiveness for the retail investors to participate in debt funds or target maturity funds. Because eventually the tax impact is still there. And having said that, compared to an FD, the ability to see absolutely straight line returns is still not there in debt funds. So for the volatility of the journey, purely the tax difference does not create enough attractiveness typically for retail investors to participate in it. But investors who have the maturity and who are probably more evolved, understand these nuances, better, and are still able to kind of participate and take benefit of it for the conservative portion of their portfolio, especially which is kind of aligned with a certain, fixed goal or maturity requirements.
Okay. Vineet as well as Kushal, thank you so much for joining us on the show and explaining us target maturity funds. How should one go about it as well? Investing, what should you look at it while investing in this as well? Thank you so much, gentlemen, for joining us on the show. But with that, we're absolutely out of time on this edition of MF Corner on CNBC TV 18. Thank you so much for tuning in. Last hour of trade is still left, and we have closing bell up next to take you through that.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
So we've seen Taiwan index that's holding on to gains of 1.5%.
The market spent all of yesterday basically going back and forth without real certainty in terms of what's going to happen. Nifty is 24,400, so about 0.2% higher.
Instead of year on year on a quarterly basis, we've been growing somewhere between 10 to 20% quarter on quarter.
For the year and for the month as well, it has been good going for many of these metal prices. Copper clearly trading not too far away from its all-time highs, by the way.
We added around 1,500 crores profit previous year. This year also 1,500.
Mining operations are at its peak because the development part is complete.
180 points higher on the Nifty. We have the Nifty Bank up 700 points. PNB Housing Finance, that's delivered a strong set of fourth quarter numbers. And the ripples are being felt across all major housing finance names on the street as well.
And last evening, the board approved May 1st, 2026.
It told banks you cannot offer an NDF quote, that is an offshore market quote, to your corporate client.
Good day for the markets. We're above the 24,550 mark for now.
Well, that is the day so far, and the market, of course, clocking in very, very solid 200-point gains, 24,600 nearly on the Nifty. So no looking at the downside, no retest of the support, just up and up, marching away. Today evening, of course, is important. Perhaps we will hear from President Trump, and we'll have some movement. The market firmly believing that this is going in the right direction, which is talking and not fighting. This is Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, Nigel and Reema with me. Guys, hi.
Hi, we're now a good 120 points higher from where we started off. We had a bit of a gap up opening. The Nifty opened around levels of 24,450. And from there, markets through the day continue to climb higher. Nearly 1% higher now on the benchmark indices. Mid-caps have taken a bit of a backseat. The mid-cap index is in the green, but the gain is about a 0.5%, though the advanced decline ratio is firmly in favor of the gaining side at the day's high. And what's also helping are the earnings numbers that have come through. So today, of course, the big mover is Nestle. Recorded its highest ever domestic sales, double-digit volume growth. Stock has moved to the top of the charts, 4.2% up on that. Trent is gaining ahead of the board meet tomorrow, where they will consider a bonus issue, its maiden bonus issue. ICICI Bank, HDFC Bank numbers over the weekend were fine, and now the street is rewarding that. ICICI Bank higher now for the second day in a row.
Well, that's right. It's a near perfect trading session, actually, from a bullish perspective, because you're seeing a good amount of build-up. And I'll tell you what, we have crossed two crucial levels, both on the Nifty, which was the 50 DMA, and on the Nifty Bank, we have taken out the 200 DMA. So that's good news. Coupled with that, you have an earnings beat that's come about. I think the only disappointing aspect is the rupee has slipped a smidge, not too much, but some kind of weakness on the rupee. As we have said earlier, the flows, they track what the rupee is doing. Some kind of stability will be appreciated. For the time being, it went to around 93.7, I think so. And from there, it's cooled off a little bit. So we'll keep an eye out on that front. But let's get in, let's tell our viewers what we have on the show.
Well, indeed, 1 hour to go. It's going to be an action-packed final hour of trade coming up in Closing Bell. Consistent gains across indices. Banks, small caps, real estate lead the gains. Nestle India has delivered a solid beat in Q4. A detailed earnings fine print coming up on the show. Stocks swinging to earnings. So PNB Housing Finance, Grow. These have all delivered good numbers, and you can see the stock reaction, 8% up on PNB Housing Finance, while Grow is higher by 6.5%. In fact, all the housing financiers are doing well today, so we'll do a deep dive on them. A couple of metal counters, though, are seeing a bit of pressure. So Vedanta, Hindustan Copper in focus on the back of news flow, so we'll take stock of that. About 1 hour to go. What should your trading position be? How should you position yourself? Mitesh is with us as always. Mitesh, super strong, 24,570. Where do we go?
Yeah. So on the index, I think, good position. I said that once we start getting past this 24,400, 450 zones, we might head towards 24,800. And in a good case scenario, 25,000 to about 25,150. So it looks like, there's no lack of momentum as the markets continue to climb and extend this pullback. So my idea is to stay positive. I have, in fact, a buy on State Bank of India as a stock call. That's a buy with a stop below levels of, levels of 1094 for targets of 1145. And also buy on Pidilite with a stop at 1388 for targets of 1440.
Okay, all right. Thank you very much for that, Mitesh. More trades coming up a little later. 5% now on Nestle. That is the stock of the afternoon, at least. And I think most of the gains have come through after the numbers came just about 10, 15 minutes back, maybe about 20 minutes back. Mangalam is here to wrap up the numbers. I think volume growth is also looking strong in double digits. Mangalam, take it away.
It's a solid set that has come in from Nestle. The stock is at a record high, the top Nifty gainer. And across all parameters, it's a very strong beat. Remember, the street was working with high expectations already. 13.5% revenue growth is what the street was working with. The company went ahead and reported a 22.5% revenue growth. In fact, much ahead of street expectations. The EBITDA jumped 28%. The street was expecting a compression because gross margins were expected to compress. The gross margins did compress, but the company's cost-cutting program and cost savings program meant that the EBITDA margin increased by about 100 basis points to its near record high EBITDA margins as well. And on the back of that, the net profit has crossed 1,000 crores per quarter for the first time ever. 1,111 crores is what the company's, 1,114 crores is what the company's reported as against street expectations of just shy of 1,000 crores and versus 885 crores same time last year. What did well for them? Domestic sales. Remember, this is the first full quarter post GST 2.0. Domestic sales grew 23.5%. The street was working with a number of 14 to 50%. All product groups reported strong growth. Confectionery grew at a high double-digit pace. Prepared dishes and cooking aids posted strong volume-driven growth as well. And powdered as well as liquid beverages, which is basically coffee, achieved another year of record growth. Pet food business on a small base is the growth driver for the company. That did well. And alongside that, the only business that was not expected to do very well was milk products. And, that's where we saw some resilience is what the company has reported. On the commodities going forward, coffee prices, cocoa, and are looking lower. Edible oil prices obviously are firm on account of higher crude oil prices. They expect some inflation in wheat and milk products. But their cost savings programs tell you that there is no further downside risk to margins from here on as well. 24-25% is not a bad estimate. The only fly in the ointment, the stock has already moved higher at a record high, trading at 62 times, which is pretty much in line with the multiple at which it has been trading for the last 5 years.
Okay, all right. Thanks a lot for that, Mangalam. So good news coming in. A Nifty stock coming out there and delivering a good set of numbers. The street likes it. Bombastic reaction as well. Stock up 5.2%. Dharmesh Kant, Head of Research, Chola Security, joins us on the show. Hi, Dharmesh. Nestle has never been a cheap stock, but when the stock moves up 5% in reaction to its numbers, it's telling you that the market is quite impressed. What's your view?
Yeah, good afternoon, Nigel. Thanks for having me for the show. I mean, the numbers were excellent set of numbers, and after a while, this kind of a strong numbers have come from a FMCG player. So it's almost touching all-time highs with 80% plus kind of an ROEs, 23, 24% kind of a sales growth is bound to give a good reaction. But we as a house have been away from FMCG space entirely. So last 1 year, we have not touched any stock from the a basket, and I mean, good numbers, good reaction, but to our mind, the valuations don't justify it for a continuity of holding for, say, multi-year holding, 2-year, 3-year kind of holding if you're having, then stock price may not reward you that handsomely.
So what would the alternate be then that you like from this space? If not Nestle, then what else?
I mean, the entire FMCG space is what we have been not liking. But yeah, AlcoWeb is the place which we have liked for a while. And there, I think Radico Khaitan and Tilak Nagar Industries stands the bill out there. So that space we are bullish on a stock specific. And Radico and Tilak Nagar is the companies which we have been liking.
Dharmesh, SBI Life is weak ahead of its numbers later. The stock is the top loser, 3.5% down. Is there something the street is anticipating? What have you heard?
No, it's difficult to judge, but going by the other life insurance companies, how they have reported their numbers, Q4 is seasonally and traditionally the best quarter for most of the life insurance companies. They have not come in line, so maybe some expectation that even SBI Life will fall in the same category with a lower, business growth, value of new businesses and value of new business margin may not be that great. But in the space, if one is to look forward to, I think LIC, Life Insurance Corporation of India stands good. I mean, the business updates were strong and we expect them to deliver around 18 to 17% kind of a business growth with VNB margin being stable. So there, I think, stands as again, the valuation wise is 1/4 or 1/5 of the valuation multiples of any other, life insurance companies, around 6.6 time price to immediate value it's trading at. Others are in the range of 1.4 to 1.6 price to immediate value. So our liking has been Life Insurance Corporation of India.
You also initiated coverage, Dharmesh, on Aadhar Housing, right? That's the other financial services stock.
Yeah, Prashant, and thanks for that. I mean, 3 days back, we have initiated coverage on that. We have been waiting on this company for quite some time, 430, 440 levels, but the market scenario was not conducive at that point of time. But I think now, since the things are stabilizing and interest rate, if I mean, in all likelihood, it may not go up. That was the fear why we put it in hold. But we think this interest rate scenario is likely to be stable. The company has been doing fairly well. Last 3-4 years, 22, 23% kind of an AUM growth they have delivered. And our interaction with the management does suggest that it's doable in the next 2-3 years time frame as well. So from 25,000 crores of AUM to 37,000 crores of AUM, they are likely to get by FY28. Valuation is comparatively cheap. If you look at the growth trajectory, we have valued it as 2.5 times price to book with a price target of 600 for next 1 year kind of a target. And the book has been quite granular. I mean, affordable housing segment for them has been doing pretty well. And 2/3 of the book is from the salaried employee. The big plus has been the Pradhan Mantri Awas Yojana, where the budgeting allocation, almost 80% growth was there from 40,000 odd crores to 73,000 odd crores, plus 3,000 odd crores of interest subsidy, which people can avail if which the governments provide to affordable segment of the class. From there, these Aadhar gets a good business. It's the only company in the private sector housing finance space where both EPS and book value for the last 3 years has compounded in excess of 20%. Others like Aptus, Awas, or India Shelter, there's a differentiation out there. Some where EPS growth has been good, somewhere book value growth has been good, but both consistently growing is not the case. Asset quality is quite impeccable. So I think decent place to buy going forward, and 600 is the target price which we are seeing for next 1 year kind of a time frame.
But across that home finance space, and we'll talk about PNB housing in just a bit with our analyst, growth is, you said what, 20, it'll grow 15-20% from Aadhar. That's the indication you got.
Yeah, I mean, we have taken conservatively at around 18-19%. They are doing about 20% is what they have been saying.
But is that kind of 15% plus kind of growth showing up across the board? Home First, 5-star, all these companies? I think yes, right?
Yes. So definitely yes. I mean, PNB Housing Finance Management themselves guided for 18-20% kind of a growth. And it's a big statement to make coming from a public sector housing finance company. We have never heard this kind of a statement from them. They are very conservative. So there's a buzz doing around in the affordable housing finance segment.
Okay. On that note, let me just get in our research analyst on PNB Housing Finance in particular. Ananya is here with the numbers and what got the street excited. Ananya, take it away.
PNB Housing Finance has delivered strong set of numbers, and more importantly, the management guidance have been very reassuring, which is why the stock is reacting very positively today. Now, the company is experiencing a great growth momentum with a record retail disbursement and better asset quality, with GNPA now below 1%. Now, but the real trigger is the forward guidance. Management is guiding for 18 to 20% loan book growth in FY27, with the loan book expected to cross around 1 lakh crore while maintaining stable margins. Now, importantly, they have indicated that yields have bottomed out and will continue to improve from Q1 onwards, driven by shift towards higher yielding segments. Now, in fact, the strategy is very clear. Affordable housing is expected to grow the fastest, with management targeting nearly 50% growth in this segment, followed by emerging and then prime. Now, over the next 2-3 years, they aim to move the mix of affordable plus emerging to 50% of the book from around 40% currently, which is a key positive for margin. Now, at the same time, credit costs are expected to remain negative for the quarter, supported by better recoveries. Now, overall, we can see it was a very strong quarter for the company and very positive guidance by the management, and that's why the stock is reacting so positively today.
All right, Ananya, stay on though, but because of these numbers coming from PNB Housing, the other housing finance companies as well, have moved up, I think so. How do the valuations stack up?
So the housing finance space is becoming very interesting, with growth mainly driven by affordable and emerging segments. Now, if you look at LIC Housing Finance, it is the cheapest in the pack, trading at just around 0.78 times book and about 5.6 times earning, with ROE near 16% and ROA at around 1.8%. So LIC Housing is clearly the value play, but growth and profitability are relatively moderate. Now, on the affordable housing side, valuations are much richer. Aavas trades at around 2.35 times book and 17.6 times PE, with ROE of 14.1% and ROA of 3.27%. Aadhar Housing Finance is even more expensive at about 3.14 times book and 20.8 times PE, with ROE of 16.9% and ROA of 4.31%. Now, Aptus also trades at a premium, around 2.72 times book and 14.4 times PE, but it has best profitability in this group, with ROE close to 18.6% and ROA above 7.4%. Now, the sector itself has strong structural tailwinds, with mortgage to GDP in India still only around 16.6%, leaving a long runway for growth. Now, while affordable housing finance AUM is expected to reach around 14.1 trillion by FY27. And of course, that positive sentiment has been strengthening further because PNB Housing Finance also came up with a very strong quarter. And that's why you can see a lot of housing finance segment stocks are reacting positively today.
Thank you very much for that. The other stock that we'd like to discuss is Crude. Now, they came out with the numbers yesterday, but this morning we had a chat with the management of Crude, and they kind of spoke about a 25-30% top-line growth, with operating leverage continuing to play out. Devyani now joins in because Crude's stock price continues to rally. Remember, this is a company whose IPO came out last year at a price of 100 rupees. And from there, in a span of months, the stock has doubled, and there is still a lot of buying taking place in Crude today. Devyani, what's the analysis?
Well, yes, Crude has ended the year with a strong set of results. Revenue and profit both were up 25% sequentially, driven by strong trading activity. On the full year front, though, revenue came in at 4,645 crores, up 19% year on year, while PAT grew 14%. Now, that means that the management has missed its guidance of 25 to 30% top line growth every single year. But while in discussion with CNBC TV 18 this morning, the management did reiterate the 25 to 30% revenue growth guidance for FY27. Now, on the SCT hike front, the management said that the options volumes are holding up so far, but futures volumes have taken a 5 to 10% hit. Futures form a small part of the derivatives mix, so the revenue impact there is expected to be limited. Now, Fisdom, the wealth tech subsidiary that the company recently acquired, remains loss-making, but the management is confident that it will become profitable by FY28. Now, the one big takeaway, though, from that particular discussion is that industry is in active discussions with the regulator to allow mutual funds to be pledged as collateral for the availing MTF facility. Now, today, only stocks and cash are allowed as collateral for MTF. So, if mutual funds are permitted, it unlocks a significantly larger pool as collateral for retail investors, potentially driving up a step up in the MTF adoption in the industry overall. Now, so there's positive commentary coming in from the management, as well as if the MTF reform does go through, it could be a meaningful positive for not just Crude, but the stockbroking industry as a whole.
On the STT side, if I look at it in the last 2 weeks when this regulation got implemented, we saw there is no change or a significant change on the option volume. But on future side, there was a slight dip. We have participated from the marketing perspective. There is typically, you can say, 50 to 60 crore kind of extra spend that happens. But it generally, if you look at overall cost to go for us, which is where our marketing cost is. It is between 450 to 500 crores. We don't expect that to significantly increase in this year as well on a full year basis.
Okay, well, that is Grow, which is growing very well. Dharmesh, any thoughts on this one?
Yeah, Bashad, I mean, Q4 numbers were excellent. It's a very strong set of numbers which they have reported. And even Anand brokers also reported a very strong set of numbers. Angel was the one which I felt was a bit of a muted kind of a number. Last 15 days, if somebody is assessing that the derivatives volume has not gone down, I think it may not be the right way of seeing, because the market has been on a tear for the last couple of weeks. So it has aided the volume. But going forward, we do believe that there would be a dip in the derivatives volume and margin out there. But for Grow, it's the wealth management piece which can make a cutout for them. I mean, the way they have been disruptive in the discount booking space, if the similar way they can be in the wealth management space through their products, then things may still look pretty different. But we as a house, we have never been, recommended any of the brokers per se, but capital marketplace has always been a good basket buy, be it BSE or MCX, followed by NSDL, CDSL, KFintech, and wealth management company. So as a basket group, that we have preferred, but brokers, we have stayed away.
I think Grow came off a little bit, and now it's picking up pace once again. I think it was up almost 10%. And when we started at 230, it dropped off a little bit, about 6.5. Now back up almost 8% or so. So executing very well, and I think the lock-in, the 6-month lock-in also just expired. So I think there was some selling around that, etc. So but that event has passed, and numbers looking strong, guidance, etc. Maintaining, a good way. So that is a Grow for you out there. Trent is the other one, which has been which is up 35%. So that's looking very, very good. 20 days, 35 odd percent. Big move. Any thoughts here, Dharmesh?
Yeah, Pasha, that's how you are looking at it. From the bottom, it's up 35%, but from the top, it's still down almost around 45 to 50%. So, I mean, the only disconnect here is we don't doubt the business model of the Trend. They will continue to do well. Around 18 to 20 or 22% kind of a business growth is doable for the next 2-3 years as well. And that's what normal, run rate has to be for a business which is reaching a maturity state from the penetration level point of view. So that given the fact, but still, even now at 4,400 stock price is trading above 90 times P multiple on a TTM basis. So that is where the problem lies. 30% kind of an ROE with some improvement in operating efficiency leading to margin improvement is still doable. But we think it's more of a time-bound kind of a play now. Range-bound corrections may happen. 4,800 is gettable on this company. But again, as I said, from 2-year, 3-year kind of a perspective, we don't see a handsome or meaningful gain can come into Trend. So on declines, one can buy, and in a steady state kind of environment, maybe 4,800 can be the target price for that.
Okay. All right. Thanks a lot for that, Dharmesh. Wishing you a good remainder of the day. And I appreciate you joining in and giving us your comments on all of those stocks. Well, we have weekly expiry that will play out. So let's do a quick check on the F&O market then. Well, it's been a pretty good trading session. I say that not just because of the move on the index, but because the VIX has cooled off. So yesterday it put on some weight and it's given up all of that. So that's pretty good news, right? You don't want the VIX to go above that 20-odd mark because there is still some fear in the system. But the volatility index is indicating that the peak fear should be behind. From a high of from 29 odd, we have come down to close to around that 17.6 odd mark. The currency is a little bit worrying. You don't want that to lose its way yet again. We had a few sessions when, pull back to a goodish bit at around 93.5. It's still pretty much okay. You don't want it to go back towards around that 95 odd mark because as we know, it's a determinant of the flows that we get. The 24,500 put, that's getting written very, very aggressively. And the premium I checked last was down to almost zilch. It's down to 2 rupees. It started today at around 220 rupees. So those put writers, they're trying to create a bit of a base at around this 24,300 odd mark. Well, for the Nifty, the good news today is after multiple attempts, it crossed that crucial resistance mark. The 50 DMA is gone now. Now, all eyes are on the 200 EMA. That comes at around 25,100 or thereabouts. We'll have to keep an eye out on that mark. The Nifty Bank, that's done a little bit better now, because just take a look at it. The 200 DMA has gone out of the way now for the Nifty Bank. The 50 DMA as well is around there. So we have taken out both those two levels. I think now the 100 DMA is something that the street will be looking at. I think that's close to around 700 points away from current levels on the Nifty Bank. So we'll keep an eye out on that mark as well. Short pointers, crucial technical levels have got taken out. Sale, that stock's coming for a bit of a short covering bounce in today's trading session. The stock has bounced up and the open interest is down, fair bit of shedding out there. And PNB Housing Finance as well, a bit of a short covering bounce is what we're seeing. Finally, on Manappuram Finance, there's about a fresh buying that we're seeing. Remember, the gold prices had lost its way, but from the recent lows, good bounce. Delivery-based buying backed by some long build-up as well. The counter actually has seen good amount of buying. Well, I'll tell you what, we'll slip into a short break, come back. We have Rupen Rajguru, who's waiting for us. He'll give us his view on markets and a couple of sectors that he likes as well. Stay tuned.
Back, let's talk about stocks. As always, Hormis joins in with the top buzzers at this hour.
Well, the highlight of today's list is the fact that the volumes in all of these stocks are really shooting through the roof. And one name today that was the top gainer on the Nifty 500, Lemon Tree Hotels. The stock is off the highs of the day. At one point was up almost 13.5%. That is the biggest intraday gain that the stock has seen since December of 2020. And after which the stock has cooled off, 5.5–6% from the highs of the day, still holding on to a 7% advance. Today's volumes are the highest on record for the stock. The stock had listed back in 2017-2018. As the 10.5 crore shares have been traded today. The 20-day average is 31.5 lakh shares on Lemon Tree, and 12% of those are marked for delivery. So well over 1 crore shares have been marked for delivery so far, and it is among the 10 most traded stocks on the Nifty 500 in today's session. But of course, the stock had surged up significantly, went up to levels of 180, still down around 33% from those levels. The one big stock that has been talked about all through the day has been Grow, and still still 8% higher on the stock. It's made a new post-listing high today of 216 plus. It snapped a 3-day losing streak in today's session. The stock has seen a block D. There are multiple blocks that took place in Grow. Around 0.6% of equity changed hands. The value of these blocks comes up to anywhere between around 750 crore rupees. Of course, buyers and sellers are unknown, but even excluding that block deal, the 25 crore shares have been traded on Grow today. Of course, this is inclusive of the block, but even then the volumes are substantially higher. The 20-day average is around 3.5 crore shares. 18% of those shares are marked for delivery, and today's turnover has crossed 5,000 crore rupees. It's become the most traded stock on the Nifty 500 in today's trading session. The stock up 40% so far this month. It's turning out to be the best one it has had since its listing. And the third one, Bank of Maharashtra, the earnings hero of the day potentially. There's a third straight day of gains for the stock, 7% higher in today's session, and it is the volumes today are the highest since February of 2024. And today we have had 13.5 crore shares that have been traded on the stock. The 20-day average is 1.5 crore. 30% of those shares are marked for delivery. The turnover has crossed 1,000 crore rupees today, up 30% so far this month, turning out to be the best one it has had since November of 22. And the stock is very close to its record highs. The record highs are somewhere around 82 odd rupees. The last time it had hit those levels was back in October of 2010.
Well, thanks very much, Hormus, for that. So that is the picture in terms of individual names where there is a lot of volume action and some historical context with these moves as well. Actually, this month is turning out to be great for, I think, a vast swath of BSE 500, NSE 500, broader universe of stocks. Easy 20, 25, 40%, as Hormus pointed out, in many cases. Rupen Rajguru is with us, Head of Equity Investments and Strategy at Julius Baer, India. Thanks for joining in, Rupen. You know, two different views we've had over the last 1 week from veteran fund managers. Prashant Jain, who told us that large caps perhaps is the place to focus on. But, I mean, obviously the context is that Prashant has always liked, throughout his careers, large caps as a category, much more than small caps. The second one, of course, was Sandeep Tandon of Quant, who said, well, small caps is perhaps the place to focus on. Just your thoughts, Rupen, on this question. And if you look at, by the way, from the beginning of this month, earnings expectations and how they've moved for the Nifty companies, mid-cap companies and small-cap companies, earnings downgrades are the steepest, by the way, for the Nifty small-cap index compared to the other two. Your thoughts?
Hi, afternoon, Prashant. No, before commenting on that, let me just give you a perspective of the current market setup. So, in fact, the first 3 months of this year, every month we have been through some crisis or the other. If you recollect now, which appears to be a pretty distant thing, in January, the only narrative or discussion point was the Indo-US trade deal, whether it will happen, not happen, and what will be the contours, which finally happened in February. Once the market was probably rejoicing that news flow, and then the big inflow of news around AI came through. So the biggest ever, the IT index down almost 15-17% happened in February, and then probably war came in. I think it overshadowed all these things. So in that interim period, what had happened, Prashant, is that across the board, because of FPI selling and also general drawdown in the market, the sell-off was there across the board. So now, answering to your question, whether one should prefer mid caps or SMIDs or a large cap, I think there is no right answer to it, and I would go by the strategy of blending the two. While a large cap as an index, comprises of a lot of the economy of India, which is growing, but to some extent it has a mature phase in it. So be it consumption, be it IT, to some extent large financial. So they all are part of large caps Nifty. On the other hand, in SMIDs, while from a discussion point, it's always good to talk about index PE, but frankly, I would always go bottom up in that, because there are always few companies here and there which changes the entire the dynamics of the valuation and all in these SMIDs. So in the participation of newer economy, be it some of the newer themes, if somebody wants to pay some defense, some data center, something on the manufacturing side, the relative weightage of that in SMIDs is much higher. So if you want to play the growth and the next India story and all, SMIDs are there. So while I agree with the broad statement that the valuation of SMIDs are higher than large caps, but definitely the alpha opportunities in SMIDs are much higher. And I think it would be a completely bottom-up picking market in that index. So I would say it's better to have a strategy, to blend of both large caps and selective on small and mid caps.
But Rupen, many people who watch the channel also invest in, say, a Nifty ETF. So if you buy all the Nifty stocks, right, if you invest in the markets right now, what's the headline return one should expect?
Yeah, hi, Rima, afternoon. So here, while we were discussing, and I think just before I get in, you were analyzing how so many stocks have gone up. But if I were to look through, and let's talk about India market, and for India, let's talk large cap. Till date, the Indian market in rupee term is down, even after the 10% or 12% rally from the lows, it's down 5 to 6%. And in dollar terms, it's down even higher because the currency has depreciated. So on a relative basis, India is a big underperformer. And I think for the second year in a row, so last year and a calendar year, India was probably in the bottom of the large markets, from a dollar to returns perspective. And this year also we stand there. So so a lot of readjustment of valuations have happened. And, the valuations now probably are at 10 to 12% lower than the long-term average. So now, assuming that the earnings growth, which say before the war, majority of the market was penciling in around 15% growth for next year's earnings, which probably, in my estimate, it will come down to around 11-12% growth or so. So at a larger market level, and assuming we don't re-rate from the current PE levels, Rima, around next, say, 12 to 15 months, clearly to 10 to 12% return is one can easily expect from Nifty, assuming we don't get derated from here, basis any external news flow, which is unlikely. And if there is any re-rating, probably the returns can be on higher.
Hi, Rupen. Good to see you. And Rupen, I wanted your view particularly on the real estate basket, because those stocks have got pulled back a goodish deal. I believe still the aspiration is to have bigger houses. That's what most of the luxury real estate players are talking about. While mid and smaller sized, could see some kind of slowdown. What do you like in that pack, since you're quite bullish?
Yeah, hi, Nigel, afternoon. So as a pack, if you see real estate last year probably was one of the, if not best, the better performing sector. And in last 3-4 months, probably it's in the bottom. And we have seen a significant drawdown across the board. So see, one key difference in this real estate cycle from a corporate perspective versus the previous cycle is the leverage is not there. The earlier, if you see, the real estate cycle was completely the land bank story, and everybody was leveraging, buying more land bank, and the debt was there in their books. This time around, I think the balance sheet, good thing, thanks to the very vibrant secondary market and the issuance market, I think majority, if not all, the large real estate companies have raised capital in last 18-24 months, and they are very well capitalized. So the balance sheet of large players is good. While yes, there is definitely some slowdown in the new bookings and in the overall momentum in last, say, 3 to 4 months, but I agree with you, the premium segment of the real estate, they definitely will do well. And from our side, some of the large real estate companies, wherein while they are large on the residential side, but they also have a very decent commercial portfolio, which gives them a steady annuity by way of rentals. So either they can eventually transfer that in some of the REITs, which they might launch, or probably that cash flow is good enough for them to meet the other expansion plan. So to answer your question, across the board, one player in the west side or a large player on the NCR market, which has a reasonably large commercial portfolio as well, which will help them stem all this volatility. So these are, and frankly, now after the drawdown, if you were to do the sum of the part or the NAV calculation, it has come to a very attractive level. So those players which have a large reputed good brands as well as a good commercial portfolio is something which we like in the real estate space.
Rupen, we'll leave it there. Thank you very much for joining us. Good speaking with you, and thank you for taking out the time. 190 points, 24,560 as we sort of go into the last final 20-25 minutes of. We're back. We'll get you what's happening in dealing rooms and some stocks which are which the market is chattering away with. Nimesh joins in with D Street Chatter, and of course some short-term trading ideas with our technical experts as well. Stay tuned.
Welcome back. Markets moving to the high point of the day. The last 30-40 points would be on account of the expiry that's going to play out, but a lot of stocks moving around. HFC, I'll just take a look at that stock. It's almost 100 rupee stock. So big move is what you've seen. In this month, it's up more than 40%. Five-star business as well. That stock is up close to around 7%. 40% up move in this month itself. So some of these stocks have had a brilliant run. Misho is the other one. 170 rupee stock. Big move. More than 20% in this month. Good time to get in Nimesh. He joins us to tell us what is he picking up from the dealing rooms. Nimesh?
Hi, Nigel. It looks like it's a risk-on rally playing out across Asia market and India as well. So a big move largely led by the financial names. Not only the large private banks, but even the NBFCs are participating in today's upward rally. The Nifty Bank is up almost more than 1%. And this is backed by some bit of institutional buying as well. So this is one space, the entire financial space, which is led by a bit of buying interest. There is a very sharp reaction to earnings as well. We saw what happened to Nestle. And actually, it's spreading out to the entire sector as well. Nestle has done to the FMCG sector. So has PNB Housing done to the housing finance names as well. So that's one space which has done well today. The earnings beat is getting rewarded in this kind of a market. Technically, we are above the crucial resistance. So the feedback is that maybe further short-covering rallies on the cards. But I guess the big news from the global market with regards to the extension of the ceasefire and the peace talks would be very crucial to watch out for. But at least from a direction point of view, there is momentum clearly backed by buying in the financial names.
Yeah, 3 days basically the market essentially sort of hovered and failed to close and finally closed, but barely so above the 24,300. We are finally above it in a decisive way, closed it at 24,600. Nimesh, in terms of stocks, what's on the list?
So the first stock on my list is OneSource Specialty. There was a large block in the morning trade, nearly 1.5% equity had got changed hands. I believe one of the leading long-only fund was a buyer in today's block. So any disclosures could be interesting to track in one source. So that's the first name. The second stock is Kajara Ceramics. It's been consolidating with a positive bias. This is one company which actually benefits from this entire gas crisis because none of their large plants are affected. Even in Kajara, I understand while there are some domestic funds and an HNI as a seller, a leading long-only fund is a buyer as well. And that's the reason why in a weak market for the entire sector, this stock has actually outperformed. So second name. The third couple of stocks, whether it is delivery is buying today and multiple buyers is my sense. So both Mastech, where the stock reacted yesterday to weak earnings, but there is a bit of institutional interest there. And also LG Electronics. After a long time, ever since the listing and all, first time there is a bit of action back in this particular name as well from larger institutions. So delivery is buying there. And last couple of names where there is selling today in a good market, that is BPCL as well as Union Bank. Expect high delivery volumes on the sell side in both those names today.
Okay, all right. Nimesh, thanks very much for that. That's D Street Chatter. And we'll, of course, keep an eye out on one source in terms of a name which shows up perhaps in the block deal data later today. Mitesh is with us with, what to buy, sell today for a reverse trade tomorrow. Mitesh, what do you have?
So, Prashant, I think very clearly the market is closing with strength, and we are close to about 24,600, and the logical targets are close to about 24,800, and then possibly 25,000. So we'll continue and carry with a positive bias trade. So Shriram Finance is a BTST with a target about 1,036, with targets 1,060. And the other stock which I like is Suzlon, which is just, after consolidation for the last 2-3 days is showing signs of picking up. So keep a stock at about 52.4, 52.35 and a target of around 54.5 can be looked at.
All right. Thanks very much, Mitesh, for that. Well, the Vedanta demerger, of course, is happening. And how is this going to play out in terms of separate entities? When will you get the share in your demat? By when do you have to buy it for that to be able to happen? Listing timelines, etc. Nigel is here, and he's walked across to the wall with exactly that. Nigel, take it away.
Well, Vedanta has been in a sweet spot in the backdrop of the global commodity melt-up. And last evening, the board approved May 1st, 2026 as the record date for the demerger, which means the last day to buy the stock to be eligible for the demerged entities is 29th of April. So if you have one share of Vedanta Limited on the record date, you will receive one share each of the aluminium business, power business, oil and gas, as well as the iron and steel business. The rationale for the demerger is it simplifies Vedanta's corporate structure, and investors can also invest in the preferred vertical. It also gives the management flexibility to unlock value for investors, and they can liquidate any particular asset in case they also want to bring a strategic investor. That as well option is on the table. Additionally, the management has mentioned that the demerger is more tax efficient in nature. Now, 5 companies will be listed on exchanges between 4 to around 8 weeks, depending on how the approvals do come in. Remember, globally, aluminium has been in a beautiful sweet spot. Vedanta as well is well placed because they benefit from the strong LME prices, the capacity expansion, as well as backward integration. Let me explain all of this to you. Vedanta has the largest aluminium capacity in India, which is approximately 2.5 million tons, and it's headed to around 3 million tons. So they gain on the volumes front. But what helps them even more is they have been focusing on backward integration. The aluminium capacity has spiked up to close to around 5 million tons, while their captive coal is also expected to drastically ramp up in the next few years. And remember, their cost of production for the aluminium business, that's declined by close to 37% in the last 14 quarters. And it's expected to decline even more to around $1,550 to around $1,600 per ton. The management believes that this will help the aluminium vertical EBITDA to scale close to $4 billion from around $2 billion in the past fiscal, that's FY25. Nuvama, they have been very, very bullish on the stock. Their target price is around 899 rupees per share, and bulk of the share value comes in from their aluminium business, which is followed by Vedanta Limited, and that derives most of its value from the 60% stake that they have in Hindustan Zinc. Finally, a concern over the last few years has been the financial health of the promoter entity, Vedanta Resources, who at one point of time had a debt pile of close to $9.5 billion. That includes the intercompany loans. But over the last few years, they've done a splendid deal, in reducing the debt by close to around half. The stock, remember, has already run up considerably in the last few months, but it will remain on investors' radar in the run-up to the record date.
Wonderfully explained, Nigel. Thank you very much for that. Another company that you track very closely, Hindustan Copper, they unveiled their Vision 2030 strategy, aiming to grow the profit by over 2.5 times by 2030. In fact, earlier, he caught up with the management of Hindustan Copper, Sanjeev Kumar Singh, the chairman and MD of the company, who spoke about their Vision 2030 plans. And in fact, he said that it's actually conservative. Listen in.
The annual plan which we have prepared, which you have just seen, which we have unveiled on 17th and 18th, is definitely on the conservative side. Because as a planner, we cannot be optimistic. We have to plan on a conservative side. And it has taken the estimates on the lower side with respect to the prevailing prices, whether it is a dollar, whether it is LME, anything. It is on the lower side with the prevailing prices. Because it's very dynamic, you know very well. They are not in our hands. So we have to be on the lower side. It is around 9 to 10,000. See, first year 25, 26 internal accruals, there's no doubt about it. And we are nearly debt-free company. You can see we have got a loan of just 129 crores, which will be finishing out in this year itself. So next year, that is 26, 27 and onwards, there will be a mix of internal and debt. As you have seen it, we are on the lower side. And if the prices remain this also, I mean to say the current prices also, if they are there, so definitely we'll be doing slightly better.
All right, that's Hindustan Copper post-market as. Keep your eye on HCL Tech. Will be reporting numbers. Now, Q4 numbers are in the rear view. It's expected to be a soft quarter because the company also gets revenues from the software business, and Q4 is generally a little weak. Which is why overall revenue growth is expected to be down. But the focus will be on the guidance for HCL Tech. Now, consensus expectations seem to be broadly 3 to 5%, though there are analysts like UBS expecting a 2 to 5% kind of a growth rate for next year. But the question is, will HCL Tech be a bit conservative as they begin the fiscal year? Because last year, the company, started the year with a subdued guidance and then progressively upped it to 4.5%. And the bigger trigger for HCL Tech will be the margin guidance. Now, the current margin guidance stands at 17 to 18%. But in their interview with us last time, they sort of indicated that there is scope for an upward revision. Now you've got the rupee depreciation tailwind. Will the company therefore look to up the margin guidance band in FY27, or will they wait to see how the 1 or 2 quarters play out before they do that? So I think that's going to be crucial for HCL Technologies. So keep your eye on that. The press conference is scheduled at 6 p.m. Later today. The management will be in Delhi. Jay Bala of cashthechaos.com is also joining in. Jay, what a fantastic run it's been for our markets, 10% up in the month of April. And now we're closing in on the 24,600 mark. What's the next level?
Hi. See, something very important, which was our earlier bullish view. The print of 24,570 is very important, and allocations will know why that's important. And today, the Nifty Next 50 has claimed fresh 52-week high. And although it's not fresh all-time highs, the fresh 52-week highs are also welcome. And that's a bullish signature for the market. And like I've been pointing out since February and March, the correction the market's drop was corrective, and it's there's no change in my medium-term outlook. I'm anticipating the Nifty to be trading around 29,000 to 30,000, somewhere between August and September 2026.
Even CLSA in the morning was talking about how the Nifty 50 or even the broader, NSE 500, many of the individual stocks, so almost 60 constituents out of the Nifty 50 have hit 4-week highs. So there has been a breadth thrust, as CLSA called it, which actually bodes well if from a starting point. Because generally, when you get that signal, there is upside in the markets, over the next 30 days, 60 days, 90 days, and it goes up to about a 30% upside over the next 1 year with a hit ratio of about 70 to 80%. And he goes on to say, Lawrence Blanco of CLSA, that India is the only market so far to generate a new breadth thrust signal. So that's positive. Jay, you want to take us through some of your individual ideas?
Yeah, see, I'm anticipating the market to pull back in the very short term, so accommodate your views for that. See, the first is a reiteration of my earlier bullish call on Bharat Forge. I'm expecting it to scale fresh all-time highs in the region of 2150, 2200. So I don't think it's going to drop below 1720. So that's going to be your stop loss level or risk management level. And the second is bullish on Anantraj. It's a slightly slower, possibly a slow mover, but it's slightly medium-term call. I'm anticipating the stock to not drop below 405, so that will be the stop loss level. And I'm anticipating the stock to cross 800 from a 6 to 8 weeks perspective.
Is there, between all indices, Jay, is there any intermarket divergence between Nifty and the broader indices?
I would consider Reliance as the intermarket divergence, and we have got a tremendous rally without Reliance participating. That's so that's I would say the market has got much more powder to pack and much more power to pack on the upside. So so that's the only divergence I'm anticipating. But right now the focus should be on capital goods names. The older basic capital goods also houses defense names. So, and the turnaround candidate is coming from the Nifty Realty Index. So if the Realty Index is taking off, that will have a knock-on effect on banks, cements, and other sectors too. So, like I pointed out 2 weeks ago, I'm anticipating the Nifty Realty Index to cross the September 2024 high.
Okay. All right. Jay, I wanted to ask you about crude oil prices. You had mentioned it's going south. On Friday evening, it headed in that direction till Mr. Trump did a U-turn on the weekend. But what's the call? Still, it goes sharply lower from here?
That's right, Nigel. The top at 119.43 is very secure, and the markets aren't likely to cross that level. And the print of 84 the Friday, that's a very important turn. The markets are signaling that there's a double top in place. The real crash in crude is yet to come through. Like I said, I'm anticipating crude to first break 54, and the next leg down will be quite quick and fast. And so probably there's a real peace deal that's probably due. That's what is the indication from the charts. And from a 3 months perspective, I wouldn't be surprised if 3 to 6 months perspective, I wouldn't be surprised if WTI trades below $45.
Yeah. And that's the question with regards to oil. What if oil stays in the 80 and 90s handle? And what's the implication on India's growth, macros, etc.? It's an evolving situation. This is Samiran Chakrabarti with exactly that assessment. Samiran, of course, is Chief Economist at Citi India.
We are right now working with the baseline forecast that Brent will average about $80 to $85 for the full fiscal year 27. There could be, in the near term, some increase in oil prices. It can stay around this 9,500 type of levels. Our baseline forecast from the global guys is that it will take at least for the month of May for the Strait of Hormuz to be completely open. So there could be a bit of disruption still in the pipeline. And building that into our forecast, we think that there is about a 20-30 basis point downside risk to our 7.1% GDP growth forecast for FY27.
Welcome back. The sectors surging in the last hour are the consumer sector. Consumption names like HUL, 4% up on that now. ITC, 2% up. Nestle was strong. It was up 4% when we began the show, 4.5%. Now it's moved to a 8% rally, while the other names have now joined in. Tata Consumer will also come up for you on your screen, and the gains extend to the mid-cap space as well. Jay, any thoughts on these names?
Yeah, see, I've been least bullish on FMCG names, and watch the Nifty FMCG index. If it were to print 5199, this will still be a counter-trend rally for me, but it has the potential to rally as far higher as 58,500 to 59,000. So it's a very important juncture, and if it doesn't print that and turns lower, it can continue to remain the laggard in the market. So watch 51,999 as a very important resistance for the index.
You were telling us earlier that how the markets have moved up despite no help from Reliance Industries. So this month, Nifty Sensex up 10%, while Reliance Industries is up less than 1%. Comes out with numbers on Friday post-market hours. Any key levels here on Reliance?
Yeah, 1290 is a very important support for me. One more dip below that would, probably complete a washout low for the stock. But it's not a mandatory move that's required for the stock to get back there. The short-term price structure is a little bit ambiguous, but the medium term, I'm anticipating Reliance to either drop one time to 1290 and then recover all the way back to fresh record highs past 1650, 1700.
I know the broad call is that markets pull back a tad bit. They see a little bit of a correction. But is there any sector which is going to do well, buck the trend from here on?
Yeah, I would bet on BSE Capital Goods Index. I'm anticipating it to a minimum move towards 82,000. And ideally, I'm anticipating it to claim 99,000. So, your ABB, Siemens, Thermax, Crompton Reeves Power, all those things are going to, all those stocks are going to do quite well. So that's going to be the leader for me from here on.
All right, Jay, always good to hear your thoughts. You're sounding far more optimistic. So that's pretty good news as well. And you believe crude oil prices will cool off. Thanks a lot for joining in. Well, time to wind down on the markets. It's a good trading session for the bulls. Go home with solid gains. The Nifty raises its bank because it's not a century, but it's a double century. So the bulls like it. Importantly, today the Nifty crossed that 50 DMA, which shows a bit of a resistance. The Nifty bank conquers the 200 DMA. So good times in terms of technical levels as well. The breadth of the market was pretty good. You had close to 2 stocks that were advancing for 1 stock that was declining. Which of the stocks that did very well in today's trading session? Rolex Rings, that stock was up close to 17%. Billion Brains Grow, that was up 8.5%, making a fresh high. Muthoot Micro as well was higher in trade and had a couple of good earnings reactions. So Grow was up, PNB Housing Finance was up. You had a blockbuster number coming in from Nestle, hard to fall that number. So that as well looked good in today's trading session. What was a little bit under the weather in trade today? Your SBI Life came in for profit taking, down 3.5%. Saman Capital was down 2.5%. Polycab as well was down close to around 2.7%. But Nestle, the stock rallied big time, ended up close to around 8%. LIC Housing Finance went home with a gain of around 5.5%. And Manappuram Finance as well found its rhythm yet again. That stock was up and about. For the last few trading sessions, you've seen other alcohol beverage companies running. But today, United Spirits said they want to catch up. And that's why the stock was up close to around 4%. Giving the glass of whiskey some kind of company on the upside was Pizza. Jubilant Foodworks as well chipped in there with a 4% gain. All in all, a good trading session for the bulls. Tuesday goes to the bulls. All eyes now on Mr. Trump. What is he going to say overnight? For the time being, we'll wrap up on this edition of Closing Bell. You stay with us. The team of Markets Forward is waiting by.
The large street ends at the day's high. Banks helped the Nifty close nearly 1% higher. The Nifty bank outperforms all sectoral indices end higher.
Nestle India reports a record quarterly revenue, beating estimates in all parameters in the fourth quarter. Also reports double-digit volume growth and gains market share.
Nestle India reports record quarterly revenue, beating estimates on all parameters in Q4. Also reports double-digit volume growth and gains market share.
Well, PNB Housing Finance, that rallied post a strong fourth quarter and calls the end of stress in the affordable segment, with strong recoveries guiding for an 18 to 20% growth in assets in FY27. Grow sees no STT impact on option volumes and is confident of strong growth ahead. The discount broker adds that its IPL partnership won't up its annual marketing spend.
PNB Housing Finance rallies post a strong Q4 and calls the end of stress in the affordable segment with strong recoveries, guides for 18 to 20% growth in assets in FY27. Grow sees no STT impact on options volumes and is confident of growth ahead. The discount broker adds that its IPL partnership won't up its annual marketing spend. Hello and welcome to Markets Forward, your go-to show where we aim to get you all of the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is my colleague Ritu Singh. Well, it turned out to be a very good day for us, Ritu. You know, the markets remained on a strong footing. We had, in fact, the markets ending close to those 2-month highs. The Nifty ended above 24,500. These are levels that we haven't seen all the way back since the 1st of March. Banks did lead from the front in today's trading session. So we saw buying in the stocks such as HDFC Bank, Axis Bank, ICICI Bank, all of them being top gainers. And who can forget the kind of reaction that we saw from Nestle in today's trading session. Hi, Ritu.
Hi, Ekta. Yes, a very good trading day today. Nothing much to complain about. There was broad-based buying, although the market breadth started off very strong and then cooled off a bit. But that said, markets did end on a high. All the sectoral indices have ended up in the green, barring just a couple of names. You spoke about the banking stocks, FMCG and Realty. They led the gains, both rising by almost 2%, the indices. Banking and financials, very strong momentum there. Mid-cap and small-cap also rising. Small cap stocks gaining almost 1%. Trent, Nestle, HUL, ICICI, Bajaj Finance. These are some of the top gainers in the Nifty 50 pack. While on the flip side, you had SBI Life Insurance, Bharat Electronics, Dr. Reddy's, etc. not doing as well. But we've got you covered for the next 20 minutes with all the big news and the key developments on the Dalal Street, the top corporate voices and events to track ahead as well. So here's a lineup of what we have in store for you today. We'll start with the top movers and shakers. Hormaz Fatakia will join us to decode Nestle India and PNB Housing Finance's fourth quarter numbers and put the spotlight on Vedanta's merger plans. And last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. Well, let's kick things off with our first segment of the day. Hormaz Fatakia joins us now from the big wall with the top movers and shakers.
You know, the weekly expiry generally is a trending day, and today was a trending day like no other. It's been a while since we saw such moves on the index, and very convincingly at that. And it was the financials that led the index higher, be it the private financials or the PSUs or the NBFCs. HDFC Bank was up 2%, ICICI, the index heavyweights are up 2% each. The index did well. Bajaj Finance had a good day, as did Axis Bank. So almost every single financial name did very well in today's session. Earnings reactions were on the positive side in today's session. Nestle, though, was the highlight of the day, and 7.5% higher. Very strong results from the company. Double-digit volume growth as well. PNB Housing, of course. Bank of Maharashtra nearing record highs, 6% higher here as well. And Nelco at one point was up in double digits, but of course cooled off slightly from the highs of the day. Still managed to hold on to gains of over 6%. But the results from Nestle had a cascading effect on all the other FMCG names, and all of them surged and ended at the highest point of the day, be it Britannia, Dabur, HUL, Tata Consumer, all of them saw gains of anywhere between 2 to 4% in today's trading session after Nestle's results were announced. Now take a look at the newsmakers in today's session beyond these names. Rolex Rings is going to consider a buyback. The stock was up 16%. Muthoot Micro, of course, after its business update. Vedanta seeing some profit booking after the stock has seen significant moves this year. And Trent, ahead of its results tomorrow, 3.5% higher, bonus issue to be considered as well. So that's keeping the stock abuzz. The best month that the stock has had in over a decade. And the real estate index continues to see a rebound. That index too is up almost 25-30% this year. It's turning out to be the best month that the index has had in the last 5 years. And almost every constituent in today's session saw gains of anywhere between 2 to 5%. And lastly, some stocks that bucked the trend in today's session: Canara, HSBC Life. Actually, the life insurance companies didn't have a very good day today. 3.5 to 5% lower, and SBI Life also some profit booking seen in Ola Electric after the sharp up move that the stock has seen from 22 to as high as 40 rupees, and Eris Life Sciences too ending with losses of around 4%. Some of the underperformers in today's session.
Okay, all right, Hormuz, thanks very much for that. Well, shares of Nestle India hit record highs after a stellar set of Q4 numbers. Net profit and revenue beat estimates while margins hit multi-quarter highs. Mangalam is here to tell us all of the highlights of the Nestle India numbers. Mangalam, over to you.
It's a solid set that has come in from Nestle. The stock is at a record high, the top Nifty gainer, and across all parameters, it's a very strong beat. Remember, the street was working with high expectations already. 13.5% revenue growth is what the street was working with. The company went ahead and reported a 22.5% revenue growth. In fact, much ahead of street expectations. The EBITDA jumped 28%. The street was expecting a compression because gross margins were expected to compress. The gross margins did compress, but the company's cost-cutting program and cost savings program meant that the EBITDA margin increased by about 100 basis points to its near record high EBITDA margins as well. And on the back of that, the net profit has crossed 1,000 crores per quarter for the first time ever. 1,111 crores is what the company's, 1,114 crores is what the company's reported, as against street expectations of just shy of 1,000 crores and versus 885 crores same time last year. What did well for them? Domestic sales. Remember, this is the first full quarter post GST 2.0. Domestic sales grew 23.5%. The street was working with a number of 14 to 50%. All groups, all product groups reported strong growth. Confectionery grew at a high double-digit pace. Prepared dishes and cooking aids posted strong volume-driven growth as well. And powdered as well as liquid beverages, which is basically coffee, achieved another year of record growth. Pet food business on a small base is the growth driver for the company. That did well. And alongside that, the only business that was not expected to do very well was milk products. And, that's where we saw some resilience is what the company has reported. On the commodities going forward, coffee prices, cocoa, and are looking lower. Edible oil prices obviously are firm on account of higher crude oil prices. They expect some inflation in wheat and milk products. But their cost savings programs tell you that there is no further downside risk to margins from here on as well. 24-25% is not a bad estimate. The only fly in the ointment, the stock has already moved higher at a record high, trading at 62 times, which is pretty much in line with the multiple at which it has been trading for the last 5 years.
Mangalam, thanks very much for bringing us that update on Nestle. What a stellar set of fourth quarter numbers. But let's go across to our guests. Jay Bala from Cash the Chaos is joining us now. And we'll also be joined by Sudeep Bandyopadhyay in a short while. He's with us now as well. Gentlemen, thanks very much for being here. Jay, let me quickly start with you on, the markets itself. It's been a good session today. Where do you see the frontline index going from here? And any thoughts on Nestle? As Mangalam was saying, the stock is already at a 52-week high. In the last month itself, it's gained about 16% or so. Year-to-date, up 7%. Is there further upside from here?
Hi, Ritu. The Nifty's print of 24,572 today was very important. It reiterates the bullish call I have on the markets. I'm anticipating the Nifty to be about 29,000, 30,000, somewhere about August to September 2026. And today we have seen the Nifty next 50 hit fresh 52-week highs. That's further endorsement from the market that the view is to be maintained as bullish, like I've been maintaining since February of this year. And I was anticipating the markets to dip and then just be a correction. When it comes to Nestle, it's an outperformer within the FMCG space. And today's print of 5199 on the Nifty FMCG index that's a positive. And I've been least bullish on the FMCG names. And the Nifty FMCG index could rally as high as 58,500 from the current levels of about 50,100. So yeah, I would still treat this as a short-term to medium-term bounce rather than a change of trend, subject to revision. But I'm a bit cautious on that. Still cautious on the FMCG names. Yeah, so they are due. Most of the FMCG names have been beaten on really badly. If you take Bata, for instance, it was about 2,000 and it dropped to about 600. So, they at least need a fair bit of counter-trend bounce. So, but Nestle is an outlier within the FMCG space, and Nestle and possibly even Dabur is an outlier. But most of the top FMCG, ITC, Britannia, and HLL are in a major downtrend. So I'll be a bit cautious and treat them as counter-trend bounces.
Okay, all right. So that's on Nestle, Jay. Thanks very much for that. But Sudeep Bandopadhyay joins in for his take on the markets as well. Sudeep, well, good showing coming in from Nestle. In fact, the stock ended at the high point of the day. Are you convinced in terms of whether that's a long-term buy based on these numbers?
Well, Nestle definitely is a long-term buy, Ekta. I think, what is most interesting is the urban consumption pickup, which I think there were a lot of question marks, but the numbers which Nestle came up with definitely shows that urban consumption is picking up, and that led to, I think, kind of a rally in other FMCG stocks as well. Even the margin which Nestle posted is quite commendable. So considering everything, I'm positive on the entire FMCG sector. But one has to be extremely careful because we are, heading into a monsoon season, and the prediction for monsoon is subdued. And what happens to India and FMCG when monsoons are weak. So we have to be a little careful to navigate the forthcoming monsoon season, and we have to see how monsoon fares and whether the demand growth sustains. But fundamentally, Nestle, in spite of it being at all-time high, definitely is a buy from a long-term portfolio point of view.
Yes, monsoon's a key trigger for what happens to rural demand. Very important for FMCG indeed. But stay on, gentlemen. We also have to talk about PNB Housing Finance. That was the stock of the day, rallying nearly 9% after it came out with a very strong fourth quarter set. It also guided for an 18 to 20% growth from here on in assets in FY27. Let's bring in Ananya Singh, who's here with the fine print of the performance from PNB Housing. Ananya.
PNB Housing Finance has delivered strong set of numbers, and more importantly, the management guidance have been very reassuring, which is why the stock is reacting very positively today. Now, the company is experiencing a great growth momentum with a record retail disbursement and better asset quality, with GNPA now below 1%. Now, but the real trigger is the forward guidance. Management is guiding for 18 to 20% loan book growth in FY27, with the loan book expected to cross around 1 lakh crore while maintaining stable margins. Now, importantly, they have indicated that yields have bottomed out and will continue to improve from Q1 onwards, driven by shift towards higher yielding segments. Now, in fact, the strategy is very clear. Affordable housing is expected to grow the fastest, with management targeting nearly 50% growth in this segment, followed by emerging and then prime. Now, over the next 2-3 years, they aim to move the mix of affordable plus emerging to 50% of the book from around 40% currently, which is a key positive for margin. Now, at the same time, credit costs are expected to remain negative for the quarter, supported by better recoveries. Now, overall, we can see it was a very strong quarter for the company, and very positive guidance by the management, and that's why the stock is reacting so positively today.
Okay, all right, Ananya, thanks very much for that. But let's focus on another stock. Vedanta's board has approved the demerger of the company into 5 entities. It announced that the record date will be determined to determine the eligibility of shareholders for its demerger has been set for the 1st of May. While the stock gained after the announcement, it ended the day in the red. Nigel is here with the details. Nigel.
Well, Vedanta has been in a sweet spot in the backdrop of the global commodity melt-up. And last evening, the board approved May 1st, 2026 as the record date for the demerger, which means the last day to buy the stock to be eligible for the demerged entities is 29th of April. So if you have 1 share of Vedanta Limited on the record date, you will receive 1 share each of the aluminium business, power business, oil and gas, as well as the iron and steel business. The rationale for the demerger is It simplifies Vedanta's corporate structure, and investors can also invest in the preferred vertical. It also gives the management flexibility to unlock value for investors, and they can liquidate any particular asset in case they also want to bring a strategic investor. That as well option is on the table. Additionally, the management has mentioned that the demerger is more tax efficient in nature. Now, 5 companies will be listed on exchanges between 4 to around 8 weeks, depending on how the approvals do come in. Remember, globally, aluminium has been in a beautiful sweet spot. Vedanta as well is well placed because they benefit from the strong LME prices, the capacity expansion, as well as backward integration. Let me explain all of this to you. Vedanta has the largest aluminium capacity in India, which is approximately 2.5 million tons, and it's headed to around 3 million tons. So they gain on the volumes front. But what helps them even more is they have been focusing on backward integration. The aluminium capacity has spiked up to close to around 5 million tons, while their captive coal is also expected to drastically ramp up in the next few years. And remember, their cost of production for the aluminium business, that's declined by close to 37% in the last 14 quarters. And it's expected to decline even more to around $1,550 to around $1,600 per ton. The management believes that this will help the aluminium vertical EBITDA to scale close to $4 billion from around $2 billion in the past fiscal, that's FY25. Nuvama, they have been very, very bullish on the stock. Their target price is around 899 rupees per share, and bulk of the share value comes in from their aluminium business, which is followed by Vedanta Limited, and that derives most of its value from the 60% stake that they have in Hindustan Zinc. Finally, a concern over the last few years has been the financial health of the promoter entity, Vedanta Resources, who at one point of time had a debt pile of close to $9.5 billion. That includes the intercompany loans. But over the last few years, they've done a splendid deal, in reducing the debt by close to around half. The stock, remember, has already run up considerably in the last few months, but it will remain on investors' radar in the run-up to the record date.
Thanks very much, Nigel. Jay, thoughts on Vedanta? It's already run up quite a bit. It's up about almost 14% in the last 1 month and nearly 30% in the last 1 year. Does it have further legs on the commodity cycle play or on the demerger play as well?
Yeah, I think it does, Ritu, but in the short term, we need to be a bit cautious. Both the stock and the sector assets, the Nifty Metals Index, are approaching important resistance. For the Nifty Metals Index, the resistance is about 13,200. I anticipate some pullback to come through, but the long-term charts of Vedanta is looking quite bullish, and I would wait for the next pullback to happen, and that will provide us a much better sweet spot for people who haven't made an entry into the stock.
Okay, all right. Sudeep, any quick view on Vedanta?
Well, I have been liking Vedanta for quite some time, and I still continue to like. I think there is a fantastic opportunity for Vedanta because of what's happening in aluminium, and Nigel so well explained the benefit which Vedanta will derive out of aluminium. Apart from that, the holding, the Vedanta Limited, which is a holding company for Hindustan Zinc, obviously benefits from the upswing in zinc and silver. Overall, the metal cycle is playing out in Vedanta's favor, and I think the value unlocking truly will happen. So even at current level, whenever there is a correction, it's a great opportunity to buy the stock before the record date.
Okay, all right. Sudeep as well as Jay, thank you very much for joining in and giving us all of your perspective on various stocks. So it was a good day for the markets. We'll take a break on that note, but we'll get you the top corporate voices that we're tracking along with the key market events to watch out for on the other side. Stay tuned. Welcome back to Markets Forward on CNBC TV 18. Well, time to take stock of all of the big corporate voices of the day. After a strong fourth quarter, the co-founder and CFO of Billion Brains Garage told CNBC TV 18 that the recent regulatory changes in the STT segment have had a limited impact. He added that its IPL partnership would not up its annual marketing spend.
On the STT side, if I look at it, in the last 2 weeks when this regulation got implemented, we saw there is no change or a significant change on the option volume. But on future side, there was a slight dip. We have participated from the marketing perspective. There is typically, you can say 50 to 60 crore kind of extra spend that happens. But it generally, if you look at overall cost to go for us, which is where our marketing cost is, it is between 450 to 500 crores. We don't expect that to significantly increase in this year as well on a full year basis.
Well, Hindustan Copper has unveiled its Vision 2030 strategy, and it aims to grow profits by 2.5 times by 2030. We spoke to Sanjeev Kumar Singh, who's the chairman and MD of Hindustan Copper, and he said that the plan was conservative and all estimates were taken on the lower side.
The annual plan which we have prepared, which we have just seen, which we have unveiled on 17th and 18th, is definitely on the conservative side. Because as a planner, we cannot be optimistic. We have to plan on a conservative side. And it has taken the estimates on the lower side with respect to the prevailing prices, whether it is a dollar, whether it is LME, anything. It is on the lower side with the prevailing prices. Because it's very dynamic, you know very well. They are not in our hands. So we have to be on the lower side.
All right, so that's on Hindustan Copper, but there's no increase in NPAs in the MSME portfolio so far. That's the word coming in from Nidhu Saxena, who's the MD and CEO of Bank of Maharashtra. After it posted a strong set of numbers in the fourth quarter, he added that vulnerable MSME segments were under watch and expects net NPA to stay below 0.25%.
When we see Brent crude $115 per barrel or anything above $100, it should be a cause of worry and concern for us. That is one. Second, we are monitoring this portfolio very closely. And in the MSMEs, as of now, we have not seen any uptick in the SMA or in the NPAs. Within MSME, the vulnerable segments, we are closely monitoring. And yes, this, as you rightly said, we may see the impact in subsequent quarters. Our guidance is to maintain net NPA below 0.25. I have come down to 0.13 and I'll be remaining below 0.25.
That was the Corporate Corner, but before we wrap, we'll get you some of the key market events to watch out for in tomorrow's trading session. And Rhea Bhatia is standing by with the focus for tomorrow. Rhea.
Well, first up, in terms of economic data, we will be watching out for the CPI data from the UK and also the crude oil inventory data from the US. But moving on to India, we have a whole host of companies that will be reporting their Q4 results tomorrow, including the likes of Havells India, L&T Technology, Oracle, SBI Life, Tata Communications, Tech Mahindra, as well as Trent. And in fact, Trent will also be holding a board meeting to consider a dividend and a bonus issue, as well as a possible fundraise. And in terms of the geopolitical events, the US-Iran ceasefire expires tomorrow, and the second round of talks between the US and Iran will take place in Islamabad. And also key to watch will be the BTA talks between India and the US as they hold 3-day round negotiations in DC aimed at advancing the first phase of their proposed bilateral trade agreement between the 20th of April to April 22nd.
Okay, all right, Ritu, thanks very much for that. And on that note, we need to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side. Stay tuned.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Islamabad is under a lockdown ahead of scheduled talks between the US and Iran. President Trump says the Hormuz blockade will remain in place, even as the White House says a deal with Iran has never been closer, but no official confirmation yet on Iran's participation in the negotiations. Crude oil prices remain in flux as investors weigh the mixed signals on the Islamabad summit. Traffic at the Strait of Hormuz is largely at a standstill. Stock markets tread with caution across Asia and Europe. Sensex and Nifty end at the highest level in 2 months. Nifty reclaims 24,500. Bank stocks outperform. Rupee weakens over 37 paisa against the dollar. Indian exporters eye tariff refunds worth $12 billion as the US launches a portal for companies making their claims. This follows the US Supreme Court verdict striking down President Trump's so-called reciprocal tariffs. Indian delegation to continue trade talks in Washington. Tim Cook to step down as Apple CEO after an eventful 15-year term. John Turnus, who currently heads hardware engineering, will take charge from September. Cook will stay on as executive chairman. Amazon strengthens its partnership with Anthropic, plans to invest another $25 billion into the AI company. Anthropic agrees to buy $100 billion worth of compute and chips from Amazon over the next 10 years. Nestle India reports record quarterly revenue, beating estimates on all parameters in Q4. Also reports double-digit volume growth and gains market share. Loudspeakers go silent in Tamil Nadu as election campaign draws to a close. All 234 constituencies will vote in a single phase on Thursday. Polling will also take place across 152 constituencies in West Bengal, including the high-profile Nandigram constituency. Also on the show, not all hero wear capes, some wear khakis. Meet Delhi Police Head Constable Than Singh, who's educating more than 250 underprivileged children for the last 11 years. A special report on Than Singh ki Pathshala and why he is looking for funds to keep the school going. All right, the top story we are tracking this evening: Iran and the US continue to trade threats with less than 24 hours for the ceasefire to expire. Here's a look at the latest developments. Neither side has confirmed if talks will take place, with reports hinting that representatives of both nations are expected in Pakistan on Wednesday. However, Pakistan remains prepared for potential negotiations tomorrow. With parts of Islamabad under lockdown, tens of thousands of security personnel have been deployed in the city. Al Jazeera has reported that US Vice President J.D. Vance is expected to arrive in Pakistan tomorrow. His departure was reportedly delayed after US President Trump said that Vance was on his way to Islamabad. Envoys Steve Witkoff and Jared Kushner are also likely to attend these talks. This as US President Trump told Bloomberg that he's not likely to extend the 2-week ceasefire with Iran if no deal is reached. Trump maintained that the US blockade in the Strait of Hormuz will continue until an agreement is finalized. There is no official confirmation on Iran's participation in the negotiations either. Iranian state media reports that no Tehran official has been sent to Islamabad for the scheduled talks. However, Al Jazeera has reported that a delegation from Iran will be sent. Meanwhile, Tehran has continued its threats of retaliation if the ceasefire expires. Iran's parliamentary speaker has said that the country is preparing, and I quote, new cards on the battlefield if fighting resumes. The mixed signals on the Islamabad summit kept crude oil prices in flux. However, the disruption in the strait continued, with ship movement still at a standstill. China and France have reiterated the call for unconditional reopening of the strait. The International Maritime Organization is developing a plan to help evacuate hundreds of vessels that have remained stranded in the Persian Gulf for more than 7 weeks. Meanwhile, talks are also scheduled to take place between Lebanon and Israel on Thursday. The US State Department has confirmed that both countries will have direct negotiations in the US. Remember, officials from both Lebanon and Israel met in Washington last week. The 10-day ceasefire between both countries is set to expire on 26th of April.
The facts
facts are the United States of America tonight have never been so close to making a truly good deal, unlike the horrific deal signed by Barack Hussein Obama, than we are right now. Why? Thanks to President Trump's brilliant negotiating tactics and thanks to the success of Operation Epic Fury, a mission that he launched after 47 years of Iran being at war with the United States of America and having presidents for 47 years who lacked the courage to do what President Trump finally had the courage to do.
And you can catch the US President speak exclusively to CNBC later this evening at 6 p.m. All right, on to the day's market action. The market remained on a strong footing and ended at nearly 2-month high. Nifty closed above 24,500 for the first time since March 5th. Sensex rose over 750 points, while Nifty Bank jumped nearly 790 points. Banks also saw heavy buying, with stocks like HDFC Bank, Axis Bank and ICICI Bank leading the pack. The Indian rupee weakened by more than 37 paisa against the dollar. The RBI has eased some forex curbs imposed on banks and companies, and since the relaxation, the rupee has breached the 93 mark once again and is now approaching the 94 mark. Indian exporters eyed tariff refunds worth $12 billion after the US launched a portal for companies to make their claims. This after the US Supreme Court struck down President Trump's so-called reciprocal tariffs. In March, the US Court of International Trade ordered more than $160 billion be returned. Analysts on Wall Street have projected huge refunds for blue-chip retailers, with companies like Walmart likely to receive $10 billion. Indian delegation to continue trade talks in Washington. Abhimanyu Sharma has more. Abhimanyu.
The tariff refund window has opened in the United States, and exporters from different countries, including India, would be hoping to benefit. Now, estimates suggest that around $12 billion US, which is around rupees 1 lakh crores, had been paid by means of tariffs by Indian exporters to the US importers, which was subsequently paid to the American government. And now, after the US Supreme Court ruling, the US importers would be able to claim refunds of that. However, there is no direct provision by which Indian exporters would be able to claim that. Hence, they'll have to negotiate that on a case-to-case basis. Meanwhile, it's the second day of trade talks between India and the United States. India's trade delegation, led by the chief negotiator, is already in the United States, and both the sides are looking to finalize as well as announce the first tranche of a bilateral trade agreement. Yesterday, Commerce Minister Piyush Goyal had indicated that India and the US have almost finalized the first tranche of a BTA, and they are trying to work out a mechanism to get preferential market access to the US market compared to competitors. The Commerce Ministry has also indicated that they stand by the deal despite the change in circumstances, and they are trying to solve all pending issues by speaking to their American counterparts, in which India is also possibly going to take up the issue of USTR investigation, which has been initiated against India, in which India has maintained that such issues would better be solved bilaterally between both the sides.
All right, thank you, Abhimanyu, for that. Defense Minister Rajnath Singh has arrived in Germany for a 3-day visit. This is his first visit to Germany since taking office in 2019. He is expected to meet his German counterpart and other senior officials to discuss military-to-military engagements and defense industrial collaboration. The visit also comes at a time when India and Germany are in advanced negotiations to finalize a next-generation submarine deal estimated to be worth around 90,000 crore rupees. Shares of Nestle India hit a record high today after reporting a stellar set of numbers in the fourth quarter. Net profit and revenue beat estimates, while margins hit multi-quarter highs. Nestle also reported a double-digit growth in volume and gained market share during the quarter as well. The company also said that all business channels recorded strong growth. Now, Vedanta's shares hit record highs after the company announced that the record date for its demerger has been set on the 1st of May. The last day to buy the stock to be eligible for demerged entities is 29th of April. Shareholders will receive 1 share of Vedanta's aluminum, power, oil and gas, as well as its iron and steel businesses for every share held. Now, tech giant Apple is all set for new leadership as the Tim Cook era will come to an end after 15 years. The company has announced John Ternus will be succeeding Tim Cook from the 1st of September this year. Cook will be assuming the role of the company's executive chairman. Ternus, who was the senior vice president of hardware engineering, will join Apple's board of directors when he becomes the CEO. Rachna Dhanrajani tells us how Apple fared under Cook.
Well, Tim Cook is stepping down as Apple's CEO and hardware boss John Ternus will take over from September 1. For Cook, it marks the end of a 15-year run in which he turned a $350 billion company to a $4 trillion one. He took over in August 2011, 6 weeks before Steve Jobs died. The question then was whether Apple could survive without its founder. And the answer was yes, and then some. Under Cook, revenue went from $108 billion to over $400 billion. He built a services business, Apple Pay, Apple Music, and the App Store that now earns over $100 billion a year at margins nearly double of what hardware delivers. He killed Intel dependency completely inside the Mac and replaced it with Apple's own silicon. And then there is India. Cook first came here in 2016, met Prime Minister Narendra Modi, announced a development center in Hyderabad. Apple's manufacturing presence in India at that point was zero. It wasn't small, it was zero. So what followed was one of the most deliberate supply chain pivots in modern corporate history. In stages, everyone a bet that India could deliver at Apple's standard. 2017 was when it all started. iPhone SE assembly began in Bengaluru. The tap was now open. Then came 2021 when India launched the PLI scheme for electronics. Foxconn and Tata signed up for it. And for the first time, the iPhone 13 was assembled in India in the same year that it launched globally. That had never happened before. 2022, Foxconn's Zhengzhou plant goes into COVID lockdown. iPhone 14 production was badly hit. Cook accelerated the India timeline instead. Tata acquired Wistron's Karnataka plant, which became the first Indian company in Apple's supply chain ecosystem. Then came 2023 when Cook returned to India to open Apple's first retail stores. BKC in Mumbai, Saket in Delhi. India iPhone sales hit an all-time high that year. Apple overtook Samsung as India's largest smartphone exporter by value. And by 2025, India was assembling 55 million iPhones. So 1 in 4 made globally was made in India. Exports hit $23 billion. That was up 85% in a single year. Foxconn and Tata, the two manufacturers, employed over 185,000 people across Tamil Nadu and Karnataka. And when Trump publicly told Cook to stop making iPhones in India, Apple did not flinch. In March this year alone, it airlifted nearly $2 billion worth of iPhones out of Indian factories to beat a US tariff deadline. So India was not a backup anymore. It has become the answer to each of Apple's problems. Cook had his misses as well. The Apple car consumed a decade and produced pretty much nothing. The Vision Pro that was launched at $3,499 with no killer app, nothing. That also didn't work out. On the AI front, Apple arrived late and the gap is still showing. It still lags behind ChatGPT, Gemini and others. But the scorecard from where we are standing is hard to argue with. A country that assembled 0 iPhones when Cook first visited is now the world's second largest iPhone manufacturing base. And the 2027 target is $40 billion in production. And all of this was under Cook's vision. So now Ternus takes over September 1, an engineer stepping in exactly at the moment when Apple needs to figure out artificial intelligence. Cook leaves him with a formidable machine that he has made and the India bit, which is an infrastructure that took 9 years to build and cannot be replicated quickly. So Ternus has a very big task at his hand. He's also overtaking a company which is now worth $4 trillion.
All right. Thank you, Rachna, for that comprehensive update. So who is John Ternus? Zenia Baria profiles the new Apple CEO.
Now as Tim Cook prepares to hand over the reins, attention is firmly on his successor John Ternus and the kind of leadership he brings to Apple. Ternus, now 51, has spent nearly his entire life at Apple. He joined the company in 2001, his second job out of college, after a brief stint at a virtual reality startup. A mechanical engineering graduate from the University of Pennsylvania, Ternus has long combined technical depth with product vision. In fact, for his senior project, he developed a mechanical feeding arm designed to help individuals with quadriplegia, an early indication of his engineering mindset and problem-solving approach. At Apple, he steadily rose through the ranks to lead hardware engineering, becoming a central figure behind some of the company's most important products. From multiple generations of the iPhone and Mac to newer categories like the iPad, AirPods, and Apple Watch, Ternus has played a key role in shaping Apple's hardware ecosystem, including its latest innovation like the Neo. Despite his influence, Ternus has largely stayed out of the public spotlight. But within Apple, he's known for his engineering chops and decision-making. Former Apple procurement chief Tony Blevins now described him as a very meticulous engineer and a judicious executive. Ternus has also been candid about challenges ahead. In a recent Bloomberg interview, he acknowledged that Apple has been relatively late to the artificial intelligence race, a space now dominated by aggressive innovation and competition. That puts the spotlight squarely on his leadership as he steps into the top role at that time when Apple must balance its legacy of product excellence with the urgency to evolve in AI and the next generation technologies. The big question now is, can Ternus not just sustain but redefine Apple's next chapter?
All right, thank you, Zenia, for that. Now, Amazon has announced plans to invest up to $25 billion in AI giant Anthropic. This marks a major expansion of their partnership. As part of the arrangement, Anthropic will spend over $100 billion across the next decade on Amazon's cloud infrastructure. The move is aimed at strengthening Anthropic's computing capacity as it scales up its AI models. The big national story, the loudspeakers go silent this evening as campaigning officially ends for all constituencies in Tamil Nadu and 152 seats in West Bengal ahead of the April 23rd polling date. First to Tamil Nadu, where candidates made a last-minute pitch to voters. What is usually a two-horse race between the DMK and the ADMK could see a shake-up with the entry of actor-turned-politician Vijay and his party, the TVK. The BJP is fighting in an alliance with the ADMK for the first time in an assembly election, hoping to oust Chief Minister M.K. Stalin. The DMK has stitched an alliance with over 24 parties, including the Congress. Voting will take place in 152 out of 294 seats in West Bengal on Thursday as well. The seats are stretched across 16 districts, including the North Bengal region. Nandigram will be a closely watched contest. BJP leader Shivendu Adhikari, who defeated Chief Minister Mamata Banerjee in this constituency 5 years ago, will be facing TMC's Pabitra Kaur. My colleague Santiagora reports on the key developments surrounding the election season.
In the last phase of campaigning for Tamil Nadu and the first phase of West Bengal, all the parties maximized their efforts to reach every last voter. A day after PM Narendra Modi was seen buying jhalmuri from a vendor while campaigning in Bengal, CM Mamata Banerjee said that it was nothing but drama. 5 BJP workers and 4 TMC workers were arrested after a clash broke out between TMC and BJP workers outside Iqbalpur police station in Kolkata. The altercation between TMC and BJP workers took place during a BJP campaigning program. In Tamil Nadu, key players like M.K. Stalin and TVK founder Vijay continued their relentless campaigning. In the midst of a reported rift between Congress and the DMK, Rahul Gandhi, while campaigning in Tamil Nadu, praised M.K. Stalin and DMK. He said that the Bihar model of politics would never work in Tamil Nadu because of M.K. Stalin's self-respect and that he will never bow down to Delhi. He said Tamil Nadu has always shown a progressive vision to the rest of the country. Tamil Nadu is known for its social justice programs, midday meal scheme, and being a leader in women's education and employment. And DMK and M.K. Stalin are continuing down the path. On Monday, Madras High Court admitted a plea seeking an income tax inquiry into TVK founder Vijay's assets. The plea mentioned that there's a discrepancy in assets declared by Vijay and his 2 different affidavits for 2 different constituencies he is contesting from. As per the petitioner, Vijay stated his asset value as worth 115 crore rupees from Perambur and 220 crore rupees from Tiruchirappalli East. The court made an oral observation saying there is an irregularity and that over 100 crore rupees were not disclosed. The court issued notices to Vijay, the Election Commission and the Income Tax Department. While hearing West Bengal SIR pleas, the CJI on Monday expressed his frustration with multiple appeals in the case. Along with the court being apprised of tribunals not entertaining physical representation of voters, the court was informed by TMC that around 7 lakh new voters were added to the voter list on the basis of Form 6, which enables a person turning 18 or above to file a form for inclusion in the voter list. The CGI asked TMC to submit a plea challenging it and said if a plea is filed formally, then the court will entertain it.
Thank you, Sandhya, for that. Moving on. Heroes are not just actors on screen, they are real. And today we are going to meet one such hero. A police constable in New Delhi who is educating the children of migrant workers, bringing education to hundreds who would otherwise never get to go to school. CNBC TV 18's Timsi Jaipuria brings you the story of Thansing Ki Pathshala.
Under the roar of traffic, in the shadows of Red Fort, inside a temple established by the army, a classroom is coming alive. No uniforms, no school bells. But for these children, this is where everything begins. This is Thansing Ki Pathshala, a free school for children. Started by Delhi Police Head Constable Thansing 11 years ago, this school is quietly transforming access to education for some of the city's most vulnerable communities.
जो मेरी यहाँ पोस्टिंग हुई तो देखा ये बच्चे यहाँ पर कूड़ा बिन रहे हैं, कोई बोतल बिन रहा है, कोई पैसे मांग रहा है, तो मैं भी ऐसे माहौल से निकल के आया हूँ, तो वो चीज़ें सब चीज़ें सोची, तो वो अपना मेरा पुराना बचपन मुझे याद आया। कोई बच्चियाँ गुटखे खा रही थी, तो उन बच्चियों से पूछा गुटखा क्यों खा रही हो, तो मैं बड़ा अजीब सा लगा। मैं भी एक इसी जगह से निकल कर आया हूँ, मैं भी एक पुलिस ऑफिसर बना हुआ हूँ ना, तो आप अपने बच्चों को ऐसे सपने क्यों नहीं दिखाते कि आपके बच्चे पुलिस वाले बने या कुछ टीचर बने या कुछ बने।
Thansing had 5 students when he began. Now it's a community effort, and over 250 children, some as young as 3, gather here every day to learn basic maths, reading and writing. Many of these children are first-generation learners, children of migrant workers and daily wage earners, families where school has never been a given. Sakshi was one of the 5 students who made up Thansing's first class. She has recently passed her Class 10 examinations, the first in her family to study and cross this educational milestone. Beyond reading and writing, Thansing's classes give children like Sakshi the confidence to dream.
जब से पढ़ाई शुरू हुई है 2015 से, तब से मैं यहाँ पे पढ़ रही हूँ और अब मैं 11th क्लास में आ गई हूँ। मुझे खुशी हुई है कि मैं 10th के बोर्ड एग्जाम पास कर गई। मेरे पापा लाल किले की पार्किंग में चाय बेचते हैं और मेरी मम्मी कैंटीन में काम करती हैं। मेरे माँ बाप तो बहुत खुश हैं और बहुत भावुक भी हैं मुझे लेकर, क्योंकि उन्हें नहीं लगता था कि मैं कभी पढ़ पाऊँगी, और थानसिंह अंकल जी की बदौलत कि मैं आज यहाँ पर हूँ, तो वो ये सब देखकर बहुत ज़्यादा खुश हैं और मेरा बहुत सपोर्ट करते हैं। मुझे IPS ऑफिसर बनना है और मेरे मम्मी पापा का और अंकल जी का नाम रोशन करना है।
In 2024, the initiative took a big step forward. It was formally registered as Thansing Ki Pathshala Foundation, and Thansing says he is looking for support to expand the program.
मैंने ना एक छोटी सी ट्रस्ट बनाई है। ट्रस्ट मैंने 1-1.5 साल पहले बनाई है और वो भी ट्रस्ट मैंने अपने नाम पे नहीं, कॉलेज की बच्चियों के नाम पे बना दी है। आज मेरे सारे सीनियर ऑफिसर्स हैं जो मेरे को यहाँ पर मौके पे आए हैं, सारे काफ़ी लोगों ने मेरा सपोर्ट किया है, सारे अफसर मेरा सपोर्ट करते हैं। बातचीत चल रही है, मुझे पता है परवीन सर बहुत अच्छे आदमी है, मैं काफ़ी यानी कि मैं इनसे काफ़ी टाइम से जानता हूँ। मैंने सर से कहा कि सर थोड़ा सा अभी आके, अभी जैसे सचदेवा जी ने ये बच्चों के लिए बेंचेस दिए हैं सबके लिए, तो मैम यानी कि सब लोग चाहते हैं कि बच्चे पढ़ें। अब जैसे गुरुद्वारा शीशगंज साहब से इन बच्चों के लिए लंगर आ रहा है, माता सुंदरी कॉलेज से ये NSS वॉलंटियर आ रही है, तो मैम एक टीम बनी हुई है, बच्चे मेहनत कर रहे हैं, सारे मेरे पुलिस ऑफिसर इस चीज़ को बहुत अच्छा सपोर्ट कर रहे हैं।
The challenges, however, are numerous. From extreme weather to the lack of permanent infrastructure to limited resources. And yet, the classes continue day after day. In a city of millions, this temple classroom offers something rare, a way forward. What started 11 years ago as a small initiative has now become a passion, ritual, and a daily routine. Most of the students here aspire to dream big and want to become an IPS officer as they see the role Thansing and Delhi Police is playing in providing them with food, education, good habits, moral lessons, and much more. In New Delhi, Timsi Jaipuria.
Right, such a heartwarming story. With that, it's a wrap on this edition of Business 360. News and updates continue right here. Thank you for watching.
Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the jewelry sales sparkled this Akshaya Tritiya as consumers queued to buy precious stones and metals on the auspicious day. The industry estimates suggest that jewelry and precious metal sales will cross 20,000 crore rupees this year. In fact, the value of India's jewelry market, which stands at $95 billion, is projected to touch $130 billion 4 years from now. Gold sparkles in the market with 80 to 85% of the jewelry made of the yellow metal. This comes in as the bullion continues to glitter despite prices recently softening. The gold prices still remain 40% higher year on year, having gained 11% so far in 2026. Silver has followed suit, registering year-on-year gains of 143%. So will India's jewelry sector continue to shine? And how does the precious metal market look going forward? To answer that and more, we are now joined by Chahat Shah. He's CEO at Swara Jewellers. Sayukta Pratap Kamath is Managing Director at Abharan Jewellers. Hitar Dholakia is Director at Global Sales and Operations at Hari Krishna Exports. And we have Yasir Sultan, who's Director at Sultan Jewels. Thank you so much for joining in. And I really hope you've had a very good Akshaya Tritiya this time around. And that's exactly my first question is also, how are you looking at, Yasir, at Akshaya Tritiya buying trends? And is gold still holding its strong position as it does every year?
Yeah, so Manisha, thanks for having me over. See, we've seen a 60% rise, from Akshaya Tritiya last year. And though we are reporting high values, volumes have reduced just because the prices are so high. The value of the sales hit is also, in record highs. But having said that, gold is still continuing to hold its strong position because it is still playing its dual role of, balancing between the emotion and the investment aspect of it. Also, to add here, there is also a shift in buying when people are not preferring heavy purchases, but they are frequently buying small ticket sales. Not just limited to wedding season or festival season. They're buying for their personal consumption. They're buying for, various smaller occasions, be it a special occasion at work or at family. So these are factors that are still helping gold, hold its position in number one. Yeah.
Oh, absolutely. The kind of buying that we've witnessed this Akshaya Tritiya has been much on the higher side. Hitar, this one is to you then. There was a time that people thought, oh, Akshaya Tritiya and Dhanteras kind of days perhaps will be very passé because the new generation perhaps wouldn't adhere to these rituals or auspicious days. But that clearly doesn't seem the case right now.
Yeah, I mean, thank you, Manisha ji, for having me. And absolutely, looking at, India has a very good opportunity of having different festivals and auspicious days mentioning, which also helps, businesses like us to, push more and see how we can keep diamond jewelry also at a more high-end luxury kind of aspects. But looking into the millennials and the Gen Zs, we do feel like they are also buying more for like a day-to-day wear jewelry as well. And wherever they are investing it, there is a value proposition being carrying forward in the kind of spendings that they're doing it. What we can see it in India is 60% of the population is below 35. So that's the one which is driving more sales and especially taking care of the Gen Zs. They're the ones where more the demands has been created, whereas the millennials are the ones which are really spending the money. And that's what we see in our Akshaya Tritiya sales as well. As yesterday, we just crossed 150 stores of Kistra diamond jewelry, and we see that push coming in tier 2 and 3 cities, and that's majorly because people also wanted to get connected with the brands and seeing that wherever they are able to buy a product from metro cities, whether it may be from Mumbai or Delhi, they are getting that opportunity to buy the same price from their cities as well, whether it may be Raipur or 2-3 tier cities as well. So that push is also coming in quite heavily in this season.
Oh, yes, not just metros, but tier 2, tier 3 cities. And the younger generation seems to be buying very, very well as well. Sayukta, let me come to you. And you're from the southern part of India. And that's exactly where Akshaya Tritiya is celebrated, even with further fervor. What have you witnessed and how different is this one from the last year?
So it was a great day for us on Sunday.
I think the main thing that I've noticed is initially even I would think that, Gen Zs and younger buyers would want to move away from the traditional yellow gold jewelry. But just an interesting thing I've been noticing is that people are kind of coming back to that. I think from what I understand, I think the mindset is when people are buying gold, they want it to look like gold. So in between, there definitely was a shift towards rose gold jewelry, 18 karat, and white gold jewelry. But I definitely saw a lot of young people buying bright yellow gold jewelry this time. That was one thing. I think also a lot more demand for silver products, especially amongst the younger generations, because I think it seems less intimidating than gold considering the gold prices. And it still feels like a way to buy into this fine jewelry ecosystem with a more like low stakes approach to it. And then I also saw that a lot of people are preferring to buy, usually in South India, I think you must be aware that people don't like diamond jewelry or colored stone jewelry as much. But I definitely saw a lot more people, moving towards those this year as well. I think the demand for colored stones is likely increasing, I think, because of the lab-grown diamonds coming in and, kind of messing up the game for everybody.
All right.
But yeah.
Okay. So, well, absolutely, yellow gold is back. And I see a lot of people wearing a lot of yellow gold suddenly with the kind of price moves that we have seen onto this one. But interestingly, it's not just about gold. It's about silver and platinum and natural diamonds and lab-grown diamonds. I think people have a huge bouquet to buy in from. And Chahat, that's exactly where you come in. You recently ventured into lab-growns with Swara. What are you witnessing?
So first of all, thank you Manisha ji for hosting me. And अक्षय तृतीया के लिए गोल्ड एक बहुत स्पेशल प्लेस लोगों के हार्ट में होल्ड करता है. And this 2026 अक्षय तृतीया बहुत स्पेशल रही स्वरा के लिए. So हमने देखा बहुत सारे यंग कंज्यूमर इस बार अक्षय तृतीया को गोल्ड को छोड़ के लैब-ग्रोन डायमंड ज्वेलरी बाय कर रहे हैं. And गोल्ड एक हमेशा से एक वेल्थ इंस्ट्रूमेंट एंड इमोशन प्ले रहा है. So if I talk about numbers, 2025 के comparison to 2026, we have seen a growth of 350%. So हमारे जो numbers हैं वो बहुत अच्छे numbers हैं, and we have seen people are buying lab-grown diamond for first time this Swara. और एक बहुत बड़ा validation है हमारे लिए कि people are accepting lab-grown diamond, और एक बहुत बड़ा point आ गया है market के लिए कि people not only buy gold coin but they want to buy jewelry, जो investment के साथ एक variability का भी point उनको मिल पाए.
Oh, absolutely. So there's a lot of buying coming into the markets there. And this is one thing that we've established with our younger generation, that the buying is back and there's just so much options for people to buy right now. Yasid, let me come to you with this one now. The new generation is buying, and while they're going back to their roots, there also is light caratages, self-purchases, lightweight jewelry, and a lot of understanding, awareness about seeing it online, browsing it. Virtual is back. AI is making a lot of huge penetration here. How are you envisioning the jewelry sector from here on?
See, the way forward is to innovate, right? I mean, you can't stay at the same level. What here at my store we do is we bring in a lot of new gemstones into our jewelry. Last year, we worked with a lot of new gemstones like tourmalines. Rubies, emeralds, sapphires have always been the standard gemstones used. But here we innovate, we bring in unheard of jewelry like tanzanites and morganites. This has given a new lease of hope, right? I mean, people want freshness, right? Especially the young individuals, they want to buy something new. And that's why we're filling up the gap, where we are using these in these things. It brings out an individuality where people prefer that over standard jewelry designs. So that's where we are, pitching ourselves as.
Hitarth, how are you looking at the market? You guys are the diamond guys, and you've, as you said, 150 stores done in a matter of 3 years with huge targets lined up in front of you. What is it that you think is the newness that you're bringing into this market?
Yes, so what we see in terms of AI, what you specifically mentioned, the kind of boost that internally and externally that we do get is enormous. The kind of design-oriented approach that we've been focusing on from quite many years. People really are looking forward with the kind of design that we are getting at this amazing price point. And with the leverage of AI, we can definitely tap into wherein we can give a product which is looking bigger in terms of design, and it's more aspirational. Also considering how we can keep our price bandwidth at that level, which makes it more interesting especially for us in Kistna. And with the help of AI, definitely the inventory cost, or you can say the operations, has been a huge boost for us. Keeping in mind that how we can, move the goods faster using the AI technology and the data science that we can, can take leverage of in terms of an operations, giving more wider pool to our consumers about the kind of different designs also that they can get with the help of AI. So the push is quite felt. The one who really captures this moment and, streamlines the entire supply chain benefits the most out of all. So even I urge a lot of my franchisee partners to use in the maximum level of AI, that they can use it ethically and organically, that can boost their business, their sales.
Well, Sanyukta, this one is to you. We live in a world where there's a lot of global uncertainty as well. Prices have been very volatile, and that goes for across precious metals, including gold, silver, platinum, diamond even. How are you as a jewelry company managing your risks? What is it that you see the highest growth potential in going forward from here?
So I think in two spaces. One is not so product oriented. One is it's design oriented. And I think some people have said that before already, but I definitely see a shift. When there's a lot of uncertainty, I think people come back to their identity. And I'm definitely kind of seeing that even in the way people are approaching how they buy jewelry. It's becoming less for occasion. It's becoming more for identity. And I think being able to cater to that with customizations and being able to explain the product and the process as well to your customers is very important through that. I also think there's a lot of potential for silver jewelry, be it silver traditional jewelry, which is gold-plated, or whether it's silver jewelry that's lightweight and like Italian or more modern Gen Z kind of oriented jewelry. And I think even with gold jewelry, just building an ecosystem, because from what I've been able to understand of young girls, the time when they get introduced to traditional gold jewelry is around the time of their marriage, and that's when they kind of get invited into this world of traditional jewelry. So I think as a store where we have jewelry for Gen Z, which is lightweight, and we have traditional jewelry for weddings, kind of bridging that gap with the customers while they're in our store is something that we've been working on. It's been working pretty well.
Almost everybody and all reports from various agencies also suggest that jewelry is a segment or a sector that is expected to explode in India in years to come, and next 5 to 8 years perhaps could see very, very strong growth. So within this kind of a scenario, what is this generation looking at in sense of increasing those numbers or innovating is something we'll speak to them after this very short commercial break that we have to take. Welcome back on Commodity Champions. We have a new generation on when it comes to jewelry markets in India, which are doing very well. And there are various reports suggesting that the studded jewelry as a segment has done or gained up by nearly 30 to 40% in last some months. So this is a segment that really seems to be doing well. But from everyday wear to heavy traditional sets to heritage to modern minimalism, and then you have ethical luxury. And within this as well, it is all about transparent sourcing and certification that consumers seem to be looking at. Chahat, this one is to you. How are you looking at, encompassing all of this? What would you say are your goals now from 3 to 5 years from here on? What are you looking to expand into?
So we at Swara, we are very confident about lab-grown diamond, and we know India is ready for lab-grown diamond. And what makes us unique is our designing. So if we see our design is something modern, is something different, and our partnership with Kala Mandir give us a whole difference. So with the partnership of Kala Mandir, we get a deep understanding of relationship, credibility of 40 years, and operation excellence. And we are very clear we want to make things which can be very daily wear and that are not for locker. Even if we talk about our stores, which are there in Surat, Ahmedabad, Bombay, Indore, so we are very clear we want to give a great experience. They're not just showroom. And when consumer walk into the stores, they can feel the different. And even when we talk about our online and offline, both channel helps consumer to get the same experience. And if I talk about our long-term vision in next 5 years, so we are targeting geographic expansion, and we are targeting 40 to 50 stores in next 5 years. And even we are trying to grow digitally. So digital front, we are being aggressive. We know the women's first will research before buying into the store. And tier 1 and tier 2 cities are very well equipped buying jewelry online. Even we provide people with virtual consultation and try at home and other options which they can buy. Even we are making a strong, genuine community of people where they can follow, trust, and eventually come and buy. And our goal is to make sure people are aware about lab-grown diamond and they're confident about this category. Because this is not about opening a stores. It's about a movement towards smarter, conscious, and more beautiful fine jewelry. And with the help of Kala Mandir Foundation and the vision of Swara, we are confident a new generation will buy a newer jewelry.
All right, that's quite a vision out there that you've set for yourself, Chahat. Yasir, what's your plan? What makes your brand special? What is the plan that you're putting forth on your drawing board for the next 3 to 5 years?
See, the plan is simple, Manisha. We want to build a strong design-led jewelry brand, right? We are also trying to shift from a boutique-only model to providing a robust digital experiences. It starts from as simple as revamping our website to basically give an extension of what we are, right? Because today, like my co-panelist said, people are already well informed. They do their research online before coming in. So having a good presence online digitally helps us build that rapport with the customers. And also one more thing which I want to point out is customization is becoming a rarity today. While, I call it like we have fast food, there's fast jewelry where people are quick to buying, what they like. But there is a big market there where people are still preferring that bespoke experience and they want it from the jewelry industry as well. Also, to add, our focus on gemstones, has kept us above competition. We are constantly working with, like I said before, we are constantly working with new gemstones, not just gemstones, but mounting them in new metals. We are working on titanium, for example. It's a new metal that is yet to come. So basically, Manisha, to sum it up, I think we just don't want, we don't want to be the biggest brand, but we want to be the most distinctive in our space. Yeah.
This is a question that I want to ask each one of you as well, because while you have a lot of plans, and Yasir, I'll start with you since you are on, there is a lot of competition coming in as well, not just from the national brands or the organized ones, but corporates are coming in. International brands also see India as a very lucrative market with the kind of spend that is increasing here. How are you guys tackling with that?
Number one, education, Manisha. when we are well informed, because that builds a strong credibility with the consumers, right? When you are confident about when you sell your item, right, and that you get not only with experience, but today you have to equip yourself with education, with the constant evolving, with the constant treatments that are coming in. So that kind of helps build a bridge of trust between the fast evolving consumer thing. So I would not only rely on experience, but also on education, right? Know what you're selling, as simple as that. And, customers are going to find you credible and, come for you for your unique offerings. Yeah.
All right. So, Hitarth, as I understand, there's no set formula, really. You have to depend on your legacy, but you also have to start innovating. So there's a lot of work to do. What are your plans now for the next 3 to 5 years?
Yeah, so like a lot of other folks said, what's more important, what we feel as a brand, as a company, is that we need to, we have got a very good generational wealth with us, and we have this opportunity how we can transition this into more future generation and become more sustainable with this. And having that trust factor can also give us more competitive advantage amongst the international brands that do have an eyes-on focus in India. The design aspect is also very crucial impact, which will help our brand to grow forward. One of an example being recently the experience from the Bulgari team designers had come in here, and we asked the same question, that what is that so interesting about your brand? And they feel like, in India, people are more focused on what the international markets are, but more interesting for them, for Bulgari, is that how we can infuse Indian designs, Indian concepts into their brands. So we have got a really eccentric, like generational wealth, not only from a commodity perspective, but from the heritage, the history that we've been seeing it for so many years. So that's the wider opportunity that we see in India. Certification is also one of the very crucial impact. I would say like 80% of the diamond jewelry that we've been selling at, are certified. And over these, as an industry whole, we see, if you go a decade ago, 50% of those diamonds might be selling in certification. Right now, certification is a matter of like authenticity, as well as the confidence that the consumers are striving to get. They want to spend in a right way, and when they get some authenticated certificate from a known organizations, or whether maybe the brand, that gives a competitive advantage. And also the experience, which one of the other folks just mentioned about. The kind of product that we bring in, that what's the experience that you are giving it to them of owning that particular product. So that's the key focus where, we also especially look forward to, and also we tell our partners, our franchisees, to focus on that one. Comparing with the growth part, of course, what India is at the great GDP of 6 to 7%, and especially in our Indian diamond industry, GJPC and NDC has done really well, that in India, it's more than 15% of the growth. And we are definitely looking way much higher in terms of our brand as well, to take it forward in the next 3 to 5 years.
All right. Sanyukta, what is your plan from here on? Taking India brand global, expanding in India, what are you looking to do? Sanyukta, you need to unmute yourself.
Hi, sorry. The focus has really been to move from being an occasion-led purchase into kind of a lifestyle brand. And when I say expand, I think the way we've been thinking of it a lot more is to be more relevant in our existing customers' lives, and expanding in whatever capacity, but more than anything, to be more relevant to the people we already cater to. The question you asked just before this was, with more competition coming in, how do you stay relevant, and how do you keep up with, the giants that are coming in? I think Bangalore has grown a lot, like over just the past 10, 15 years. And I think, with so many other people coming in, the way Abaran has been able to maintain its position in the city is simply just by maintaining relationships with the individuals, because, you kind of use the giant size against them. So that's kind of the thing. And I feel like there's nothing that can compensate for a lack of trust and relationships, even though now that we have standardization, having trust becomes a lot easier.
Okay.
But still having that individual connection is extremely valuable, especially with something that people like to say that, gold is an investment, but at the end of the day, it's a highly emotional purchase. So we can't really
I get your point. You want to go online, you want to keep it personal, you want to customize it, you want to make quick jewelry. So you really are nimble, agile, and you want to cater to what comes to you is what I understand from all of you. But thank you so much. This has been a very great conversation, and I wish you all the very best. But with that, that's all the time that we have on this show. Thank you so much for watching.
Hello and welcome to News Center. I am Ashmit Kumar. Now, uncertainty over Iran-US talks persist as US President Donald Trump remains adamant about the US blockade of the Strait of Hormuz. The blockade has become a major point of contention for the next round of negotiations, emerging as a key obstacle for Tehran in rejoining peace efforts with just a day left before the two-week ceasefire ends. Now, Trump has said that an extension is unlikely and anticipates a deal soon. Meanwhile, Iran's parliamentary speaker, Mohammad Bagher Ghalibaf, said that it is preparing new cards on the battlefield if the U.S. resumes fighting. As per sources, a U.S. delegation led by J.D. Vance is on its way to Islamabad for talks. Meanwhile, Iranian state media has stated that no Iranian delegation is headed to Pakistan, reacting to rumors that Iranian delegations are on their way. The blockade in the strait has triggered a major energy crisis. In a radio interview, International Energy Agency chief Fatih Birol has said that the ongoing conflict has sparked one of the world's worst energy crises. EU Energy Commissioner Dan has warned that the summer is going to be difficult because of the war. Chinese President Xi Jinping has said that the normal traffic through the strait should be maintained. China's foreign ministry further added that it hopes that the US and Iran will maintain momentum in peace talks. Crude oil prices, meanwhile, continue to remain elevated, hovering over $90 per barrel despite the 10-day ceasefire. Israel continues to strike Lebanon. The only positive development is that Israel and Lebanon are preparing for the next round of talks in Washington. Meanwhile, several EU nations, Belgium, Spain, Slovenia and Ireland, are pushing to end the EU's association agreement with Israel. This comes ahead of the EU foreign ministers meeting in Luxembourg. To understand how the war is set to reshape West Asia, we will be speaking with geopolitical expert Sara El-Abd, as well as the former ambassador to the US, Ms. Meera Shankar. I'd like to thank Ms. Sara for joining us. Ms. Sara, coming to you first again. Will they, won't they? Again, those questions continue even as we move closer to the ceasefire deadline. Interestingly, the Iranian ambassador of Pakistan has very clearly said that under threat and coercion, there can be no negotiation. Are we to mean that Tehran is again using this as a negotiating ploy? Or will the Tehran their delegation finally reach Islamabad in time for tomorrow's negotiations?
Thank you so much. That's a very good point, and I'm happy to be here to discuss this. We have to understand that the Iranians have said from day one that distrust is what shapes these negotiations for them. There's been 2 rounds of negotiations before with the United States after the previous conflict and since then. And every time the Iranians have felt that their trust was used. And so this has been one of the main conditions from Iran, that there's a continued trust. And the moment that that becomes questioned, then the Iranians pull away. Now, will we perhaps see an Iran that comes back to the negotiation table? Absolutely. We do believe so, and the signs are there, but it will not be when imitated for its trust.
We saw this kind of behavior, Ms. Sarah, again, the first time we had the round of negotiations as well, where Iran, till the very last minute, expressed its unhappiness with no ceasefire covering Lebanon. And that was, again, a very strong position that Tehran had taken. But eventually we saw the teams fly in from Tehran to Islamabad for the negotiations. Again, are we likely to see more of that? We'll see tough language being used by leaders in Iran, and then finally end up sending their delegation to Islamabad come the Wednesday deadline.
So Iran has, and you're entirely right, and this has said from day one that one of its first conditions will be Lebanon. And while there are negotiations, as you said as well, happening next week between Israel and Lebanon, mediated by the United States, Iran continues to push for Lebanon ceasefire to be a requirement of the Iran and U.S. negotiations. So these things stick together and they have to do with one another. So it will be, of course, positive for us to see that there is successful negotiations tomorrow for the wider region, so for Lebanon and the war with Israel. But at the same time, if tomorrow ends up not being successful in terms of mediation between Iran and the United States, it will also have large repercussions, because while there is a sidetrack negotiation going on between Israel and Lebanon, the main file does remain within the Iranian negotiation track.
Also, Ms. Sarah, there are questions, there are reports which indicate that perhaps the civilian leadership of Iran may not be on the same page as IRGC. How credible are these reports? And is there a message being sent out by the IRGC for the civilian leadership to be perhaps more firm with Washington?
Absolutely. So we know that indeed the military and the armed forces within Iran run on their own military interests and understanding the sovereignty and military interests of Iran. So indeed, their leadership in many ways is less interested in the discussions of distrust and trust that there is with the United States, and is much more concerned with the sovereignty of Iran. In this case, when that distrust becomes a concern of sovereignty, as we see now with the Strait of Hormuz and so on, this is where indeed we will begin to see the Iranian armed forces begin to take a much more dominant role over the civilian leadership. For now, as it stands in terms of the threats to Iranian sovereignty, it seems to be quite balanced. It seems to be that there's a good understanding between the civilian and the military leadership within Iran. But we know from previous times of the conflict that the moment that there is a military threat that exceeds the Iranian military interest, the Iranian military forces and armed forces will indeed prioritize military interests.
Sarah, again, another question about, even before we get down to the brass tacks in terms of some of the key hot potatoes, whether that's the energy, whether that's uranium, whether that's Hormuz, even before we get to that, you mentioned the trust deficit. How realistic is it? We didn't see much progress in round one. How realistic is it that there could perhaps be a breakthrough, given the trust deficit that the two sides have with each other?
It is quite likely in a very exceptional scenario that we are in right now. The exceptional scenario is, of course, that Iranian distrust is quite large. But when the Iranians know that there's a major limitations on the U.S. side and there's an extended U.S. pressure, then the distrust can be put aside, right? Because you have an understanding that the other side needs this more than you. And currently that is what we're seeing. And this is also arguably why we see that there is this rush on the U.S. to get this, to get the talks going in Islamabad, essentially. We know that under U.S. law, a president can indeed do a military operation without approval of Congress, but a military operation is only under U.S. law 60 days. And that 60 days is coming up in the beginning of next week. After that, once the 60 days indeed is completed, we have what we call a war in the United States law. So a war requires the approval of Congress. And so this is a big discussion in the United States. Will Congress approve the continuation of the war? Most likely not. And that would be a very difficult end for the United States with this war. And that is why the US is under immense pressure to find a well-rounded way to still achieve its diplomatic interests, while, of course, ending the war as soon as possible. And that is something that's, for the Iranians, providing some level of trust in that trust deficit.
Right. Let's also get Ambassador Meera Shankar in on this conversation. Ambassador Shankar, thank you for joining us. First question, again, I'm just quoting from what the Iranian ambassador to Pakistan had posted on his social media handle, saying that Iran will not negotiate under threat or pressure. Ambassador Shankar, what do you read into that statement?
I think the Iranians obviously are of the view that the US imposition of a blockade on Iran, even as Iran opened the Straits of Hormuz, was perhaps an action in bad faith. And they've made this a sticking point for continuing the talks, saying that they don't think they can have talks as long as the blockade continues. It's a bit like the initial point where they had said that because of Lebanon, we are going to close the straits. They had agreed temporarily to open it during the ceasefire, and then they closed it because of Israeli action in Lebanon. And once the ceasefire in Lebanon was in place, they agreed to reopen. And simultaneously, the US then imposed a blockade on Iran and Iranian ships. And so the Iranians have now taken the view that they can't engage in talks as long as this happens. Plus, you've had the seizure of an Iranian naval vessel by the US Navy naval vessels. And so the level of mistrust is extremely high. I think the Iranians are also remarking or observing, some of them, that the US demands are maximalist and not practical, and that what the US wants is for Iran to accept defeat. And that is something the Iranians will not do. So I suppose till they actually find some, via media, on the blockade that the US has imposed, and also till they get some signals of flexibility in the US position, they may take the view that talks would be actually counterproductive. We don't know, because as your previous expert said, the US is also under pressure to deliver a deal, because a long military operation in Iran is not something which will sit well with sections of Trump's own base, some sections of what are called America Firsters, though much of MAGA is still supportive of President Trump's military action against Iran. The America Firsters, like Tucker Carlson or Marjorie Taylor Greene, they have become very vocal critics of this operation. So for President Trump, I think some early conclusion to these operations are essential, but at the same time, he wants to show that he has won and he's got a better deal than the deal which President Obama had got. There are these contradictory pulls and pressures.
We're clearly under pressure, but Ambassador Shankar, again, the situation that we have on our hands, again, there was a lot of miscommunication as to whether or not J.D. Vance is coming, and if he is, then at what time is he flying in? Donald Trump made a statement slightly prematurely, and then later it turned out that J.D. Vance is yet to take off from Washington to arrive in Islamabad. That aside, there's a growing commentary that if there was a realistic chance of a breakthrough, Donald Trump would not allow J.D. Vance to host all the glory, to receive all the credit for that. That is basically the indication that if there was actually a breakthrough happening, Donald Trump would be flying in himself. Is that a fair assessment?
Well, he has indicated that. He said if a deal is ready to be finalized, I myself might fly to Islamabad. But, you know, the nitty-gritties of the deal will have to be worked out not by Trump himself, but by others in his team and maybe people like J.D. Vance. So I'm sure that if a deal is about to be finalized, President Trump can always take over himself. But at least laying the ground for it would have to be done through more patient diplomacy at other levels. Can't be done at his level.
Right, Ambassador. Again, difficult to predict what will transpire tomorrow in Islamabad. We'll, of course, keep our ears and eyes peeled. I'd like to thank both of our panelists for joining us, Ms. Sarah, Ms. Shankar. But Ambassador Shankar, do stay on with us. We're slipping into a very short break. On the other side, we discuss what the opening up of USA tariff refund window means for India exporters as they eye the $12 billion in refunds. That and, of course, the Indian delegation in the US for further talks on the bilateral agreement. Stay tuned for more on that in just a bit. Welcome back to News Center now. The Indian delegation, the Indian trade delegation has reached Washington. In fact, they reached yesterday for, again, what is likely to be 3 days of hectic parlays. The Indian delegation from April 20th to 22nd will be, of course, trying to take the conversation forward on the bilateral trade agreement. There was a prima facie arrangement reached in the month of February between the two sides, but it is only after that that we had the U.S. Supreme Court ruling, which in fact had struck down Trump's tariffs. And that is what has inspired, in fact, greater conversation, greater maneuverability, some say, with respect to Indian negotiators. This is the first visit by the Indian negotiators to Washington after the U.S. Supreme Court had passed that ruling against the Trump tariffs. Many issues remain. One of them, of course, being the Trump administration beginning the process of refunding tariffs collected from importers after the U.S. Supreme Court had struck down the Trump reciprocal tariffs, calling them illegal. Now, it was in the month of March that the U.S. Court of International Trade ordered the U.S. government to return more than $160 billion to traders Indian exporters are eyeing tariff refunds worth around $12 billion from the administration. That would be to a little north of 1 lakh crore rupees. The portal for claims briefly crashed after a surge of applications from importers. It is anticipated over 3 lakh traders are expected to raise refund claims. This refund process coincides with the ongoing India-US trade talks. And to help us decode this entire conversation is with us again, Ambassador Meera Shankar, who's joining us, former ambassador to the US. Also joining us is former ambassador to the WTO, Mr. Jayant Dasgupta. To both our panelists, thank you once again for joining us. Ambassador Shankar, let me come to you first. Again, on this issue of the India delegation heading to the US, at this point, does it offer the Indian negotiators more maneuverability, what we've seen post the Supreme Court ruling on Donald Trump's tariffs?
Well, it certainly creates a new situation because the earlier understanding had been reached on the basis that certain tariffs will apply to different countries. So India had an advantage, even if it was marginal, over many other developing countries in Asia, though the tariffs imposed were one-sided and quite high. Still, in terms of relative benefit, there was some benefit. Now that those tariffs have been struck down by the court, by the Supreme Court, there's a different situation where everybody has 10% tariff, the universal tariff which Trump has applied on all countries. And he is undertaking investigations under different sections of US trade law for unfair trade practices. So right now for India to accept the old agreement means we will have a relative disadvantage of quite a significant proportions vis-a-vis all other trading partners of the US who have 10% tariff. So that needs to be clarified. How does the US intend to proceed? And I think what Indian trade negotiators are explaining to the US right now is that there's really not a case for trade negotiations or trade investigations, against India under Section 301 or other sections of US trade law. They are, providing facts and arguments to support our position on this, that there really isn't any excess capacity that India has built specifically for exports, and that we don't really threaten US domestic production in any significant way.
Let me get Mr. Dasgupta in on that. Mr. Dasgupta, again, just in the days leading up to this Indian delegation visit to Washington, we saw those USTR investigations under Section 301. One, of course, against structural excess manufacturing capacity is one that has been flagged. That's one of the two investigations launched. The other, of course, on forced labor imports. How much of a spanner will this throw in the works as far as India negotiating, looking to finalize a position with the US is concerned?
I think Section 301, there are two proceedings, one on forced labor, the other on excess capacity in certain sectors, primarily engineering products, textiles and clothing, leather, etc. So on the first point, it is it also involves imports of products. Could be semi-finished products or components from a country which has forced labor practices. So all the exports which have a certain amount of imports from, let's say, China, which is also one of the countries which has allegedly been using forced labor, that would come under its purview. As far as the second case is concerned, it is about overcapacity or excess capacity, and that would perhaps hit our textiles and clothing exports, our engineering product exports, our leather exports. So in both these cases, of course, there is no objective means by which the US can impose tariffs. But the point is, the investigation is carried out by a committee, which, of course, would be an interministerial committee in the US. But the final decision would be taken by the USTR, who is a member of the president's cabinet. And so the chances of our getting slapped with tariffs, if we don't sign on the agreement, which the US has been asking us to do, is quite high. There would be other countries also in the same boat, because the 16 countries which have been slapped with notices for excess capacity includes all the major exporters to the US, and the 60 countries which have which are facing this action on the basis of forced labor. They include literally every country which has even a small amount of exports to the US. So I think the US is basically looking at these two actions as a means of pressuring countries to come and sign trade agreements in lieu of the tariffs which had been imposed under the IEEPA. So that is the scenario facing us. And as Minister Goel has mentioned about 10 days ago, that we are expecting reciprocity, which I think is implying that we expect the US to come down from its perch pre-US Supreme Court ruling and provide some kind of reciprocity, which we could compensate for or we could match in terms of our concessions to the US. So I think what Minister Goel's statement can be read to mean is that we want to start on a new footing and have a deal which is mutually beneficial, balanced, and equitable.
Mr. Dasgupta, another pain point has, of course, been the treatment of pharma imports from India to the United States. On April 4th, we've seen the US imposed 100% tariffs on branded imports. What I want to ask is that, is this also likely to feature as a part of negotiations? India, of course, not impacted by that a great deal because a bulk of our exports to the US are generics, not quite the branded drugs that are under that 100% tariff. But is this again likely to feature as a part of those negotiations, more certainty for especially Indian pharma providers, which makes up for the bulk of medicine imports by the US?
Actually, there are only two Indian companies which have patented medicines exports to the US. The others are basically exporting either generic medicines or they're selling patented medicines under a license to manufacture them on behalf of the patent holders. So in that case, the patent holding companies could be, any of the pharma majors of the world. They would face higher tariffs unless they have committed to the Trump administration that they would be investing in the US within the next few years in a very large measure to set up manufacturing facilities. So Indian companies, the short point is Indian companies, pharma exporters to the US are unlikely to be hit in a significant manner. Very small exports from two companies are going to get affected.
We're running out of time. Ambassador Shankar, I'll come to you for a quick comment. One, again, point that the US, that Donald Trump especially has taken objection to, has been the imports of Russian oil. Is that something that perhaps we need clarity on going forward? For now, of course, there's a temporary relief on buying Russian oil, but that's on account of the West Asia crisis. Is there more certainty required for India with respect to Russian imports?
Well, we have imported quite a bit of Russian oil once the US had lifted the sanctions that it had because of the West Asia crisis. Going ahead, we don't know, because you had Scott Bessent saying that there's not going to be, the US Treasury Secretary announcing that there is going to be no extension of the waiver for Russian oil trade. But there was. And right now, with the US having blockaded the Strait of Hormuz and Iran having closed the Strait of Hormuz in response, the situation is very unclear. We also don't know how the negotiations are going to proceed. So the scenario looks as though the Russian oil waiver will continue for some time. Otherwise, prices are going to rise, and there will be a huge shortfall also of global oil and gas in the in the market. So that is one. The other is that the sanctions don't apply. They apply only to two Russian companies, Lukoil and Rosneft. So it is theoretically possible to buy Russian oil from other exporters who are not under US sanctions. But, you would have to feel your way as
Right,
the
Ambassador.
situation in West Asia develops.
Right, Ambassador. No easy answers there, but I'd like to thank both of our panelists, Ambassador Shankar, Ambassador Das Gupta, for joining us. But before we wrap this edition of News Center, we leave you with a commentary from Commerce and Industry Minister Piyush Goyal on India-US trade talks. He said that the first tranche of the trade deal has been almost finalized. Listen in.
Well, we have almost finalized our free trade agreement, the first tranche of the bilateral trade agreement with them. We are trying to close the T's and dots on that and work out what would be the mechanism by which India can get a preferential access, market access in the US market compared to our competitors. The team will be discussing these aspects while they are in Washington.
Hello and welcome to On the Record with me, Shireen Bhan. It's been a big year for banking. We've seen a lot of deals take place, but it's also a difficult environment that the banking sector finds itself in as the war in West Asia continues to rage on. It is taking a toll and an impact on investment decisions. For HSBC in India, it has been a strong year. They've grown both as far as profits are concerned and, of course, improved on operational efficiency, and doing that all with great provisioning. Joining us now to talk about the road ahead is HSBC's Hitendra Dave. Hitendra, always a pleasure. Many thanks for joining us here on CNBC TV 18. Before I talk to you about all things HSBC, we've just seen the news coming in from the RBI, so let me address that. And for the benefit of our viewers who are just tuning in, this is what the RBI has done. It has withdrawn the circular that it had issued on the 1st of April, which was ostensibly to try and stabilize the depreciation of the rupee. Now, what the RBI has done today is that corporates can now rebook cancelled hedge contracts. This had been disallowed in the April 1 circular. Banks can quote and offer corporate hedges in the offshore market. Of course, the overall cap of 100 million still remains. Let's start by what the impact and the implications will be of the relaxations that the RBI has now announced.
First of all, thank you, Shireen. Always good to be speaking to you. No, I think the governor said it in his post-policy press conference, where he was asked about these measures, that unusual times, unusual volatility, the Indian rupee perhaps moving almost singularly. On days where the rest of the pack was weakening, we were weakening. On the days where the rest of the pack was not weakening, but we were still weakening. And their analysis, their data suggested that if they were to put some wedge between the onshore markets and the offshore markets, it could help. And the data would seem to suggest it has at least helped calm some nerves out there, because as we all know, currencies can be, you can just get into your own self-created spiral a little bit, and therefore, if the market regulator feels that spiral needs to be broken, I think they've broken it. But I think they had clarified that it is to address an unusual circumstance, and today's withdrawal of the April 1 circular would seem to suggest that hopefully this is the first of the overall withdrawal that they will do, so that the market liquidity, the access of corporates, access of banks, and access of all stakeholders in India and outside India to a deeper and more liquid market goes back.
But do you believe that today's relaxations are on account of the fact that the rupee has stabilized somewhat, and that's given the RBI the comfort to take this decision? Or do you believe that it is because of feedback coming in from stakeholders? And we've seen that many have been saying that this was perhaps a little too harsh, maybe almost sledgehammer-like. Which of the two do you believe could have been the reason behind today's move?
Well, I think it will be a mix of both. Yes, there was feedback. I think the central bank immediately after the circular and in the days that have followed has been in constant touch with the market. And I think even while wanting to achieve the regulatory objective of putting a curb on speculative positions or very large positions, in the process, when you come out with a circular like that, even bona fide transactions could also get curtailed. There were also a situation where a lot of us had deals out with our own counterparties.
So it was impacting you?
No, I think it was just making it more cumbersome to unwind those transactions, and which is what they have. So they have taken away some of those things which remove the cumberness, which remove the friction without adding to the demand for dollars just through this process, is my sense.
Okay.
So I think it will be a mix of both feedback as well as the desire to be a opening of the market slowly.
But, on the back of what we've already seen the RBI do and today's decision and the move that we've seen in the currency market, what's the outlook now as far as the currency is concerned?
Yes, so I think remove these circulars and the last 2 weeks because ultimately in the long run, any asset, any currency is a function of demand and supply. You can put a halt to temporary demand, which is what these measures did. You can add some supply through some other measures. We are reading about OMC's demand having been taken out of the market or whatever. But ultimately, I think the currency was weakening, not just in the month of March. March was accelerated, but through the last many months. And that I think most people think partly was caused by this persistent selling in the stock market by FPIs, which was almost on a bad on a good day, $100 million, on a good day, almost going up to 500, 600, $700 million. And it was almost daily, right? So, and that demand had to be met in the market. Usually you would meet that demand through either FDI coming in.
Yeah.
Now we all know that the net FDI number is turning out to be relatively insignificant, while the gross numbers are relatively unchanged and healthy. But the outflow has taken away the impact from a currency perspective. Yeah. And I think the third thing, which is more technical, is that because there was a like I said, currency was in a self-fulfilling cycle of expectations, which caused exporters to hold back dollar supplies and importers to accelerate dollar demand. So this combination has to be, one of the three of these has to break, or two of the three of these, or three of the three of these have to break for the currency to fundamentally change its direction. We are seeing early signs of FPI selling tapering off. I mean, just let's not make too much of 1 week, but it looks like at least, I mean, and you hear from experts that perhaps in any case we are coming towards the end of that because of valuations or whatever. So yes, you would expect currency to be more range bound than it was, but the bias for slow weakness will change only when either the FPIs come back, or you have gross FDI, and the exporter-importer narrative will follow these two, as opposed to lead these two.
So let's address both the FPI as well as the FDI issue. And, you know, it could be a function of valuations. It could also be a function as far as the currency is concerned that FPIs will consider in the midst of a whole host of other factors. But do you believe that we could perhaps have seen the bottom, the worst, as far as the FPI selling is concerned? What do you think could turn sentiment?
Well, the best way to turn sentiment is to report good growth in earnings, right? I mean, if you show good growth in earnings, the kind of earnings growth that historically India has delivered, you know, mid-teens and above, why would people not come back? Because India offers one of the most broadest markets in the world, right? Domestic market economy, IT economy, consumer economy, a very thriving financial services sector, you know, infrastructure sector, real estate sector. You don't get too many markets in emerging markets that have this broad a range. And that's what has attracted FPIs over the years to India. So you really want this to change? I think track earnings. The moment you see earnings growth breaking out of the last 15, 18 months of, you know, high single digit, you know, low double digit kind of numbers, it'll come back. Or we need FDI. I think FDI, because it's much more stable, much more predictable. We need a couple of sectors here where global boards start feeling a FOMO, right? We have to create a sense of FOMO about our market.
So which could those sectors be where, between the government and all other stakeholders, in your words, we can create FOMO?
No, we've seen, like you mentioned in your opening comments, right? We've seen significant FDI in the broader financial services sector. You know, we've seen significant money coming into NBFCs, significant money coming into banks, exactly. And it's not over yet, right? I mean, there are other banks which are still in the process of being identified for appropriate buyers or suitors. So in the financial services sector, yes. I think everyone thinks the next round of growth for India has to come from manufacturing, whether manufacturing for the domestic consumer base or manufacturing for the world, and especially with all these FTAs being signed with the UK, with EU, you know, let's see what happens with the US tariff agreement. So I think it's very difficult to say this sector will drive, but you can sense that last 15 to 18 months, both people in the policy making circles, people in the business circles, I think are looking for that one thing to create that sense of excitement for international investors.
You know, but speaking of sentiment at this point in time, as I pointed out, the war in West Asia continues. We don't know how quickly this will be resolved or whether this is going to continue to be a protracted battle. How is this starting to impact boardroom decisions? Are people now saying, look, let's wait it out, let's wait to see how this settles and then make fresh moves? Or are they saying, let's get on with things because we don't know how this is going to end?
I think there'll be two types. One is if if there are strategic markets, right? I mean, you will continue to invest in that strategic market and see through this war situation, because you don't go into a market, commit lots of money, and then because of this you withdraw or you stop investing. That's not how real money or serious money considers itself, right? If you haven't made that commitment, would you go a little slow? Yes, possibly yes. But my own sense is, and our own surveys seem to suggest that, over the last 7, 8, 9 years, the world has got so used to such unusual periods. COVID was perhaps even more unusual than what we are living through. Then we had the tariff-related uncertainty for most of last year, and then we have, the Iran-US conflict out there. I think most boardrooms have become a little tougher on that side, that if we stop at every news flow, at every event,
we're not going to get anything done.
We are not going to get anything done. So I think at least our surveys, our research, our conversations seem to suggest that the world is not going to put things on pause. They might look for higher returns, purely because some of the risks have now surfaced. And now that the risks have surfaced, you want that appropriately captured in the return metrics.
So how do you think India finds itself positioned at this point in time? If you look at what's happening in some of the other high growth markets or high growth regions, they have been very directly impacted by the West Asia conflict. So do you believe India stands at an advantage today on account of that? Or do you believe that, because of the supply chain disruptions, because of the uncertainty, etc., the risks, even for India, have gone up and will then be factored into these investments decisions?
So, Shireen, I think it's almost impossible to say risks have not gone up for any part of the world. I mean, there will be some countries here, there, which might even be beneficiaries of the development since the end of February or so. But overall, global risks have gone up, and that's what is reflected in so many measures of risk. That said, in the context of India, see, why do people come to India? That hasn't changed. Okay, they come to India because we have a large domestic market. They come to India because, by and large, law and order is very acceptable compared to countries at our levels of income. They come to India because of the soft power that India wields in terms of the number of engineers we have, the number of doctors we have, the number of nurses we have, etc. They also come to India because of the talent in if I can call it modern economy, like IT and potentially AI, etc. Right? So that hasn't changed. And I would say that at the margin, because it's impossible to recreate an economy with 1.4 billion people, or to create all the other factors that I've listed, right? At the margin, you are slightly better off. You are worse off than where you were 6 months back or so. But at the because there are so many economies which have much bigger problems. We have a problem. Our fisc is definitely going to be much more challenged than what we thought when the budget was presented. Our trade deficit or current account deficit likely to be more challenged also. But that's a 1 year, 2 year challenge. It is not that you are permanently looking at India now going back to some high inflation, high fiscal deficit, high current account deficit kind of days. So I would actually say time is for us to somehow or the other make use of this period. I know it sounds almost too difficult to rose tinted or whatever, but we will need to do this because the country does need the FDI too. As I mentioned in the previous question,
So, and that's what I want to double down on. What can be done to use this crisis? I mean, as they say, never waste a crisis.
Yes.
What can be done to use this crisis? We've seen, for instance, the government amend Press Note 3, making it easy for FDI to come in from China. Any tangible next steps that you believe we could look at?
I think, and I'm sure the government is working on it, but the amount of so-called reforms that the government has done is actually not if you put it together, it's quite substantial, right? I mean, on electricity availability, prices, it's very different to what it was 5 years back. On central government approvals, even if single window has not worked properly, but just the competition among states for high-profile businesses, high-profile sectors definitely is much easier. You look at what's happened to commercial real estate, right? Real estate.
Yeah.
The largest owners of real estate, which 20 years back nobody would have thought of any foreigner will ever touch, are foreigners. The top 3 owners of real estate in the country are foreigners. So there is a lot which has been done. I think the last 2-3 bits, or maybe the one most important bit would be land. It is still a difficult thing, and it doesn't fall in the central bucket, it's in the last. So I think land availability and creating infrastructure around it, and then just I would suggest, take 10 marquee projects. Just run them, and this government is great at mission mode in whatever they choose to do. Just run those and show the world that you can build a steel factory, whatever you want, automobile factory, or electronics gadget manufacturing, and really showcase those, and that creates a little bit of the FOMO that I spoke about.
Let's talk about HSBC's plans for India. You've come off a great year, strong profitability, expansion as well. You've got the clearance for 20 new branches. You've done 5 already. Take me through what it's looking like now for the year ahead as far as HSBC is concerned, and the aspiration of being in the top 5.
Yeah, so I think, so thank you for the comments. Please play the headline like that.
Which headline do you want?
No, I think we think we can add a lot of value to the Global Indian. That Global Indian is a company, Global India is a partnership firm, Global India is a mega corporate of Indian origin which wants to go abroad, make acquisitions abroad, trade with the rest of the world, source from the rest of the world, sell to the rest of the world, or could be mega companies outside India, or who want to come to India. The commercial real estate we spoke about, or the healthcare we spoke about, and many other ways. It could also be the Indian diaspora wanting to come back to India or buy a house, send their kids back, or it could be Indians wanting to send their kids abroad or start a nest egg abroad or something. So that's our principle. We want to be the global bank of India. Okay. In the process, will we do some business for people who have business? Of course we do, and we do very substantial amount of that. The second thing is we can really help young companies. So we are the only bank possibly which has a dedicated innovation bank. I think we are already committed about $1 billion. These are companies which are owned by typically venture capital funds, etc. So very early stage young companies. The third area is trade. HSBC is the world's largest, and if I may say so myself, we are the best trade bank in the world as well. And what we help people with, I think our customers do realize that, and that's why we get disproportionate, because we are able to also tell them what is the credit risk of a counterparty, which very few other banks can around the world or something. So, and in the wealth space, as you mentioned, I think we are experiencing significant growth. I mean maybe it's the data is not publicly disclosed, but if you want to search up which credit card spend has been fastest growing in the last 3 years, I won't stop you from doing so, as long as it's part of the headline. And even our Premier, which is our go-to top brand, I think is growing faster than it ever has. Our CASA is growing at a healthy pace. So it is all looking good. Like I keep saying, I think with all this combination, with the trust word that is very commonly associated with us, with the balance sheet, which is generally a source of strength for HSBC globally. Right? I mean, we are not a cause of problems for the world. We typically, during times of trouble, actually a lot of money comes to HSBC. That's how we are seen as a flight to safety bank. With all these things, with the great team we have, with the heritage we have here, if we are not a top 5 private bank in India, and if we are not compounding at a faster pace than the rest of the industry, then, frankly, we would not have done a good job.
So given the strength of the balance sheet as well as the aspiration that you have, more M&A, you've done some, more M&A on the cards? Anything interesting?
I think on M&A, given how rapidly we've grown in India, and the kind of growth we are experiencing across all the products that I mentioned, one way is let's just grow, because in 3-4 years we'll have created another bank of our size today, hopefully, or so. The other is why waste 4 years, right? So I think it's not a definitive yes or it's not a definitive no. Our bank is too large right now to be able to say no, yes definitely or no definitely, but anything which fits our global strategy, I think we are open to.
So which way are you leaning to at this point in time, at this juncture, and what could potentially look?
Bang in the
what
middle.
Could be?
Bang in the middle.
But what could be interesting?
No, I think we have announced our global strategy. We want to be the leading transaction bank in the world. So if anything helps us accelerate, we are already a very, very large transaction bank in India. We process billions of dollars of payments. We make hundreds of crores of payments, thousands of crores of payments every day. We do all kinds of transactions for our customers and for our individual customers. Anything that can enhance that, we could be very open for. In the wealth space also, we have announced transaction banking, wealth, and 1 or 2 other areas which are less relevant for us. So in those areas, we will, if there is something interesting that someone shows to us, we'll evaluate it.
Well, speaking of something interesting, I mean, AI and how everybody is trying to grapple with it. Regulators globally at this point in time concerned about just how quickly things are moving. We've just had a meeting take place in the US of banks as well as the regulator. What are A, the opportunities that you've been able to leverage and capitalize on already, and B, what are the concerns at this point in time?
So I think we are using AI. I mean, everybody has been using AI for many, many years. The most modern version of AI, I think we are using it for things like transaction monitoring, which is, while it sounds like a simple word, a bank like ours will process millions of transactions every day. And the suspicious characters or the wrong characters will try to use us to enter the financial system. And it is for us to make sure that each and every transaction we process is in line with what we thought the customer is using us for. And that to do on using anything except AI now doesn't really work, right? So, and that has really helped us, focus in. Otherwise, we were just calling a few thousand transactions every day as being not suitable, but now you're narrowing it down. Similarly, in many of our customer-facing contact centers and things like that. So it's an evolving subject. I think like all banks globally, we want to use it as much as possible, but cautiously, right? Because it is still not the done deal. Is in certain areas we have fed it some of our internal documents. So our RMs today can know. If you call my branch today and say, okay, I want a mortgage in this particular township. Earlier, he or she would say, let me call you back, call, reverse call. By the time you're busy with your next interview, and it just goes away. Now it's there in AI for us. Everything. So many of our policies like this are being fed, which are largely around customer service, customer turnaround times, etc. Are there risks? Yes, of course, there are risks, and therefore, even we are investing significant, whether it's cyber, whether it's something else, in those areas to make sure that we use it to do good and not get caught up ourselves.
So, let me end then by asking you, as far as the road ahead is concerned for you and, sticking to the aspiration of wanting to be in the top 5 in India, given all the uncertainties and the volatility that you're faced with today, how confident do you feel of being able to achieve that, and by when?
No, so I think, like I mentioned, if we are not confident with the mix that I shared with you, right? Trust, balance sheet, team, customer franchise. You would be surprised if you do a survey of our customers. Very large percentage will say we love dealing with HSBC. See, that's a very rare. It's a very rare situation to find yourself in. Now, with this, if I don't have confidence, then you got to find a new CEO for HSBC in India. So,
should that be the headline?
But so therefore, I think the confidence levels are quite high, but we are also realistic, right? We are only going to tap into the opportunity that the external environment presents. If the external environment is go and running, then we will do better than what we are thinking. If it's contracts for whatever reason, we are a conservative bank, we will then also take appropriately conservative decisions and steps. We are prudent, as you mentioned, I think we liked our balance sheet to be totally clean, no hidden anything at all. So yes, we are confident. I think the next 5 years should belong to us, but it's a should. Whether it will or not will depend then on each quarter how we perform.
Well, we wish you the very best of luck for each quarter and for the next 5 years. And thanks as always, Hitendra, for speaking to us here on CNBC TV 18.
My pleasure, Shri.
Well, with that, it is time for us to wrap up this edition of On the Record. Stay tuned to CNBC TV 18. We've got plenty more coming up for you. The newsmakers and the conversations will continue. From all of us here for now, goodbye and many thanks for watching.
Hello and welcome. You're watching Global Lens. I'm Archana Solanki. Let's start with the top story that we're tracking this evening. Tensions are flaring between the US and Iran, with just 2 days to go before the 2-week ceasefire expires. Now, this comes after the US Navy attacked and seized an Iranian-flagged ship in the Strait of Hormuz, hours after US President Trump announced he was sending a team to Islamabad for talks. The US accused the vessel of trying to evade its naval blockade. In a social media post, Trump said, and I quote, "Stopped them right there in their tracks by blowing a hole in the engine room." End of quote. The US CENTCOM also claimed that repeated warnings were issued to the ship before striking. As per New York Post, Trump confirmed that a high-level US delegation, including Vice President J.D. Vance, Special Envoy Steve Witkoff, and Advisor Jared Kushner, they're already en route to Islamabad for the next round of negotiations. He said this hours after Iran's foreign ministry spokesperson said there were no plans for a new round of talks with the US following the vessel incident. The situation has grown more complex since the vessel incident and Iran saying no to talks for now. The timing is critical as the ceasefire is set to lapse on Wednesday, and Trump has warned of severe consequences if no agreement is reached. The fresh escalation has pushed crude oil prices over the $92 mark. Traffic in the Strait of Hormuz has returned to a standstill after Iran closed the waterway over the weekend. However, Kepler data shows over 20 ships passed through the Strait of Hormuz on 18th of April. This is the highest number of vessels that have crossed the waterway since 1st of March.
As of now, as I'm speaking to you, we have no plan for the next round of negotiations. No decision has been taken in this regard.
Although Iran has denied a second round of talks, negotiators from the US are expected to arrive in Pakistan's capital, Islamabad, where the security has been tightened with a 3-layered system deployed at key entry points across the capital. Around 20,000 police personnel supported by hundreds of elite commandos have been deployed on security duty. Authorities have also suspended all public and goods transport in Rawalpindi and Islamabad. Similar arrangements were made during the first round of talks. Another important headline that we have been tracking on CNBC TV 18 is the 2 Indian flagged tankers that were fired at in the Strait of Hormuz. They have reached India. The vessels were not damaged and no casualties have been reported. The ships were transporting crude oil to India when they were targeted by Iranian Revolutionary Guard gunboats off the coast of Oman. India's Foreign Secretary summoned Iran's ambassador after the incident. The Secretary expressed deep concern and issued a stern warning against any threat to Indian commercial shipping. India has also firmly rejected reports of any toll being imposed on vessels passing through the crucial waterway.
Sanmar Herald, Sepa Navy, you gave me clearance to go. Sepa Navy, this is Motoranga Sanmar Herald, you gave me clearance to go. My name second on your list. You gave me clearance to go. You are firing now. Let me turn back.
When the firing incident happened, this happened on Saturday. 2 of our ships came under firing. When this matter was reported to us, we took it up very strongly. We called in the Iranian ambassador. He had a meeting with the Foreign Secretary. The Foreign Secretary conveyed our deep concerns on this incident and also reiterated the point that we have been making, that we attach very high importance to the safety and security of our mariners, of commercial shipping, and that there should be unimpeded transit through the Strait of Hormuz. So these points were put forth, and the ambassador was told that these may be conveyed to authorities back home. We continue to be in touch with the Iranian authorities for the safety of our ships.
And we're now joined by journalist and senior fellow of Tilotoma Foundation, Vail Awar, to discuss the West Asia tensions. Mr. Awar, thank you for making time and speaking with CNBC TV 18. As we speak, the big development that's unfolding is that for the second time, the US delegation is flying to the Pakistani capital in hopes of a conversation with Iran. However, there is no confirmation from Iran as of now. How do you see these developments?
Thank you for having me. I believe the Iranian made it very clear that unless and until the United States remove the unilateral sanction they have imposed on the Iranian ship, then they will not go any negotiation. There is no point. And also, they also said whatever point has given by the American, this is dictation, and like they're putting the gun in their head and telling them accept it or no deal. So therefore, the Iranian made it very clear they will not. And that's what the American now saying, that the American president saying. He's sending his vice president, Wetchkov also, and Kushner, all of them, and heading toward Islamabad. So Iran is taking it seriously now. If the American coming up with some other points, they may discuss it. However, the current situation is like this, that the Iranians are not willing to negotiate with the United States, especially after the U.S. attacked also a commercial ship of the Iran in the international water. And Iran is waiting to see the safety of their staff there. And then they definitely will take action against the United States.
Right. You know, the ceasefire lapses in 2 days. It's a race against time. We have the two sides in which one side is not participating in ceasefire talks. President Trump in an interview to PBS News has said that on Tuesday, once the ceasefire lapses, bombs will begin to drop. How serious are these threats?
I think it's not very serious. We should not take the rhetoric of the President of the United States. In his last statement on Friday, you remember, he made 8 statements in 1 hour, everyone contradicting each other. And now he's coming up with the same. Now he's saying that we are expecting a breakthrough. If there is no breakthrough, then bomb will fall. And I think he wanted to convince the stock exchange market and the international agencies that there is a deal and there should be fall in the prices of gas and oil, and that is why he's giving all these assurances to the market, like he did on Friday. If the United States seriously wanted to discuss the matter, I think what he is discussing now, you can see that he's speaking of only the nuclear issue of Iran. But we all know that there was almost a deal on the nuclear issue before the war started in the 27th of Feb. So therefore, the United States to speak again, what he has done, actually, he has given Iran another chips to play with and to bargain globally what's called as the Strait of Hormuz.
Right. You spoke about the Strait of Hormuz, Mr. Awad. There are so many seafarers who are stuck there because what we saw recently, over the weekend, 2 Indian-flagged ships were attacked. We also saw the US seizing an Iranian ship. And of course, we have been consistently spotlighting the issue of seafarers who are stuck there. How vulnerable are the lives of people who are just doing their job because of these two sides who are at war?
Absolutely. I think what the United States have done by closing the Strait of Hormuz by Iran have created a global crisis. And in fact, that is why all these ships, there are 20 million barrels a day pass from the Strait of Hormuz. And now you have 12 ships going out. Iran on Friday announced the opening of Strait of Hormuz, and America was also supposedly to remove the siege of the Iranian water or the international water opposite to the Strait of Hormuz, but they have not done it. So that's why Iran closed it partially and asked all the ships, for any ship to pass, has to take a prior permission from the Iranian Navy before they give them the clearance. So therefore, there is a tension. There are mines in certain area. There is a problem, and the safety of all the ships, especially it's a commercial ships, it should be taken in consideration because this is a crisis it's a humanitarian crisis, not only because of the food security, oil security, but also the safety of the people on those ships as well.
Right. Mr. Awad, one final question. Who, if anyone in your view, can realistically de-escalate tensions between Washington and Tehran right now?
It's the United States president. In fact, if he wanted to stop this war, he can stop it right now. If he wanted to go, as he said, to go and sign a deal and get Nobel Prize from Islamabad, he can still do it. The problem is that there is an elephant in the room called Israel, and Israel is not interested in ending this war without achieving their objective. They are already preparing the war cells to continue if the talk fail, and that is why the Americans are getting worried. And I think the American president himself, with his popularity falling down in the United States and the oil prices are surging in US and approaching the midterm election, all this give you an indication that he's not in a sticky situation. He's more into a turbulent time, especially when the army also expert telling him that the reserved strategic weapon of the United States is declining. And I think he is in serious trouble if he does not find a way out to end this war.
All right. Thank you so much, Mr. Awad, for making time and speaking with CNBC TV 18. All eyes remain on this delegation from the US that's all set to land in Pakistan's capital. And of course, we have to wait and watch what Iran says as far as these talks are concerned. Thank you for making time. Let's move on to the other story that is about Lebanon, where Israel continues to demolish homes and other buildings, including educational institutions in villages in southern region. This comes even as a 10-day ceasefire remains in effect between Lebanon and Israel. The Israeli military has said its forces remain deployed in the area to counter continued activity of Hezbollah. Lebanon's president has appointed former ambassador to the US, Simon Karam, to lead negotiations with Israel. In a statement, the president said the goal of the talks is to stop hostilities, end the occupation and deploy the army to internationally recognized borders. UN vehicles were also seen operating on the Lebanese border. This comes after a French UN peacekeeper was killed in the southern region, as per Associated Press. Nearly 5,000 people have been killed across West Asia since the conflict began. Reports say at least 3,000 people have been killed in Iran and over 2,300 in Lebanon. All right, this is a story that impacts a lot of people, in fact, the whole world right now. Oil prices continue to swing amid West Asia tensions. Meanwhile, U.S. Energy Secretary Chris Wright says crude oil prices in the U.S. will remain elevated above $3 per gallon until next year. Here's a report on the backlash U.S. President Donald Trump is facing over rising prices of gas.
U.S. gasoline prices could remain above $3 a gallon until 2027. That's according to U.S. Energy Secretary Chris Wright. On Sunday, Wright told CNN he believed gas prices had peaked, but may not fall below the $3 level until next year. Gas prices have risen since the U.S. and Israel attacked Iran, and Iran retaliated against nearby countries. The rising energy costs added to political headwinds for President Donald Trump ahead of the November midterm elections. Trump's Republican Party will defend slim majorities in the Senate and House of Representatives.
This is an administration that decided on a war of choice in Iran and driving up these costs. I don't know if anybody thought about the consequences.
At a hearing last week, Democratic lawmakers excoriated Wright and the Trump administration for rising gas prices.
This president and cabinet made calculated choices to inflict this high-cost chaos on Americans.
So when are we really going to get $3 a gallon gas?
Well, I think that's going to be the up to how the negotiations go.
Trump administration officials have offered differing views on how gas prices may shift. Treasury Secretary Scott Bessent last week predicted gas prices would fall to the $3 per gallon range this summer.
So we will see, and I'm optimistic that during the summer we will see gas with a 3 in front of it sooner rather than later.
Trump himself has said that gas prices may remain elevated until November. The average price for a gallon of regular gas on Sunday was $4.05, according to an estimate by the AAA, compared to $3.16 a year ago.
Now, Japan's Mitsubishi Heavy Industries has inked its first warship export project with Australia. It will build 3 general-purpose frigates, versatile medium-sized warships designed for multi-mission roles such as anti-submarine warfare, air defense and surface combat. The delivery is scheduled for 2029. The deal, valued at around 10 billion Australian dollars, is part of Canberra's broader plan to invest up to 20 billion Australian dollars in a new fleet of frigates, replacing its aging Anzac-class ships. Mitsubishi Heavy Industries beat Germany's ThyssenKrupp Marine Systems to secure the contract, and its stock surged following the announcement. The agreement comes as Japan moves to ease restrictions on arms exports amid rising security concerns in the Indo-Pacific region, particularly over China's expanding military presence. And time now for a short break. Coming up on the other side, South Korean president is in India for a 3-day visit. And we'll also talk about the 7.4 magnitude quake that hit Japan. Tsunami warning has been issued. And Argentina's president has vowed to relocate the embassy to Jerusalem. That and much more on the other side. Welcome back. US President Donald Trump has said that Israel did not convince him to go to war with Iran. On Truth Social, he said, and I quote, "The results of October 7th added to my lifelong opinion that Iran can never have a nuclear weapon." End of quote. This comes a day after former US Vice President Kamala Harris alleged that Trump was pulled into the war Israel's Prime Minister Benjamin Netanyahu started. Trump added that the results in Iran will be amazing if Iran's new leaders are smart. An earthquake struck off northeastern coast. Tremors were also felt in Tokyo. We're talking about Japan, where following the 7.4 magnitude quake, a tsunami warning of up to 3 meters was issued for Iwate, Aomori and Hokkaido. Now, the Japan Meteorological Agency said the tremor occurred at a depth of 10 kilometers in the Pacific Ocean.
Tsunami warnings have been issued for Iwate Prefecture, the Central Pacific Coastal Area of Hokkaido Prefecture, and the Pacific Coastal Area of Aomori Prefecture. Residents in areas under tsunami warnings should immediately evacuate to higher ground or safe elevator locations. The government, immediately after the earthquake occurred, established an emergency liaison office at the Prime Minister's Office Crisis Management Center. Based on my instructions, we are making our utmost to assess the extent of the damage, carry out emergency measures for disasters, including rescue operations, and provide timely and accurate information to the public.
South Korean President Lee Jae-myung is in India for a 3-day visit. He held bilateral talks with Prime Minister Narendra Modi to deepen economic ties between the two nations. He is the first South Korean president to make a state visit in 8 years. During a meeting with the Korean community in Delhi, Lee said economic cooperation between the two nations remains low and sees great growth potential. The agenda of the visit is to double bilateral trade to $50 billion by 2030 with focus on shipping. Remember, last year, bilateral trade between the two countries stood at around $26 billion amid global supply chain instability due to West Asia tensions. South Korea is looking at India as an important strategic partner, especially for naphtha supplies. Now, Argentina's president visited Israel, where he reiterated his pledge to move the country's embassy from Tel Aviv to Jerusalem. The move, if implemented, would be significant as Jerusalem remains at the center of the Israel-Palestine conflict, with both sides claiming it as their capital. Only a handful of countries have embassies in Jerusalem, making Argentina's stance a clear diplomatic signal. During the visit, the president of Argentina met Israeli Prime Minister Benjamin Netanyahu with talks focused on strengthening security and strategic cooperation. The two sides also discussed deepening bilateral ties, including economic and technology partnerships.
Argentina took clear initiatives consistent with the values that bring us together here today. We signed the Memorandum of Understanding for Democracy and Freedom between Argentina and Israel, and we designated Hamas, Iran's Revolutionary Guard, and the Lebanon, Egypt, and Jordan branches of the Muslim Brotherhood as terrorist organizations. And finally, we reaffirmed our willingness to move the Argentine embassy to Jerusalem as soon as conditions allow. We consider it necessary, but above all, just. As the Holy Scriptures teach us, the world stands on 3 things: justice, truth, and peace. That is the hemisphere we want to build together in the Americas.
FBI Director Kash Patel is set to sue The Atlantic magazine over a report alleging he has a drinking problem. During an interview with Fox News, he said, and I quote, "If you want to attack my character, I'll see you in court," end of quote. Last week, the media outlet had claimed that 24 people flagged concerns over his drinking troubles, and some fear that will put country at risk. Patel's lawyer said they had warned the magazine, yet went ahead with the false reporting. Artificial intelligence startup Cursor is reportedly in talks to raise $2 billion at a valuation exceeding $50 billion. The round is expected to be co-led by VC with participation from NVIDIA and Thrive Capital. The move reflects a growing momentum in the AI coding space, where firms like Google, Anthropic, and OpenAI are also rolling out similar tools in November. Cursor had raised $2.3 billion at a valuation little over $29 billion, preceded by a $900 million funding round earlier last year. Protesters burned an effigy of U.S. President Donald Trump in the Philippines after Manila and Washington launched their largest ever joint military exercise. The protests were driven by fears that the drills could draw the Philippines into U.S. conflicts. The exercises come amid rising tensions between Manila and Beijing in the South China Sea, with the Philippines accusing China of increasingly aggressive actions, claims that Beijing denies. More than 17,000 troops from 7 nations are taking part in the drills, which run through May 8th across multiple locations in the Philippines. A major fire broke out at a factory in Tamil Nadu, claiming 23 lives and leaving 6 people injured. In India, the blast occurred at a fireworks manufacturing facility where the impact was so severe that multiple workers were trapped inside the building. Emergency teams were rushed to the spot and rescue operations continued through the day. Authorities said the owner of the unit is currently on the run and the facility's license is likely to be cancelled. Early investigations are looking into possible safety lapses, including whether proper storage and handling norms were followed. Protesters also took to the streets demanding action over safety lapses following the incident. A mass shooting in Louisiana has shocked the U.S. after a gunman opened fire, killing 8 children, 7 of whom were his own. 2 women were also injured in this incident. The attacker later fled the scene, carjacked a vehicle and was shot dead by police after a chase.
I can tell you the suspect in this case, Shamar Ed Elkins, has been identified. He is the father of 7 of the children that were killed in this house. There is an 8th child that was also killed, as well as the 2 females that were involved. Both of them had gunshot wounds. One of them is still in life-threatening condition. The other is in serious condition, but is expected to recover.
Russia's Federal Security Service said it has arrested a German citizen over allegations of carrying a bomb in her rucksack. The security services claim this was part of the false flag operation directed by the Ukrainian intelligence. An unverified footage shows a woman lying in a car park. It has claimed that the bomb was equivalent of 50 kilograms of TNT. Rumen Radev's Progressive Bulgaria party has won Bulgarian election with a landslide victory. His campaign focused on criticizing the European Union and emphasized anti-corruption efforts. Appealing to a broad base of voters, he has also said that Europe has fallen victim to its ambition to be a moral leader in a world without rules.
You should know that Bulgaria will pay efforts to continue its European path, but believe me, strong Bulgaria in strong Europe needs critical thinking, needs pragmatism, because Europe has fallen a victim to its own ambition to be a moral leader in a world without rules. So what Europe needs right now is, again, critical thinking, pragmatic actions, and good results, especially building a new security architecture and paying a lot of efforts to recover its industrial power and competitiveness. That will be the main contribution of Bulgaria to its European mission.
British Prime Minister Keir Starmer is facing his biggest political scandal till date. He is under fire over his judgment about senior appointments within his cabinet. The issue centers around senior Labour figure Peter Mandelson, who was appointed as the ambassador to the US. The release of the Epstein files showed a deep relationship between Mandelson and the convicted sex offender Jeffrey Epstein. With the Prime Minister facing questions in Parliament over the scandal, the British public appear divided on Starmer's performance as Prime Minister.
I think he's doing quite terribly, but I do think that because of the parliamentary system we have, he will last until the next general election. No matter how unpopular he is after the locals as well, when Labour are going to get probably a big thrashing, I think Keir Starmer is going to remain in place.
I think he probably will survive. Obviously don't know all of the details. There might be sort of some things that come out of it that we don't yet know, but I think that, yeah, he's probably going to carry on for now, and I'd expect him to continue as Prime Minister. I think he's doing a good job. I think it was a wrong decision to appoint Peter Mandelson in the first place, given Peter's track record. Probably should have kept a distance from that, really. But overall, it doesn't affect my opinion of him. I think he's still doing a good job.
There's no good candidate as a replacement for him, so the Labour will disappear into a mess if it fights over a new leader.
Jeff Bezos-backed Blue Origin has said its New Glenn rocket has landed successfully after its launch. This marks the first landing of the rocket's reused booster. However, the rocket failed to deploy the Space Mobile Communications satellite it was carrying into the correct orbit. The rocket lifted off from Cape Canaveral, with the booster touching down around 10 minutes later. North Korea test-launched upgraded short-range ballistic missiles in the presence of the country's Supreme Leader Kim Jong-un. 5 improved ground-to-ground tactical ballistic missiles were launched. This comes after South Korea and Japan said that Pyongyang fired projectiles into the East Sea. South Korea has said that it will respond overwhelmingly to any provocation. And with that, it's a wrap on another edition of Global Lens. Thank you for watching.
Hello and welcome to On the Record with me, Shireen Bhan. It's been a big year for banking. We've seen a lot of deals take place, But it's also a difficult environment that the banking sector finds itself in as the war in West Asia continues to rage on. It is taking a toll and an impact on investment decisions. For HSBC in India, it has been a strong year. They've grown both as far as profits are concerned and, of course, improved on operational efficiency, and doing that all with great provisioning. Joining us now to talk about the road ahead is HSBC's Hitendra Dave. Hitendra, always a pleasure. Many thanks for joining us here on CNBC TV 18. Before I talk to you about all things HSBC, we've just seen the news coming in from the RBI, so let me address that. And for the benefit of our viewers who are just tuning in, this is what the RBI has done. It has withdrawn the circular that it had issued on the 1st of April, which was ostensibly to try and stabilize the depreciation of the rupee. Now, what the RBI has done today is that corporates can now rebook cancelled hedge contracts. This had been disallowed in the April 1 circular. Banks can quote and offer corporate hedges in the offshore market. Of course, the overall cap of 100 million still remains. Let's start by what the impact and the implications will be of the relaxations that the RBI has now announced.
First of all, thank you, Shireen. Always good to be speaking to you. No, I think the governor said it in his post-policy press conference where he was asked about these measures, that unusual times, unusual volatility, the Indian rupee perhaps moving almost singularly. On days where the rest of the pack was weakening, we were weakening. On the days where the rest of the pack was not weakening, but we were still weakening. And their analysis, their data suggested that if they were to put some wedge between the onshore markets and the offshore markets, it could help. And the data would seem to suggest it has at least helped calm some nerves out there, because as we all know, currencies can be, you can just get into your own self-created spiral a little bit, and therefore if the market regulator feels that spiral needs to be broken, I think they've broken it. But I think they had clarified that it is to address an unusual circumstance, and today's withdrawal of the April 1 circular would seem to suggest that hopefully this is the first of the overall withdrawal that they will do, so that the market liquidity, the access of corporates, access of banks, and access of all stakeholders in India and outside India to a deeper and more liquid market goes back.
But do you believe that today's relaxations are on account of the fact that the rupee has stabilized somewhat, and that's given the RBI the comfort to take this decision? Or do you believe that it is because of feedback coming in from stakeholders? And we've seen that many have been saying that this was perhaps a little too harsh, maybe almost sledgehammer-like. Which of the two do you believe could have been the reason behind today's move?
Well, I think it will be a mix of both. Yes, there was feedback. I think the central bank immediately after the circular and in the days that have followed has been in constant touch with the market. And I think even while wanting to achieve the regulatory objective of putting a curb on speculative positions or very large positions, in the process, when you come out with a circular like that, even bona fide transactions could also get curtailed. There were also a situation where a lot of us had deals out with our own counterparties.
So it was impacting you?
No, I think it was just making it more cumbersome to unwind those transactions, and which is what they have. So they have taken away some of those things which remove the cumberness, which remove the friction without adding to the demand for dollars just through this process, is my sense.
Okay.
So I think it will be a mix of both feedback as well as the desire to be a opening of the market slowly.
But, on the back of what we've already seen the RBI do and today's decision and the move that we've seen in the currency market, what's the outlook now as far as the currency is concerned?
Yes, so I think remove these circulars and the last 2 weeks of because ultimately in the long run, any asset, any currency is a function of demand and supply. You can put a halt to temporary demand, which is what these measures did. You can add some supply through some other measures. We are reading about OMC's demand having been taken out of the market or whatever. But ultimately, I think the currency was weakening not just in the month of March. March was accelerated, but through the last many months. And that I think most people think partly was caused by this persistent selling in the stock market by FPIs, which was almost a, on a good day, $100 million, on a good day, almost going up to 500, 600, $700 million. And it was almost daily, right? So, and that demand had to be met in the market. Usually you would meet that demand through either FDI coming in.
Yeah.
Now we all know that the net FDI number is turning out to be relatively insignificant, while the gross numbers are relatively unchanged and healthy, but the outflow has taken away the impact from a currency perspective. Yeah. And I think the third thing, which is more technical, is that because there was a like I said, currency was in a self-fulfilling cycle of expectations, which caused exporters to hold back dollar supplies and importers to accelerate dollar demand. So this combination has to be, one of the three of these has to break, or two of the three of these, or three of the three of these have to break for the currency to fundamentally change its direction. We are seeing early signs of FPI selling tapering off. I mean, just let's not make too much of 1 week, but it looks like at least, and you hear from experts that perhaps in any case we are coming towards the end of that because of valuations or whatever. So yes, you would expect currency to be more range bound than it was, but the bias for slow weakness will change only when either the FPIs come back, or you have gross FDI, and the exporter-importer narrative will follow these two, as opposed to lead these two.
So let's address both the FPI as well as the FDI issue. And, it could be a function of valuations. It could also be a function as far as the currency is concerned that FPIs will consider in the midst of a whole host of other factors. But do you believe that we could perhaps have seen the bottom, the worst, as far as the FPI selling is concerned? What do you think could turn sentiment?
Well, the best way to turn sentiment is to report good growth in earnings, right? I mean, if you show good growth in earnings, the kind of earnings growth that historically India has delivered, mid-teens and above, why would people not come back? Because India offers one of the most broadest markets in the world, right? Domestic market economy, IT economy, consumer economy, a very thriving financial services sector, infrastructure sector, real estate sector. You don't get too many markets in emerging markets that have this broad a range. And that's what has attracted FPIs over the years to India. So you really want this to change? I think track earnings. The moment you see earnings growth breaking out of the last 15, 18 months of, high single digit, low double digit kind of numbers, it'll come back. Or we need FDI. I think FDI, because it's much more stable, much more predictable. We need a couple of sectors here where global boards start feeling a FOMO, right? We have to create a sense of FOMO about our market.
So which could those sectors be where, between the government and all other stakeholders, in your words, we can create FOMO?
No, we've seen, like you mentioned in your opening comments, right? We've seen significant FDI in the broader financial services sector. We have seen significant money coming into NBFCs, significant money coming into banks, exactly. And it's not over yet, right? I mean, there are other banks which are still in the process of being identified for appropriate buyers or suitors. So in the financial services sector, yes. I think everyone thinks the next round of growth for India has to come from manufacturing, whether manufacturing for the domestic consumer base or manufacturing for the world, and especially with all these FTAs being signed with the UK, with EU, let's see what happens with the US tariff agreement. So I think it's very difficult to say this sector will drive, but you can sense that last 15 to 18 months, both people in the policy making circles, people in the business circles, I think are looking for that one thing to create that sense of excitement for international investors.
But speaking of sentiment at this point in time, as I pointed out, the war in West Asia continues. We don't know how quickly this will be resolved or whether this is going to continue to be a protracted battle. How is this starting to impact boardroom decisions? Are people now saying, look, let's wait it out, let's wait to see how this settles and then make fresh moves? Or are they saying, let's get on with things because we don't know how this is going to end?
I think there'll be two types. One is if there are strategic markets, right? I mean, you will continue to invest in that strategic market and see through this war situation, because you don't go into a market, commit lots of money, and then because of this you withdraw or you stop investing. That's not how real money or serious money considers itself, right? If you haven't made that commitment, would you go a little slow? Yes, possibly yes. But my own sense is, and our own surveys seem to suggest that, over the last 7, 8, 9 years, the world has got so used to such unusual periods. COVID was perhaps even more unusual than what we are living through. Then we had the tariff-related uncertainty for most of last year, and then we have, the Iran-US conflict out there. I think most boardrooms have become a little tougher on that side, that if we stop at every news flow, at every event,
we're not going to get anything done.
We are not going to get anything done. So I think at least our surveys, our research, our conversations seem to suggest that the world is not going to put things on pause. They might look for higher returns, purely because some of the risks have now surfaced. And now that the risks have surfaced, you want that appropriately captured in the return metrics.
So how do you think India finds itself positioned at this point in time? If you look at what's happening in some of the other high growth markets or high growth regions, they have been very directly impacted by the West Asia conflict. So do you believe India stands at an advantage today on account of that? Or do you believe that, because of the supply chain disruptions, because of the uncertainty, etc., the risks, even for India, have gone up and will then be factored into these investments decisions?
So, Shireen, I think it's almost impossible to say risks have not gone up for any part of the world. I mean, there will be some countries here, there, which might even be beneficiaries of the development since the end of February or so. But overall, global risks have gone up, and that's what is reflected in so many measures of risk. That said, in the context of India, see, why do people come to India? That hasn't changed. Okay, they come to India because we have a large domestic market. They come to India because, by and large, law and order is very acceptable compared to countries at our levels of income. They come to India because of the soft power that India wields in terms of the number of engineers we have, the number of doctors we have, the number of nurses we have, etc. They also come to India because of the talent in if I can call it modern economy, like IT and potentially AI, etc. Right? So that hasn't changed. And I would say that at the margin, because it's impossible to recreate an economy with 1.4 billion people, or to create all the other factors that I've listed, right? At the margin, you are slightly better off. You are worse off than where you were 6 months back or so. But at the because there are so many economies which have much bigger problems. We have a problem. Our fisc is definitely going to be much more challenged than what we thought when the budget was presented. Our trade deficit or current account deficit likely to be more challenged also. But that's a 1 year, 2 year challenge. It is not that you are permanently looking at India now going back to some high inflation, high fiscal deficit, high current account deficit kind of days. So I would actually say time is for us to somehow or the other make use of this period. I know it sounds almost too difficult to rose-tinted or whatever, but we will need to do this because the country does need the FDI too. As I mentioned in the previous question,
So, and that's what I want to double down on. What can be done to use this crisis? I mean, as they say, never waste a crisis. Yes. What can be done to use this crisis? We've seen, for instance, the government amend Press Note 3, making it easy for FDI to come in from China. Any tangible next steps?
CEO after an eventful 15-year term. John Turness, who currently holds hardware engineering, will take charge from September. Cook will stay on as executive chairman.
Crafted Naval Corporation and Mirai Asset have launched a 6,000 crore rupee fund for high-growth Indian startups. The Unicorn Growth Fund will invest in sectors like consumer internet, AI and deep tech. Mirai Asset Venture India will manage the fund, aiming to build future Indian technology champions.
Rainmatter and TurboStart co-led a $2.5 million pre-Series A investment in Lawyered, a legal infrastructure platform for mobility. Existing investor Finvolve has doubled down with a follow-on. Lawyered covers over 2 million vehicles and works with 800 plus businesses across India.
AWE Funds has made an undisclosed investment in water tech startup Digital Pani. The fresh funds will be used to strengthen the firm's tech stack, enhance real-time monitoring and predictive capabilities, and support expansion.
Amazon strengthens its partnership with Anthropic, plans to invest another $25 billion into the AI company. Anthropic agrees to buy $100 billion worth of compute and chips from Amazon over the next 10 years.
Well, those were the headlines we've been tracking for you this evening on What's Brewing. As artificial intelligence moves beyond screens into the real world, a new layer is becoming critical: the human data that trains machine to see, move, and interact like us. Human Labs is betting big on this opportunity, committing $20 million to build what it calls the human intelligence layer for physical AI, capturing real-world human behavior and voice data across geographies to power the next generation of robots and AI systems. With deployments spanning India, Southeast Asia, Latin America, and the Middle East, the company is positioning itself at the heart of a fast-growing global market for AI training and validation. Joining me now is Manish Agarwal, the co-founder of Human Labs. Manish, welcome to Startup Street. You're committing $20 million to build what you call the human intelligence layer for physical AI. Break that down for us. What exactly does Human Labs do, and why is this layer so critical right now? What is broken in how AI systems are currently being trained?
Thank you for having me. It's very simple. You will have robots. Robots have form factor, robots have brain, and robots have voice. How will you interact with them? And somebody has to really train them so that they can walk, they can think, they can decide, and they can converse among themselves, and they can converse with humans. Human Labs is working at the cross intersection of the how to train brain and how to impart voice to robots. That's the fundamental space which we are really working. And for that, you can't get data on internet, like for coding or for text. You could scrape internet, but here you can't do that. You need to really build from messy, noisy, real-world environments. You have to collect data, process it, create high-quality signals which can go to robotics labs. And that's what Human Labs is doing across Global South.
All right, Manish, we've heard a lot about generative AI, but physical AI is still emerging. So how big is this opportunity, and where are we seeing real-world use cases today?
My point of view is you will have in Western markets robomates, and for robomates to work properly, you need to train them in real-world environment and simulation environment. You will have robots in environments where it's unsafe for human to work, like facade cleaning, very simple example, very tall building. You need to really train that. You need to have on manufacturing, you need to have on construction. So these are some of the use cases which are going to really happen. And if robots are going to be right, you need to train them.
Sure. Manish, you're building ego-centric first-person data sets, capturing how humans see, move, and interact. How is this fundamentally different from existing AI training data? And how do you really ensure quality, accuracy, and validation at scale, especially, when you're dealing with such complex real-world data?
Let me just make it very simple. Ego-centric means what you are seeing from your eyes, right? And the rest of the data which you look at, let's say you're using ChatGPT or Claude. If you're a developer, you're using code, or if you are just creating a business research, you do a text. While when you want to take a robo, it's like a child from 3 months to 5 years, you train how to walk, how not to collide, how to kind of really learn how to pick up a glass, how to keep it from one place to another place. All of that data needs to happen through your hands. And that's what is ego-centric data, which is very different from training for text and code.
All right. Manish, voice is becoming a key interface for AI. You're working across 33 languages and dialects. How big an advantage is that, especially in diverse markets like India and Southeast Asia?
As we say in India, every 6 kilometer water changes, 60 kilometer voice dialect changes. And
Yes.
if you want a lot of grassroots adoption to happen, and if you want to talk to an AI, you are not going to type, you're going to talk. And if you then, if the agent can't understand your dialect, your accent, then they will hallucinate. Fundamentally, if you think that the AI adoption will spread to, let's say in India, 800 million people who have smartphones, the voice is only going to be the means of interaction and interface. And that's why it is important to map all 744 districts dialects in India, just talking about India.
Okay. Manish, you're deploying capital across India, Southeast Asia, Latin America, and the Middle East. Why focus on the global South? And what kind of demand are you seeing from global AI companies? Who's your typical customer? Also, you're launching robotics labs. What role will simulation and world models play in accelerating physical AI? And how do you integrate real-world data with simulated environments to train smarter systems?
Lots of questions very quickly. I know we are short on time.
Yes.
You will find environments proxy in global south because it's very expensive to have dollar value per hour of human in Western markets. So Western houses go to Brazil with a proxy, go to electronics factory in India, which is a global setup. You can do that. Large mechanized agriculture farms you can find again in Brazil. So you need to find proxy environment. Your question around saying that what is simulation and what's there. Once you have real world data, you need to kind of really look at, and if you want to be ahead of the curve, see how that data is being used for robot training, put that robot into a simulation environment, see the gap, and then go back and collect more data. That's why you need to have your own test, so that you are not just a data set provider, but you're a strategist.
Okay. One final question, if you could quickly answer that. What are the key monetization levers here? Data, validation of full stack infrastructure? And if you could also share your revenue targets for the future, what does the road to profitability look like?
This business fundamentally is robotics labs or frontier labs who require an immense amount of data. 1 million hours of data is also very, very small requirement from some of these big, large labs. So they are the customers in the US. They want to really train using real world and simulation data. That's what we are providing. The margins are a function. Margins are a function of which geography, what quality, what kind of task. So it's not a steady state. It's very, very, very new. But from a profit point of view, it's going to be a profitable business because fundamentally you are trying to create your data IP, and data IP you can do multiple things. From a revenue targets point of view, we believe in next 12 months, we should be 100 million in ARR, and that's what we are aiming for.
All right. All right, 100 million in ARR by next year. Manish, we've completely run out of time, but many thanks for joining us on Startup Street and wish you the very best with all your aggressive growth plans.
Thank you so much. Thank you once again for having me.
On the hot seat today, Avishkar Capital is doubling down on deep tech, backing Bangalore-based Jnani AI with a $10 million Series B round. The company sits at the intersection of enterprise AI and customer engagement, already processing over 30 million voice interactions a day across 12+ languages. Now, with more than 200 enterprise clients, including large global companies, Jnani AI is building a full-stack voice AI platform from speech recognition to agentic AI to automate complex customer interactions at scale. Now, this fresh capital will fuel its global expansion and push deeper into generative AI capabilities. Joining us now to talk about the growth roadmap is Ganesh Gopalan, the co-founder of Jnani AI. And also with us on the show is Shilpa Maheshwari, the MD of Avishkar Capital. Thank you so much for joining us on the show today. You know, Ganesh, let me come to you first, right? You started Jnani AI back in 2016, well before voice AI became mainstream, right? What was the gap that you saw in the enterprise customer engagement, especially in a multilingual market like India, which makes it a lot more complicated, right? So how critical is your full stack approach in building a moat, especially as global players enter the space?
Yeah, firstly, thanks for having me here. So our core differentiator is really to have control of each and every layer of the AI pipeline. So we build our own models right from your streaming the audio to your speech recognition to your SLMs for specific domains and moving on to your text to speech. What we are also building today is something rather unique, right? As part of the India AI mission, we are also building unique voice-to-voice models. This is the next generation of voice AI agents. So these are the technologies that really help us differentiate in the market. And that's why we are winning compared to many other, I would say, players. And it's easy to do a POC these days, but when you do voice AI agents at scale, that's when your systems are really tested. And that's what we have achieved over time.
Absolutely. And talking about what you've achieved, right? You've processed over 30 million voice interactions daily across 12 languages. What were the sort of outcomes or impacts that you saw for your enterprise customers in terms of like cost savings, efficiency, and experience?
So I think first and foremost, let's take some specific example, right? For a lending company that we are working with, this is one of the largest private banks in India. So what they are seeing is they are able to disburse more than 20% more than they used to, spending the same amount of money. Secondly, they are able to now collect. They've collected more than a few $1 billion using our technology in the last few months, and doing that at an incredible scale. We are also solving some of their fundamental customer service problems. They are seeing CSAT improved by more than 25%. So what we are really seeing is improvement of customer end outcomes at scale. And that's really possible because we are building these sovereign AI systems, which are really adding value and making sure that the customer outcomes are exponentially increased.
Sure. And, Shilpa, if I could bring you into this conversation, right? What sort of stood out about Jnani AI for you at this stage? Was it the scale of deployments, the full stack tech capability, or the clear monetization through enterprise use cases?
What got us excited about Jnani is its deep tech focus and the way it's building sovereign AI models, which are not only benchmarked to be the best in the industry, but also deployed at scale, as Ganesh pointed out, with proven business outcomes. And of course, the fantastic set of founders that we have in Ganesh and Anant.
Absolutely. So that's the reason you're betting big on this company. But, Ganesh, $10 million in the Series B round led by Avishkar. How are you going to spend these funds? It's mainly on global expansion and generative AI capabilities, right? So how are you going to spend the funds on this?
See, we are a deep tech company, right? So I think the most important part is the talent. And what we're really doing now is to build the organizational talent to get to the next scale. So since we are on live TV, if there are folks that are looking to build foundational models that are going to be the best in India and the rest of the world, feel free to apply to us. We are looking for the best talents, the best brains in the industry.
All right. And Shilpa, you have spoken about deep tech as a driver of impact, right? How does an enterprise-focused voice AI company like Jnani AI sort of align with your broader mandate of driving inclusion across the global south?
It's a very interesting question. In fact, we at Avishkar get this a lot many times. So I'll tell you how we look at it. Deep tech is a structural growth engine for India, I believe, as a nation. Increases productivity, expands inclusion, and therefore we believe the way artificial intelligence also comes into play, it creates a huge opportunity to flatten the pyramid of knowledge, access, and intelligence, and opens tons of opportunity for the most marginalized sector, I would say. So in fact, if you go back in time and you look at, 20 years, 25 years back when internet came into play, it was considered premium, right? Not for all and sundry, only for the top few people in the ecosystem. But fast forward to now, and every strata of our society has been touched by that. So I am seeing artificial intelligence innovation is also going through that space, and maybe 10 years down the line, it will become just like we have internet. So we believe it's a very structural need for the society, and we need to be participating in this thing because it's very, very critical for us as a nation.
Absolutely. And Ganesh, you're already operating at significant scale with enterprise clients, right? So if you could sort of give us a sense of your current revenue run rate and what are the targets that you've set for yourself and where do you hope to end this year?
So I can just tell you that we grew our recurring revenue by about 3x this year. And hope to get it to a stage of, next year we're planning to grow by about 5x. So I think we've seen incredible demand. We added about 120 new MSA logos, to our kitty last year. And we are sitting on, a huge pipeline where, we expect to close at least 250 to 300 logos this coming year. So exciting times for us, and looking forward to, getting this scale journey up.
All right, exciting times for you. And global expansion, which countries are you looking at?
So we already announced this partnership where we are working with, a conglomerate, working with a Japanese company and a Philippine company together and expanding in the Far East. We also have some amazing customers in the US, where we are adding immense value. We're also growing in the Middle East as we speak. So essentially what we are really doing here is using our deep tech to build some amazing models and having the engineering to make sure that we do inferencing at scale at the maximum possible efficiency.
Absolutely.
And several global FANG companies have appreciated the fact that, our engineering is so advanced and the fact that we are able to extract, for example, the maximum out of a single GPU. So I think, that is really holding us in place, irrespective of the market that we are entering.
So already tapped into a lot of those global markets there. All right, Ganesh and Shilpa, thank you so much for taking time out and being here with us on Startup Street.
Thank you.
Thank you.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
some way on commercial airline traffic if a lot of airplanes aren't flying because they don't have enough fuel.
I agree, but let's be positive about something that people want to be negative about. We know that gasoline is...
Hello and welcome. You're watching Global Lens. I'm Archana Solanki. Let's start with the top story that we're tracking this evening. Tensions are flaring between the US and Iran with just 2 days to go before the 2-week ceasefire expires. Now, this comes after the US Navy attacked and seized an Iranian-flagged ship in the Strait of Hormuz, hours after US President Trump announced he was sending a team to Islamabad for talks. The US accused the vessel of trying to evade its naval blockade. In a social media post, Trump said, and I quote, "Stopped them right there in their tracks by blowing a hole in the engine room." End of quote. The US CENTCOM also claimed that repeated warnings were issued to the ship before striking. As per New York Post, Trump confirmed that a high-level US delegation, including Vice President J.D. Vance, Special Envoy Steve Witkoff, and Advisor Jared Kushner, they're already en route to Islamabad for the next round of negotiations. He said this hours after Iran's foreign ministry spokesperson said there were no plans for a new round of talks with the US following the vessel incident. The situation has grown more complex since the vessel incident and Iran saying no to talks for now. The timing is critical as the ceasefire is set to lapse on Wednesday, and Trump has warned of severe consequences if no agreement is reached. The fresh escalation has pushed crude oil prices over the $92 mark. Traffic in the Strait of Hormuz has returned to a standstill after Iran closed the waterway over the weekend. However, Kepler data shows over 20 ships passed through the Strait of Hormuz on 18th of April. This is the highest number of vessels that have crossed the waterway since 1st of March.
As of now, as I'm speaking to you, we have no plan for the next round of negotiations. No decision has been taken in this regard.
Although Iran has denied a second round of talks, negotiators from the US are expected to arrive in Pakistan's capital, Islamabad, where the security has been tightened with the 3-layered system deployed at key entry points across the capital. Around 20,000 police personnel supported by hundreds of elite commandos have been deployed on security duty. Authorities have also suspended all public and goods transport in Rawalpindi and Islamabad. Similar arrangements were made during the first round of talks. Another important headline that we have been tracking on CNBC TV 18 is the 2 Indian-flagged tankers that were fired at in the Strait of Hormuz. They have reached India. The vessels were not damaged and no casualties have been reported. The ships were transporting crude oil to India when they were targeted by Iranian Revolutionary Guard gunboats off the coast of Oman. India's Foreign Secretary summoned Iran's ambassador after the incident. The secretary expressed deep concern and issued a stern warning against any threat to Indian commercial shipping. India has also firmly rejected reports of any toll being imposed on vessels passing through the crucial waterway.
Motor tanker Sanmar Herald, Sepa Navy, you get me clearance to go. Sepa Navy, this is Motor tanker Sanmar Herald, you gave me clearance to go. My name second on your list. You gave me clearance to go. You are firing now. Let me turn back.
When the firing incident happened, this happened on Saturday. 2 of our ships came under firing. When this matter was reported to us, we took it up very strongly. We called in the Iranian ambassador. He had a meeting with the foreign secretary. The foreign secretary conveyed our deep concerns on this incident and also reiterated the point that we have been making, that we attach very high importance to the safety and security of our mariners, of commercial shipping, and that there should be unimpeded transit through the Strait of Hormuz. So these points were put forth, and the ambassador was told that these may be conveyed to authorities back home. We continue to be in touch with the Iranian authorities for the safety of our ships.
And we're now joined by journalist and senior fellow of Tilottama Foundation, Vail Awad, to discuss the West Asia tensions. Mr. Awad, thank you for making time and speaking with CNBC TV 18 as we speak. The big development that's unfolding is that for the second time, the US delegation is flying to the Pakistani capital in hopes of a conversation with Iran. However, there is no confirmation from Iran as of now. How do you see these developments?
Thank you for having me. I believe the Iranian made it very clear that unless and until the United States remove the unilateral sanction they have imposed on the Iranian ship, then they will not go any negotiation. There is no point. And also, they also said the whatever point has given by the American, this is dictation, and like they're putting the gun in their head and telling them accept it or no deal. So therefore, the Iranian made it very clear they will not. And that's what the American now saying, that the American president saying. He's sending his vice president, Wetchkov also, and Kushner, all of them, and heading toward Islamabad. So Iran is taking it seriously now. If the American coming up with some other points, they may discuss it. However, the current situation is like this, that the Iranians are not willing to negotiate with the United States, especially after the U.S. attacked also a commercial ship of the Iran in the international water, and Iran is waiting to see the safety of their staff there, and then they definitely will take action against the United States.
Right. You know, the ceasefire lapses in 2 days. It's a race against time. We have the two sides in which one side is not participating in ceasefire talks. Trump, in an interview, President Trump, in an interview to PBS News, has said that on Tuesday, once the ceasefire lapses, bombs will begin to drop. How serious are these threats?
I think it's not very serious. We should not take the rhetoric of the President of the United States. In his last statement on Friday, you remember, he made 8 statements in 1 hour, everyone contradicting each other. And now he's coming up with the same. Now he's saying that we are expecting a breakthrough. If there is no breakthrough, then bomb will fall. And I think he wanted to convince the stock exchange market and the international agencies that there is a deal and there should be fall in the prices of gas and oil, and that is why he's giving all these assurances to the market, like he did on Friday. If the United States seriously wanted to discuss the matter, I think what he is discussing now, you can see that he's speaking of only the nuclear issue of Iran. But we all know that there was almost a deal on the nuclear issue before the war started in the 27th of Feb. So therefore, the United States to speak again, what he has done, actually, he has given Iran another chips to play with and to bargain globally, what's called as the Strait of Hormuz.
Right. You spoke about the Strait of Hormuz, Mr. Awad. There are so many seafarers who are stuck there because what we saw recently, over the weekend, 2 Indian-flagged ships were attacked. We also saw the US seizing an Iranian ship. And of course, we have been consistently spotlighting the issue of seafarers who are stuck there. How vulnerable are the lives of people who are just doing their job because of these two sides who are at war?
Absolutely. I think what the United States have done by closing the Strait of Hormuz by Iran have created a global crisis. And in fact, that is why all these ships, you know, there are 20 million barrels a day pass from the Strait of Hormuz. And now you have 12 ships going out. Iran on Friday announced the opening of Strait of Hormuz, and America was also supposedly to remove the siege of the Iranian water or the international water opposite to the Strait of Hormuz, but they have not done it. So that's why Iran closed it partially and asked all the ships, for any ship to pass, has to take a prior permission from the Iranian Navy before they give them the clearance. So therefore, there is a tension. There are mines in certain area. There is a problem, and the safety of all the ships, especially it's a commercial ships, it should be taken in consideration because this is a crisis it's a humanitarian crisis, not only because of the food security, oil security, but also the safety of the people on those ships as well.
Right. Mr. Awad, one final question. Who, if anyone in your view, can realistically de-escalate tensions between Washington and Tehran right now?
It's the United States president. In fact, if he wanted to stop this war, he can stop it right now. If he wanted to go, as he said, to go and sign a deal and get Nobel Prize from Islamabad, he can still do it. The problem is that there is an elephant in the room called Israel, and Israel is not interested in ending this war without achieving their objective. They are already preparing the war cells to continue if the talk fail, and that is why the Americans are getting worried. And I think the American president himself, with his popularity falling down in the United States and the oil prices are surging in US and approaching the midterm election, all this give you an indication that he's not in a sticky situation. He's more into a turbulent time, especially when the army also expert telling him that the reserved strategic weapon of the United States is declining. And I think he is in serious trouble if he does not find a way out to end this war.
All right. Thank you so much, Mr. Awad, for making time and speaking with CNBC TV 18. All eyes remain on this delegation from the US that's all set to land in Pakistan's capital. And of course, we have to wait and watch what Iran says as far as these talks are concerned. Thank you for making time. Let's move on to the other story that is about Lebanon, where Israel continues to demolish homes and other buildings, including educational institutions in villages in southern region. This comes even as a 10-day ceasefire remains in effect between Lebanon and Israel. The Israeli military has said its forces remain deployed in the area to counter continued activity of Hezbollah. Lebanon's president has appointed former ambassador to the US, Simon Karam, to lead negotiations with Israel. In a statement, the president said the goal of the talks is to stop hostilities and the occupation and deploy the army to internationally recognized borders. UN vehicles were also seen operating on the Lebanese border. This comes after a French UN peacekeeper was killed in the southern region, as per Associated Press. Nearly 5,000 people have been killed across West Asia since the conflict began. Reports say at least 3,000 people have been killed in Iran and over 2,300 in Lebanon. All right, this is a story that impacts a lot of people, in fact, the whole world right now. Oil prices continue to swing amid West Asia tensions. Meanwhile, U.S. Energy Secretary Chris Wright says crude oil prices in the U.S. will remain elevated above $3 per gallon until next year. Here's a report on the backlash U.S. President Donald Trump is facing over rising prices of gas.
U.S. gasoline prices could remain above $3 a gallon until 2027. That's according to U.S. Energy Secretary Chris Wright. On Sunday, Wright told CNN he believed gas prices had peaked, but may not fall below the $3 level until next year. Gas prices have risen since the U.S. and Israel attacked Iran, and Iran retaliated against nearby countries. The rising energy costs added to political headwinds for President Donald Trump ahead of the November midterm elections. Trump's Republican Party will defend slim majorities in the Senate and House of Representatives.
This is an administration that decided on a war of choice in Iran and driving up these costs. I don't know if anybody thought about the consequences.
At a hearing last week, Democratic lawmakers excoriated Wright and the Trump administration for rising gas prices.
This president and cabinet made calculated choices to inflict this high-cost chaos on Americans.
So when are we really going to get $3 a gallon gas?
Well, I think that's going to be up to how the negotiations go.
Trump administration officials have offered differing views on how gas prices may shift. Treasury Secretary Scott Bessent last week predicted gas prices would fall to the $3 per gallon range this summer.
So we will see, and I'm optimistic that during the summer we will see gas with a 3 in front of it sooner rather than later.
Trump himself has said the gas prices may remain elevated until November. The average price for a gallon of regular gas on Sunday was $4.05, according to an estimate by the AAA, compared to $3.16 a year ago.
Now, Japan's Mitsubishi Heavy Industries has inked its first warship export project with Australia. It will build 3 general-purpose frigates, versatile medium-sized warships designed for multi-mission roles such as anti-submarine warfare, air defense and surface combat. The delivery is scheduled for 2029. The deal, valued at around 10 billion Australian dollars, is part of Canberra's broader plan to invest up to 20 billion Australian dollars in a new fleet of frigates, replacing its aging Anzac-class ships. Mitsubishi Heavy Industries beat Germany's ThyssenKrupp marine systems to secure the contract, and its stock surged following the announcement. The agreement comes as Japan moves to ease restrictions on arms exports amid rising security concerns in the Indo-Pacific region, particularly over China's expanding military presence. And time now for a short break. Coming up on the other side, South Korean president is in India for a 3-day visit. And we'll also talk about the 7.4 magnitude quake that hit Japan. Tsunami warning has been issued. And Argentina's president has vowed to relocate the embassy to Jerusalem. That and much more on the other side. Welcome back. US President Donald Trump has said that Israel did not convince him to go to war with Iran. On Truth Social, he said, and I quote, "The results of October 7th added to my lifelong opinion that Iran can never have a nuclear weapon." End of quote. This comes a day after former US Vice President Kamala Harris alleged that Trump was pulled into the war Israel's Prime Minister Benjamin Netanyahu started. Trump added that the results in Iran will be amazing if Iran's new leaders are smart. An earthquake struck off northeastern coast. Tremors were also felt in Tokyo. We're talking about Japan, where following the 7.4 magnitude quake, a tsunami warning of up to 3 meters was issued for Iwate, Aomori, and Hokkaido. Now, the Japan Meteorological Agency said the tremor occurred at a depth of 10 kilometers in the Pacific Ocean.
Tsunami warnings have been issued for Iwate Prefecture, the Central Pacific coastal area of Hokkaido Prefecture, and the Pacific coastal area of Aomori Prefecture. Residents in areas under tsunami warnings should immediately evacuate to higher ground or safe elevator locations. The government, immediately after the earthquake occurred, established an emergency liaison office at the Prime Minister's Office Crisis Management Center. Based on my instructions, we are making our utmost to assess the extent of the damage, carry out emergency measures for disasters, including rescue operations, and provide timely and accurate information to the public.
South Korean President Lee Jae-myung is in India for a 3-day visit. He held bilateral talks with Prime Minister Narendra Modi to deepen economic ties between the two nations. He is the first South Korean president to make a state visit in 8 years. During a meeting with the Korean community in Delhi, Lee said economic cooperation between the two nations remains low and sees great growth potential. The agenda of the visit is to double bilateral trade to $50 billion by 2030, with focus on shipping. Remember, last year, bilateral trade between the two countries stood at around $26 billion amid global supply chain instability due to West Asia tensions. South Korea is looking at India as an important strategic partner, especially for naphtha supplies. Now, Argentina's president visited Israel, where he reiterated his pledge to move the country's embassy from Tel Aviv to Jerusalem. The move, if implemented, would be significant as Jerusalem remains at the center of the Israel-Palestine conflict, with both sides claiming it as their capital. Only a handful of countries have embassies in Jerusalem, making Argentina's stance a clear diplomatic signal. During the visit, the president of Argentina met Israeli Prime Minister Benjamin Netanyahu with talks focused on strengthening security and strategic cooperation. The two sides also discussed deepening bilateral ties, including economic and technology partnerships.
Argentina took clear initiatives consistent with the values that bring us together here today. We signed the Memorandum of Understanding for Democracy and Freedom between Argentina and Israel, and we designated Hamas, Iran's Revolutionary Guard, and the Lebanon, Egypt, and Jordan branches of the Muslim Brotherhood as terrorist organizations. And finally, we reaffirmed our willingness to move the Argentine embassy to Jerusalem as soon as conditions allow. We consider it necessary, but above all, just. As the Holy Scriptures teach us, the world stands on 3 things: justice, truth, and peace. That is the hemisphere we want to build together in the Americas.
FBI Director Kash Patel is set to sue The Atlantic magazine over a report alleging he has a drinking problem. During an interview with Fox News, he said, and I quote, "If you want to attack my character, I'll see you in court," end of quote. Last week, the media outlet had claimed that 24 people flagged concerns over his drinking troubles, and some fear that will put country at risk. Patel's lawyer said they had warned the magazine, yet went ahead with the false reporting. Artificial intelligence startup Cursor is reportedly in talks to raise $2 billion at a valuation exceeding $50 billion. The round is expected to be co-led by VC with participation from NVIDIA and Thrive Capital. The move reflects a growing momentum in the AI coding space, where firms like Google, Anthropic and OpenAI are also rolling out similar tools in November. Cursor had raised $2.3 billion at a valuation little over $29 billion, preceded by a $900 million funding round earlier last year. Protesters burned an effigy of U.S. President Donald Trump in the Philippines after Manila and Washington launched their largest ever joint military exercise. The protests were driven by fears that the drills could draw the Philippines into U.S. conflicts. The exercises come amid rising tensions between Manila and Beijing in the South China Sea, with the Philippines accusing China of increasingly aggressive actions, claims that Beijing denies. More than 17,000 troops from 7 nations are taking part in the drills, which run through May 8th across multiple locations in the Philippines. A major fire broke out at a factory in Tamil Nadu, claiming 23 lives and leaving 6 people injured. In India, the blast occurred at a fireworks manufacturing facility where the impact was so severe that multiple workers were trapped inside the building. Emergency teams were rushed to the spot and rescue operations continued through the day. Authorities said the owner of the unit is currently on the run and the facility's license is likely to be cancelled. Early investigations are looking into possible safety lapses, including whether proper storage and handling norms were followed. Protesters also took to the streets demanding action over safety lapses following the incident. A mass shooting in Louisiana has shocked the U.S. after a gunman opened fire, killing 8 children, 7 of whom were his own. 2 women were also injured in this incident. The attacker later fled the scene, carjacked a vehicle and was shot dead by police after a chase.
I can tell you the suspect in this case, Shamar Ed Elkins, has been identified. He is the father of 7 of the children that were killed in this house. There is an 8th child that was also killed, as well as the 2 females that were involved. Both of them had gunshot wounds. One of them is still in life-threatening condition. The other is in serious condition, but is expected to recover.
Russia's Federal Security Service said it has arrested a German citizen over allegations of carrying a bomb in her rucksack. The security services claim this was part of the false flag operation directed by the Ukrainian intelligence. An unverified footage shows a woman lying in a car park. It has claimed that the bomb was equivalent of 50 kilograms of TNT. Rumen Radev's Progressive Bulgaria party has won Bulgarian election with a landslide victory. His campaign focused on criticizing the European Union and emphasized anti-corruption efforts. Appealing to a broad base of voters, he has also said that Europe has fallen victim to its ambition to be a moral leader in a world without rules.
You should know that Bulgaria will pay efforts to continue its European path, but believe me, strong Bulgaria in strong Europe needs critical thinking, needs pragmatism, because Europe has fallen a victim to its own ambition to be a moral leader in a world without rules. So what Europe needs right now is, again, critical thinking, pragmatic actions, and good results, especially building a new security architecture and paying a lot of efforts to recover its industrial power and competitiveness. That will be the main contribution of Bulgaria to its European mission.
British Prime Minister Keir Starmer is facing his biggest political scandal till date. He is under fire over his judgment about senior appointments within his cabinet. The issue centres around senior Labour figure Peter Mandelson, who was appointed as the ambassador to the US. The release of the Epstein files showed a deep relationship between Mandelson and the convicted sex offender Jeffrey Epstein. With the Prime Minister facing questions in Parliament over the scandal, the British public appear divided on Starmer's performance as Prime Minister.
I think he's doing quite terribly, but I do think that because of the parliamentary system we have, he will last until the next general election. No matter how unpopular he is after the locals as well, when Labour are going to get probably a big thrashing, I think Keir Starmer is going to remain in place.
I think he probably will survive. Obviously don't know all of the details. There might be sort of some things that come out of it that we don't yet know, but I think that, yeah, he's probably going to carry on for now, and I'd expect him to continue as Prime Minister. I think he's doing a good job. I think it was a wrong decision to appoint Peter Mandelson in the first place, given Peter's track record. Probably should have kept a distance from that, really. But overall, it doesn't affect my opinion of him. I think he's still doing a good job.
There's no good candidate as a replacement for him, so the Labour will disappear into a mess if it fights over a new leader.
Jeff Bezos-backed Blue Origin has said its new Glenn rocket has landed successfully after its launch. This marks the first landing of the rocket's reused booster. However, the rocket failed to deploy the Space Mobile Communications satellite it was carrying into the correct orbit. The rocket lifted off from Cape Canaveral, with the booster touching down around 10 minutes later. North Korea test-launched upgraded short-range ballistic missiles in the presence of the country's Supreme Leader Kim Jong-un. 5 improved ground-to-ground tactical ballistic missiles were launched. This comes after South Korea and Japan said that Pyongyang fired projectiles into the East Sea. South Korea has said that it will respond overwhelmingly to any provocation. And with that, it's a wrap on another edition of Global Lens. Thank you for watching.
Hello and welcome to On the Record with me, Shireen Bhan. It's been a big year for banking. We've seen a lot of deals take place, but it's also a difficult environment that the banking sector finds itself in as the war in West Asia continues to rage on. It is taking a toll and an impact on investment decisions. For HSBC in India, it has been a strong year. They've grown both as far as profits are concerned and, of course, improved on operational efficiency, and doing that all with great provisioning. Joining us now to talk about the road ahead is HSBC's Hitendra Dave. Hitendra, always a pleasure. Many thanks for joining us here on CNBC TV 18. You know, before I talk to you about all things HSBC, we've just seen the news coming in from the RBI, so let me address that. And for the benefit of our viewers who are just tuning in, this is what the RBI has done. It has withdrawn the circular that it had issued on the 1st of April, which was ostensibly to try and stabilize the depreciation of the rupee. Now, what the RBI has done today is that corporates can now rebook cancelled hedge contracts. This had been disallowed in the April 1 circular. Banks can quote and offer corporate hedges in the offshore market. Of course, the overall cap of 100 million still remains. Let's start by what the impact and the implications will be of the relaxations that the RBI has now announced.
First of all, thank you, Shireen. Always good to be speaking to you. No, I think the governor said it in his post-policy press conference, where he was asked about these measures, that unusual times, unusual volatility, the Indian rupee perhaps moving almost singularly. On days where the rest of the pack was weakening, we were weakening. On the days where the rest of the pack was not weakening, but we were still weakening. And, you know, their analysis, their data suggested that if they were to put some wedge between the onshore markets and the offshore markets, it could help. And the data would seem to suggest it has at least helped calm some nerves out there, because, you know, as we all know, currencies can be, you know, you can just get into your own self-created spiral a little bit, and therefore, if the market regulator feels that spiral needs to be broken, I think they've broken it. But I think they had clarified that it is to address an unusual circumstance, and today's withdrawal of the April 1 circular would seem to suggest that hopefully this is the first of the overall withdrawal that they will do, so that the market liquidity, the access of corporates, access of banks, and access of all stakeholders in India and outside India to a deeper and more liquid market goes back.
But do you believe that today's relaxations are on account of the fact that the rupee has stabilized somewhat and that's given the RBI the comfort to take this decision, or do you believe that it is because of feedback coming in from stakeholders? And we've seen that many have been saying that this was perhaps a little too harsh, maybe almost sledgehammer-like. Which of the two do you believe could have been the reason behind today's move?
Well, I think it will be a mix of both. Yes, there was feedback. I think the central bank immediately after the circular and in the days that have followed has been in constant touch with the market. And I think even while wanting to achieve the regulatory objective of putting a curb on speculative positions or very large positions, in the process, when you come out with a circular like that, even bona fide transactions could also get curtailed. There were also a situation where a lot of us had deals out with our own counterparties.
So it was impacting you?
No, I think it was just making it more cumbersome to unwind those transactions, and which is what they have. So they have taken away some of those things which remove the cumberness, which remove the friction without adding to the demand for dollars just through this process, is my sense.
Okay.
So I think it will be a mix of both feedback as well as the desire to be a opening of the market slowly.
But, on the back of what we've already seen the RBI do and today's decision and the move that we've seen in the currency market, what's the outlook now as far as the currency is concerned?
Yes, so I think remove these circulars and the last 2 weeks because ultimately in the long run, any asset, any currency is a function of demand and supply. You can put a halt to temporary demand, which is what these measures did. You can add some supply through some other measures. We are reading about OMC's demand having been taken out of the market or whatever. But ultimately, I think the currency was weakening not just in the month of March. March was accelerated.